Good morning, Tasty Nation. It's Thursday. We're back on Forex Focus here on the Tasty Live Network. I'm Glenn. Pete, how are we doing?
Good morning, sir. How are you?
Fantastic. Just the best.
Are you? Look at you.
Trying, you know.
Fantastic. 6:30 in the morning, best you
It
can be.
all starts with your attitude.
Your attitude and your ensemble. Look at you. Again, the collared shirt.
Oh, yes. Thank you. My new Peter Millar that, normally is very expensive, but I got it gifted to me by one of my, gentleman companions.
All right. So
that's what you would call a roommate, right?
No, but I guess you could. Sure, that would work. But fair enough. I thought it was maybe Todd was doing you a solid. Todd McCarthy has the ultimate in.
He's got a guy.
He's got a guy.
He's got a Peter guy. He's got a watch guy.
Shoe guy. He's got a guy everywhere.
I wouldn't even say a shoe guy. I'd say it's granular. He's got a loafer guy.
Yeah.
And a sneaker guy. No, he's promised, get me in on his Peter guy, but it has to be a personal introduction.
Of course it
does.
And
we just haven't, I haven't.
Look at you.
Gone out
it's
to
like, I don't think I've ever seen Frank in a collared shirt. We're going to have to start him small by
once a quarter, because his alpaca sweater, that technically has a collar.
Yeah, but he does, again, he doesn't like to wear that often. That stays in the vault.
It's
but
true.
maybe we start with cut a collar off a shirt and just Velcro it onto his T-shirt just to get him comfortable with the thing. Because the whole button-down thing, I think would just... It would freak him out.
It's a technology thing. If we introduce him to, snap buttons, he could do that.
Maybe we go Western.
Yeah.
Maybe we go Western. I like that.
And as long as it's Lululemon and it's breathable and he can,
That's going to be trouble.
Yeah. All right, cool. Summer shopping spree.
Okay.
End of May here. Gearing up towards June.
Yeah, we are. Friday is the last trading day of May, right? Is that right?
Yes.
Yeah, okay.
Sunday is June 1st,
Perfect.
I believe.
All right. So we're getting some good movement. We're seeing the markets definitely move last night, and I actually thought it was all on NVIDIA earnings because they were down and then they were up. But there was an announcement coming out that, the Court of International something.
Yeah, it turns out it's a U.S. court. We'll get into it. We got a whole slide
Glenn's got a whole
deck.
presentation about that. But just when you least expect it, and
it is funny. You don't miss many things. You're very on top of everything. But I'm glad to hear that you just chalked all this movement up to
I did because
NVIDIA's superpower.
Feverishly. I saw Nasdaq was up like 340, and I started feverishly selling them like this isn't going to last.
Yeah.
And then it's like, oh great, now where am I averaging these? Because it's another 40 handles higher.
That's pretty funny. Yeah. No, as a proud shareholder, I think I've got like two NVIDIA shares.
There you go.
Treated myself to a nice
well done. Look at you.
Nice dinner last night.
It's not like owning Palantir at 14 cents wherever Frank bought it, but it's
no, that's trade of a lifetime.
Yes.
That guy. No, I had leftover K-Fire for dinner.
God, how can you?
I actually
that squirrel meat does not age well. You got to eat that within an hour of it being caught in the park.
It was it was much better. Korean chicken we had for lunch.
That's not number one. It's not chicken, so you could just call it Korean meat.
It was Korean meat.
It was,
and just a big helping of white rice that we had for lunch, with some good sides. But for dinner, took that. Made a nice little fried rice out of it, little egg action.
That was probably a good idea because the sides, the little pickled cucumbers and stuff, those are really good.
Yeah, so I think it was better than lunch.
Well done. Look at you.
And then tonight I'll have leftovers from Tuesday.
To make it like a chicken, what do you call that? When you add the egg yolk, you make it like a fried rice.
Yeah.
So the egg's just a binder for all the pieces?
No, I just in the same pan, just kind of scrambled the eggs and then fold it in.
Gotcha.
Incorporate it. And then I was able to give one of my roommates the leftover chicken tinga from Tuesday. So everybody's happy. I'm a provider.
Look at you.
I give and I give and I give.
You're a patriarch.
Yeah.
And you get some squirrel meat, and you get Tuesday's leftover.
For you, al pastor.
Very nice.
Yeah. So yeah, that's the excitement going on in my world.
Very good.
Yep.
Very good.
But no, should we do the slides
let's get
first?
into it. Let's go down. Sure.
All right, let's go to the slides first then, because yeah, this is the story we want to get to today. What you could have missed overnight, Wednesday night, was a blocked tariff. The widespread tariffs that has been Trump's favored trade strategy begs the question: will tariffs be blocked indefinitely? And how could this shake out for the U.S. dollar? Because man, there are a ton of ways this could go. As we know already from all of this tariff shakeout, a lot of factors at play. Not really the winners and the losers that you would expect from any of this, but what actually happened. We had a U.S. court, the Court of International Trade. It sounded like, when I first read the headline, it sounded like it wasn't a U.S.
Court. Yes,
it wasn't a U.S.
That's what
court.
I thought too.
But it turns out it was, and their main point of contention was the executive power that Trump invoked to put on all these Liberation Day trades or tariffs on April 4th, the widespread tariffs to many countries, many regions. That was an unjust use of power. I think it goes back to some 1970s act or law that he tried to invoke. They're saying, no, papa, and that they have 10 days to remove these tariffs. And here we have on the right, in blue, is everything that would be struck down by this court order. And the stuff in red, things from his first administration and things prior that went through the correct channels, still in place. So steel, aluminum, solar, a lot of China products. But a lot of these new, the 30% tariffs on China, the 25% on Canada and Mexico, and the 10%
the random, I'm just pulling a number out, and then I'm going to change it and either jack it up if I'm having a bad day or lower it on a good. That supposedly is out of place. But the ability to target a little bit more specifically a sector still remains in place.
Yeah, I think everything...
So why doesn't the pivot become, I'm going to ignore you, and I'm just going to pick the 50 largest goods that probably, if you make the bucket big enough, meet the 7.7 of the 7.9 billion for China and Hong Kong, and implement those.
Yeah, I think it's twofold. I think there is kind of a maximum tariff. I think over 15%. There's some precedent for that being less above board, and then going through the correct channels. Not just saying slapping it on a country ad hoc. So we'll see how this. I'm no legal expert. They'll all settle it. But what we do know is that uncertainty hasn't been good for this U.S. dollar. A lot of things could happen here. The decision could get overturned. The White House has already begun the appeal process. Right? That could make it all the way up to the Supreme Court. Which could be the base case here during this appeal is it looks like no tariffs or that these would be struck down until reapproved. And so maybe you say, regardless of how this appellate process, as long as it takes a long time, we have a reprieve. Is that fair to say? I mean, we saw off this a big jump in the dollar, a big jump in equities. Everything else except the dollar, has that been sustained overnight? Equity moves?
Yes, pretty much. Equities are giving back a little bit now. Bonds unfazed by it, and currencies on both sides. Gold getting bid, silver getting bid. But again, we had appreciable sell-offs at the end of the day. This is, again, from the mechanical standpoint, I don't know how they could impose these tariffs and actually start collecting the money so fast.
That's what I was.
Do these huge container ships go through like a toll booth and they're scanned, and then there's a receipt that comes out, or you have the iPass up there and
I'm thinking it's an iPass. I think
it's just the whole concept of just start collecting all these right away.
Yeah.
And I don't get. So let alone who is going to be told down the chain, now stop collecting these.
Well, now you really I think you nailed who the biggest loser of this is anyone that's paid.
It's building an iPass for a cargo ship. Yes, you are now in danger of your play.
And anyone that's paid already. I mean, getting money back from the government.
Good
through
luck.
This. Yeah. Definitely going to take some time. So anyone that was able to.
There's a few people left in government. I doubt that phone call will go answered.
Exactly. A lot of rings. So it'll be interesting to watch for sure. But this dollar reaction, very interesting. We saw a huge lift led by the Japanese yen, the Swiss franc primarily, and then overnight really taking all of that out. As you know, this story isn't exactly settled. What do you make of this just price action in this dollar yen?
Spot on is the fact that the yen and Swiss move means, as much as we say they're not the risk off tools they used to be, they still have a little bit of that in them. And the fact that yen and Swiss were the earlier moves said that the risk piece got baked out a little bit out of it.
But it's interesting it goes from that end because you have that end of traditional risk off currencies, and then you have some risk on currencies, and we didn't necessarily see a bid tone for like a Canadian dollar or an Australian dollar. Is that because
very different movements in Aussie and Kiwi? I think it speaks to that this is just muddled. More confusion.
And also that in recent weeks, as opposed to the beginning of this whole tariff ordeal, we've seen a lot more synchronous dollar moves.
Yes.
And so now I suppose if there's a play in risk on versus off, it's going to be in the risk on in terms of in favor of the U.S. dollar as opposed to, kind of the handcuffs we were putting on the Australian dollar and the Canadian dollar earlier.
Now, I mean, and this move, roughly 6 or 7 o'clock our time in Chicago, the Australians are quoting FX, New Zealanders are, the full suite of people. And again, everybody quotes all around the clock, but the full suite of everybody in Asia is not necessarily into their trading day yet. Thinner part of the market, we get a good 140 pip move in yen. But the takeaway here is, and we're starting to talk about it, these tariff-driven algo moves. Well, if I was short looking for a trade, looking for the 140 trade, this really hurt, came out of nowhere. But it took them a matter of 8 hours to mark it all back out. That's opportunistic for us as traders. So I think what this really speaks to is the tape-driven algos that react to this at thin conditions took this, again, risk off, more certainty. They moved the market quickly. We're not reading that news and trying, we're going to try to jump in and buy some of this. They will put the market to a point, and then forces will interact with it. And you can see that it took a little bit of time, but this was all marked out of it. Those are opportunities that are, I think it speaks to, net, what does this mean? Nothing.
And that, I think, an important takeaway from this story as well could be that that Trump could explore other methods, trying to work his way around, because I can't imagine he's all too pleased with unelected judges blocking his trade strategies. And so if you have that line of thinking of, these actual nothing announcements or uncertain over the long term will continue to spark some expanded ranges over such a short time period, then you're definitely keeping an eye on, his developments, what he publicly says he'll explore next, because you could see a similar reaction there.
Yeah, and I think there's a couple of takeaways longer term here, and we go through the other markets, we'll see. The impact of this is becoming much more muted than it used to be, which means that now we're starting to stick. Yeah, we ran 130 pips. I got to imagine one standard deviation 30 days in. It's probably closer to 82 than was it 100. Let's say 85. It outran that a little bit, but not by much.
Right.
So that actually would have been, if you base it, okay, the market's up 85, 90 points, you would have been a little early, selling 145, 80s or 90s, and you would have taken a little heat on them, but not much, and the market would have worked for you.
Yeah. And zooming out a little bit, wanted to look at this U.S. dollar Canadian dollar pair because that's fundamentally where your mind goes to in this story. They were kind of the leader. This pair was the lead to watch when all the tariff shakeout began. I mean, we're looking right here at February. That gigantic move was the imposition of tariffs on Canada, the subsequent delay,
Right.
but then you zoom out, and now we're looking at a 4% move in the Canadian dollar's favor year to date. What can we take away from this? That at this point, I can't even say that 10% reprieve for Canada's trade with us. I don't think that would be as impactful as all of our tariffs, all of those on our side getting revoked. I can't imagine that our U.S. growth prospects could be higher, and that bolster the U.S. dollar against the Canadian dollar, because it appears that Canada's been one of the ones to kind of play nicely and have things work out in their favor. If they hadn't, this could be a much different chart. They could have been the China, and who knows if the Canadian dollar and the Canadian economy could have withstood 50%, 30% tariffs. What do we make of this chart and Canada's prospects overall?
I think this was, if we were back at 140, we would have had a much more, 145 or 144, we would have had that raid between March and April.
Gotcha.
We would have had probably a much more reflexive down move.
Right.
But we have kind of normalized now a little bit, and we got the down move, and then, I mean, we're back below 140. We're still at the upper end of, I don't know, normal is the right word, but of a longer term range.
Mm-hmm.
So, I think stuff like this becomes less and less impactful. The market put in its high, gave back some ground, settled in on that range, tested another leg lower on the delay, and now we're almost detached from this. What Canada's doing to create other trade relationships, to take the fact that the partnership and the elegance of working closely with a neighbor may not exist. So, like any practical other person, they're not going to sit there and wait.
Right.
They're going to look at, okay, this isn't ideal, but where else can we go and do business? So I think this continues to have a diminished effect on the Canadian dollar. I think the idea that the lack of credibility of U.S. policy will continue to weigh on the dollar.
Interesting.
So sterling was the outlier here of, so I'm still 134 big, and I'll take them all. There's not a lot. I think the bigger picture to get away from the trade noise is, for better or worse, the dollar is not necessarily viewed as
rock steady,
as consistent a proxy for, again, it will still be used as a source of transactional and pricing and everything, but the long-term effects, I think, just speak to the unstable nature of, you and I love tape action. We want movement, especially movement that isn't all one way and
right.
base ripping. For the most part, the users of FX want a nice, stable marketplace.
Exactly.
This creates difficulty in terms of building, selling, and pricing product because you have so much uncertainty, and that creates difficulty in planning and deploying capital. So I think if the U.S. is a difficult place to do that in, or work with them to deliver your products into, where's a more stable environment?
Agreed. Well, there you have it. A lot of moving parts and uncertainty ahead for this U.S. dollar, but U.S. dollar pairs definitely ones to watch as this tariff storyline continues to unfold, if they'll be blocked indefinitely or if they'll be back on the table in no time. But that'll do it for the slides for us. Let's cut over to the platform as we wrap up here, just to get some real-time price action. Economic calendar. We've got this. Honestly, this might be interesting for me in 39 minutes. We've got GDP estimates. This is the second estimate. Usually, this is quarter over quarter. Usually, it's the first estimate has the biggest shakeout, and then as they finalize that number, it's very clear, and it's less likely that there's a mishit. But things have changed over the past month, maybe more than historically. Between these estimates,
right, this should be a more accurate reflection of, again, backward-looking numbers.
Right.
It won't be. It'll be looked at, I think, to see if the fall is more precipitous than what they had forecast. Initial jobs, a bunch of Fed dudes all speaking. Yeah. So not a ton as we go into. I mean, traditionally, the end of the month is pretty light. GDP price index, that'll be parsed too. So you're seeing slower growth and higher inflation from that one set of data. If that continues to resonate, for me, what will be interesting to see is bonds are down again today. They had a little bit of a rally earlier in the week, and they're now pressing. We're not pressing 110 yet, but we're getting a little bit closer, lower down. It'll be interesting to see if bonds do press lower towards the end of the week, what that effect on FX is right now.
Yeah, especially with some of those month-end flows that you've spoken of before. Here checking in on the pound dollar.
There you go.
Here we have this hour candle was the big move on
30 pips.
The huge move of 38 pips here, and all the way back even quicker than dollar yen. But here kind of settling in. Do you think we'll have expanded ranges today, or I could see both cases where we kind of tighten up ahead of tomorrow's PCE. I think this U.S. Open will still be interesting, though.
Agreed.
Digesting a lot of those overnight moves.
We're at the upper 10th percentile of the range. This really wasn't, impactful in terms of challenging the market. I think it will be interesting to see if honestly, I think if bonds trade lower, that will be the one thing that maybe knocks 134 loose. But if I imagine if it stays quiet, we're going to grind back up into the middle of the range, which is short-term wise, 135, 134 in cable. We grind back up into the mid 135 or plus level. Just on the guys who sold on the tariff news aren't getting paid right now, so they'll get squeezed a little bit. Yeah. But it should be an interesting. We're seeing again, Aussie got beat up, not so bad, but Kiwi got beat up a lot. Came back a little bit, but we're 100, 130 points below where we made it once we finally broke out of 60 cents. I think the ranges are set, which is good because we can go back to our mechanics around math and look to play those one standard and two standard deviation ranges. And the setups here are, again, if you want something cheap, again, Kiwi is relatively cheap. It's in its bottom quartile for the last year, where pounds are in the upper quartile for the last year. So depending on what you want, you're getting very different views of different currency pairs against the dollar. So I think there's a lot of interest here. And let's just jump over euro really quickly before we check out here, because so many of us trade euro. I'd say this is the
was not expect. This one is interesting to me because we're hovering around this 113 level. This a pretty good sink off of that 62 pips. Now clawing its way back, but not exactly settled where we were before.
No, but so and here for me, just short term, if we can't roll over in the next couple of hours, everybody who sold them or got stopped out on this spike down is probably going to be a buyer towards the day. So we need to, the next couple of hours, resume the trade down to 112.40 112.45 to continue to weaken a little bit, or again, there were buyers down at 112. That was evident, and we grind back up into the middle of the range. But we'll see. Not a ton of data to drive things, but it'll be interesting to see. Here is one where if you're bullish and you think the range is 112 to 115, and you get a GDP blip down to 112.40, that's giving you a decent entry point, and you know where you're getting out. If we trade back up to 113.5 on this, that's tough because it's kind of in the middle of the range.
Right. But nevertheless, got some data coming out here in 39 minutes.
And there's always something to trade in FX, which is great.
And the U.S. Open shortly after should be pairs to watch here in this U.S. dollar story.
All right, let's go get it, my friend.
That's all we got for you today on Thursday edition of Forex Focus. Come back with us tomorrow. But until then, stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market, because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hello. Hola, Thomas.
It's travel day.
It is travel day, Sosnoff. We are going to Atlanta. I forgot how excited I am to travel with you. I am so excited to travel with you. I can't wait. We're sitting next to each other. I'm so excited. This is so good.
Is that what you're going to wear on the plane?
Who are you talking to?
Who are you talking to?
Who do you think I'm talking to, girl?
Well, I don't exactly have like multiple outfits that I'm bringing.
I remember when we as a nation, when you used to dress up to go on a plane, we used to look nice.
Yeah.
Make America classy again.
I look nice, right, Vanetta?
You look nice. You look.
Yeah.
I'm not sure what's going on downstairs, but you look nice.
Yeah.
No, this is my travel costume.
I got shorts on.
You're not going to wear you better not wear shorts on the plane. I can't look at sandals. I can't look at your legs in sandals. No, you better not.
I am very excited about the start of Hoochie Daddy short season. Yeah, come on. Get those thighs out, fellas. I want to see them.
Yeah, you're going to regret saying that when I wear shorts to work one day.
Haven't you seen? So Tom Selleck from Magnum PI is like trending on TikTok because kids have just discovered what a virile icon Tom Selleck is. And you know the little short shorts he used to wear on Magnum PI? They're coming back, honey.
Yeah, they are. Like that and real baggy. It's like the extremes, I think.
Yeah.
What's doing it. Yep.
No. But today it's travel day, Tom. Are you excited? Are you all packed?
When you say all packed, yeah. I don't pack too heavy for a one-nighter, but yeah, I'm all packed, ready to go.
You don't have like a backup outfit planned, or just in case there's an issue?
I have no backup. I have no backup.
Uh-oh.
If something goes horribly wrong, that's it. I got nothing.
Okay. Well,
so far we've never had to experience that kind of disaster.
Yeah, I had the quandary this morning because usually when I was traveling and we really were traveling as road warriors, we would leave on a Friday, do a show on a Saturday in City A, leave on that Saturday afternoon in City A, get to City B Saturday night, work Sunday in City B, and then get home Sunday night and then get back on the show on Monday. Now, your Road Warrior show is you leave Thursday afternoon for a Friday show and you're home Friday night. You don't work Thursday. You don't work Friday. It's a cushy thing. So I was wondering, do I just wear this or do I bring another outfit?
Let me get my violin for you, okay? I'll just run in the other room and grab my violin.
You really got soft sodding off since I've been off the road. But we'll route these.
Actually, no. But the problem is that we used to do shows on Saturday, but the market's closed. I like when the market's open.
Yeah, no, I get it. I know. I'm just teasing. So I brought another outfit. Vanetta is my.
Yay!
Yeah, I'm okay. If I get dirty tonight if I'm in the splash area, splash zone, I'll be fine.
Yeah, bring your suit too. They got a really nice.
It's Tom's own fault if he has to ask Brittany where the closest Marshalls is.
Bring your bathing suit. Bring your bathing suit. They got a really nice hot tub there.
I will. I'm just gonna go in my shorts. I got my shorts. I'll be fine. My Tommy Johns. By the way, Tommy Johns, very good. Howard Stern recommended. He's right. They're very good. Tommy Johns.
That's about 3 years ago. They recommended those.
What can I tell you?
I have bought 3 bathing suits at one at Mandalay Bay, one at Caesars, and one some other casino. It's the only time I've ever gone somewhere, forgot my bathing suit, and bought them. Over the years, I bought 3, and I don't think that's going to happen again.
You're going to just go sans bathing suit?
Sans, yes.
No, he has that purple bathing suit that he bought for Croatia.
No.
The one where he had the sausage legs, the hot dog.
The hot dog legs, yeah.
Yeah.
Now, I'm going to start a new trend. I'm going to go in long pants.
That's okay. That's UV protection, girl. You gotta cover up. That's fine.
Yeah, I'm going to do the long pants. They'll be fine.
Sweet.
I mean, my swimsuit has a little skirt on it. I could get you one of those. Bless you.
Thank you. So.
Okay. Well, now we're just staring at each other.
Too good.
So what'd you do last night? Oh, how was trade detail? You went out last night.
I did go out, and it was a very pretty restaurant. I hadn't been there.
It had a great. She had a great personality. That's what I was gonna say.
It had a great personality. It had very good service. It was a little over the top.
In a bad way or in a good way?
I mean, it depends if you like that stuff. Like I don't particularly like that stuff.
What do you mean by over the top? I don't understand what you're not saying.
It was a very nice restaurant. The pastas were homemade. They were delicious. Everything else was okay.
Wow. Doesn't
like
sound
I don't think it deserves the hype, but it's but it was good. Like here's the thing. I think they tried to copy have you been to
Monteverde?
No. Monteverde blows it away. It away. Mother Wolf, those Mother Wolf, Felix. Have you been to those, Tony, at all?
No.
I think they try to copy that look, and those places are like a notch better.
What did you have? Or what did you
everything.
share or whatever?
We shared some steak and some pastas. That's it. A lot of stuff. It was plenty of food.
I'm sorry I'm torturing this information out of you.
No, I'm just saying. It's a really nice...
Turn on the white light now. Turn on the light.
Yeah, oh my God.
It's a really beautiful...
What kind of... I know you went to an Italian restaurant and had pasta, but what kind of pasta?
Oh, just a bunch of their specialty pastas, but it was very
okay, nice. That clears that up. Thank you so much. No further questions, Your Honor.
I'm sorry, Sadnov. I like to go to restaurants where, when I get the fresh pasta, the chef owner comes out, says hi to me, says, hi, Tony. Oh, look at your grandson. He's getting so big. That kind of place. I don't need to go to no fancy places. I don't need to go to no fancy place to find,
places,
good
pasta. The pasta comes out of a box. That's all I'm telling you.
I'm going to take you for the best pasta you've ever had in two places within a couple of miles of my house. You're going to love it.
Well, I'm going to tell you the best pasta I ever had, hands down, was Monteverde.
I've been to Monteverde. It's very good. Agreed.
It's the best pasta I've ever had, hands down.
I sat at the bar. It was very good.
Yeah, well, James Beard and Michelin agree, so what...
Yeah, right. But I'm not talking about those kind of places. I'm talking about when the owner comes out and says hi to you again. That kind of place, Sosnoff. You know what I'm talking about? Yeah, you don't know what I'm talking about.
I'm a big owner comes out and says hi.
Actually, it's really nice. That is cool. That's a nice touch, so...
Oh, yeah.
Oh, yeah.
I'm usually the only place people will come out and say hi to me is at breakfast places.
Yeah, because that's where you go all the time, right?
Yeah. Yeah.
Got it.
Can't go to homemade pasta places because the wife is gluten free and yada yada yada.
You took a vow.
Yada yada yada. It's yeah.
Sure.
A vow in gluten
yada yada
and
yada.
in gluten free.
Yada yada yada. I'll have the risotto. That's it.
Were there any sports ball last night? Does anything happen action wise?
Oh
yeah, go Florida is what happened last night.
Did they clinch it, or are they through?
Florida, well, they won the Eastern Conference. I mean,
oh, congratulations!
It's going to be a good Stanley Cup final.
Third year in a row. Yeah, it's going to be a great Stanley Cup.
So it's Florida and Edmonton?
Maybe.
Yeah,
Probably.
soon to be.
Didn't they have that matchup before?
Last year.
They hasn't clinched it yet.
Oh, okay.
Yeah.
But yeah, they had that last year.
Yeah,
Okay,
that's right.
So this might be the sequel.
this might be the sequel. Connor McDavid's going to have a hard time again trying to get a cup. He's the best player without a cup by far.
Does Draisaitl have a cup?
Oh, I don't. I thought so.
I don't think so either. But he's really good too.
You might be right.
He's good. He good.
Yeah. Let's try.
It's good. I watched a little of the Cubs game last night. They won.
They beat the Rockies. Let's not have a parade. The Rockies are 9-44, the worst record in the league. So
yeah, they're gonna fight with the White Sox for last year's record. They're not a good team. And then the basketball game was on too, which was good. OKC's going to the finals.
Oh, they are?
Yeah, they won.
Oh, congratulations, Thunder.
Yeah, they're really good. Really, really good.
Okay, we will see what happens.
Do you know what the average age on that team is?
No Stanley for Leon Sosnoff. Mm-mm.
Yeah, he's
22.
He's really good.
22.
24 and a half.
Oh, okay.
24 and a half, and they're so good. So
do you know what our average age is on our trade desk?
29.
It's not 9. Oh, it's too funny. It's good times. Bat, how about you? Would you just watch some hockey last night, get locked in? That's it?
I watched hockey. I watched the futures go to 6,000 as foretold. I did a lot of things last night, but we could talk about it all day. We have a long show.
Okay. All right. Well, be that as it may. All right. Well, no one else has anything else? Nothing else?
No, that was it. Well, let's see. Last night was take Vinny out for a car ride before he went to he's only got 4 more driver's ed classes.
Wow.
And then he's going to be
only 8 hours, only 8 more technical hours before he's unleashed on America's public roads.
I thought you have to be 16 before you can drive on your own, right?
Yeah, on his own. Yeah. But then he's going to want to be driving all the time because I told him he's got to go through all his classes first, before I take.
But you can't drive at night, and you can't have another passenger.
No, I think it's after 10 o'clock or something like that. He can't drive after 10 o'clock.
Well,
I looked
that
it up.
Must be new. Okay.
Yeah. Yeah. I looked it up. It's basically all the time. It's going to be a real pain.
Okay. Well.
I mean, I'm practicing already at home. I'm practicing already by going break.
Hey, it would just teach him to look for motorcycles. Teach him to be. I'm being serious. Teach him to be aware.
I've already.
Teach him to be aware of people who are on 2 wheels. And just everyone look out for motorcycles. That's
yeah.
I said my piece.
Yeah.
And don't be on the phone. Don't. Yeah. So it's hard enough.
Yeah. Agreed.
But that's exciting for him.
Yes. Yeah. He can't wait. Mom's not so sure.
Aw, yeah.
Yeah.
Yeah, you get into when you send your little bird out of the nest, it's got, I'm being sincere, it's hard, I'm sure.
Yep.
Because driving, there's other factors, your kid is a good kid, but everyone, especially people will just treat the highway like the Indianapolis 500.
Yeah.
So.
True. Yeah.
Anyway. All that's well. Anyway, we got a great show for you today. Tom and Bat are remote because they are literally headed to the airport as soon as we wrap up the morning part of the show. We are on the precipice of our slate of live events, and we are very excited. So at Work by 11, the very first show, first time we've done this concept at Tasty Live, kicks off tomorrow in Atlanta. We are over capacity, so don't tell the fire marshal. But Tom and Bat will be live in Atlanta tomorrow morning. So I'm so sorry to inform you, you are stuck with just me, Liz, and Jenny tomorrow morning. I'm sorry, all ladies.
It's going to be fun.
That is an upgrade. That is an upgrade of whatever this is. But you can check out all of the events at tastylive.com/events. But we have a great show for you today. We are still putting in the work, getting the shows out for this thrilling Thursday here at Tasty Live. At the top of the 8 o'clock hour, fan favorite trades from the research team, the world's greatest financial think tank. They're going to present their trade ideas. Hopefully they didn't have to do too much adjusting from the overnight moves, but they're quick on their feet. They will sort it out. Then 8:40. Perfect timing. We got Victor Jones in the house. Hear me out. Do you know what you're talking about with Victor today, Tom?
Not yet. I haven't had a chance to catch up with Victor overnight, but we will before the segment.
Okay. Victor's going to be in. That's at 8:40, 9 o'clock. Part of our Zero DTE series for market measures today, analyzing losing streaks in Zero DTEs. Do you have a lot of losing streaks in your Zero DTEs?
Actually,
today is Thursday, Sosnoff.
Yeah, actually not, because we don't do that many zero DTs, and when we do them, we don't have a lot of losers. So, so no, it's not a big. We don't have a lot of losing streaks in zero DT, just because we don't do a lot, and when we do them, we usually take profits really fast.
Okay. And then we are rounding that out with live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. So just programming note, tomorrow will be #Fan Friday. Liz and Jenny will be putting on viewer submitted trades using the funds in Tom's account. So that'll be fun. I'm just kidding. But Liz and Jenny will be doing viewer trades. So we would love to hear from you. Please submit your trade ideas for tomorrow's show and see if the lovely ladies do your trade. So that is just a programming note there. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's May the 29th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, earnings for today. I have the ones from...
Tom's going to have to worry about Marvell. That's all he has.
Oh, okay. All right, then that's it.
Sosnoff, you've been warned.
Yeah, Marvell last time was a huge miss, and the stock's never really recovered. It was like mid-70s and got into the 50s. It's been struggling ever since. So it's been a rough earnings cycle for Marvell. We still have a position left over, residual from last time.
I know. That's why I said you got to worry about that.
Yeah, that's about it. I think I widened out my strikes yesterday. I might have even rolled to July. Let me see.
Yeah,
I think I rolled. I didn't realize earnings were today. Marvell. Yeah,
Yes,
I already
sir.
rolled to July. I'm in the 55.80 July strangle in Marvell.
So you're all set.
Yeah, I kind of went pretty wide already. Yeah.
Let me just preface this by saying yesterday was just a wonderful cavalcade of news, and just as the day progressed, the news just kept getting weirder. So Would you like to hear about it? Because here goes. First off, we had Fed minutes, which now is like my first story, but that just kind of got pushed down. But we're going to start here. We're going to start with the Fed minutes, okay? Fed officials at their meeting earlier this month worried that tariffs could aggravate inflation and create a difficult quandary with interest rate policy. That's what the minutes show. But participants agreed that uncertainty about economic outlook had increased further, making it appropriate to take a cautious approach until the net economic effects of the array of changes to government policies became clearer. I wanted to just talk about treasuries. Let's just start there.
That's a word salad for sure. I think you can use that. I think you can use that logic at any single point in history. But treasuries, they were a little softer yesterday. And
they're down 7, 111.25. So the trade up to 112.
They were uglier. They were down about 22 this morning. Now
That's
they're only
correct.
down about
down
7.
6 or 7. Yep.
Yeah. So they've kind of come back into line.
Then at around midday, the word taco starts trending on social media, and people are like, what is going on? And so a reporter in the Oval Office asked President Trump if he'd heard about the taco trade. And
so
he was
rude.
like, that's a nasty question. I don't know what it is. I didn't know what it was. I'd never heard this, and I work in finance, but it's basically summarized as Trump always chickens out, and it's the talk of Wall Street, according to this headline. But does it offer near-term opportunity to pretty much be able to buy this uncertainty, because there seems to be a pattern? That's all I'm saying.
We weren't quite so nice when we would talk about Trump always chickening out, but yeah, I mean, that doesn't mean it. That didn't happen.
But I'm just saying, is there an established pattern where there is uncertainty, increased volatility? You buy dips. No, but listen, you buy dips and then things work out. That's all I'm asking.
Okay, well,
to answer your question, yes, but it's worked out into perpetuity the last decade and a half. So
that's it. That's all I'm asking, because
for the last
working.
15 years, you could buy every dip in equities, every dip in bonds, every dip in crypto. Like, there's not a single asset class, every dip in real estate. So, like, yes, you could buy every single dip in this economy since 2009.
Are you saying you don't want to taco about it? No. Okay. All right.
It would have been better if this news had come out on Tuesday, because then Taco Tuesday would have been fun.
Yeah, that would have been fun. But I hadn't heard about it. But I'm also concerned, though, that stoking this flame is not going to be good. But whatever. So, but then last night, boom, a federal court has struck down Trump's reciprocal tariffs in a ruling. The 3-judge panel on the Court of International Trade said the president had exceeded any authority granted by the International Emergency Economic Powers Act that includes all of the Liberation Day tariffs, as well as tariffs that are affecting Canada, Mexico, and China. The lawsuit was brought by a number of attorneys generals and small businesses, and that sent futures higher. What are you doing this morning?
I did not trade any futures last night. I mean, I watched the market, obviously, because of the NVIDIA earnings, and I actually forgot to check on CRM.
I'll get to it. I got it.
Yeah. So, I mean, I saw the futures up, and I read why they were up. You know, I mean, there's not a lot to say about it other than, because I'm sure we'll talk about it with Victor, but I think it's the analogy that I would bring is, if you're the CEO of a company and you quit and the stock jumps 6 points, you're like, oh, they hated me. I mean, if you're the CEO of the country and, you know, all your economic policies basically get shut down and the market jumps, you know, it's kind of a validation that
unelected court side is not going to tell the executive branch how to conduct foreign policy. I mean, that's gonna be
there's three tiers to Trump's, you know, economic policy. One was tariffs, which the game plan for tariffs was to raise revenue through tariffs to offset.
The game plan for tariffs was taco, Sosnoff.
No, hold on. Let me explain this. So it's Trump's plan was a 3-tiered approach. You implement tariffs, you raise money from the tariffs, because that's what it's for, and then you cut expenses, and then you lower taxes. I mean, that's a three-tiered approach. That's his economic plan. And unfortunately, the tariffs were at this point, I mean, it's a universal failure. And then the
subjective,
the whole cutting expenses, the whole Doge thing, another universal failure. And then you get to his quote, big, beautiful mega bill, which is a transfer of wealth from poor to rich, which is totally going to be a failure. So basically his economic policy is upside down. I mean, subjective, whatever, but the market's telling you it's not that subjective.
The market's telling you it's at all-time highs. What's the market telling you?
It's telling you that his plan's getting blown up. That's exactly what it's saying. That's exactly what the market's saying. Hey, this plan's getting blown up, so we're back to normal. That's it. It's just it couldn't be any more clear. But I think for him, this gives him a very easy out, because this gives him. I think he's happy, because this gives him a clean escape from a horrible policy to a clean escape. So I think this actually will work out.
I do want to talk about this, making it relevant. Let's look at currencies. Dollar was up on this move. I don't know what it's doing now. I don't know what. I just want to talk about currencies.
It's nothing. I mean, the dollars.
Euro was down big earlier.
Yeah, it's nothing.
Euro traded down to 112, Sadnov. It's back over 113 now.
No, I know. And the yen's up, and the Canadian dollar's up. So it really depends on.
It's more mixed now, Vanetta. But your news from the time was correct.
Okay.
Yeah, it's totally mixed.
Yeah.
Well, here's something good. The Trump administration on Wednesday rescinded Biden-era guidance urging employers to be cautious before adding cryptocurrency and related digital assets like Bitcoin, NFTs, and meme coins to 401k plans. So get ready to YOLO your 401k. Woo! Get some. What are your thoughts on this, Tom? And if so, if this is a good idea, what percentage should digital assets be of someone's 401k?
I didn't realize that they were ever not allowed in a 401k, but
it's not that they weren't allowed, but it was onerous.
Yeah,
It was a lot of red tape.
Well, it actually depends on the trustee. Like, it's very hard for us because we clear at a specific clearing firm, and the trustee that we use it's hard to get them to approve crypto, so it depends. It's on a trustee on a trustee by trustee basis. So, I mean, listen,
but you're for this, and you've been a big
of course.
advocate for crypto, and you should have any asset you want your 401. Right.
I'm for all asset classes, all strategies, any investments you want to make in any account that you have. I hate the fact that people are limited in 401ks to checking a box to choose a mutual fund, or you're required
between
to do
8
this.
mutual funds, right? Yeah.
Yeah, no. I can't stand everything should be self-directed, and everything that can be marked. The only thing that I understand that there's certain things that you can't actually mark to market, like, for example, maybe some real estate fund or something like that, fine. But if you can market like a crypto, you can mark, sure, let it in. I mean, it's your money.
Like, but what percentage, and I know it varies by age and situation, but roughly what percentage would you be comfortable with people having of digital assets in a 401k?
Well, so far, because they've never had a downtick in 15 years, of 100%. But I mean, our research.
The thoughts and opinions of Tom Sosnoff do not constitute actual financial advice. Securities involve the risk of loss.
We've done a lot of research on this, and the simple answer was a couple of percent, but like 1%, 2%, or 3% for most people.
Okay.
But the reality is, that's when Bitcoin. You got to remember, Bitcoin used to have a volatility of 100. And the S&Ps had a volatility. Let's say Bitcoin had a volatility 4 times that of the S&P. So the reason it made so much sense was because you had 4 times the upside than you would using a passive, stock investment. Now the volatility of Bitcoin is significantly lower. It's down in the 40s. Let's just say. I don't know exactly where it is, but let's say the 40s. And so you have Bitcoin that's no different than Tesla. no different than NVIDIA. And so it doesn't make nearly as much sense as it made, years ago to be more overweighted. Now it's just another asset class. You have to look at it by the size of the asset class. So if you look at digital assets as like, let's say a $4 or $5 trillion asset class, then you have to look at it as like, how big would you be in NVIDIA? How big would you be in Apple? I mean, it's no different than that.
It's a good way of putting it. You're right.
Yeah.
Okay, that is good insight. Not sure what Bitcoin is doing.
When the volatility is 4x, and so that means you have 4 times the upside, then it makes sense to be overweighted, or it makes sense to have that asymmetrical opportunity to the upside. But now everything's been normalized, so you just have to think of it like another asset class.
Yeah, and IBIT has a monthly implied volatility of around 50, 60, something like that, 40 to 60.
So whatever it is now, fine.
Yeah,
fine.
Yep.
Hey, let's get to earnings from last night. NVIDIA reported better than expected earnings and revenue as the company's booming data center business recorded year-over-year growth of 73%. Stock rose around 4% in extended trading. Overall revenue for the company grew by 69%. Nice. And sales in the company's, like I said, data center division were also up. Revenue came in at $44.06 billion versus $43.31 expected. But I think their outlook maybe wasn't super rosy, but the street liked it anyway. And they had also good other news last night. So it's a win for everyone. What's NVIDIA doing?
It's up a little over $7. It's the expected move. The expected move was between 8.5 and 9. It's up, let's say 7.5. It's inside the expected move. I think it's going to be. I think whatever you did in NVIDIA is going to work.
The company did say they would take maybe like an $8 billion hit for some chip export things, but all in all, good earnings.
All in all, I think it's going to be, for the big earnings that it was, even though we didn't play it very big, whatever we did, I think it's going to work.
Okay, that's exciting. And maybe opportunity, or no, because the IV was just super low, so probably not doing a post-earnings trade, huh, Bat?
Post earnings trade is where I'm going to be looking at an NVIDIA IV rank of 20 last night. We'll see what it is after when it opens. We'll see how it goes.
Yeah, this is going to be.
It's going to be hard pressed, I think, with an upside move like this to see volatility expand. I totally agree with you. Let's see what it does.
Surprisingly, though, vol this morning is way stronger than I would have thought it would be.
Its volatility basically unchanged. / VX was exactly unchanged. It's now down 12 cents. Last night, when even the S&Ps, which we'll talk about in a moment, were up almost 100, volatility was down 65 cents.
Yeah, I'm surprised by how strong volatility is this morning.
Are you really? Because kind of I can see how we're in this sort of uncertain period about like, where do we go from here in terms of...
No, I'm not thinking about it on a big macro. I'm just thinking that everybody was all fired up for NVIDIA earnings, one way or another. Sure. And I thought that NVIDIA earnings would, they basically, the S&Ps are up 50 points right now, but 25 of that was on NVIDIA earnings. So it's not that, you got to remember, we rallied in NVIDIA came out around 320, and then they rallied up about 25 point, whatever it was. So 25 or 30 points. So it's not as big a move as you think.
Gotcha. Salesforce raised their revenue and adjusted profit forecast for fiscal 2026 as the enterprise software provider has been benefiting from strong cloud spending while ramping up the monetization of its AI agents. Shares of the company were up around 1.5% in extended trading. Salesforce said they have closed over 8,000 deals since launching Agentforce, and the revenue has exceeded $1 billion for that service. What'd you do in CRM?
CRM is going to be the biggest winner, but our position there is crappy and small. CRM was traded it traded about $10 to $13 higher, and now it's $2 lower. So
oh wow!
I have never seen, in all the years I've watched Salesforce earnings, I have never seen the stock unchanged. This is the first time, and so.
First for everything.
So my position there is minuscule, but whatever you did in there, it's going to be a huge winner.
CRM markets were not that great.
They sucked.
To warrant any other kind of trade, but a very small one.
Yep, they suck.
You can't kick yourself in the teeth in this one.
No. I'm not kicking myself for that. I'm short an Iron Condor and I'm short a Strangle, and they're both going to be like full winners. But but they're tiny.
Yep.
Mark Zuckerberg says that Meta AI has 1 billion monthly active users. Meta's AI assistant continues to grow, especially since they released in April a standalone app for the tool. But as Meta AI improves over time, Zuckerberg says there will be opportunities to either insert paid recommendations, this is terrible, or offer a subscription service so that people can pay more to use more computational power. I've used Meta's AI, this is true, in Instagram because every Friday I show you a food video, and I've tried to use it to search literally just for like a food video, and it sucks so hard.
It's so
wow.
It's so
how hard does it suck?
It's so funny that you say
that. It sucks the chrome off a trailer hitch. That's how hard it sucks.
It's funny that you say that because first I talked to this AI guy that we have with us, and he said,
is he in the room with us now?
No, he said the same thing as you. He goes, it absolutely sucks. It's the worst of all of them. And then he said, and then you said 1 billion people. There's no freaking way.
Right. They have 1 billion monthly active users. Because sometimes
I don't even know one person that uses. I don't know one person that uses Meta.
If you finger on your Instagram, Meta AI will pop up. I think they're just counting that as a user.
I don't know a single person that uses Meta AI.
Yeah. I told you I've tried to use it to find me hot dog videos for you, and it sucks.
But I don't know a single person uses it. There's no way 1 billion people use it. No way.
But that's a lot of people have said that, right, about Meta. I mean, like AI, it's not that popular.
Right.
I'm not sure what's Meta's stock doing. We'll talk about that.
He said 1 billion people log on. 1 billion.
Yeah. Well, Meta's trading on the offer would be $6.52. That would make it up around $8-9. So they say
a lot.
You know what they say? They say suck this.
Why is Meta up $8-9 this morning? That's crazy.
Oh, that stock moves around $10. The expected move in Meta on a daily basis is probably $10.
That's bonkers. Hey, Netflix chairman Reed Hastings has been appointed to Anthropic's board of directors, the AI company announced on Wednesday. Hastings co-founded Netflix in 1997, but gave up the CEO role in 2023. He says, I'm joining Anthropic's board because I believe in their approach to AI development and to help humanity progress. You want to help humanity progress? Give me more sexy realtor shows. Anyway. What are your thoughts on this?
I don't have any.
Well, we can talk about Netflix.
I don't have any thoughts there either.
On
but
Netflix?
I don't care if Reed Hastings joins a board. I don't care.
I know. It's just
Netflix IV rank of 14. It's on its high. It's trading on the offer $12.11, which would put up around $2 or $3.
Netflix is my number one choice of stocks that are going to split soon.
Oh wait, say that again. You think Netflix is going to split soon?
I don't have a position on in there, but if I had to choose the stock that I think is going to have a split, I think Netflix is going to do a 10-for-1.
Interesting. Okay. Heard it here first.
You really think it would go down to 100 from 1,200 or 120, whatever, from 1,200? You don't think they'll do like a 5-to-1 or something like that?
I'm just guessing.
I know Apple and others have done 10-to-1. I mean, it makes sense.
The math is just so much easier to do 10-to-1.
Yeah.
In a hilarious announcement, Apple reportedly says, screw it. They're going to jump from iOS 19 to iOS 26. You can expect Apple to try to explain why numbers aren't real at its WWDC in June, but they are getting rid of its old naming convention. I think they're going to now call it iOS 26 to line up with the year following now. So all Apple products from your iPad to your Mac to your watch will all sport the new nomenclature. I just think it's funny. It reminds me, one of my all-time favorite The Onion headlines from back in the day was Gillette was like, F it, we're doing 37 blades. When like the razors were all the...
I remember when we went from 1 to 2, it was revolutionary. Then they went from 2 to 4, and then all of a sudden they would have these...
I know, 3 and then 5, and then yeah. Gillette was like, F it, we're doing 37 blades.
See, the only thing I don't like about this is that it brings you back to the days of like Microsoft 98, and then Microsoft
Windows 95, baby.
Yeah, Windows 95, Windows 98, and then it's 2003. You're like, why are you on the Windows 98?
Yeah.
Yeah. Well, what are you guys doing in Apple?
Apple getting a little bit of loving this morning, up around $3.50 to $2.04 or so. But Apple has been a little bit of a lagger.
I mean, I think we're fine. I don't know. We're pretty flat.
Okay. Hey, Boeing aims to certify its 737 MAX variants by year end, according to CEO Kelly Ortberg. What are you guys doing in Boeing?
No position.
Okay.
Get this Boeing going, Sadnov. Boeing has an IV rank of 7, trading near its highs, 201 and change. Looks like it's unchanged. It's high. It's closer to 210, but it's still up there.
Do you know what plane you're flying on today? Do you know what it is?
I do not. I'm guessing it's a Boeing 737, but I don't know.
You better check, homie.
Wow. You don't know.
I usually check
know.
That. Well, the weirdest thing is I never fly Delta.
Yeah, that's true.
Don't ever leave the airport.
You should check it. Hey, a nice little pop in the aviation sector yesterday as Joby aviation shares were up almost 30% as the electric air taxi maker closed a round of funding with a $250 million investment from Toyota, JOBY. You ain't got no alibi. Stock is down now, but it had a nice little run yesterday.
JOBY, I don't know if I've traded it. You are correct. It was $8.87. Looks like it's $8.40 this morning. Doesn't tell you the whole story because about 48 hours ago it was under 7. So yeah, the stock was up about $2 or so.
Tom, since you're so comfortable with like Waymos now, would you get in a flying air taxi, self-driving air taxi?
I mean, I would have said no to that 1,000 times over, but you're right. Maybe I'm more comfortable than I used to. 737-900.
Okay, there you go. You got it.
You looked it up
now.
Yeah.
Hey, speaking of robo-taxis, Tesla is targeting June 12th. That's very soon for robo-taxi service in Austin. What I think is funny about this headline is that the city of Austin was like, they need a bunch of documents from Tesla, which they have not been provided. So I like these optimistic headlines that Tesla's like, yeah, we're going to do all this thing. But the actual city of Austin was like, we need like your safety protocols. We need guidelines. We need a bunch. So there's a little bit of disconnect in how the story's being reported and like what's actually happening.
Which car are they using for the robotaxi?
That is a good question.
I think it's a new one that they want to make.
Right. This is what was pictured in their Giga Day one that was rolled out. So this is technically the Cybercab, but they can't call it a Cybercab. But that's what I'm showing you is Tesla. So I don't know what this is.
Oh, okay. So they built a car just for. Got it.
Yes, they did. What are you doing in Tesla, the stock?
No position.
Okay.
No position in Tesla, but Tesla's back up to 364, so up around $7. This is pretty close to the number it got to yesterday, where it sold off. So we'll see what happens.
Stellantis is winding down its partnership with Amazon for an in-car software software deal that would have brought Amazon content to your car screen. Amazon's deal with Stellantis to create the in-car software companies hoped would transform the driving experience. The partnership was initiated in 2022, and it's already over, like most pandemic relationships. And I know you don't trade Stellantis, but you trade Amazon sometimes.
Yeah, I've never traded. So I don't even know the symbol for Stellantis, actually.
Amazon is trading at 208, up around $3 or so. Stellantis isn't that part of Chrysler? Or am I wrong?
No, it's STLAM, maybe. I don't know. I could be wrong.
STLA, I believe.
There you go.
Yeah, $10.15 must have been like a smack. Listen to me. Opened around $14, trading around $10 and change. Must have been the word I'm trying to get. So
a SPAC.
SPAC. Thank you. God,
yeah.
What a mind.
I'm a snack. It was a SPAC. Hey, oh God, I never get to do this, but I have beauty news to report. I think Ulta reports their earnings this week. Liz and Ginny will talk about this. But ELF, look this up, ELF. It stands for eyes, lip, face. Their stock is up huge this morning, over $13 on news that they are buying Hailey Bieber's beauty brand Rhode for $1 billion. You guys do not understand any of the words coming out of my mouth, but I get to report beauty news.
You are correct. Here's a stock that was $90 after about a year ago. It was about $130. It worked its way down to about $50, worked its way up to $90, and now this morning it's $103. I looked at the markets. They're wide.
Look, I just get to report beauty news. I'm not a personal fan of Rhode products, but I like ELF. I love ELF products. But good for you, Hailey Bieber. You get that bag, $1 billion. So good job. Do you know who she's married to?
Yeah, isn't this Bieber?
Yeah.
But aren't they having the outs? Aren't they on the outs or something?
Yeah, I don't know.
Well, now that she's got $1 billion more. Now that she's got $1 billion.
You go, girl. Literally, go, girl.
Yep.
Hey, Shein is working towards a Hong Kong listing after the London IPO stalls. Maybe you can have our Hong Kong correspondent weigh in on this when Victor comes on. But Shein is working towards a listing in Hong Kong. What are your thoughts, Tom? Why can't London hold anything together?
I don't know anything about this. I don't know.
Well, also things are tough for Shein in a global sort of trade.
Yeah, sure. I just don't know why they didn't. I don't know why they picked
why they didn't list in London. Yeah, that's fine.
Why
that's
they didn't, wherever they go. I just don't know why they would do anything.
All right, you do you. Hey, skipping a story, Birkenstock is announcing secondary offering and repurchase of shares. Birkenstock says they are planning to repurchase $200 million of its ordinary shares. So if that means anything to you. But we don't talk about BIRK a lot, so I thought I would mention Birkenstock.
Yeah, that is a positive for stocks. That usually does something. The option markets in here are untradeable, but BIRK closed at 54. It looks pretty much unchanged here. So this might be a maneuver to kind of booster the investor confidence in a stock that hasn't done anything in the calendar year.
This is crazy statistic. So last night, the Anaheim Angels played the New York Yankees, and the cheapest seat in the stadium was $14. So if you had $14, you could get in to see the Angels versus the Yankees. Friday, tomorrow, the Savannah Bananas are playing the Party Animals, and the cheapest seat is $144. Let that sink in.
Yeah, listen, you put a good product on the field, although the Yankees...
I want to see the Bananas. Tickets are hard to get. They're expensive.
And the Angels are good, too, so I don't know.
All right, Tom, are you surprised by this?
Yes, because if you had said, if you had said some other crappy team, but the Yankees, the Yankees are a draw everywhere.
Right, no, I know.
Yeah. And they got good players, and
they're
fun to watch.
I'm assuming,
people
too.
pay to see Judge. They pay to see those guys.
Yep.
Yeah, but Judge doesn't take his shirt off and do a dance.
This is true. This is true. This is true. This is true. That's true. Yeah.
And they have the Savannah grandmas, and they have like the dad bod dancers, and they have like all the other stuff. Like, get it together, Yankees. Finally today for my viral video of the day, teamwork makes the dream work. I wonder if we could recreate this with Tasty employees. This is pretty impressive. Who would you have take the last shot? Watch this.
They're trying to make them all in succession. Took them 169 attempts. That's pretty good.
That's pretty good.
Yeah. They almost got it with attempt number 27.
So if you had to do this, Tom, who would you have at Tasty take that last shot?
Ooh, we'd have to bring back Christy Ross.
Is it you, Tom, from the top of the key?
No.
Who else could it? Who else could it be?
No. Tom circa 1992.
Who else could it? Who else could it be?
Tom
Josh?
circa 1992.
I mean, who is it going to be?
Possibly.
Maybe
I
Josh.
just think it's funny.
Maybe Josh. If it's Papa Shot, Josh has got you. He told me he's got you beat.
No.
Hey, this is my time. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send, and then we'll talk about the market, too.
Safe travels, you guys.
Thank you.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
People are always asking, where can they find my podcast? There it is. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
To my Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. A lot of action last night, Sadnov. Up 48 on the E-mini S&Ps, just under 1%. Would seem like a big move in the E-mini S&Ps, but they were up almost twice as much as that, Sadnov. Trading over 6,000, 6,008 as foretold. NASDAQ up 283, Russell up 13, and the Dow up 108. You can see the Dow was up about 500 points higher than that last night. Volatility down 17 cents. You can see it flirted with going under 19 last night, which would bring it to basically a new low in /VX. It's over that now, just under 1950. Bonds up 3, Sosnoff. Looks like they're basically unchanged. They've actually had a decent rally off of their lows, a full point rally, almost a full point, almost a full $1,000 rally from its lows of 111.05 to 112.03. Bitcoin trading at or near its highs, 109.4 and change. Oil down 28 cents, taking a back seat to everything in the market. Gold, Sosnoff, this is an odd one too. Gold, when the market rallied, traded under 3,300 to 3,269, a new recent low over the last week or so. Now it's back up $14 to 33.36. Everything kind of reversing back in its lane from the large moves that it made. The market itself making a large move, almost a 1.5% move to the upside, now up, less than 1%. Gold making a big dive lower, now up on the day. So, interesting market. We'll see what happens for the rest of the day. Maybe the top is in if volatility stays bid. For the short term, in my opinion, Nvidia, which was the culprit for all of this, up $8 off of its highs to 142 and change. And CRM for earnings looks like it's down around 4 after being up around 10 or 12. That's all I got.
All right, let's do it. These are emails that came into us overnight for a little confirm and send. Everyone knows about the poor man's covered call. But with index ETFs like SPY, XSP, Qs, etc., what about a poor man's covered put? Buying a far out of the money leap put and selling weekly or monthly 15 to 20 delta puts against it. Would that have a better risk reward due to the general upward bias of the market and usually higher price for IV of puts over calls? Like, in other words, is the poor man's covered put potentially a better play if you think there's going to be positive drift to the upside than a poor man's covered call?
Well, oddly enough, if you're using the same strikes as the call, it would be exactly the same. You'd get better pricing probably on the calls because they'd be, you're saying the put far out of the money, so the call would be in the money. It's 6 of one, half dozen of another here. If you're using the same strikes, let me just say it's going to be exactly the same trade. So because of put call parity, if I'm understanding it correctly, am I understanding it correctly?
I don't think so. I think that what this person's saying is if I did a poor man's covered call. Here, my answer to this would be...
So he's buying a far out of the money leap and selling a further out of the money put, correct?
Yes.
Okay, so if he's buying an out of the money call, well, that would be an in the money call. I'm getting a little bit confused here.
So my response to this is, if you're bullish, you want to do a poor man's covered call. If you're bearish, you want to do a poor man's covered put.
Right, but if his trade here had long delta, which it would have it would have short delta to it. Short delta to it.
It's really simple. If you're doing,
you just got to look at the delta.
That's right. You just got to look at the delta. If you're doing a poor man's covered call, you want the market to go higher. If you're doing a poor man's covered put, you want the market to go lower. Don't overthink this thing and think just because you're selling some near-term premium, you're going to get hurt if the market moves or you're going to make more money if the market moves in the direction you want to. That's not the way these work. It's whatever the underlying delta is. So if you're doing a poor man's covered call, you want the market to go higher. You're doing a poor man's covered put, you only do that if you want the market to go lower. If you think the market's going to have a general upward bias, you do not want to do a poor man's covered put. Let's go to the next slide.
Totally agree.
What is your process for selecting a stock to trade?
Well, I mean, in order of how I do it, I mean, I'm looking at the IV rank. I'm looking at the 5-day change on the IV rank to dig a little bit deeper. What has it done over the last 5 days? Just to give you a little bit of background on how elevated that IV rank is. And then the most important thing after that, that's a quick little scan. It's very easy to see. ABC stock has a 60 IV rank. I'm in. Then I'm looking to see if it has tight liquid markets. And if it has tight liquid option markets, then I'm just looking at price extremes one direction or the other. Or if there is none, I'm looking to sell premium because it has high implied volatility. So it's IV rank and then tight liquid markets. That's all I'm looking for. It makes it pretty easy.
Yeah, you know, we are the definition of simple folk when it comes to selecting. We're pretty indifferent to what we're trading. What I would say is the most important thing for us is usually implied volatility rank. We like them high, and liquidity is also huge. If the underlying is not liquid, we're not going to trade it. So if it has a high implied volatility rank, but it's not very liquid, we're not going to trade it. So we're looking for liquidity and a high IV rank. And then a lot of times when we get directional, like you'll see this tomorrow when we do our live event, we're going to be looking for markets that we think are oversold to buy them, overbought to sell them. And that's kind of how we trade. You know, with this kind of very subjective price extreme in the back of our heads, along with high IVR and liquidity.
Yeah.
Let's go to the next slide. I read the following in a book, and I'm wondering if you can please help clarify it for me. During a systemic crisis, when the Fed steps in by buying bonds, is that action considered a form of stimulating the economy? Since naturally, it would lead to lower interest rates.
Yeah. I mean, yes, of course. Listen, I mean, yeah. I mean, anytime you're buying bonds, you're for that economy.
You know, it's funny. The Fed's role, and I've talked about this probably a gazillion times, I view the Fed's role as something similar to owning catastrophic insurance, and which I think is something that makes sense for the U.S. and for our economy and everything else. The Fed's role is to step in when something really bad happens, and you either have to, provide liquidity to the system, stabilize the markets, do whatever you need to do. And so during some form of a crisis, when the Fed steps in, and the Fed could step in by buying bonds, they don't necessarily have to buy bonds. They could step in, do other things. They could flood the system with liquidity. There's lots of different things the Fed can do. But anytime the Fed steps in crisis mode, it is going to be considered a form of stabilizing. Sometimes you're not trying to stimulate the economy, you're trying to stabilize the economy. And so anytime the Fed steps in and it's in
you're showing a vote of confidence, right? But I mean, it's almost like, what do you expect them to do?
Anytime the Fed steps into a situation, and it's always designed to stabilize. And sometimes it's designed to stimulate, sometimes it's designed to just normalize, but that's what their purpose is. So yeah. I would agree that with this statement. And it doesn't always lead to lower interest rates, but usually that's the objective. Sometimes the Fed will step in and raise rates, so you can't always say it'll lead to lower interest rates, but the Fed's job is to step in when markets have been destabilized, and it's to stabilize them. Many times it's to stimulate the economy. Many times it's to add liquidity to the system. Let's go next slide. What is the preferred buying power reduction to use during periods of normal volatility for a margin versus portfolio margin account?
Preferred reduction to using during periods of normal volatility for a margin versus a portfolio margin account. Between maybe five to one difference between the two? I'm a little bit confused on this question too.
Yeah, this is a question that I actually get this question a lot, and we have a kind of a standard answer for this. So, what is the preferred buying power reduction to use during periods of normal volatility? Well, that depends on. We have this. We've talked about it a lot. We have this conservative approach, which we've published a lot of charts and stuff on. Then we have this moderate approach, and then we have this what we call aggressive approach. So it could be anywhere from 30% to, let's say, 60%, which would be normal for a margin account. So let's just say volatility is like right where it is now. Maybe now it's like 30 or 35% in a conservative case. In a moderate case, let's say it's 45 to 50. In an aggressive case, let's say 60 to 65, with vol higher than historical norms. If it's portfolio margin, you're going to reduce all those numbers by 30%. Same as if it's just span margin. But if it's portfolio margin, it's going to be 30% reduction. So depending on you using an aggressive case, a moderate case, or a conservative case, in a portfolio margin account, it'd be 30% less.
Yeah, I was saying 20%. So okay. I guess, yeah. Mm-hmm.
Let's go next slide. I just read that a court overruled Trump's tariffs, and I see that the market is up on the news. Do you think these are the types of rallies we can fade? He's definitely not going to accept this.
I don't know. Again, do you think these are the type of rallies we can fade? I mean, we were up 100 and we're up 45. So, I don't want to look like a Monday morning quarterback telling you what to do. Look. Say what you want. Again, I don't know if the courts are going to be able to tell the executive branch what to do. That'll be decided, I guess, sometime today. Who knows? I think you've been able to fade both sides here with a little bit of a bias to the upside. So yes, this is definitely seems to be a fade. Where do you fade it from? When we were up 40 last night, or up 60 last night, or up 80 last night, or up 100 last night, or do you fade it now up 46? It's a little bit subjective. It's a little bit hard. I think you trade what's in front of you. I think that's the best thing. We've had a nice, good, wide, quick range between 5,800 and 6,000 right now. I think that kind of holds for a little while.
First of all, I would agree with Tony that, yeah, I think this is the kind of rally you can fade. But like when I woke up this morning, they were up 90. And then I looked at them 20 minutes later, they were up 70. And then an hour after that, they were up 50. Right. So you're like, I mean, in hindsight, yeah, I should have sold them up 90, but what if they were up 120 first? I don't know. So it's not that easy. Like I know when you wrote this, they were up probably 60 or 70 last night. Right. I don't know the answer. Is this the type of move you can fade? 100% yes. I mean, I'd rather sell them when they're up 90 than sell them when they're unchanged. So yeah. Sure.
I'd rather sell them when they're up 50 than when they're unchanged, like they are now. I mean, yeah, right.
So yeah, the answer is yes. This is the kind of move you can fade. Nobody knows the exact price. Let's go next slide. On the last one, this person writes, I'm short an NVIDIA call that I sold for earnings that expires on Friday, tomorrow. It's still out of the money, but I'm down a little on the trade. Would you hold this and hope for the premium to come out later today, or would you roll to July on the opening?
See, now this is a great question that piggybacks the last question. So do you fade this move to the upside in NVIDIA by holding and waiting? You were bearish on NVIDIA, obviously wrong on the direction. I probably would look to close it and fight another day, even in NVIDIA, even in shorter time frame like you are right now. Maybe something that gives you a little bit more, bang for your buck. Maybe something that has a higher probability of success right now, or maybe go out to the monthlies. But again, it comes down, to your subjectiveness on what you think about NVIDIA. Obviously, we're wrong on price. If you're wrong on price and you can get out basically for a scratch, I think it's a home run.
So my answer is a little different in this case, only because if you had said that you were short like June or July calls, I would have said to roll out for sure. But here's the thing. When a stock like NVIDIA, I don't consider NVIDIA the same as kind of the market. When a stock like NVIDIA opens up $7 or $8, I'm not necessarily bearish on it right away. Maybe a day or two later, but not right now. So if I had a June or July call, I would either roll it out or sell something against it, adjust, whatever. I feel differently about the call that expires tomorrow because it really depends on what strike. Like I have calls that expire tomorrow, the crappy calls. Let me see what I have. Yeah, I have like 152.5 calls that expire tomorrow. I'm not, I might cover those today, but but if I would rather wait on the 150. Like I don't think the stock's going to rally another $10 by tomorrow. I mean, I'm just saying. So it really depends. So if I had a call expiring tomorrow, I might treat that differently than a call expiring in June or July. June or July, I'm a little more nervous about the upside than something expiring tomorrow.
Because you have more time.
Because you have more time, right?
Yeah. Got it. What if the calls were the stock's 142? What if the calls were 146? Another $4.
Yeah, that's a different situation. Then you have to do something. Maybe you roll out or whatever. It really depends what strike you have.
So if you were unchanged this morning when the calls were $4 away, you might look to close that and open something else, right?
100%.
Okay. Perfect.
One of the reasons I like to sell front month premium in cases like NVIDIA, when I don't think the premium is that high, is simply because it doesn't even matter what volatility is. You're just done. Yeah, you're done. Move on.
Let's take a quick 90-second break. We're not done. We've got trades and the research team next. We'll be back in 90 seconds. Let's take the live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do. I'd started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, The action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with trades for the research team. Who is our first researcher? That's right, my man Jaws. What's up, brother?
What's up, Tony? How are you guys doing?
Putting the fear of everyone with your trades.
Yeah,
because they go wrong or because they go right? I don't know. We'll find out.
No, I think I've been doing pretty good so far.
Good.
They always say that, don't they?
Yes,
they always do,
Before
because we
things go
can't
horribly
remember
wrong.
who does what. But we got a lot of the trades on last week. I think we got almost all the trades on last week. So let's see what we do today.
You guys excited for your Atlanta trip?
Oh, yeah.
Oh, yeah. Uh-huh.
Couldn't be more excited.
All right.
get to spend time with Sosnoff. His feet are cold, but hopefully we'll get over that.
Yeah, and you better make your whole little bathroom routine tomorrow morning a little quicker.
Yeah,
I'll do my best. I'll do my best. All right, what do you got for us, Mr. Jaws?
All right, so something I don't really do that much, covered call in ENPH. I usually stick to short puts and stuff, so...
You're going to the stock that's been killed.
Yes, going into the stock that's been killed and hoping that it'll go back up. Maybe after all the news announcements over the past day. We'll see. But yeah, buying the 100 shares and selling the call 40 at the money. So.
Yeah, so I have a bunch of ENPH positions on, none of them being good, mind you.
Okay.
Because this stock hasn't had an uptick in forever.
Yeah, I know. We can always hope.
I think it's an interesting cover call play. I agree with you on this one.
Oh, wow. Thanks, Tom.
Oh, look at this.
Yeah.
First one out of the chute. We
and
got
nice buying power
for
for a smaller account. Yeah.
I mean, I hated this stock at 120, but at $39, I kind of like the play.
Okay. Yeah, that's why I thought it'd be pretty good. So we'll see how it plays out.
What call are you selling in here?
The 40, the at the money. I'm making it. I haven't gone too much. I'm making it kind of conservative. So.
Okay, you're doing July though, right?
Yeah, July, 50 days.
Yeah, so you're buying stock and you're selling the 40.
Oh my God, it's a covered call. What the hell is wrong with you?
I'm just setting it up. I want to see which one he was doing.
He needs to understand it fully. Okay.
Wow,
done.
That was easy. Who's our next researcher? Covered call, for crying out loud. Yeah. Back from building a gazebo. My man Gad. Gad, what's up, brother?
What's up?
You guys are sitting in the big kids' chairs today.
Yeah, big boys' chair. Big guys, I mean.
That's right, man. That's right. Be
Tony.
Good.
Yeah, Tony, we complete the gazebo. We started on Friday and you completed on Sunday. Fully completed.
Well, that's because you took 16 breaks in between there and went to a bar.
No, we took like technical breaks. That's what we called it. For eating and drinking, and that's all. So.
I hope they fed you well.
Yeah, he didn't pay us, so he paid us in food. So we were expensive in food. So
okay.
Yeah.
Shark is a cheap SOB. What do you got for us, Gad?
You can't say that, Tony. He's not cheap.
Yeah.
He's a good dad. Yeah.
Yeah.
So I have Shota and Kando. It was pretty not easy to find this because we have like right now it's not easy because of the IVR. So I have app have like IVR which is like 32.
Yeah. Here the problem in here is just going to be getting fill at a decent price.
Yeah.
Because these markets are, it's hard. I've traded a lot of this stock, and I struggle with it every freaking time.
Do you have a position
Yeah, it's
in
a
up?
tough one.
No, not right now. I was so happy to finally get out.
So the put size one, I struggled to put position on because it was somehow tight. But on call side, it was pretty much easy. According to the expected moves, it's about 70, 75.
Let's see. You're doing the 330, 320.
Yeah, 520
and
530.
You put some upside bias in this.
Little bit.
Yeah, you're being.
Yeah. Okay. What price do you think you can do this? 380?
380, yeah.
Possible. Yeah. You got to be careful. Did you adjust for the stock being up this morning?
Yeah, I adjusted this morning.
Got it. Okay.
We can try it
I'll
and
give
see.
it a shot.
Yeah, we'll give it a shot.
I'll give it a shot.
Okay.
I'll give it a shot. You have to do a little price discovery. Lower your size in here. Reduce your size in this one if anybody's trading this, and reduce your size and do a little price discovery. Put it above the market and move it down. This is a tough one.
Okay, good.
Well, don't sell past the close. Who's our next researcher? Kai, you got the best music of the group. I don't care what anybody says. What you got for me, my friend?
All right, so I'm back to the calendar diagonal because the underlying price went up higher last night, and especially the indices. I believe the implied volatility will drop to 15 or so. So I'm going to do a diagonal, slightly neutral-ish diagonal.
Okay, you're buying the 294s in July?
Yeah, just like one or two strikes to the upside, and I sell at the money June 592.
So small downside diagonal.
Very, very small. Yeah, you cannot even tell from looking at delta. So I'm trying to be neutral because my assumption is the underlying probably not going to move too much after all these chaos. 6,000 for ES is a reasonable level to stay for a while, I guess.
Okay, I don't hate this trade. I got it in the system.
Wow. Look at how quick that was. Good work out of you, Kai.
It's a cheap shot.
Yeah.
Fine.
It's a small position.
Low risk, low reward.
That's true.
All right, let's not fight over this. Let's just go to the next researcher. Who do we have next? That's
hey guys.
right. We've got my friend Data in here. What's going on, brother?
Hey, doing well. So I got a super sexy stock. British Tobacco.
What is that?
It's a company in Britain, which is a tobacco company. So 61% IV rank here, super high. So I got this on the watch list, the fast movers watch list, which we created in the research team. Always showing a lot of stocks that have quite a bit of historical volatility and then also high implied volatility looking forward. Pre-market looks like it's going to open down a little bit. This is a short strangle. It's a little bit on the bearish side, so it's closer to the call side than the put side. 46.42.
Now, I've never traded this stock.
42.
Yeah.
Is there any open interest?
There is quite a bit of open interest on the strikes. If you look, there's quite a few. There's several hundred on each strike.
Yeah, I'm looking at this too with you, Thomas.
I've never traded this, Tony. Have you?
I've never traded it either. I'm looking at July. Markets are 10 cents wide, not horrible. Open interest is okay, not great, but definitely for a $45 stock, maybe it warrants a look here on all-time highs too. So
yeah, I want to just choose something a little different because oftentimes we trade the same the same underlyings, and I wanted to just kind of mix it up a little bit.
Yeah, I like what you did, and you used that list, which gets no love a lot of the time. So I love that too.
Sure.
What do you say to that?
I'll put a small order in, see if we get filled, and then we'll take it from there.
Cool.
Beautiful. Good job out of you. Good job out of the research team. Let's take a quick 90-second break and come back. Even the S&P is up 54. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on 1 second. My last day, early in the morning, I'm washing my hands in this place, like this communal shower, bathroom area. I'm washing, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing. So I stop washing my hands and I'm grabbing like towels to clean. I'm listening to and I hear your voice.
Why didn't you go knock on the door and say,
he's taking a shit, all right?
I know. Well, why didn't you knock on the door and say, hey, Tony Batista here?
I mean, what am I doing? Hey.
Right, autograph session happening right now.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, Sadnov. With the opening bell, it's imminent, about 90 seconds or so. Even the S&P is up 52, as we talked about a little bit earlier this morning. Doesn't tell the whole story here. They're actually mid-range up 52 after being over 6,000 and flirting with 59.16. They got up to 59.1650. NASDAQ up 299. Russell up 14, the Dow up 140, which is 450 handles lower than its highs. Volatility now down 30 cents. I don't know if you remember this morning when I quoted, it was basically unchanged to down 10 cents. Volatility selling off a little bit here, maybe helping the market a little bit. You got to watch volatility today, Sadnov. I think we're going to have a little bit of back and forth action here too. What do you think? We've had only one-way markets all week. Monday, Tuesday, Wednesday was one way.
I am really surprised by the two-way markets already in gold and in bonds. Bonds were down 22 this morning. Now they're up 12. Gold was down, 40. Now it's up 20. S&Ps were up 90. Now they were only up 45. I'm surprised already by the amount of
two-sided action that we've seen in the market.
Yeah, I'm surprised.
Me too. Oh, you put all that work, all that trouble, and you ENPH, you got filled right on the bell, Sadnov. All that work you did.
That was the covered call.
Yeah, obviously you put that in too high.
Obviously. What is the stock? Where'd the stock open?
Opened up 33 cents.
Oh, I'll take it. I'll take it, Sparky. Let's take a look.
ENPH, and that's it so far.
NVIDIA, here we go. Stock's up 741. The calls that we sold yesterday at 50 cents are, with the stock up, the calls are 13 cents, Tony Batista.
I think you can close those pretty easily.
I think I can close them.
Close those pretty easily. I mean, it's a no-brainer. I mean, you got to win.
And that's why you sell the front month.
Yes.
That is the true definition of why you sell the weeklies.
Well, when it works, because you sold calls thinking the stock was going to go lower, the stock went higher, and you win. Yes, that's the way to do it when you're wrong. It's good to be directionally wrong and right.
It's good to be directionally wrong and right. That's exactly right, Mr. Batista. Mm-hmm. Exactly right.
Yeah. Yeah.
We had an iron condor that we did yesterday morning during, what was yesterday? What's your assumption? In NVIDIA? Yeah. We covered that. That's good. And let's see what else we got in NVIDIA. So far, so good in NVIDIA. And let's see how the back month came in. We sold the Strangle for 174, and it's currently trading in, this is July Strangle, and it's currently trading for $1.50. So
a win, but lunch money.
Win, but lunch money. Next one, CRM. Let's see where CRM.
CRM
what the
down
hell?
$17. You said it, Sadnov. You called it. It's odd that you see CRM unchanged. This will be the first time. Down 17, Sadnov. CRM opened at 263, which is only a couple of dollars higher than this.
Yeah, very, very surprising. Mm-hmm. We have a May position on in there. Again, something we did at What's Your Assumption? I think we sold an Iron Condor, and we'll put that in. We'll press that order in there. Let's just see where we did that Iron Condor. Let's see. We did it at 162. It's currently trading at 171. Okay, not the worst trade in the world. And
so what do you do with something like that? Stock's down big like that. Do you put in a bid for where you sold it? Do you let it go?
Yeah, I'm going to try to scratch it.
Mm-hmm. Got it.
And then let's just see what else we have. We have a June Strangle. It closed at 350. It's trading for 215. So I think that's a pretty good one. You know, it's funny. These earnings plays have been just good. I mean, I don't even know how else to say. The earnings plays have been
just good. What is that? What do you mean by just good?
They've just all worked.
Oh,
I mean, I covered the CRM trade. Stock's only down 16. Covered the CRM trade, the Iron Condor from the What's Your Assumption, and also our June Strangle, and they were both winners. So that's the end of the earnings trades.
You got Marvell, which we've already.
NVIDIA was a nice winner, and CRM was a small winner. That's it. We're out.
Beautiful.
So are you going to do a post earnings trade in there?
I'm looking at NVIDIA. I don't think anything is. IV rank is 12 in NVIDIA. So for me, I think it's going to be a no-go.
Yeah. BTI, that was Dr. Data's trade.
Mm-hmm. BTI.
Remember?
Yeah, down 26 cents. Looking at July markets, they're still.
They're kind of crappy.
They're kind of crappy.
And APP,
they're more than 10 cents wide.
APP, the other stock that was Gad's trade, I'm going to put it in. I've adjusted it, put it in. I have it at 3.
I think APP is a non-trade, Sosnoff. I mean, unless you have a directional bias. Look at the markets in here.
It's
29,
really hard
31, 32. I mean, they're really wide.
Really hard.
I didn't want to say that to Gad when he was on the show because he's such a nice guy.
Really hard to trade. Okay, taking a look at all the different stocks that we trade, just to go through it really quick.
Here you go. Let me give it to you. Tesla up 8 and change. NVIDIA up 8 and change. Meta up around $6 or $7. SMH up almost $6. Reddit up 4.5. Even the S&P's up 40. Amazon and Microsoft both up $3. UNH up $3. Let's see what the buckers are, Sadnov. Those with the problems. Netflix and CRM. Netflix down 12. CRM for earnings down 16.5. Goldman Sachs down 6.5. Crowd down 3. Uber down almost 3. And Costco down 2.5. Starbucks on the news that Sosnoff is false advertising bad coffee. Down 80 cents.
Why would that be false advertising?
It's not bad coffee.
Let's see. I don't see any problem children for myself this morning except for the SPY.
Wow, that's all you think about is yourself. Maybe there's some other people's accounts that you can look into.
SPY, maybe a little gold. If you're coming to tomorrow's event in Atlanta to see Tony and myself, we are going to trade S&Ps, NASDAQ, maybe some Russell. We're going to trade bonds and notes. We're going to trade crude oil, possibly natural gas, for sure gold, maybe silver, for sure euro, maybe Japanese yen, some form of Bitcoin. I don't know if we'll do cash or IBIT. We may trade one of the softs like corn, soybeans, or wheat. Which one of those do you think is the most oversold? Corn, soybeans, or wheat?
Corn, soybeans, or wheat? Soybeans, but I'm doing it from memory. I could take a look. Let's take a look right now. Give me 1 second here. Let's see. Soybeans are down 5. Soybeans. Let's do this. There we go. Wheat down. Oh, wheat looks horrible. Corn. They all look horrible. Corn's had the most recent. Most recent lower move. Wheat's probably the lowest. And soybeans probably the highest. So I guess corn or wheat would be my play. Look at the IV ranks; they're good on all of them.
Yeah, there's about 12 to 15 futures that we'll trade tomorrow. Then when you start getting into stocks, PLTR, Apple, Meta, Microsoft, Google, not Netflix because the markets are just crap in there. NVIDIA, NVIDIA and Tesla for sure because the markets are great in there. Coinbase almost for sure. And We'll find a couple of Chinese stocks too to trade, and some ETFs. And I'm just looking to see if there's anything else that jumps off my screen. And I'm gonna say not at this second, but we will find plenty more stuff. I think we're gonna come in armed with about 50 different underlyings to trade, of which we'll probably trade anywhere between 25 and 40 of them. And we'll make multiple trades in some of them, right?
Yeah, a little anticlimactic on this whole move, Sadnov. Even the S&P's up 36.
Yeah.
Good.
This is kind of the move.
Yeah.
This is kind of the move that 25 of this was NVIDIA after the close.
Yeah.
Yeah.
I'm sad by your performance.
Well, actually, my P&L is positive. So I have some good.
You've been on a run. You've been on a run all week long. Yeah. You've been listening to the bat.
So,
you haven't been doing.
No,
what you
I haven't listened to anything you've said.
Been listening to the bat. It's been good. But you know what? You don't have to listen to me anymore. You know why, Saz? Because I got Victor Jones coming in and hear me out. That's right, Sadnov. You can't shut him up. His smooth, silky voice. Next, you listen to Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York when I was a young kid. I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them.
I think that's what sets me apart from the novice trader.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, enough out of you. We've got this, man. Victor Jones, hear me out.
Oh, yeah. Tom, Tony, Tasty Nation. How you doing? Good morning, gentlemen. Good morning.
Hello, Mr.
Good morning.
Jones.
First of all, I want, off the bat, Tony, where do I get one of those shirts? Don't.
Oh, you like this? Thank you.
Oh,
Thank you. Yeah.
Beautiful. Beautiful.
Yeah.
Okay.
It's a really new boutique. It's called Goodwill.
In this economy, I'll take it. Beautiful.
It's called Nordstrom, but not Nordstrom Rack. I try to buy the clothes that are in style this year, not the clothes that were in style 3 years ago.
Whatever happened to you wearing the button-ups, Tom? When you guys launched this thing, you looked like you were like a swinger or something like that, the way you were dressed when you first launched this back.
A pineapple holding swinger? What kind of swinger are you talking about?
I wore a shaker, a clubber.
I wore a button-down shirt yesterday. It was a little fancy.
He was trying to keep up with the bat, and he realized,
you guys
why am I trying
exactly
to do this?
The same every
Can't
day.
do it. I'll just go with my T-shirt.
I've always worn just T-shirts, but you know
that?
Who copied who?
Me. I'm doing the black T-shirt thing every day.
Oh yeah, yeah. I mean, well, do you know how you used to dress? It was pretty bad.
Did you say you or me?
I'm saying you. I mean, I would go a black T-shirt is a good route for you. I mean, it's a better look.
Who do you think that's brutal? Who do you think the best dressed on-air personality is of all the Tasty people? Give me the top two.
Are you talking about guys or girls?
I don't care. I don't think you can do. I think we're probably getting in trouble if you try to do the women right now.
Well, I would say if you included women, maybe Liz, because she's always dressed. If you're talking guys,
that's not fair. Liz and Jenny, they
get rid of them. All right, get rid of them. Get rid of them. Get rid of Vanetta, because I could just get in trouble there.
Vanetta's dressed to the nines every day too. We can't include the women. They all look great.
So it's just the guys.
Wow, Beth is feeling really hurt right now. I'm just saying that. But go ahead.
Okay, if I did the guys, let's see who do we have?
If you did the guys, we'd get raises.
So, Dr. Jim, throw him out. He's horrible. Vecchio.
Jim wears children's clothes. It's easy for him to dress.
This is
easy.
Like Granimals.
Yeah. Oh my God, this is a tough one. Who do you want me to say? Is it like?
You can throw me outside. No, don't worry about it.
Yeah, I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
I probably guess I got to go Ilya.
Okay, Ryan Grace easily.
Oh,
yeah, Ryan Grace, 100%. Yeah,
but I don't consider Ryan.
He's not favorite in there.
He's not full time on air.
Yeah, Bat and Ryan Grace have it hands down.
Oh, Ryan Grace always is dressed up, but he's very preppy looking. It doesn't do anything for me. Like he's got preppy out. He's got a whole preppy outfit.
Oh, who's the guy who's God on the research team? He's got to be in the top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah,
he throws on a leather jacket. Man, he comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
No. Gad is the sharp dressed man on the research team for sure.
Oh, for sure. Yeah. Shout out to all the research team. They all look incredible. And Beth, of course. Everybody's on the list. Okay. Tom.
Man, you guys really.
Man, you must have done something really wrong. You must have committed a really bad crime or something.
When you say that and somebody watches the thing and then they're not mentioned, it's weird and awkward. So I'm trying to make it not awkward. All right. I have a question for you, Thomas. Do tariffs matter to stock prices?
Do tariffs matter to stock prices? I mean, in the short term, sure.
Okay, good. Because now I've locked you into engaging with me in this discussion in good faith and not saying it doesn't matter. So I had to start with that one. The court ruling yesterday, Trump's tariffs, ruled that he did not have the authority to implement the tariffs under the section of the law that he implemented them under. I'm not going to go into detail. But the point is they have 10 days effectively to roll them back. The Trump and their administration has appealed this and is likely going to appeal it. They have 4 other options, my understanding. I'm not some expert on the topic, but it does seem they have 4 other options. One option they can implement almost immediately, but it's only good for about 150 days. The other 3, you have to go through some bureaucratic hoops before they could implement them. My question to you is, in your opinion, the court ruling, what does it mean for risk in your mind? Is it a good thing, a bad thing? Is it a complete non-factor? What does it mean to you?
When you say risk, you mean stock market risk?
Yeah, just in general. How do you think about risk given the court ruling yesterday?
Given the court ruling yesterday, because risk means a lot of different things, but let's talk about it just in terms of listed financial products.
Mm-hmm.
I would say that it probably lessens the risk ever so slightly.
You think so?
Yes.
I see it the exact opposite.
Good. That's why you have a debate. That's why we do the show. Because let me just tell people really quickly. Victor doesn't tell me the topics ahead of time, so I don't know what he's gonna like. Just make sure. I want you to just people to understand that like I don't prepare for what you're about to do. So what you're about to ask me. So but no, I would argue strongly that it actually reduces risk, not adds risk.
The reason I see it slightly differently, and I'm curious to hear sort of your justification as to why you see it that way, is I think prior to the court ruling, you had certainty about what was happening. Some people like it, some people didn't like it, but at least you knew what the administration was doing, how they were going about it. You don't know where the trade negotiations are going with the trade partners, but at least you have some certainty. Right now, with the court ruling, I think you have no idea what the administration is going to do next. So you have no idea how the appeal process is going to go. Could it get escalated to the Supreme Court? What are they going to do in the interim? What happens in the next 10 days? Yeah. Which one of these other 4 statutes might they use? So I think
it's exactly what you were talking about, Tom. Go ahead. Yeah,
No. Victor's his argument's different than mine. The basis for his argument, which would be totally fair under normal circumstances, is that the current administration had a plan to begin with, and therefore there's some basis for what you're saying. My argument is that it was a hodgepodge of idiotic ideas that were put together with no game plan, and the fact that they essentially blew it up, at least for whether it's a day, a week, a month, or a year, who cares, is actually better. And so that's why my argument says that if you're doing something that makes no rhyme or reason on any level, and then that gets blown up, then things have to be better. Now, do you run the risk of that same crew trying to do something? Possibly, but like I told Tony this morning, I actually think this is actually a win for Trump, because it gives him an out to a very clear and obvious, really horrible economic plan. And so this is going to help him politically, because it's going to give him a scapegoat, and it's going to let him out.
I think you're 100% right. That is, in the world where he uses this as an out, I agree with you 100%. This is a big opportunity here.
Yep.
I don't know that he will use this as an out. And I think likely it creates an incentive for all the trading partners drag their feet. So let's say you were at the table, you were going to make a deal, or you're working towards making a deal. Why wouldn't you just drag your feet now even more, let this play out in the courts? Because the tariff leverage, if they appeal it or if they try to go under some new statute of the law, there's that U.S. tariff leverage is now called into question, and so you don't really have an incentive to negotiate in good faith, so you drag it out. Which
of course. So I agree with that.
I think so. In some ways, I woke up this morning. I looked at the SPOOs. I looked at the Nasdaq. We're up 2%, and I know Nvidia had a decent earnings announcement yesterday. But I go, I don't understand this. This doesn't make any sense to me. They should puke this because the uncertainty in the world just increased. It did not decrease.
That's not your read is longer term is probably correct, but what you have to remember is the market is very short-term emotional. And like I also told Tony this morning, this is the equivalent of a CEO leaving a company and the stock going up $8. This is exactly what happened. So the market, like Trump, listen, we can have lots of different opinions on Trump and whatever, but one of my very strong opinions on Trump is that, and you don't have to agree with this, is that he is an imbecile and he's incredibly dumb. But even as dumb as he is, he can see that if the market goes up when his plan gets rejected, that, okay, why am I fighting for this? Let me just go a different direction where everybody loves me and I can do whatever. And so I think he's going to get a lesson from that. And then I think you're right. Down the road, there's something else that happens. I didn't like the market's reaction to that news because I didn't like the fact that bonds sold off on it. It didn't make any sense to me. I didn't like the fact that some of the things it was too big a jump. There was a bunch of things I didn't like about it. But the reality is, I think he recognizes that you can't execute a plan when nobody wants any part of it. That's it.
Did you see the whole Taco Trump thing trending on Twitter?
I did, but I didn't really. I don't dig that kind of stuff because that doesn't do any. I don't love mudslinging. Doesn't do anything. It's not fun for me.
You don't love mudslinging.
Sometimes you surprise. You surprise me every day. Did you just use
imbecile and you then say
there's a big difference?
Like mudslinging.
There's a big difference. When you're an imbecile, you're an imbecile.
You're kind of going back.
I'm not saying when I think somebody's an idiot. When I think somebody's an idiot, I'll call them out for being an idiot.
And then you used imbecile, and then you say you don't.
That's not mudslinging. Mudslinging is not when you think somebody is an idiot, you call them out on it. Like there's a lot of people in politics that I call out for being idiots. I have no issue with that, but I don't like the game of like stupid taco thing. Like I don't want to give him any bullets. I mean, is it true? Of course it's true. We've been saying it from day one. I think I started saying.
There's the jam.
I've been saying from day one, Trump doesn't have the ability to stick with a certain plan. He changes his mind on everything. He chickens out of everything. He's always been that way. But that goes back 50 years.
I guess there is a different way to frame it. The other way to frame it is that he starts the negotiation with the wildest claim, and then walking it back.
Which is a la Sosnov.
You can frame it as chickening out, or you can frame it as he started the negotiations way overpricing what he wanted. And then ultimately you negotiate, you pull it back, and you get something much more closer to what you wanted.
It's negotiating 101, and I'm not saying Trump with his
the
book
art of the deal.
Or anything else like that. Art of the deal. Forget about all that. Anytime you want something, you want 5, you ask for 8. I've never done it in my life, but that's the way to do it because you get 6 when you ask for 8, even though you wanted 5, because everybody thinks they negotiated down. I always say, this is my best price. This is my offer. This is what I'll take because I don't want to fight and argue with everybody. This is what I want to do. And it screwed me my entire life. That's why I'm sitting in coach and Saz is up in first class today.
My son's favorite game to play. We started playing this a couple weeks ago. He wants to play it every day. It's called Store. He goes, Dad, can we play Store? And he's got all these dinosaurs that he's laid out in his room. And I come in there with a bag and I say, hey, Mr. Jones, how are you? And he says, hey, welcome back to the store. And he goes, what do you need? And so here's the game. The game is I say I need 3 dinosaurs. And I've taught my son, the first thing you ask is, what are you looking to spend? So he goes, what are you looking to spend? And I'll say I need 3 dinosaurs for $30. And the game is he's gotta sell me less for more. So if I say 3 for 30, he's got to sell me 2 for 40, and he's got to figure out an explanation to negotiate me for less is more. It's his. He loves this game, Tony, and it's exactly what you're talking about.
It's great.
Start him
Good
early,
for you.
man.
Good for you. Now, when he meets a woman and he gets married and everything else like that, all of that art goes out the window. It doesn't matter anymore. You know that, right? I mean, you're only preparing him for like up to about 20-something.
He's 6. He's 6. You got him meeting women already? He's 6.
He's 5. And by the way,
he's 5.
I'm in Singapore. So how do you think my negotiation went, Tony? I'm 11,000 miles away from my
He's
home.
going to teach you about it.
Okay, last thing. I've been asking every guest on the show this week, because this is the hill I want to die on. They're getting rid of the penny. What do you think about that, gentlemen? They killed the penny this week.
I don't have a strong opinion. I mean, they've killed the penny, I think, in Canada and other places, and maybe in the UK as well. I mean, what do? They just round up or down? Is that the whole thing?
I suppose so. I'm guessing people are going to stop pricing pennies.
It's round up, Saz. It's not round down. Okay.
All right, whatever.
It's round up, okay?
Okay.
$3.89 is now $4. We had to round up. $3.99 is now $4. We had to round up.
I mean, I if it costs more to create a penny than I mean, it's fine. I'm fine with it. I don't.
It doesn't matter. These kids don't use money anyway. They do everything Venmo, cards, debit cards. They don't use cash. It's not enough to get rid of the penny because we don't use it. But I get what they're doing. I understand. I got a penny collection.
Protect your sovereignty. Protect private cash.
You think this is round one, right?
Oh, this is clearly step 1. This is how it starts. You take away the penny.
Round one of getting rid of
take away the nickel.
You take away the penny, and what happens
take away
next?
The quarter, nobody cares.
Oh, God.
The next thing that happens is either this is the fight that's being waged right now. It's either you're going to go CBDCs and government's going to get control over purchasing, or you're going to go private stable coins are going to run the world, and all the tech giants are going to get influence over your purchasing. That's the fight that's being fought right now. And what I want is to maintain my access to cash so that I can enter into direct private business transactions with my fellow citizens without anybody knowing what I'm doing with my money or without any ability to impede on those private transactions. And I know it just comes off as this is just a penny. Who cares? It costs more to make them. But I'm telling you, this is how it starts. Protect the cash. Protect your sovereignty. And with that, gentlemen, I'll see you another day.
Only Victor Jones could come up with a conspiracy. I don't. Of all the things you have to worry about in this world, Vic, that is not on the top of my list.
I know it isn't, and that's why I'm warning you. I'm the guy who's telling you what's
today
coming.
Pennies, tomorrow it's sovereignty. Tomorrow
That's right. Ask the Canadian truckers who got their bank accounts shut down for protesting. Ask them how it's going to work.
It's a good point.
I'm not too concerned yet about stable coins taking over, and as long as we're a culture of gamblers, I think cash will be around here for a long time.
Yeah, well, R.I.P. Penny. R.I.P.
All right,
and if you got them, send them.
I'm going to let you go. I'm going to let you go. Good work out of you, my friend. Always a pleasure to see you. Keep teaching that boy of yours. We're going to take a quick. And what about the girl? You don't teach her?
Not yet. She doesn't like to play that type of stuff. We play other games.
She don't like to play that kind of stuff because she just wants to pay market price. It's her dad's card. We'll be back in 90 seconds. You listen to Tasty Live. We got more after this with a market measure.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Have you ever been banned from any place?
Probably.
Just the delivery room? That was it? No other place?
Oh, the delivery room, yeah. Twice.
That's the only one. Twice.
Yeah.
Two-time offender.
You know, my wife gets banned all the time from places. She's confrontational, argumentative, and violent. When she got banned from that one Italian restaurant that was around the corner from her house, that's the only time it really pissed me off. They had the best chicken Vesuvio. And I had to go in there and just say, listen, you banned her, not me. I'm still good, right? You know, they're like, yeah, you're okay.
Are you really going to Buc-ee's?
Yeah.
Will you film it? You film yourself going in, you're like, what up everybody? It's your girl Sazi. I'm here at Buc-ee's. And then you get the food. And then you get the food and then you get to eat in your car.
You eat in the car, you get something on you. That's your shtick.
Yes.
You got to do it.
I never spill.
I love this.
Yes.
I know, right?
Do you know what that's like to go out to a tasty show and you prep your whole speech? You come out there and you see all these people that have driven for miles and miles, and the first thing they say is, "Where's Tony?" And you have to go,
exactly.
He's not here. And the look of just, it goes from excitement to sheer disappointment in an instant.
I've never heard one person say, "Where's Tony?" I've been on the road for 25 years.
You literally, the whole concept you had last year was "Where's Bat?" That was the whole concept of your show.
They did a show about where the bat is without bringing the bat.
I hate to say this, but a buddy of mine owns a mountain there.
Yes.
Owns a mountain?
Something like that.
Okay, cool.
They got hiking trails on it. I'll tell you my activities.
Okay.
I'm gonna fish.
You were not gonna touch a worm.
Who's gonna hook?
You're not gonna touch a worm, sweetie.
I do. I fish.
Okay.
I'm gonna fish.
Okay.
I'm gonna bike ride.
Okay.
Bike ride.
I'm gonna hike. I'm doing something with beehives and honey.
Okay.
Then I have my choice of whether or not I want to practice my archery.
Is this like adult summer camp? This sounds amazing for me, who actually likes the outdoors. For you, you're an indoor cat.
Get the full scoop by checking out the archives at tastylive.com.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. We got some action going on. Dow just turned red by 36. Russell down $1.30. NASDAQ is only up 45, and the E-mini S&Ps are up 14, shaving 90 handles off of their high, Sadnov. What say you? Volatility up 40 cents to 20.05.
I think the volatility is probably the most telling. If I had to pick one thing, I would say the volatility is probably the most telling.
Sure,
I mean,
agreed, as always.
Yeah, I don't know. What do you think? I mean, I'm not really sure. There's,
you know what? I thought. Listen, I didn't want to say it. You know, listen, you go to bed, even the S&Ps are up 70, 80, or 90, 100. And you wake up and, you know, you get on the show and they're up 50. I didn't want to say it was an easy sell. I did want to come up on the show and say, just like the down move that we had when we flirted with 5,800, got down to like 5,850 something. I thought that was an artificial move lower. This looks like it was an artificial move higher. Now, I didn't get a chance to say that because we had already moved 50 handles. But I think that anybody who had any bullets, you know, pairing it up, you know, 6,000, big round number, fall off that. Now you're flirting with, you know, 5,900. I thought we'd have an inside day, so I still think we'll close a little bit higher. But again, like you said, volatility is key. Keep an eye on that. If that keeps staying bid, we could get a little bit more of a sell-off.
Yeah, well, I mean, they gave up enough at this point that I don't think there's a lot. They gave up enough right now that I don't know.
Oh, really? You think 1.5% move is enough to give up?
Yeah, gave up a lot. Just taking a quick look around. I mean, at least for us, UNH is higher. I guess that's a good thing.
Yeah. Tesla was up by around 8. It's up around 3 or so.
Yeah, bonds are higher, which I like. Maybe they hold them here. I don't know. I don't know if they can keep their wings up. Not that much kind of going on. That's the weird thing. I mean, not that much to really, I guess, look at. And you said Marvell has earnings tonight?
Yes, sir.
The premium in Marvell is already coming in. That I can tell you. So, kind of a crappy, boy, what the hell is going on in Marvell? There's no premium in there.
Yeah, it's, Marvell's a tough one. I've had a tough one there.
I'm just looking at the option premium in there right now. It's not very rich.
Not at all.
No. Oh my God, there's nothing even in July. And I'm looking around at some of these other stocks, and it's not an incredible amount of juice. That's for dang sure. All right, let's do it.
Thursday 0 day, Sosnoff, got any inkling?
Well, we learned.
Want to abstain because you're traveling?
Well, I mean, Thursday 0 day is the day that we told not to sell them.
That's correct. I just want to make sure you're going to heed to that.
No, I stick to that. I live by that. But this is an interesting piece today, because this piece is, we're actually going to look and see, we're just going to take a look and we're going to see how many consecutive days, how many consecutive losing days do you think you have if you sell like a 20 Delta Strangle?
Oof, I don't know.
Like, obviously.
You mean before what? Before it blows up?
No. Like the biggest problem with the 0 days is if you get on a cold streak, it could be kind of ugly. But what we found is that it's very difficult to get on cold streaks in the 0 days, because if you take profits quickly, there's a high probability you're going to have a profit if you take it quickly. But we decided to take a look and see how bad were the worst streaks if you never had a chance to take a profit.
So you have to hold it to duration. I don't think it's going to take very many, Sosnoff.
Let's take a look. Well, not duration. You either hold it to 25% max profit, or you hold it to the duration.
Got it.
We're analyzing losing streaks. What you're going to be surprised is the losing streaks are not bad. They make a very strong case for putting positions on most days and not worrying about multiple, really a lot of bad streaks if you take profits quickly. Here, let's take a look. It's actually really good. So in this case, we're going to stick with defined risk. Just they're like synthetic strangles. They're like wide iron condors.
Yep.
And in theory, 2 losers in a row should happen with the square of the loss probability. For example, having 2 80 pop trades fail in a row would be a 4% chance. Okay? So in theory, it's nice and all, but how does it actually go in practice? So this is really interesting to see. Let's go to the next slide. So we considered narrow 0 DT iron condors at 9 a.m. every day, used a variety of short deltas, $10 wings. Okay, we closed the winners at 25% of max profit. All of the trades that were allowed to expire. We analyzed the frequency of consecutive losing days, and then we also looked at how many days it took to make the money back if you lost. That's always a little, little wishy-washy, but we did it.
Yep.
Let's go to the next slide. Okay, now they start at 50 delta straddles. We don't do these, but we just figure we'll show them and then get down to the 20 and 30 delta strangles
You're
that we do.
basically looking at an iron fly, right?
Iron fly.
Yep.
So chances of an isolated loser. Now, what an isolated loser means is we didn't have a chance to close it for 25% of max profit. That's all that means.
Right.
You lose about 11% of the time. And the average loss is about $147. The chance of 2 consecutive losers, 6%, 3, 4%, 4, 1%, and 5 plus losers. I don't know why it's more than that, but 2.4. And then the money is, according a number of days to make it back. It all kind of makes sense. This is not really a trade that we do much. The 50 delta straddles, I don't think we've ever done those in the 0 days. So let's go on to the trades we do kind of a lot more often. Go to the next slide, Beth. So 40 deltas, we don't really do either. These are a little too narrow for us. So I'm just going to pass on this because I want to get to the good stuff. So let's go to the 30 delta. This is the area that we live in, 20 to 30 deltas.
Yes.
And so the frequency of a loser here is about 12%. Consecutive losers, 3.4 and 6. 4 consecutive losers, never. In 2.5 years of research, never. 5 consecutive losers, never. The average total loss, this case, it's a little bit more because these are much further out of the money. When you lose, you generally lose pretty big, and the number of days it takes to make it back. So, okay. I think these numbers are more in line with what we experience. Now, you have less than a 1% chance to lose the $1,500, so it's not horrible. Let's go to the 20 delta. This is our sweet spot. So this is where we live, at the 20 delta. And you can see that 3 consecutive, 4 consecutive, and 5 consecutive losers, never in all the data we have. And what's so interesting about this is that even though the average loss is high, and even though the average recovery time takes a long time to get it back, 2 consecutive losers, less than 1% chance, based on all the research we looked at.
I would have thought it was higher than that. I mean, I know consecutive is, but I would have thought it was way higher than that.
Of course. How could you think anything but that?
Yeah.
I mean, I would have said 10% or whatever it is, significantly higher.
Sure.
But that's why I thought this was the most impactful and interesting slide.
Oh, this is actually great.
Yeah. I mean, isolated losers, just under 10%, 1 out of every 10. But 2 consecutive losers, less than 1%, if you're doing the 20 delta. The average losses are high because this means you hold them to the end of the day. You don't have to hold to the end of the day. We have to for the purpose of the study, but you don't have to.
Sure.
Yeah, like Tony and I, we would get out of this trade probably between like 11 and 12.
Well, that supports much of the research we've done in the past too.
Yeah. We would for sure get out of this trade. So I think this is the slide that fits our positions the best. This is the slide that would make the most sense to us just when we're thinking about, how do we trade? And this is the slide that makes a very strong argument for, for doing some stuff in the 0 days.
Yep.
Except on Thursday.
Does.
Except on Thursday.
Well, they didn't exclude Thursday in this study, so.
No, they did not.
Yeah, so.
If we believe in the long-term profitability of short premium positions, a run of losing trades is perhaps the biggest danger to retail traders' ability to reach long-term results, good long-term results. Combining option strategies and mechanics for high probability of per trade profit helps make the runs of losers unlikely. An 80% pop translated into 2 years without seeing more than 2 losers in a row. Riskier, higher credit spreads, however, required less time to make back what was lost when the losers did strike. It can take a month of high pop trades to make back a loser with iron butterflies that you might get back in just 2 days. So finding the balance between pop and premium that works best for your investment requires careful consideration, but now you're armed to make an informed decision. That's very true. It's just providing information. If you go wide, your losers are going to be bigger, but again, we didn't manage them early for this case, and the chances of 2 consecutive losers is very small.
Good study by the research team here on 0 days for sure. Even the S&P is up 11, NASDAQ up 25, Russell down 5, Dow down 7, volatility just at 20 after trading 2020. Sosnoff, dare I say the move might be over to the downside? What do you think? Too bold of a call for you to make. I get it. We'll take a quick 90-second break. We'll come back. We got more Scott Sheridan after this. That's right. We'll be back in 90 seconds. Tasty Live.
Yeah, I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. And for you, enough out of you. That's right. Your friend of mine, the very popular, the very handsome Mr. Scott Sheridan for the Scott Sheridan Studios. How are you, Mr. Sheridan?
I'm great. Well, Tom, you just clapping for me? That was really nice.
No, I'm just clapping for the show.
Got it. Okay. I didn't think, I was wondering. I'm like, I thought you were clapping. So now we were talking about Locks for Love and somebody in the office did that. Tom, what's your number?
What's Locks for Love?
See, that actually makes more sense.
It's something go ahead.
It's something that you do out of the goodness of your heart. So Locks for Love is where people have long hair like you. They chop it off and they give it to people of cancer. They could, make a wig, et cetera, et cetera. That's called Locks for Love. Wait, should we back up and explain what love is?
In your case, I don't know if they'd have to make a landing strip because it's so thin.
So we should talk about what love is. Go ahead. Yeah.
So what would be my market not to have to do that?
No, what would you have to get paid to take your hair down to mine, which is a 1.5?
1.25.
I would pay a lot more not to. Like the easier
1.5 is being quite generous. I mean, it depends on where you are in the head. Like you know what I mean? It's a 0 to 1.5.
What would I have to pay not to have this conversation is really the question. I would make whatever they could get for my hair, whatever it is, I'll double it.
You know what? Maybe we'll do that. I'm calling Locks for Love. I'll send them a picture and I'll say, what could they get? I think they give it away. That's the whole thing. It's just it's a charity. It's just out of the goodwill, good heart. Yeah, there we go. Anyway, all right. So we're not.
Let's give a shout out to Jason. We're doing this because our buddy Jason on the trade desk there actually did this for Locks of Love, which was a great, kind thing for him to do. Now, he came on the show and corrected me about Taiwan and Taiwanese. You'll know Jason from that.
It wasn't Taiwan and Taiwanese.
It was Taiwan and Thai food. Okay, yes. And I missed it, but I need to go back and watch that. And by the way, Tom, I'm meaning to ask you, what was your comment about Sheridan's in graduation when I was gone?
You heard that?
Yeah, I did, but I didn't get the details. What dig did you take at me and my family? You can take it at me. Leave my family out of it. But God, what shot did you take?
What dig? I didn't even give a dig. There's
Tony,
no dig.
You get his family's name out your mouth.
I don't even know what you're talking about.
Tony.
Sheridan's in graduation.
Tony, yes or no?
Don't make me repeat. Don't make me
repeat.
I
was probably, I might have been talking about I think we were having a conversation about like Tony's son one of his kids is graduating like kindergarten or first grade or somebody was graduating and I'm like, the whole concept of graduation to me is like ridiculous. Like you're supposed to graduate.
Oh my God.
So I don't know why we make a big deal about it.
What? Your parents did a lot of things right, okay? They missed in a couple areas.
This was not one of them.
Yeah, this was not one of them. You're supposed to graduate. You're supposed to make it to the next year. So why celebrate a birthday, right? So you're supposed to.
It's not that. You celebrate birthday's fine, but it gets a little ridiculous when we're celebrating graduating kindergarten, or graduating,
how about college?
6th grade.
How about college? I went to a college graduation. That's unacceptable too.
College graduation? No, I said I would have preferred not to go, but I didn't say anything about you.
Oh, I'm gonna call you out on this one. So anybody that wants to invite Tom to an event, all you have to do, invite him, because he's not going to go, and he will double the gift to not have to go. So there you go. So invite Tom to the event, and then you get double the gift. Says you don't want to go.
Well, I mean, listen, you want to go to your own kid's graduation, I think that's fine.
Well, I didn't invite you to my daughter's graduation, but I did hear you take a shot at me and my family.
I didn't take a shot at her.
Oh, I think you did. Tony?
I didn't.
Yes, see?
No,
your consigliere, your consigliere is calling you out a little bit.
No. It was more like Tony congratulating, like, I think it was like Vinny getting in, like going to high school or something. I'm like, or
Vinny's in
graduating,
high school.
Whatever. It was something dumb like graduating driver's ed. Okay, we passed. Like we don't have to do that kind of stuff.
Okay, as a kid, did your parents ever celebrate any of your accomplishments?
No, only my sister.
Okay, so now the story becomes crystal clear. Oh my God! It was like my dad. He always made us read the instructions on a toy, a game, whatever. When as a little kid, we always had to read instructions before we could play the game. It was the worst. I'm like, what do I have to read these?
Yeah, my dad was the same way. I hated that. The
worst. Only to find out later in life that my dad's first job out of college was writing the manuals. So he's probably thinking, nobody's ever going to read these. I'm going to make sure I make somebody read them. So we had to read the manuals. All right, so it makes sense. You didn't get any celebratory dinners or parties, so therefore you take it on everybody else.
It's not that. I just don't understand, like, the whole... I think we go a little overboard on certain things in this country, and graduations is one of them.
See, I think that we need to celebrate more about life because there's a lot to enjoy with life. You need to celebrate it.
You can celebrate anything you want, but I think like celebrating something that is you're supposed to graduate
but
high
it's
school.
not a given. A lot of people don't graduate for a variety of reasons. So if you do get there.
Present company excluded. I graduated high school on time, I might add, with honors.
And then John Jay.
Now I'm an idiot. I'm an idiot because Tom told me I was an idiot yesterday because I didn't graduate college. But
did I say that?
I'm sure you did.
Yeah.
I'm sure.
That's exactly what you said.
I did
exactly
not.
What you said.
Yes. I did not say that.
Okay, different topic. I have never been to Atlanta other than the airport.
Never been to where?
Atlanta. You guys are going to Atlanta, right?
Oh, yeah. Yeah, sure.
Okay. Yeah, sure. Sorry, I'm not celebrating that you're going to Atlanta, so don't get excited. What's the food? I don't know. What's the cuisine in Atlanta?
The cuisine?
Yeah, like what do you like? What's local food? I know you're going local.
Yeah.
What's I don't know. What's local food in Atlanta?
I mean, they have a mixture of it's a mixture of some some kind of Southern touch, I guess you would call it. Southern Reconstruction cooking.
Southern Reconstruction.
It's like classic Southern
cooking,
food.
For sure.
If you wanted to give it a category, I'd say classic Southern.
Got it. So if your choice is good fried chicken or catfish, you're going catfish because nobody eats fried chicken?
No. We're not going either of those two. We're actually going tonight. We're going Lebanese.
I can't do the dip thing with Sosnoff.
Oh, that's right.
If I don't, I got to strategically sit at the correct end of the table that the food's coming in. So I can politely take some of the dip with a spoon, put it on my plate, and pass it on to the next polite person who will probably do the same before Sosnoff takes his bread and his fingers and scoops it in there and eats it and scoops again before he passes it to the next person.
I'm not even going to use the bread tonight. I'm only going to use fingers. Just for that comment, I'm only using fingers.
Fair enough. Fair enough. All right, one more earnings play today. I don't know if you're doing anything in Costco, right? And I think we're done.
Do you know the last
Costco too? I thought it was Marvell.
Oh, I know Costco is today. I don't know.
You are right. Costco on the 29th after the market closes. Well, you don't have a position in Costco, Sadnov. That's what I was looking at.
I know. Do you want to know something? The last time I was I will tell you something, a sandwich that I had the last time I was in Atlanta that I don't usually have. I had a pimento cheese sandwich.
On white bread?
No. It was on homemade sourdough. It was good.
Pimento, just straight up, that's the whole sandwich?
There might have been some other stuff on there, but it was a pimento cheese sandwich.
Never had it.
Yeah. Good biscuits and gravy, too.
I'm questioning this story by looking at you. I'm saying somebody ordered it and you looked at it and said, no, thanks. There's no way you ordered pimento cheese sandwich.
I did. I was with Jamal. We both had pimento cheese sandwiches.
Well, then that was his idea.
Okay, only you and Jamal would go to Atlanta and have pimento cheese sandwiches. Only you and Brittany would go to the Mecca for Southern food and get Lebanese food. I don't get it.
Well,
I don't understand
you too,
it.
because you're doing it.
Yeah, I mean, I don't get a vote in the ballots. If I do, it doesn't count.
Just leave it at that. You don't get a vote.
Let me explain something, because you're going on the road the whole year, Tony. You're going on the road the whole year. Let me explain how this works.
Woof.
You don't have.
Wait, Tom. You want to do this in front of everybody? It's going to hurt a little bit. I don't know how I'm going to behave.
No, it's not going to hurt because neither of us have a vote. Just so you know.
Oh.
Yeah. No, neither of us have a vote.
That I believe that makes that actually more sense. Like, I'm going to say Tom had nothing to do with the Lebanese option for tonight.
I love Lebanese food, but I had nothing to do with the Lebanese option.
Wait a minute.
Okay, yes. If we could stay away from the tacos, not because of Trump, but if we could stay away from the tacos on the road, that would be appreciated.
We don't do
unless
tacos
we go to
on
Mexico.
We don't do tacos on the road. In Mexico, you do tacos.
Hard shell or soft? Hard or soft in Mexico?
I mean, go ahead.
I like soft, but that's me.
I've never even.
I don't think I've ever seen a hard one in Mexico.
Either have I.
I mean, not the hard one, but
okay.
I mean, where are you going for a hard shell taco?
I don't know. I like hard shell tacos. Bell? Yeah, look, good Taco Bell hard shell taco. You can,
Yeah, that's oh my God.
Wait, you're looking at me. You're eating Tom's dipped fingers tonight, okay?
Yeah. You have a good point. Like I said, it could be vegetables for me. It depends on if I pick the wrong side of the table.
Yeah, you need to be like a poker table. You need to be Tom's got to be on your left.
Yeah.
So that when the food comes in, you always get to go before he does.
Oh, you don't understand.
No, we have assigned seating, Scott. We have assigned seating.
When was the last time you were out to dinner with Tom in a group?
Last night.
Where Tom ordered.
Last night.
No. In a group? It was only.
Well, there were four of us.
No. That's not enough. When there's a group, they'll go, oh, okay, can I ask everybody what they want? And Tom goes, yeah, we'll have. and then he orders everything. So then the waiter caters to just him. So when the food comes, it comes to just him. Even if I ordered it, it comes to him to like kind of put his blessing on it. Like, oh, you're going to like this, Bat. This has got your name written all over it.
Okay, for that, I'm not even saying a word tonight.
Yeah, I don't believe that. I actually tried not ordering anything last night. That didn't work either. I said to Tom, he could order everything because I figured if I ordered something, he was going to say it wasn't edible. But
why would you get that here? And by the way, what was your take on the restaurant? Sas had his.
So I don't want to call out the person who ordered the steak. Okay, but he ordered the wrong one. So
how could I order the wrong one? There was only two steaks on the menu.
You could have done the ribeye.
You've done this to the last couple of restaurants you went out.
I did order the ribeye.
They do ribeye cap, which is great, but you didn't want to go that direction. You wanted to go for the big steak. It was a mistake. Steak was not great. Steak was fine. It wasn't great. Their pastas are unbelievable, and the sides were good. What'd Tom say? He gave it 2 stars?
No, I said exactly that. I said their pastas were really good.
Really good.
And I said the steak was fair. And I did order, I'm sorry, but a $250 steak. It's a ribeye.
Wait a minute.
I mean, what do you?
I do need to give a shout out. Thank you, Tom. He did pay for dinner, so that's very nice.
Wow.
Yeah.
Wow. Tom, last time I went out with Tom, we were with, I think, let's see, 6 people. And Tom said, I'll pick up dinner unless you want to split it with me, Bat. And then I had to split it with him.
I didn't say
for
that.
Some reason, did I split the bill with you?
I don't. I never asked you for anything.
I mean, stuttering. I didn't want to quote the movie, but yeah, that guy. So I had to split the bill with him because I guess maybe 6 people was a little bit too much for Tom.
Well, he was very generous last night. And he picked me up and dropped me off.
There you go.
Oh, he's never done that for me. Did you put out?
So he didn't know where I lived.
Let me ask you another way. Did you get a raise?
He didn't know where I lived. Gave him the address. Drove right by. Did come back. Said he thought I was somewhere else. I was going to ask if he wanted to stop up to see the place, but I didn't because
you didn't pull in front, put the blinkers on, see the new gig.
It's a lot of work.
It's a lot of work. Getting out of the car, going in the elevator, going up, in the elevator, walking. It's a lot.
You know why? The cheap SOB probably had to hand the doorman $20, for keeping the flashes on out front. He didn't want to put the $20 up there because he knew he was going to pay for dinner. He didn't have enough for both.
Fair.
Unbelievable, Sosnoff. Unbelievable.
Someday he'll stop by. All right, should we get to some business?
Sure. Even the S&P's up 18, Nasdaq up 78, Dow up 4, Russell down 4, /VX volatility Sosnoff 1981 up 16 cents. The bat put the low in. The low is in. That's it. Yeah, call the high, call the low. Time for me to go.
Were they up 100 overnight?
What can't you do?
They were up 100.
What can't
right?
they do? Is right. Yes, they were, sir.
Okay.
Yes.
Top 15 symbols going through the system first 40 minutes a day. No broad-based indices or futures. Top for you, number 15. Netflix at a 14. For everybody else, NVIDIA at a 14. Tesla at a 28. CRM at a 26. PLTR at a 38. I at a 19. Apple at a 30. UNH at a 46. AVGO at a 41. TQQQ at a 29, Meta at a 14, Amazon at a 20, GLD at a 42, AMD at a 16, CRWV at a 44, and number 15 for Tom, Netflix at a 14. Rounding out the next 10, we have TLT at a 33 and ELF at a 30.
Sounds off. What do you have to say about that?
I mean, it's a good list. There's a lot of stocks on there. I'm surprised how many people trade stocks that don't trade that much.
You mean that aren't as liquid as you would like?
Yeah. That make that list.
That's fair.
Yeah.
Are we gonna do anything for Costco today, Sadnoff? Even though you won't be here for the afternoon show,
It's a tough product to trade. The option markets are not great. I got a small position. They're not great markets.
What's your small position?
I'm short some puts. I'm going to roll them up. So I'm
rolling them up.
Yeah, well, I mean, because I've had them on for a while and the stocks rallied, so I want to get a little bit closer. But I mean, I'm looking if I go out, I don't know, 35 or 43 days, you're looking over a 66-point move, and I'm short some puts that are a little bit lower.
Costco stocks 1,008.
Yeah, it's a good move.
That's correct. You got split risk there too if you go with your $1,000 thesis.
Right.
1 day to go. Expected move is $31.
Boy, here we go, Tony. Just so you know, we are 100% responsible for this if it goes wrong.
Mm-hmm.
Right? He would never have known.
I love our viewers. They're now sending you graduation invitations. Bob, Ben's daughter's graduating 4th grade. You're going to be invited. I've got other people. Kindergarten next year. Sosnoff, you're invited, so you can get your tickets. You're getting invited to a bunch of them.
This is what I was worried about.
That's
I
awesome.
have a kindergarten graduation. You're invited to.
Yep, Beth, you gotta get on the gravy train. You got kids graduating something, don't you? 5th grade, 4th grade, 2nd grade, 1st grade.
Yeah. Your invitation's coming.
There you go.
Yeah. See, this is exactly what all this is going to mean. I'm going to be absolutely tortured now by kindergartner graduation.
As you should.
Beth, does anybody go to kindergarten graduation?
Yes, the parents.
Yeah, big time.
Oh my God.
A big deal.
I think
big deal.
You know, we need another show. We do need another show. We need a therapist to come on and try to help you. I think it's past the point. You need online therapy. I think that would make for a really entertaining half hour. We could do 45 minutes or 50 if you're up to it. We'll start slow.
I've been team adulting helper for a while now. So
right, but we need a professional. We need a real therapist to come on and try to help Tom work through some of these issues. Think of how amazing your life would be if you got excited about going to a kindergarten graduation.
I'm not really sure that. How would you get excited about going? I mean, no.
Okay, when your grandson, how about this? I'll make a market right now. You're going to your grandson's kindergarten graduation.
Well, only because I'm scared.
100%.
Right?
Only because I'm scared of my daughter.
Okay, you're going to come up with some BS reason. You're going to want to be there, but you won't be able to admit that you want to be there. You're going to say, when is it? I want to come. Or grandparents' day or whatever it is. You're going to be like, yeah, I want to go do that. But you're going to say, don't tell anybody that I'm here. And if it was, say it wasn't by choice. Tony,
I'm going to go.
Yeah.
We are so proud of you for graduating kindergarten.
Yeah, it is. It's going to be a big event.
Oh my God!
James in production expects you to be at his son's graduation. He's graduating with honors from 5th grade. Sosnoff, he expects you to be there. I mean, if you want your picture to be fuzzy every day, don't go. It doesn't matter to me.
Why not? Why not? I should be there. I'll be everywhere.
See, look, it's going to make you. It's going to change your life. It's going to be great. You're going to see all the happiness.
Oh my
and
God!
You're going to be like, okay, here we go. All right.
All right, Sosnoff, I'm going to give you a chance to get your bags packed because I know you haven't packed your bags yet for Atlanta. So I'm going to get your bags packed.
What does everything still fit in a backpack for you for 36 hours?
Oh, come on. This is a no-brainer.
24 hours?
Wait, but you come back Saturday, right?
Tomorrow.
Friday.
Oh, you come back tomorrow. It's 24 hours, one night. Oh, all in the backpack.
It's already packed. Here I am. Everything.
And you're lifting that with one arm, so there's not much in there.
Not only is he lifting it with one arm, it's certainly going to be wrinkled.
Yeah, but I only have to get it to the airport. Tony's got to take it from there.
Oh, nice.
Yeah.
Tony, I'm assuming you pack a proper carry-on.
Oh, yes. He's a very...
I pack a carry-on. That is correct. So my clothes can look like I don't look like I came from an unmade bed. Yes, that's correct. It's 100% correct.
All right. Well, safe travels. I am sure it's going to be a great show. Kicking off. This is exciting. You're kicking off the new season of shows.
Very excited. It's all sold out. We're all filled up, ready to go. It's going to be great.
Beautiful.
We're going to take a quick 90-second break and come back next time you see us. Well, we'll be in Atlanta. I hope you'll be there too. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stopped for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
What happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
Like a
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Everybody, and welcome to the Liz and Jenny Show. I'm Jenny, that beautiful blonde in the red blazer is Liz. Happy Red Shirt Thursday, Liz. Looking sharp.
Thank you, Jenny. Feeling sharp. How are you today? Happy Red Shirt Thursday to you as well, and to everybody out there participating.
I'm well. I mean, it's almost June, and I'm in a sweater, and you're in a blazer. I wish we had warmer weather, but it is
Fun fact, when I'm in this studio, I've got workout clothes on. I throw the blazer on top. Still in a tank top. My favorite part about doing this.
Yeah, so I don't know what there's. I called you last night when spoos were up 90. Now they're only up 29.
I was laughing when I got off the phone with you because you're like, NVIDIA's 149. I was like, hold on 1 second. Hold on 1 second.
Oh.
Because you were on your phone and you were looking at the ask and it was like 139 at 149. I was like, okay, just simmer down. It's like 139.
Okay, let's pop in the platform. NVIDIA had earnings, and I was watching. I had the boys on. I was listening to Chris and Ilya and Mike as NVIDIA earnings were coming out, and the earnings weren't great. So I thought,
that doesn't matter. It doesn't matter what they say.
Well, and the stock was up, but it was teetering. Honestly, I watched it for a while. It was teetering between like 137, 138, 139, 138, 137, 130, like teetering. So I thought, you know what? I had a long call, so this doesn't look good. I'm going to sell some stock. So I sold my stock at like 139.50. So I just sold, if I had one long call in the after hours, I sold 100 shares of stock. And then I tried to buy it back. So then I thought, I'll just scalp, try to scalp. And I put in a bid to buy it back for $200. And so trying to buy it back, almost got hit, missed it by like a dime. And so then when NVIDIA really rallied, then I was very mad, very mad. That's when I called you.
That's when I got the phone call. That's when I got the angry phone call. Yeah, no, I get it, but it didn't really, like I said, 141, it's not that crazy. The bid and the ask were very wide when I was talking to you, which is on your phone, when you were going to try to buy it back, you're hitting the offer.
When I was trying to,
if you're trying to look at it on your phone, the price, you probably hit bid to look at it.
Yeah. See the price on my phone, I had to just hit right. But it, that was kind of fun. So having like an extra long option did give me the ability to, in extended hours, sell stock and then, try to scalp the stock back and forth. So that did give me something to do when the market was closed.
Oh, yeah, there you go.
I thought it was kind of fun.
The extended trading hours have been fun. I do it a lot in the mornings. I don't usually do it after. I don't do it at the close. I don't know, or after the market close.
For earnings, because it was kind of whipping around.
Yeah, right.
And when I did whipping around, it had a range of like 130, almost like 138, 139. Not a very big range.
Why don't we take a look at our 57% on our calendar, Jenny Andrews? 57% overnight.
Now we were weenies. We have this baby calendar. We didn't want to risk much in NVIDIA, and we risked $100 and we made $53. So yeah, 55%. I want to take a look at this 138 level in the 1 day. There's still 56 cents left. And if it comes down at all, it could be worth more, but I'll take it.
I know. Because if it was 149, like from that perspective, if what Jenny's thought was happening is happening, 149 would be, this would be a loss.
Right. Yeah, it would be a loss. Well, right.
Yeah.
There'd be like nothing left in our 1 day, and the 8 day would have, it'd be a scratch.
Yeah.
But what, whatever. I don't know that NVIDIA is going to really keep rallying from here, but now I synthetically have a long put because all I have is my long call, short stock. So synthetically, I'm just long a put in NVIDIA for the rest of the week.
Oh, and you're just going to leave it?
Yeah, why not?
Yeah, you might as well, if you've got a long put, unless it's worth anything.
No, I don't think so. Okay, so getting out of this $1.50 credit, maybe we can get a little more. $1.52 credit out of our calendar. Now, with the 11 rank, is there anything we would do in NVIDIA? I don't know. Probably not.
No, not with the 11 rank.
I will say something that is coming off that should I would think come off today. This pairs trade, and we did it baby, but if you did it like 800 by 100.
Did you get into it yesterday?
Yeah. Now so this at the time of our show, if you did it 100 by 800, it's a $900 winner. So I went to put this on at like yesterday afternoon when I got home, and it was already a big winner because ANF, look, at the time we sold it at 90 and now it's 82. And
yeah, I see what you're saying.
So like AEO didn't move. It's not like this had a massive rally. Just ANF had a big fall down.
Okay. Yeah, we got to close it.
Yeah, I'll go. And I know here we kind of did it to watch it and see. But $800 nice if it was really like 800 by 100.
Yeah, you got to close it.
Right. I'm going to go to the pairs trader. Where did it go, pairs trader? Where is the pairs trader?
I said the same thing to you yesterday. It's up there. It's go to trade, not positions, trade.
Oh, here.
Yeah.
Pairs. Okay. So
I did the same thing yesterday because I was like, what the heck? Because we haven't done it in so long.
I know. So now I'm going to Oh, we're out of our NVIDIA calendar. I'll push that out in a minute. So we're going to flip this where we're going to be selling our 8 contracts of American Eagle and buying back our 1 contract of ANF. Yeah, that's it.
Got it in right? Yep. Correctamundo, my good friend. And ship it.
So remember, it was like way down here, and now we said we thought it would come back to this range, and it did in a matter of 24 hours. Less than that.
Ship it.
Ship. Okay.
Yeah, pending.
So let me see what it should be working here. Pending. Why pending? Why not working?
Maybe they did that for stock. I have no idea.
Replace complex order. I'm going to edit the price. Edit what are we trying to pay for this?
I don't know.
Credit for this?
Just leave it. Let it move.
Review and send.
Yeah, just unlock it and send it.
If this doesn't fill, I'm going to actually just go sell the shares and buy the share.
There you go.
Yeah.
Okay. Will you push all those out and I'll do it on the other side?
So yeah, that had come in by the end of the day.
I see what you're saying. So you never got into it.
So no, what is going on here?
Huh, that was crazy.
Post to the follow page, yes. And ANF, this went out as a pair. So put it in as a pair and close it as a pair. So no, and you know what's annoying? I literally went into my account and I didn't go to the pair trader. I just went to AEO, buy 100 shares, and then I went to ANF to sell 100 shares. And honestly, it was like here. So then I had questioned myself, and I was like, well, I just bought the 1/2 of the trade, and this isn't, setting up like it did on the show. So now all I have is, I put in 1 share of ANF. I sold 1 share of ANF just to watch it, so that if it popped up again, I would sell it. And so
it popped up.
No, but it didn't. It didn't. It never did. It never did. So now I have 800 shares of AEO and 1 short share of ANF that I'm watching, so I could sell it when it gets back up here.
Oh, the things we do to keep an eye on it.
I don't know. So $800. Then if we did it at the time of our show, now mine, I'm up a nickel on my 800 shares. So $30.
This market's crazy. I can't believe SPOOs are only up 21 after being up so much in the after hours yesterday.
Yeah. So is anything else?
I mean, there was a lot of earnings that had yesterday, like Salesforce was yesterday, Kohl's was yesterday, a bunch of things like that were yesterday.
No. And Salesforce was crazy because it was up so high in after hours trading. It really went up, and look at it now.
It did?
Yes. It was up. It was up after earnings and up.
So you can't see the after hours markets then, can you? Here, you don't.
No.
It's crazy.
Now I don't know if I put on I don't know if I put on by the minute. If I had.
No, I don't think so. I don't think you can see it.
Yeah, so that was crazy because it was up.
That is crazy.
Now the CRM 20 ranked down 17. Maybe it's something that someone would want to get into now. Maybe just I don't know. Although $10 white strikes, that stinks.
$10 white strikes, yeah, because it's an expensive product, and I think we looked at this. It was too capital intensive. But take a look at Kohl's too, because Kohl's and then Foot Locker, there was a lot of retail stores that had earnings.
I mean, this didn't really move. And then I thought Foot Locker was kind of just dead because it's getting bought. Right.
It didn't move, but they did have earnings.
I mean, if it's getting bought here, it's just going to stay here. There's no trade.
Do we have anything today? Do you want to pop into Twitter?
Sure. Liz. Here we are going to the RMC.
I put this up yesterday on the train. I love it. So it's just fun. I love this picture, and it's fun for us to go. I can't wait to go to the RMC. It's going to be fun. That's the Risk Management Conference in Munich.
I know. So this is a SIBO event, RMC. You can search RMC 2025 SIBO event. It's going to be tons of fun. It is not a tasty event. It is not a free event. It is a paid for event. But we're speaking at it, and we're really looking forward to it. Yeah, learn more here. Register.
Yeah, there you go. I love it.
Awesome. Okay. Frank comes in with the option volume and the economic calendar.
Frank sent me a message saying that we have the exact same glass today.
What do you mean? Oh, you and Frank.
Yes.
You and Frank both have the teal cup.
Frank, virtual cheers. I'm drinking hot vitamin water, which is really weird.
Virtual cheers. That reminds me. You already gave your toast?
If you want more, I can give you more.
Yesterday you gave the clean toast of, we hope, the worst of...
Oh, man, Jenny.
The best of yesterday is the worst of tomorrow. Is that how it went?
May the best of your past be the worst of your future. But Jenny probably went to the store. You probably went to Barnes & Noble and bought a toast book, didn't you?
No. I said I have a toast. I have a toast. So from my first days out at the bars, before I was 21, I went and studied abroad in Spain. And guess what? There wasn't a drinking age in Spain, or if there is, it didn't matter. So
rules be damned.
I was living in Spain, going to the pubs, going to the discotheques. And so my first experience out at all these bars, I was in Spain. So here's my toast, Liz. Arriba, abajo, al centro, al dentro.
Up, down, center.
Out, and in.
That's some of the only Spanish I know is from Dora the Explorer. Arriba, up, abajo, down.
El centro's in the middle, and el dentro gotta be
to the back. To the back. There you go.
That's that, and here's to summer are my only two toasts.
Oh my God, you have to have more. The ones that we used to do in college all the time, and I'm not going to say the right words, but here's the one we love. Here's the ones we loved. Here's the ones that loved us. To the ones that we loved that didn't love us. Dun dun, and here's to us.
That was totally from your house. Liz lived in a house with a group of girls I would frequently visit, and I think I've heard.
I don't think we made that up.
No, I don't think so. I don't think so.
Yes, that was it. Yep.
That's pretty funny. Pretty funny. Mm-hmm. So thank you, Frank, for the economic calendar today. And we've got Eric. Now, today was Thursday. I did not place a trade today because Thursday seemed to be the bad day to place these trades.
Well, you know what? I don't want to get caught up in the weeds, right? So we can't... You don't want to get caught up in the weeds. Now they're getting so many rules. Now it's like you double down on Mondays, you're $10 wide at 50-point strikes. These studies, they keep adding on each other, which is great, but everybody just got to pick what works for them, right? So you can do them every day, too. So they're sticking here with, what is this, $25 wide? Yeah, $25 wide. He's got a couple tranches, $25 wide, and it looks like it's going to be about a 30 delta, maybe a 20 delta-ish.
So yeah, Thursday, both are 4 lots nicely, 85-90 wide. That's between the shorts. Okay, yeah. So, but when you said all the rules we've been getting from Jacob Studies, like Thursdays might be rough, double down on Mondays, $10 wide here, $30 wide there. Maybe we need some kind of sheet.
But you don't need to don't get lost in the weeds. And I think people should see what they want to see when they're looking at these. Like if you're the $25 wide, 90 points, and you're doing it on the open, great. Look at that. Because these keep changing. I mean, every study, like 10 points wide at a 50 delta, that's an iron fly where you're risking $1.50.
Right. Well, oh yeah. What happened to yesterday's trade? What happened to our yesterday SPX trade?
Well, let's take a look.
Let's try to find it. SPX, we put it on at the...
We'll see if it got closed. Can you pop up the side and see if it got closed?
SPX yesterday. In and out. Oh, yeah.
In and out. That's good. So when you didn't see it, you made money. And we put it on later.
We put it on at 10:27, and then it closed at 12:51.
Yeah. Let's put one on today.
Okay, so this was just $10 wide at like...
Iron Fly.
Iron Fly. And we got $8.35 for it.
$10 wide Iron Fly, 0 GTE.
10. 20. Yeah, 875, 895.
No, I mean, those are wider markets. I think you're going to have to go 75 or 50, but go ahead.
I know, I'm never going to get filled at 95. I shouldn't have been so eager to push the button.
You were so excited. I mean, I think you should be happy with 70. There you go.
885. So the risk in this trade is so minimal. Did I do this right?
You did it right.
5910, 5900, 5910, 5920. So that is very little risk.
Do 25. Do 25%.
Yesterday, what did we take out of it?
25%.
No, I don't think we did take that.
Oh, no, we took 10% because we put it on later.
835.
I put in Jenny, I put in a 10%.
Yeah, 10%. We only took 10%. But hey, you know what? If we could make $80 a day doing this.
Yeah.
I'll try 10%. Put in 10%. Okay. Hey, it's like more than the Jajun. When we were putting on the Jajun, we were looking for $50. If we could put this on. Okay, and with the Jajun, we were looking for $50 and usually risking around $250, $260, $270, sometimes as high as $290. If here we could make $80 risking $100, that's not bad.
It's not bad. It's not bad. And if you remember from our study yesterday, it will only take 2 days to get back our losses if that's the case. Because from that perspective, if you're risking about 130, right, and we get a full loss, you'll lose 130. But if we make $80 and $80, that's 160.
And that is true. Now I know that study used like taking 25%. And so I think it was a string of losses. Like if you had a string of losses, if you had like 1, 2, 3 losses in a row, then it would take X amount of days. But if we're only taking 10% out, one loss would take 2 days. But if we had a string of losses, it would take a little bit longer.
Yeah, with the 10%.
But really, I mean, this is, if we're doing a $10 wide and we collected close to $9, we had $120 in risk in that trade.
Yeah, that's nothing.
That was what we risked we risked $100 in the NVIDIA calendar, made $55, and we were high-fiving across the airwaves.
We were making fun of the calendar across the airwaves before the show, but yes.
Yeah. But hey, we'll see. We'll see what happens. We'll see what happens. So, okay, so back to the SPX trades. Everyone could do whatever they want to do. You see, Eric's got a different trade. I think I saw when H is coming in here with high IVRs, so we'll take a look at this. So thank you. We will take a look at some of these.
Oh, yeah, for sure. Oh, Oracle had earnings too.
Okay. Yeah, we'll take a look at some of these because some of them have already had earnings and they're high IVR. So we will take a look. Here's Bob's list. Today we've got a busy day. Marvel, Costco, Dell, Zscaler, Ulta, Gap, and NTAP.
I've been to Costco so much in the last 2 weeks because I keep loading my van full of stuff and I can't take any more, so I have to keep going back. I'm now dreaming about Costco. I had a dream that I couldn't get out of Costco last night. So we got to take a look at Costco. Yes. Well, I couldn't get out because they wouldn't, how they have to look at your receipt. This was my dream. You know how they have to check your receipt? Yeah. The line was like 1,000 people long. That was. Yeah. So let's take a look at Costco.
Are you ready for the party?
Not yet. I mean, I'm going to Costco again immediately following the show.
You have been there every day.
Well, I have to because I only have my little car. Today I'm going to take the van, but I only have my little car and not that much stuff will fit in there. Do you know what I mean? Yeah. Like you get 3 cases of water, 2 cases of beer, and like a package of chips or a thing of toilet paper, and your car's full.
Right. What if you just ordered it all on Instacart?
You can, but then it's like a 25% markup.
Oh, okay. And you need such mass quantity.
Yeah, I need mass quantities. I was like, I might as well just go. I mean, don't get me wrong. There will be an Instacart order at the end for everything that I don't have. I figured while I can, I'll go. Yeah. I mean, but in honor of my trips to Costco, let's take a look at it.
All right, let's do it. How many cases of water? Let's say if you have 200 people coming, how many cases of water do you think you need?
Oh, I don't know. I think right now I have 5 cases of water. But I mean, water won't go bad. So I'm going to get a couple more cases, and you know what I mean?
Well, yeah. I mean, how many waters are in a case?
36.
And if you have 200 people coming.
Yeah.
2, 3, 4, 5, 6 cases of water is just 1 water a person.
Yeah. And like some people are going to drink more than 1 water a person.
Yeah. I'm usually a 3 bottle at a party. 3 bottles.
I know. That's what I'm saying. That's why I keep just getting cases and cases and cases. My husband's like, you're nuts. I was like, they're not going to go bad, so they stay in our storage room until we have another party. You know what I
Take
mean?
a picture of your garage with the cases of all of your drinks just stacked up.
The hard part is the beers, because we have a keg, but I was like, if everybody has, I was like, how many beers do you think people are going to drink? Because some people drink a lot and some people drink a little. Our friend Megan, Kathleen was telling me that her husband, there was a sale at Jewel on Michelob Ultra. So so he made everybody in their family, and it was like a limit of 5. Yeah. But even their daughter Claire got an account. Because
oh my gosh,
he made everybody go in and like keep ordering them, but it was pretty funny.
I think I would just get all kegs, because then you
can't keep a keg cold. You can't keep a second keg cold.
Not with those ice buckets. And
you don't want
those giant tubs full of ice.
So the other thing too, and we'll talk about this at a later date, but I've had lots of parties and I always have a keg. Always have a keg. The keg, then there's people standing in line to get a beer, where instead you can just open a cooler and pull one out. So the keg is there for if we like run out, or people will get it if you like that certain type of beer, but it is not a time effective.
And is the keg Spotted Cow only?
No, right? The keg's Coors Light.
Oh, well, that's easier. That's good. I mean, I know you usually have Spotted Cow in your keg, but Coors Light is like pretty neutral.
Yeah, this will be Coors Light.
Yeah. Dan had to unplug the Spotted Cow and plug in the Coors Light.
No, Spotted Cow was drained. The kegs don't last in my house.
Got to drain the Spotted Cow to hook up the Coors Light.
We got some drinking to do.
Okay. Got to finish this before the party.
It's drained. It's been empty for a while.
All right, Costco has been on a tear. This is when Liz started shopping for her party.
That's right.
Right there. Straight up. All right, what are we going to do? Costco earnings.
It's a $1,000 stock, a $30 expected move.
I'm just going to go wrap around these standard deviation lines here. $5 wide put spread. Wrap around the standard deviation, $5 wide call spread, $1.42. That's not terrible.
It's not bad. I was going to look at a calendar too, just because we hit a home run in NVIDIA.
I know, but I think how expensive will this be? I think it's going to be more expensive. Yeah. Because Costco's $1,000, NVIDIA's $100.
Yeah, but let's think about this. So we were getting $142 for a $5 wide, so we're risking $350 or $370 or $340 or whatever it is, or you're risking $340. There is no like ultimate. If it doesn't move, both of these will win. If it stays in its expected move, both of these will win.
Right, but we have more of a range. We have more of a range with the Iron Condor.
Maybe.
It doesn't matter. Which one do you want?
No. I like the Iron Condor better, but I just don't want people to be like, oh, because they're versions of the same. In both examples, you don't want it to go too far out of its expected move.
Right. You needed to. I mean, that calendar, we were 2 strikes away in NVIDIA. It's 2 strikes away from. But I'm going wrapped around the standard deviation. If we go down to 970. And we've got the 110 calendar, I don't know that there'd be much in it.
I don't know you would lose that much either, though, because it's going to hold up some value in the 9-day. Or the 8-day or whatever it's called. But either way, let's do the Iron Condor. Pop that in.
All right, collecting $1.43, risking $3.57. And that's shipped in Costco. So that was Costco. Bob's List. Oh, Marvell. That's one of those that you have a position in Marvell. I have a position in Marvell. Yeah. Mine's not as big as yours, but we don't have anything in there. MRVL. What do we do? It fell after what, the last earnings? Or it's just been dropping? It's been dropping. This was up huge on NVIDIA last night, and then this morning, and then it fell from grace. Where did it open? Can you see where Marvell opened today? Yeah, opened 67.
Yeah, it was up $3.
Yeah, now it's just 60. Now it's unchanged.
Yeah, now it's down.
Let's just price out a diagonal. Since we both have long positions, I'm just going to price out a diagonal to see how much it is. It's only $3.15 for a $6 wide. So yeah, $7 wide.
I was going to say for a $6 wide, that's over 50%. No way. But we both have bullish positions. But I also don't mind. It's a cheaper stock. It's $64. I don't mind selling the 56 put.
I know, right? So
or the 57 put, because puts are neutral too. Then it can come down a little bit.
So
and it's not expensive.
Is 70 cents.
Or the 58 put. I mean, like I said, you can get something. You're only putting up $500 to do this. It's not
right.
Then if it comes down, that's great.
So 58 put, we're getting 90. Let's try getting 90 cents on the 58 put using $664. If Marvell falls on earnings, we're the proud owners of Marvell at 57.10. So we'll see 89 cents is mid market. We are just selling puts here.
Perfect. I have to sneeze.
I have a mixture in there of like long stock and short puts. I don't know what you have going on.
Oh, I'm just long, straight up long. Because I'm straight up long, I waited till earnings, and then I'm sure I'm going to put a downside. Same thing I did with NVIDIA. I'm going to do downside ratio spreads for each 100 shares I have.
Mm-hmm.
It worked with NVIDIA. I'm not going to reinvent the wheel. I just want to make money if it goes down. And then after earnings, so after NVIDIA, when it was done, then I sell strangles around it to double up if it's, because there was still decent implied volatility. But that's what I'm going to do.
Now, this morning, our kids have their accounts, and our kids have watched, and it's kind of good. This is good for them to see, but our kids have watched their accounts increase in value and decrease in value. They have seen both sides. They haven't seen just a straight up market. They have seen both sides. So earlier this year, when the market fell, our kids both lost a lot of money for them in their accounts. So now
percentage-wise, a lot.
A lot, right. So now that they've made it all back and then some, this morning my son said, I just want to close everything in my account and wait for the next down move.
He is his mother's son.
I don't know. I didn't know. Then I'm not sure.
You know how many times he's heard you say this?
I'm just going to close all and wait for the next down move. So that's what he said this morning. I want to close everything in my account and wait for the next down move. But we've been through periods of time where there's a long time before that ever comes.
Yeah, it's true.
So I don't know what advice would you give him?
I would never do that, because you don't know when the opportunity is going to strike, or you could skyrocket right back up. And then if you're waiting for a down move, you can't time the market. You can change your trading style, but you can't time the market.
Right.
That's the advice I would give. You can't time the market, but you can change your trading style. Oh, we're filled in Marvell. Can you push those two trades? I don't think we have SPX either.
Okay, so today, all symbols.
Yeah, SPX and Marvell are both gone.
Right. I don't want him to just go in, because he's like, well, I don't want the risk of losing the money I made this year. Because in his mind, like if he ends the year making this much money, he's happy with that. So it's tricky. And when you don't have, when you're so small and you're not it's easy for traders who have bigger positions, because if someone has a stock position and they say, I don't want to get rid of this, but I want to protect it, we can come up with option strategies like a collar or, ways to protect that. And you can't do that when you don't have round lots of stock. You can't put a collar around their 20 shares. Do you know what I mean?
No, but you can cut back. Say you've got 20 shares, maybe take it to 10. So I do love that piece of advice. Sell half and hope it's the worst decision you've ever made.
That is true. That's like Tom's big saying every time we're like, what should we do with this? Sell half and hope it's the worst
trade you ever made. Because that's what you can do. That's cutting back. That's still waiting for. That's still waiting. That's what I'm saying. You can just alter the way you trade instead of being like, I'm going to wait for the down move. Because I feel like that's almost trading scared. Saying you're going to be on the sidelines.
Well, and that's when I think like commodities come in really handy, because let's say the market's had a huge rally and you're happy with your positions and your equities or how they performed. And I know we're only in May, but then that's when you can start scaling up in other things, find things to do in commodities, or we've got the FX trades coming. Find other things to do elsewhere.
Well, and I'm not saying, like, if you're happy with your profits, I'm just going to use Tesla as an example. Like JD's, that was his first trade, and that's where he's at right now. He got real big for his account in Tesla. I think he had like an 8 lot in at one point, but that was big for his account. And so then anytime I was like, if you want to take your profits and walk away and do something else, that's fine. But I would redeploy the capital somewhere else instead of just sitting in the sidelines.
With this smaller account, I almost think like this SPX trade that we just did, the like $10 wide at the money where you're risking only $125 or $150, like that would be a good daily trade where you've taken your risk off in your other positions, but you've got something going on every day.
Get something going on every day. That's true.
Yeah,
it's true. It's true.
Yeah. So I don't know. I would be curious. That's why I was curious to see what you would say to that this morning when he's like, close it all, everything.
No, unless you want to put it somewhere else. But if you want to take some risk off the table, or if you're happy with your profits, or if your assumption changes, take your profits. Just like GME, we wanted to let ours ride. We had $600 in profits in it the other day, and we're like, let it go, because we were working off an assumption, a different assumption. Where in some things I close after $100. Not letting it ride.
Right. But I think it's because he's seen it go both ways now, quite a few times. He's seen the down moves. He started when he was 18. He's 21 now. He's seen the down moves a few times now, which is good for him to see. But then he's just like waiting for it to happen again.
Yeah, but I'm not saying sit on your hands.
Yeah.
That's not the advice. It's not close all. It's not leave it in there and just watch it go up and down either. Do you know what I mean?
But we talked before about, like, there are plenty of people who just day to day, do their SPX trades and don't take any overnight risk.
Jack Tucker.
I mean, I don't know what else Jack Tucker has going on in his portfolio, but.
No, but if you were just doing the Jack Tucker, which has now become a verb, if you're Jack Tuckering.
You're Jack Tuckering. Hey, Logan, you got to meet this guy, Jack Tucker. You can close all and just talk to Jack Tucker.
If you're Jack Tuckering, you're doing something every day. Do you know what I mean?
Yeah.
So let's go back to Twitter because I know a lot of tweets are coming in. So we've got Marvel. Okay, and we got Costco.
I don't really care too much about Gap or Ulta or Zscaler. I don't even know what Zscaler's up to.
We're good with all those.
All right, I'm going to be top down. Here they are at their wedding. Happy red shirt. There's graduation. Graduation yesterday, 50s, rainies, outdoors, but our nephew got his diploma. Can you guess where he's going to college?
Oh, roll tide. That's awesome.
I can't remember, and I should remember this, where Mikey's kids went.
I don't remember either.
And I should remember this. Was it Alabama?
I don't remember where Mikey's kids went, to be honest with you, but this is very clear where they're going to college, where this nephew's going to college.
How fun. Everyone that we have friends whose kids go to Alabama, and they all love it. Having a great time.
And then Frank Walsh gave something from the YouTube chat, golf, tennis, guitar, song, core weave. I have no idea. 1,000 credit for short put, July 18th, expiration 92.5 strike. Okay, so let's look at that.
Okay. CoreWeave short put July 18 expiration.
The 92.5 July 18.
And this is one of mine that I got out of. I was long it, and then I thought, well, it's gone up so much, and does it just keep going up? Yeah, it just doesn't stop. Yeah. It just doesn't stop.
So they're looking at the
It's going to be a spinning top.
I think it's got to be higher than that for a spinning top, doesn't it?
Well, I think this has got to be, I don't know. I really don't know. I was making that up. Okay, which put is it?
July 92.5 put.
Yeah. Get your break even down to 82.
Is that bad? And you're only putting up $1,000 to do it?
So get your break even to 82, which it was their.
Whoa. Look at that. That's 100% return on capital.
I know. Yeah, honestly, like
I've never seen that in a put before.
I'm going to put this on right after the show. Now, CoreWeave IPO'd this spring in March for $39. So if you get in at if you feel like you missed it and it's 120, then you're getting in at 82. I'm actually going to put. I'm glad you showed me this because I got out of my CoreWeave last week and I'm going to sell those puts.
Jenny, why is there 100%? I've never seen 100% return on capital.
Because there's so much risk. Because the volatility is 131. Because there's a
no. I'm saying, why are they holding up so little capital? You're putting up $925 to make $1,000. None of that stuff makes sense.
I mean, we can ask Scott tomorrow, but do you want him to fix it?
No. I'm just saying, when things are too good to be true, they usually are.
Okay, hold on. Watch list. Tasty. I'm just going to go tasty default. Search by price. Find a stock that's $90. TLT, $90. TLT. Okay.
Yeah. Just go to the same Delta put in July, whatever that Delta put is.
Well, that Delta, I'm just going to go to a put where I can get, that was beyond the standard deviation, but.
It doesn't matter. Go to a 30 Delta put. There you go. Go to that one.
It's not that much different. $200 different.
I guess it's just because you're getting so much credit.
Yeah, here we're getting 57 cents and using 1,200. I'll take the 1,000 for a 900, please.
I know, but that was insane.
Can we? So what's the risk?
Like, look at this return on capital. This return on capital is so low. It's because the implied volatility in CoreWeave.
Because it 2 weeks ago, 3 weeks ago, it was there. I mean, we were at 82 May 19th.
Can you do me a favor and go to June? I want to see. Don't go all the way to July. I want to see some June options. I want to see how juicy these are.
I'm gonna try.
I'm just asking for myself right now. Go to the 100. See, go to the 100.
You're getting 700.
That's really good in 22 days. How far? What's the expected move for the cycle? $31. Do they have earnings?
The vol's high everywhere. I think, Liz, this thing exploded. I don't know that you've been watching it as much as I have because you were out of town. When this IPO'd, you were out of town. So we were sitting at the lunch table and everyone got in. We're like, everyone's getting into CoreWeave at IPO today. So everyone at the lunch table sitting there and bought CoreWeave. And you were out of town. So then it was going up. I don't know. Did you ever get in it?
Yeah, I have a little bit, but I'm like 2 weeks. I was 2 weeks late to the party. Let me look at my CoreWeave position.
But then it just kept going and going and going and going. And last week I said, I'm going to take my profits and I got out. I don't think I have anything, but I'm glad this viewer wrote us because I'm going to get back in. And
I'm going with June.
I think I'll try to get 700 in June. But then your June put is the 100. I like the 82 break even.
You can go all the way down to the 89, which is the expected move for the cycle, and still get $4 and put up 800. Go all the way down to the ground level.
Look, if I can, the 95 get a break even in 90 for 89. Yeah. But you're right. $4 on the 89.
I mean, you can go all the way down to $4 on the 89. And you're putting up $800 too. That seems very conservative. Something's happening in the stock. So this is put skew. What does the calls look like? Please.
Oh, I'm sure there's call skew too. So it's trading 120. I'm going to go $20 down to 100. And that puts $750. And we go $20 up.
And look at that. And stay with the one. I would stay with the one with the volume. So
yeah, it's the same. They're the same. Their skew, this has massive volatility because it's had a massive move in a short amount of time.
Wait, can you put the strangle in? This is just fascinating for me to see. Put the strangle in.
140, 100. That's 20 down, 20 up.
Oh my God, you're getting over a 100% return on capital.
Yeah. I mean, I don't expect this buying power to stay like this. I think it's like this has slipped under the radar. The move this has had, the volatility it has.
My favorite is it's going to be the product that shall not be named when we talk to Scott because we don't want it fixed.
When Scott comes on tomorrow, never mention CoreWeave. But I'm glad the viewer wrote in. I'm glad that Golf Tennis Guitar Song told us about these $1,000 puts in CoreWeave. Yeah, I'm in. Yeah. Now, there's risk. The reason you're getting paid so much is there's risk because it was trading 82 2 weeks ago. And a few weeks before that, it was trading 60. And a few weeks before that, it was trading 40. There's risk. And it could go back down to those levels.
Yeah, it could. I mean, clearly it's priced to move. It's priced to move. Let's just call it what it is. It's priced to move in one direction or the other.
Now, if we wanted we're little baby traders here and we have a small account and we don't want to, we can only risk so much. I mean, we could get $170 on that 75.
I know.
Should we just send this?
Or, I mean, you can go weekly. Like I'm looking at it right now. It's completely out of control.
Don't advertise this too much, or if there are too many sellers, these options are going to get cheaper. I feel like I can't get in my account quick enough to sell these. And I'm kidding. This is not a trade recommendation, and I'm not going to load up on these, but I'll just try to do as many as I had with my CoreWeave position.
Jenny's like, I'm not going to load up on these. Wink.
I'm kidding. No, because it could. This is. I only think when do I sell puts if I'm willing to take that stock? So I'd only sell these puts if I'm willing to take 100 shares of stock. We're not going to tell JD and Logan to go sell puts in CoreWeave because they can't afford 100 shares of stock. I think Logan had 10 shares of CoreWeave.
Well, and here's what I was going to say. And when you have very expensive markets all the way down, they can't spread it off. You can't spread these markets off because the puts are all the same price. Do you know what I mean?
Right.
It's too expensive. The puts are all the same price then. Yeah.
So this is kind of crazy, bonkers, the move CoreWeave's had. Mm-hmm. Does it say anything here, like earnings date or anything like that?
No.
No.
Love CoreWeave.
We'll be back in. If I got out, what did I get out last week? And if I got out at 100, I'll be happy to get in at 82.
Yeah, for sure.
Yeah. Okay. Thank you very much.
Well, thank you very much.
Thank you very much, golf, tennis, guitar song. I like that.
That could be my son. My son loves golf. He loves tennis. Learning to play the guitar. He just learned how to play the piano.
All right, Florida 7. A minivan full of cases of beer because the tap is too slow. I'm buying the neighbors call the police before the party is over.
I've invited all the neighbors to ensure they do not call the police.
Liz, you mentioned mass quantities, and it was bugging me as to why it sounded familiar. Please fill in Jenny. No, that's the cone head. Right? Is this the cone head?
I honestly, oh my God, because I know she lived a sheltered life. This is the cone. This has got to be the cone heads from Saturday Night Live, right?
Yes, and I watched Saturday Night Live back in the day, so yes, I do remember the cone heads. Can we watch this, or will no one hear it?
No one will hear it. I don't think we can do it.
Recently, one of Subway's best customers suggested we offer our turkey breast sub with chips and a drink at a special price.
This is the ad. Can you skip it?
No, I don't think it is.
Food consumables with potato wafers and enlarged fluid unit. Not bad, but we call it the mass quantities meal deal. It's for anyone who has a hearty appetite, or like my friend here, comes from prayers.
Get a Coneheads collector cup with a mass quantities meal deal at Subway, the place where fresh is the taste.
While supplies last.
Well, maybe you and I were the only ones that could hear it. I don't know.
I don't know. But
no, but go underneath Mikey the Polish Warrior, because there was a question about
Eric and all of his trades today.
And there's more. Somebody says, who says you can't sell on Thursday? I glanced at it.
Oh, it was one of Jacob's old studies.
Yeah, there you go. DK replied to the Permable. Who says you can't sell zero DTEs on studies? It was just a study saying that a lot of times the zero DTEs are negative on Thursdays.
Okay, I don't think DK's asking us. I think DK is saying, look at my trades and I'm making money. Who says you can't sell on Thursdays?
So it's like, this is like where you can't read the text. Who says you can't sell on Thursdays? Instead of, who says you can't sell on Thursdays?
Exactly. Because here, he sold it for $7.25, bought it back for $6. Who says you can't sell on Thursdays? He's killing it.
Mm-hmm. Here's to you, as good as you are. Here's to me, as bad as I am. As bad as I am. As good as you are, as bad as I am, I'm as good as you, as bad as I am. That's another toast.
Liz, how long is this gonna go on? How many days are we gonna get toast after toast after toast?
Well, it depends. It depends, Jenny. It depends on what happens. But yes. Okay, so that's good. Thank you. I'm glad to see all the things that are working. Our SPX trade is up. It's completely unchanged right now. It's just up $15.
Okay, so what do we do in CoreWeave? The 75 seems 7 delta. Or what if I take it just to this? Is this the 2 standard? Is that the 2 standard deviation, or is that just 1? No.
That's 1 standard deviation.
No. This is a 9 delta. This 1 standard deviation is a 16 delta. So this is a 2 standard deviation.
I don't know, Jenny. See where the other line is, because sometimes when they have this huge volatility, the lines get kind of skewed.
Yeah, but 16 delta should be 1 standard deviation, and this should be more like the 2.
I know, but sometimes the 50 deltas aren't the 50 deltas. Do you know what I mean? Like, where's the 50? Sometimes the 50 deltas are 10 strikes above where the price is trading.
Let's take our chances. $2.
Well, we can afford
$780. You know what? I'm curious to watch this, because one day we're going to open up our account and we're going to say, why don't we have any buying power? And then we're going to look at this core we put, and it's, instead of using $780, it's going to be using $7,000.
Yes.
I'll put this in for demonstrational purpose.
And yes, I will be doing this.
There's my 205 offer.
And this shall go in, even though we can't afford it in this account if it's the $7,000. But it'll be the first thing we close if it's the case.
Oh, if it starts.
But I will tell you, take a look at this. So you've got CoreWeave up and up and up and up and up. We sold a $2. We sold a $2 put. Whatever. Like, it is what it is.
We're here. We're at the 70-something level.
Yeah, that's where we're at. But we've got 22 days. And you and I both know that even with it going up like this, those are still maintaining value. It's not going to decay that much. If
vol comes in, if everyone starts selling these options because they're really pricey, then the options are going to come in.
Then the options will come in. That's correct.
But you know, it only has a 45 rank. I hated to see these options with the 100 rank.
It's new though too. The ranks don't really know what to do when it's new.
Yeah. I mean, it's been around since March. I guess not that long.
No, it's when I was on vacation. I was literally on the cruise.
I know you were. March 28th.
Mm-hmm.
Yeah.
And the market was tanking and CoreWeave was going up. Well, I guess it came down a little bit.
And here's the funny thing. Like, okay, so if the table was like Josh, Tom, Jamal, of that crew, and everyone's buying it here when we're talking about the IPO.
We're filled in CoreWeave.
Who do you think got out 2 days later?
Tom.
Yeah, probably.
Yeah, for sure.
Yeah. My guess.
Here, push the CoreWeave out and I'll do it on the side. And it's already 48. Wow. Okay.
Time's flying. Push to the follow feed. And then we'll have everything out. So we've got a little bit of risk on tonight. We've got the put in Marvell. We've got the CoreWeave put. Let's take a look at our SPX. You said we're up. Oh, it's not really.
No, I mean, it's bouncing around. Like, you'll see wide markets. So I've seen it up 15. I've seen it down 5. I've seen it down 15. Like, it's just wider markets. I don't think that this is a trade that we're going to get out during our show. You know, Jajun, where we'd be like 10 minutes and then we're going to get out. I don't think that is this type of a trade. You noticed yesterday.
If we were right here at 59.10 after an hour, if we put on at 10 and at 11, we're right at the center strike. But we're $10 away from that center strike. So time has to pass and it has to cross past this 59.10 again to get out of this.
Yeah.
Yeah, like we could be down on the day.
Yeah.
Today.
We could be.
It's not looking good.
We very well could be. We're not filled on Costco, and that's bouncing around too. That's 10 cents away.
I'm going to cancel it because neither one of us were like, woohoo, this is an amazing trade.
Well, it's hard when you've got a 150 on Iron Condor.
Yeah, GME, we've given back our whole $500. We were $500 and given it all back. So 50 days for GME to have another rally.
Yep.
And since and I don't even know. It was in the news here. I don't know why they were talking about GME buying crypto. Will it then just go up when crypto goes up? Because crypto
and crypto's down. Crypto's been down the last couple of days.
GameStop announces.
They had earnings a while ago. 5.3. Okay.
Yeah, so I don't know. GameStop rises after it announces purchase of Bitcoin.
528. Did we miss their earnings yesterday, Jenny? We did. 520. Doesn't that say 528 GameStop to announce first quarter fiscal results? That was yesterday.
Right. I guess we missed it.
Yeah, we missed their earnings. That's fine. I mean, we have it in there as a long-term play. But in the person who was bullish GME long-term, that's not necessarily for earnings, right? The earnings can.
No, this was a longer term assumption. And how's our IBIT doing here? Oh, it's nothing really. Maybe we reestablish. This is a diagonal that's totally out of the money. The 62 calls totally out of the money. Maybe we reestablish this.
You have to, because otherwise it's got to go up.
Yeah.
And you're not getting anything. Your short was worthless.
So in the 8-day, I'm going to sell the 64.
Sure.
And then in the 15, what's the 15-day?
Yeah, just keep it cheap because we don't mind reestablishing.
By the 60.5. So paying 87 cents to keep this trade going.
I mean, you could probably bring it up 1, 2, because it's trading almost 61.
Just want to see what our spread will be. So our new spread will be 60.5, 64. So just 350 wide.
That's not bad.
That's why I wanted to keep it wide enough.
Yeah, that's fine.
Unless we want to change our IBIT trade to, we can't just sell puts in here. It just uses too much buying power.
And it's a 7 rank.
Yeah.
We don't have any other cryptocurrencies unless you want to do like.
I don't want to waste too much time on it. But speaking of, we're looking at this. This is following crypto, and this thing, you go to one standard deviation away, try to get $1, and you're using, now $1,500. It's getting better.
Yeah, but CoreWeave was insane.
I know. It's going to catch up to them.
I know that will. We push out the IBIT, make sure everything gets out in real time. Where were spoos when we put on that SPX trade?
10's our center strike, so it's getting back close to it. So we're 3 points away, 3 something away. So let's see if we cross over that 59.10, what happens to this?
I still think more time has to march on than 15 minutes or 45 minutes or whatever.
We didn't get out of ours yesterday until afternoon.
Yeah, it was like almost 1 o'clock.
Mm-hmm.
So I think that's got to sit. But it's a very low risk trade, which is kind of good. And what I love about it is I do thoroughly enjoy the cash settled products because you don't have to do anything to them.
And from Jacob's study, it wasn't like there were back to back losses. Like the frequency wasn't high for back to back losses.
No, I mean there were a couple back to back, but
but it wasn't like a high frequency.
Yeah.
So, but yeah, we'll see. We'll leave this and see what happens. Spoos up 14, 10:53. I do want to make sure. I don't think there's anything else we need to do in here. I do want to make sure we get to everyone on Twitter. Mikey, the first rule of CRWV traders: we don't mention CRWV.
Mikey's funny. I love Fight Club.
Florida 7, the CRWV options are available on that one other trading platform. Scott does need to know.
Oh.
Wait, CRW are available on that one other trading platform. Scott does need to know.
We are going to keep it from him. So thank you, Florida 7. We appreciate your input.
And Frank is sharing this. This came in on YouTube from Andreas. What's your opinion on UNH 250-380 short strangle? So I have a bullish position on an UNH right now, which hasn't been working out. UNH 250-380 strangle.
Do they have...
they had that massive fall.
I know. And they have not rallied at all.
Okay, they had this massive fall, but then they had that little jump. But I think I probably got in here, which I just have a bullish trade. Selling a strangle here.
This is going to be this should be capital intensive. It's got a 45 rank though. So I will tell you get a gold star for finding that. UNH has a 45 rank. Earnings are not on the horizon, I don't believe. And let's take a look at her strangle.
I mean, 380, your short strikes would be here. And here, 250.
And I just want to see. I just want to see the. Let's put it and see what you're getting for it, and see what the capital.
Now I wouldn't cross over into July with that.
No,
because of earnings. So maybe in June, but I'm sure he's thinking July. You're not getting, to me, 250, 380. I'm sure he's looking June because here I don't know that that's worth the 220. I don't know if that the risk is
crazy. Is you're looking at this, you got 22 days left. You're getting 220 and you're only putting up 2,900. You're getting 17% return on capital.
But I'm sure he was looking at July. But then July you're going through earnings.
Yeah, I don't want to go through earnings.
Yeah, look, 250, 380, but I don't want to go through earnings. I don't know. I don't want naked position. I don't want naked options really in UNH. Or not. I don't know. I don't know what you think.
I mean, I have naked options in UNH. I just don't think you and I can afford to hold this because the problem with a smaller account is I love trading in here because it forces us to look at things differently.
Right.
It's like trading in handcuffs. UNH is a great product. It's got a 45 rank, and I don't think that I'm scared of anything in one direction or the other, but we can't hold it. We can't hold it. I don't want to put, 10% of our account in something that is UNH where we don't know.
But I'm going to guess you just have short puts.
I have a Jade Lizard.
Yes. So I am not a fan of after something drops from 600 to 300 to have the naked call. Like I'm just not a huge fan of me. I don't like that risk.
And I get it, and that's like a personal risk reward situation. But it seems to be staying right here. That's why I would lean towards June and put it on. If you don't think it's going to gap all the way back up to 622 days, that's somebody else's assumption. I know what you're saying, Jenny, but that's somebody else's assumption.
And you have a Jade Lizard, and I am okay with going through earnings on a Jade Lizard.
I'm in 22 day.
So $10 wide strikes. Here's a Jade Lizard in the 50-day.
And that's once again, that's why we're not putting it on in this account, because it's $3,385.
Yeah.
It's too expensive. That's why we love CoreWeave. We got to talk about as much as we can right now. CoreWeave, 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 CoreWeave.
Yeah, and when things have big moves, I guess when things have big moves, that's when the vol gets high, and that's when traders take advantage of it.
Yeah, when the vol's high. Where's the VIX today, speaking of? Can we take a look at that?
It wasn't really moving this morning much. It's up a little bit.
We're seeing
it wasn't coming in. It wasn't coming in this morning, and it's up a little bit. So and look, SPOOs are down 4.
And I think the VIX is a tell if it's not coming in when we were up.
Yeah. Went from up 80 or 90 last night to now we're down.
Yeah, that's crazy.
That doesn't look good. Close all. Too bad Logan didn't have that button he could have hit. Close all.
Yeah, there is no button. There's no plunge protection team where you gotta be like, they need like a red, like a safety button where you can just run and push it on the wall.
Yeah. All right. Jenny, we're out of time, Liz. We're out of time. I think we got everything pushed through. Everything pushed through that needs to get pushed through.
We'll keep an eye on the SPX. It doesn't matter. We'll look at that first thing tomorrow. Well, we'll talk about it first thing tomorrow morning because we'll be out at 7 a.m.
It's either going to fill or not fill. And if it doesn't fill, we risk 100 and what did we get filled at? $8.85. We risked $115 if it doesn't fill.
Yep. So we'll keep an eye on that. All right, Jenny, enjoy your Red Shirt Thursday, and everybody have a wonderful afternoon. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow. Oh, bright and early. 7 a.m. morning show.
7 a.m. Goodbye, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, would good, like a nice Panama hat in the summer.
A Panama hat and skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like you just
don't say it. No,
fingers through your hair.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with the one and only Katie McGarrigle. It is PGA Thursday.
PGA Thursday.
Two Trade Ideas Thursday.
Nikki Thursdays.
Oh, Nikki Thursday. He's up. He's gallivanting up in the North Woods.
For a little B-Day sesh?
I guess a little bit. This is his annual camp retreat, camp thing.
Oh, I forgot about that. Yeah.
It's actually impressive.
It is. It's all the old campers get back together.
Yeah.
But they do adult things.
Yeah. It is kind of funny because like you grow up in this like camp and you love it as a kid. You're doing all these outdoor things. You're playing sports.
Yeah.
And now you're up there just slinging beers.
Smoking cigars.
Like you said.
Ripping darts.
Yeah, sure. Just adult stuff, you know?
Yeah, I love that.
Zins, comparing Zins with fellow campmates. But no, good for him. It's a nice, fun weekend. And it does land on his birthday.
Yeah.
May 31st, if you want to tweet at him.
Yes.
Aggressively. I'm sure he'd love that.
Yeah. And also, I think we said it last Friday, but big shout out to Fred, who was listening last Thursday, talking about my obsession over pretzels. Fred sent us like 5 boxes of pretzels.
Again.
So he sent them on Friday, but then another one showed up this week. So yeah, the snacks just keep coming.
Love to see it.
Love to see it. Summer Body doesn't love to see it, but I've never met like a Snyder's pretzel I didn't like. So big shout out to Fred. Thanks again.
Love you, Fred.
Yeah.
Love you.
Awesome. What's going on in your universe? How are you feeling about PGA Thursday?
I feel fine. Everything's fine. Next major's when we're in DC. 2 weeks out. 2 weeks out from the next major, 2 weeks out from US Open DC extravaganza. So if you want to join us, seats are filling up fast. Go to tastylive.com/events. You can sign up for free and meet us out there.
Yeah, it'll be good. I've seen yours so far. I've been building mine. But everything from, kind of recapping, building a portfolio, all the way into the grayer areas of trading, like managing said portfolio, managing trades, considerations when rolling futures, considerations when adding crypto to your account. All of it will be covered in a nice little couple-hour extravaganza with my boys.
It's going to be great.
And my boys back on the road.
Yeah, on the road again.
Yeah.
I'm also told that that weekend is the 250th anniversary of the U.S. military.
Yep.
Or maybe the U.S. Army.
It's like a massive parade.
Yeah. Nick's like, I might have to go to this.
Yeah.
It's going to be just pure flyovers.
America, bald eagles, fireworks.
Yeah.
Hot dogs.
Yeah. That if there's ever a time to wear like a Marlboro jacket, like that's the time. With an American flag hat.
Yeah. I hate the idea of thinking about jackets though in June.
True.
It's just depressing. Yeah. But it's still happening, at least in the Windy City. But yeah, it'll be a good time. And then we have a couple of events after that, some more this summer. We've got Atlanta with Tom and Tony tomorrow. Yep. So hope everybody enjoys themselves. That's headed to the Atlanta event tomorrow, but you can see all the events on tastylive.com/events.
Yep. Yeah, I was
got like 18 or something this year. It's crazy.
Yeah. And if you've been to events before, you know David, he mans the tasty desk at the events. He tweeted at me. He texted me that he was at Manchu Walk this morning at 9 a.m.
Yeah.
Which if you know what Manchu Walk is, You know what you're doing if you're at O'Hare. But 9 a.m. Manchewalk is aggressive.
Yeah. If you ever are looking, if you know that like the Tasty folks are in the airport, at least Mikey, Nikki, and David, just go to the nearest place that is serving Asian food and you will likely find them. Doesn't matter what time of day. I will be over either getting a coffee or at Auntie Anne's Pretzels if I can find one. But yeah, you guys are always big fans of whatever type of stir fry situation that you need at whatever time of day it is.
There was once a time where I had Panda Express before I took a flight, and then Panda Express when I landed.
Oh my gosh.
family was like, "What is wrong with you?
Yeah.
Like, what is right with me? Actually, it's my solution."
The sodium heals.
Yeah, MSG flows through my body. Anywho, yeah, plenty of events to conquer and attend if you want to join us. And light libations will be served at ours.
Ah, yes.
Beer and wine action.
I know. Yeah, that'll be interesting. It's kind of like it's a throwback to like the money show days.
Yeah.
Remember?
I do.
I think on like the kickoff of every money show, there was like a happy hour after the keynote speaker, which was always Tom. And then we'd get like the flood of people coming into the Tasty booth, not to talk to you or me, talk to Tom, but they also did serve alcohol. So we would always get harassed for the spin to win tickets because that's how you got the alcohol tickets.
Yeah. Brings us back to the days when we had tasty tattoos.
Oh my gosh.
Nick was sponging people, applying the tattoos.
Fun.
That's when
Fun
things
times.
were different.
They were.
We were young and malleable.
I know we were, but we got some fun stuff out of it.
That's
I
right.
remember we got to go to Universal Studios, Harry Potter World.
Courtesy of a Tasty viewer.
Yes, courtesy of a Tasty viewer. That was amazing. Speaking of, I know you and I are heavily tracking what's going to happen with the HBO show.
I saw the casting.
They did, yeah. They've got like the full cast kind of going now. So hopefully start production soon.
I'm ready.
I am too. I don't have enough like spooky, supernatural fantasy shows in my life. Like Last of Us just ended. I think I've seen everything on like Netflix, Paramount, Hulu at this point. I might have to go back and restart Supernatural, which I don't know if I can do that. I don't think my fiance can do that because it's like 300 episodes.
Vikings. Vikings is a good one.
Oh, Vikings. I've started that and stopped it and started
Vikings
it and
is
stopped
good.
it.
And it's like 7 seasons.
Okay.
So it's plenty of time.
Okay, maybe I'll do that because I also did, I finished my Assassin's Creed Viking arc.
That
I'm
aligns.
in between games right now. I think my next game is going to go back to Jedi. Back to Jedi Katie for a minute, but on a little bit of a gamer break.
It's fair. It's fair. Everybody needs a little break.
Yeah. Are you gaming right now?
I'm not. No.
Oh.
Yeah.
I feel like you and your boys like always were hopping on the game.
Yeah, it's crazy.
Just
It's a
like
sad time.
I know. Why is everybody growing up? What's that about?
We used to be like, we're going to be 50 years old still playing games because it's good for our hand-eye coordination. But yeah, we're also on hiatus, we'll call it.
Okay, well, the summer's just around the corner.
Yeah. Which
Nobody knows
will
what's gonna
further bring us away from it. It's really a winter thing.
Okay.
If there's a game that aligns with winter, that's when it happens.
Got it. Nice.
But yeah, looking at the futures market here, not much going on. E-minis sold off just a few minutes ago, though, so that's interesting.
Are we going back to unched by 3? Up, green by 3?
I think we're gonna be.
We're unched right now, but
yeah, it's a little ominous that we started so green and we've trickled red. These are the kind of days where I feel like we just continue selling off and then we sell off into the close.
Yeah.
Like it's like clockwork. When you have an opening and then it drifts lower and then we're flat by the afternoon, like I think we'll be down 30 by the end of the day.
Okay.
Which is rare. It's the opposite of what I would normally say.
What's probability of down 30 by the end of the day is where are we at? 59 right now. So what's that? 58, 70? 45% probability of touch.
Right there. Yeah. Down 30.
20% probability of expiring.
Yeah. Right there.
Yeah.
We'll see. But yeah, really nothing too crazy going on here. You've got Ethereum as one of the biggest gainers from from the future standpoint. But volatility kicking up a little bit back in the 20s. Silver, gold, seeing a nice rally here. Everything else within 1%. Not really there's no reason to really bring it up if it's within 1%. To the downside, though, natty gas selling off 2.5%. Heating oil, corn, but I mean 1%, 2%, pretty standard.
Yeah.
Pretty expected.
Speaking of kind of some of the things that we don't regularly touch on, I was looking at the follow page on Tuesday. Talk to me about live cattle futures. What is Thomas telling? What is he saying?
He's the seer. He's the cattle seer. We all placed bullish trades in there.
Okay. Kind of a little bit higher than, or a little bit lower than where we are now. I think some of you got filled around like 208, 209.
Yeah. Yeah. And really, it's just a matter of, this is HG I'm looking at, live cattle. I did a call calendar here. So I bought the 215 in August, sold the 215 in the 35 day. But just playing for prices continuing higher. We looked at some data points and built an assumption based on that, and we got in like into that sell-off there. It was, It was a couple days ago where we had that big red bar that was kind of gobbled up by longs.
Yeah.
So yeah, playing for just basically going back up to 215, 216, and we'll take it off for a nice little winner there. But the nice thing about this setup is that the 35 and 64 day both settle to the Q contract. So I was able to do a legit calendar spread with the same contract, not calendarizing the different contracts. So I liked that setup. Just a classic way of playing to the upside a little bit with limited risk. But yeah, we're in lean hogs, we're in copper. I've got a couple gold contracts, Japanese yen. So we're all over the place.
Okay. I need to get back into gold. I'm curious about what you're doing in yen, kind of now that we're in the middle of the range over the last little bit here.
Yeah, Japanese yen we played to the upside as well. Same story there. Both of the July 3rd and August 8th contracts settled to the U contract. So traditional calendar spread, long the 7-2 in the 71 day, short the 7-2 in the 35 day.
You can use it to bankroll your trip.
Potentially.
You know?
Yeah. I need the Japanese yen to tank before my trip.
That's, yeah.
So I can really realize the conversion rate benefits.
Yeah.
But it's still right in the middle of the range from when I went last year. So.
Okay, fair enough. Yeah, I haven't done anything today other than trade idea. I have a GTC on for that end-phase short put that I think Nick talked me into last Thursday.
Yeah, we all got in there.
Yeah, it was looking a little bit stronger this morning, so I'm far, far away from where I kind of want to exit. But yeah, I've been very light. So if you're in the chat, I see you giggly, sarcastic, funny people in the chat. Somebody saying, "Oh, every time Katie smirks, I think it's my funny comments." Sometimes it is.
Sometimes it is.
But yeah, we're curious to hear your trade ideas too. So try to tag like at Tasty Trade just to help us sift through them. But otherwise, we'll get to them in just a little bit after we share our own trade ideas.
Yeah. Should we pop over to the slides and do the darn thing?
Do the darn thing. Why do you and I, when we get together, do that? It's like a vocal stimming thing.
Yeah.
I think
it's just so easy to fall back into an accent.
I know. Yeah. I think it also stems from the days of when we did Ask Tasty together and we were locked in a room together for like 4 hours.
Yeah. They're like, let's do a take. Let's do another take. Let's do another take. And I'm like, well, I got to change my accent now. We're going to do another take.
Yeah. I think we just got very comfortable with each other very quickly.
Yeah.
And now it's just part of our rapport.
Yeah.
And I'm here for it.
Same.
All right. So what are you looking at then, homie?
I'm looking at Costco.
Costco earnings?
Yeah, I'm going to Costco this weekend. So this I could actually finance if I get this one right. I could finance a trip to Costco, which usually runs me between $300 and $500.
So we do the thing where we guess every time what our bill's gonna be.
Yeah, because they don't show you the total.
No.
It's just ring, 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 and then they're like, okay, give me all your money.
So we guess, and we kind of make a little game of it. Yeah. But it's always at least $300 for sure.
Yeah. But it's great. I mean, honestly, it saves me 50% cost basis.
Especially if you're just getting like the simple.
Yeah. Especially if you're buying like stuff in bulk, like chicken thighs.
Yeah.
50% off relative to any other grocery store, and you get a lot of it. So all you really need is a freezer, and you can preserve a lot of that stuff. But, yeah, making a Costco run, trying to finance it. I wrote a Costco earnings preview. I will post that in the YouTube chat right now, but they have earnings after the close. Kind of a rare scenario where you have a really low expected move for earnings. So just playing a little bit of a neutral to upside play here. So I'm long July, the 1060 strike. I tried to do the 1050, but they didn't have the 1050 in July. So that was annoying. But went up to the 1060 in July, selling the 1060 in June, which is right at the expected move, which is typically how I would set it up anyways. Short option at the expected move, long option same strike, which is within the expected move if you're buying it further out in time. But yeah, I went to June for the short option because this is such a low expected move for Costco on a notional value basis, only 3%. It's a 30-point expected move. And again, it's a little surprising because most companies land in that 5 to 10% range, but Costco's in a decent spot. They raised their membership fees late last year, which gives them more revenue to offset potential tariff implications. And that's kind of the story. I think they'll report decent numbers, and the market is projecting that the stock's not going to move too much. So it makes it cheaper to buy a calendar spread with lower IV. So I went out there, bought the 1060. This risk graph, I crushed the June cycle 5 percentage points, and I crushed the July cycle 2 percentage points. So basically, I brought both of these down to about 24%, because after earnings, what you will see is you will basically look at the options chain, and you'll see all the expirations with a similar implied volatility. So June's at 28%, almost 29. July's at 26. So I created a 3 percentage point crush differential there. So again, crush June 5%, crush July 2%, and we arrive at this risk graph here. Max profit around $500 if we pin 1060 tomorrow. And anywhere within that range will be just fine. Bought this for $950. If it sells off, I can buy back the short option. I could move it out in time a little bit, maybe create a diagonal spread, but we'll see what happens there. But yeah, if I need to, I can buy back the 22-day and maybe roll it out to the 35-day, create a slight diagonal spread and roll with that. But looking for an upside move here.
Okay. I think, so I like your thought about like the pinning right at the expected move. What I'm going to do is I'm going to do the classic 22-day, 15-point wide, 1/3 the width of the strikes, iron condor.
I like it.
Right at the expected move. So 955, 940, 1060, 1075. I'm going to start my price. Obviously, since these markets are a teeny bit wider, I'm going to start at like 525 as my entry and see if I get filled, or I'll walk it down a little bit. Cool.
Sweet.
Alrighty.
But yeah, Costco after the close today. We'll see what happens. But ideally, there's an up move. I can buy some unnecessary stuff at Costco.
Pizza puffs, chicken puffs. I don't know what they're called. I've never. I will say
buffalo chicken chips.
No, like the food court, like chicken bake. I think that's what it's called. Yeah. I've never eaten at the Costco food court. I feel like that's like sacrilegious to say, but it's because the one by us is always so damn busy. Like you literally can't.
Yeah.
So
I got with the one on Ashland on the south side
too. Like by like 16th.
Yeah.
Yeah.
That's the one.
It's the one.
But the nice thing about that one is they have a lot more Asian food than
Yeah, because it's closer to Chinatown.
Exactly. So they have like pre-made noodle stir fry dishes where you can just buy this whole thing and just throw it in the wok and got it.
I've seen that. I've not dabbled in that. Okay, I got filled at 517.
Perfect. So 15-point wide iron condor, expect to move in June.
Correct.
Sweet.
But yeah, I've seen that at the store. Have not gotten it. I've gotten the stuffed peppers. Pretty good. And it's like 3 meals because it's like 6 of them.
Yeah.
So it's always a good one if you want something. But all right, now you might have convinced me that maybe I need to have Costco trip in my future as well.
Yeah, just get the necessities, 20-pound bag of rice, multiple cartons of kimchi.
Yeah.
And
the
some
cartons of kimchi.
Yeah.
All the probiotics you could ever want.
Yeah, literally.
I love it. We're big fans of their bone broth, their chicken bone broth, as like using that for soup.
Interesting.
A little extra protein.
I need to get the deets on that.
Okay.
Get some of that.
Yeah, we need to start sharing ideas.
Yeah.
Okay, I will try to get that on the follow page in just a second. This is not my normal setup, so gotta see if I can get into the back end to do that. But I was looking for another contrarian play. I know I've been kind of just doing more like directional plays lately. So it did feel kind of nice to actually put on an iron condor just now. But I am shorting a little bit of Southwest. So I feel like this is a counter trade to what your little broski was thinking about a couple months ago when he visited. Because I know he's an airplane boy, an airline boy. But if you look at Southwest today and over the last, let's just call it 2 months, V baby.
Straight up.
So I'm just thinking, you know what, we're kind of on the higher end of the range. Let me do a trade that's kind of like a short stock substitution play. So I went with a zebra setup in the July expiration cycle. So also giving myself a little bit more time to be right here if I'm not right out of the gate. So I have 2 of the long 35 puts. So those were in the money. And then 1 of the 30 puts that was just out of the money. I got filled at 427, so that is my max loss as well as the buying power requirement on the trade. Your max profit, of course, would be realized if love went to 0, which I don't think is realistic. So what is my profit target? I would be happy with $200 from this, like in an ideal world. Depending on the days to expiration, if I was, paid off quickly, like maybe $100. So anywhere from $100 to $200. A quarter to 50% of the buying power that I'm putting up is kind of where my profit target logic is right now.
Beautiful.
And no management.
Yeah. And this one is actually, the short option is a little bit out of the money as opposed to bringing it right at the money, like the 32.5. So the 32.5 would reduce your basis a little bit, but having the 30 gives you kind of this embedded spread before it caps out. And you can see that in the risk graph there.
Yeah.
It gives you a more aggressive profit potential to the downside until you hit 30.
Yeah.
So, yeah, if this thing goes to 30, you'll get your $200. Call it a day.
Yeah.
I just followed you. I got filled at 430.
Yeah, and I mean, I did not look at all of the other airlines, but if I do right now, like looking at American, Delta, United, all of them have not had the same rally that Southwest has had. I don't know all of the news behind that, but I'm suspecting some of it probably has to do with like the change in their business model and so on and so forth. So, yeah, it just seems like relative to the other airlines, it's probably a little overdone, but time will tell.
Yeah.
I'm just a girl. Have you seen that meme where the girl's like, I'm just a baby?
Mm-mm.
That's what I think of in my head.
I need to check it out. I'm just thinking of the girl dancing while she's eating at the table.
Oh, yeah.
Yeah, that's a good one.
That's like us and all of our friends.
Yeah.
Especially Pete.
Oh, yeah.
Pete's like, he does the thing with his hands, the slap.
He's a really interesting eater. That's for sure.
I think it's hilarious.
Yeah, I've been to weddings with him where he like slams the table. I'm like, yeah, chill out.
It's just that good.
Yeah.
I wish I like had that emotional of a reaction every time I had something delicious.
Yeah, it's like it's like the wine palate. Like you either have it or you don't. And some people have an aggressive food palate. Some people are just like, it just tastes the same.
Yeah.
So. Yeah, I'm actually long UAL.
Oh, okay. So you kind of got like a little hedgy trade on anyways.
A little hedge. But yeah, I've had I had the 90-120 strangle on in UAL before the tariff stuff hit. So now I have an 85-90 inversion. So bullish UAL, bearish love is a nice little hedge. In case they both move in the same direction to the downside, I can hedge the UAL position with the love one.
There you go.
And vice versa.
Logic.
Yeah. Cool. So that's it. Couple two trade ideas.
Doesn't have the same roll off the tongue.
Couple 2-3, couple 1-2.
Couple 1-2.
Nvidia had earnings yesterday.
Yes.
They did okay. Inside up move. That was kind of the consensus from anyone guessing on the tasty side. A lot of people were thinking inside down, but I think we were just thinking we'd be surprised if it had a huge move, given the fact that we're in this kind of choppy market, a lot of uncertainty still with global impact. So yeah, nice little move to the upside, $5. I had a call diagonal spread on there. Closed that for $350.
Congratulations.
Thank you. Yes, that feels good. So yeah.
Okay.
Just took it off the table and that's that.
What is it looking like volatility wise? Expected move in there now? Anything for any new entrants? Let's see. A little tougher.
Yeah. It's 43%. 10% IV rank.
Yeah, you kind of got to do like a debit spread of some sort.
Yeah. 10 IV rank's going to, obviously, because we just had earnings, so you get that post-earnings crush there. Yeah. But yeah, 40% is nothing too crazy. And the 10 IV rank tells you that it has been much higher. So yeah, I don't mind if you have a directional assumption, diagonal spread like long August, short July, or long July, short June. It's probably where I'd go, unless you're trying to get stock with a short put or something like that. Yeah. Let's pop over to the YouTube chat now.
Thanks for watching.
A lot of people chatting in here.
Lots of peeps. Do you think Nick is listening right now?
Yes. I think he's driving and he's listening. Hello, Nick.
Hey, Nick. How's the car?
Yeah. How's the car? Filled with gas, filled with that cheap, sweet Wisconsin gas.
Curds?
Yeah.
Wisconsin cheese curds?
Little beef and cheese combo.
There you go. Little trip to Culver's.
Ooh, that's dangerous. Very dangerous.
All right, what do we have?
Scanning.
Anything to do in EEM from Scott S. Also said, Katie, you are glowing today. Thank you. I just got a facial.
There you go.
So I'm glad that you noticed through the camera, through the screen. I am already short EEM. So I have another put zebra on that has just been kind of on the dance floor since I've put it on. I'm underwater, about $150 on it. So I'm leaning a little bit short. But as you can see, if you look at a chart of it, it's kind of been, this is the higher end of its range that it's been in over the last year. So I'm just really hoping that this thing works out for me over the next 22 days. Did you follow me into that?
I did.
Did you get out?
46.44.
I have the 44 and a half.
Yeah, I'm just chilling.
Yeah, so we're both short. I don't know if there is anything to do in another cycle. It seems like, volatility is kind of low. So like you probably have to do some type of debit spread directional trade.
Yeah. And this is like right there. So
yeah,
if you were to place a new trade, it would probably be in July and it would probably be just slightly higher.
Yeah, like 47, 45 and a half.
Yeah.
Depending on how, your risk tolerance, how much you want to put up for it. But
yeah, for this to be a winner, like we really only need a 2-point move.
Yeah.
So
one thing I would say that is counter to what I did is if you look at the open interest on the strikes in July, all of the open interest is in the round numbers. So maybe you also consider that for your trade entry and strike selection. But that said, the bid-ask spread in the half-wide strikes is not terrible either. So you do you.
True.
True.
+1 for Vikings. Scramble everything. Yeah.
Okay. +1 for Vikings. I am also, what am I doing right now? I am doing another British procedural.
Naturally.
Can't stop. Grantchester is what I'm doing. It's okay. It's not the same as Endeavor. I'm a big Endev head. Like, he's like, I have no idea what you're talking about.
I really don't.
But, British crimes, 1950s,
Yeah.
1960s.
I'm on a
Beautiful scenery.
1800s Western kick now.
Oh, did you
So-
finish Outlander?
I'm working on it.
Okay.
But they're in that same era, so it's like I need more of this. So I'm watching the Little Black Bag, I think it's what it's called. It's like a darker Western on Netflix.
Okay. New,
It's decent.
old?
It's new,
Okay.
but it's
Check it
set
out.
in like,
Yeah.
gold miner days in the
Did you ever watch Westwood? No, that's Westworld I'm thinking of. You know what I'm talking about? Like the other Western, like very...
I think it's Westwood. Westwood
No.
was like an older one.
What is
Westworld?
It's not Westwood. It's not that.
Westwood is a different one.
What is, it's somebody in the chat knows what I'm talking about. It's like a old-timey, like, pioneer on the brink, very dark, lots of death.
Yeah.
Deadwood. That's what it's called. Have you ever seen Deadwood? I think you'd like it.
Check it out.
Yeah.
Put it in the queue.
Lots of like, monologues and like very commentary on survival and very Shakespearean. Yeah.
I'll check it out. CRWV. Short 75 put expiring in July. Why do these contracts have so much premium? Well, these contracts have so much premium because the implied volatility in here is over 100%, which means on an annual basis, this stock is projected to go to zero or double. And you can see that as you go further out in time. But 125% IV tells you everything you need to know. So yeah, the 75 strike, although it's far out of the money currently, this thing has moved. I mean, just this year, it's gone from 40 to 120, from a bottom to a top. And that's not even this year. That's from April to now. So it's tripled in price. So yes, it is far out of the money. If you want to take the risk, it's totally doable, but this thing does move. It has a 40-point expected move just for the next 50 days. So I guess the question is there some kind of like approval thing going on? Do they have some kind of new product that they're potentially launching? Like, this is a really high IV for an AI cloud computing startup. But yeah.
Shall see.
Yeah, interesting. Definitely interesting that it has $700 in buying power requirement. It's pretty low considering a 100% IV stock. So,
Right.
yeah. End phase short put.
Yep, we got that.
I converted that to a strangle.
Oh, you
I
did?
I rolled it to July, 45 strike, and then I added a 50 strike call against it. So I picked up more premium, brought my break even down to 40, and now we're just looking for a little inside out move.
Okay, I started with the July 35 short put, so I'm just hoping for time to pass and to be right.
There you go. Dell earnings strangle, 130, 100.
Al, what was your first computer? Do you remember? I'm
It was an
totally.
HP. HP dialing up to AOL,
Yeah.
Instant Messenger,
You had like a
waiting
computer
for my crush
room.
to sign on. Yeah.
Hmm? You'd like make your away message really cool.
Yeah.
And like vague.
Yeah, with like a blue background and green font. Yeah, that was my go-to.
We need to bring that back.
Yeah.
Can we put that on Slack? Like, how do
Good.
we implement that type of styling on Slack?
That'd be amazing.
I think it would speak to all of the millennials in this office.
But yeah, Dell has earnings after the close, $8 expected move, so decent implied volatility here. $113 stock, so it's like 6-7%, 7-8%. Nothing too shabby. And then if you look at the 8-point expected move for this week relative to 14-point move through July, there's lots of implied volatility for this announcement. So a June strangle kind of gets you right in the middle. You have 9 percentage points of an implied crush here from June to July. You can see all these expirations beyond July are in the high 40s. So June will probably crush 10 percentage points, maybe more. So yeah, 100, 130, cookie cutter setup, picking up $1.50-ish on each of these options. If we look at the curve analysis, theoretical, let's push this to tomorrow, and let's crush this implied volatility 10 percentage points. Bring it down to 49%. You're looking at $100, $120 overnight. So that's tomorrow, and a 10 percentage point crush anywhere in this range between 105 and 120. You're looking at some slight profitability.
I wish there was a little more liquidity. Don't love like 10, 15 cent wide and $100 underlying, but
Yeah.
what can you do?
Yeah, and after tomorrow, it'll likely become less liquid because earnings is usually peak liquidity for a lot of these stocks. I'll keep my eye on it, but
Yeah.
I like the setup.
Yeah.
You want to trade this.
Right. Who is
Um,
You can use credit cards at Costco.
yeah,
Thankfully.
they've shifted away from that.
Yeah.
IonQ, July 35 put.
Q. What is that?
IonQ, it's another
AI?
techie stock, quantum computing hardware, software.
Quantum circuits.
Anything quantum to the moon. July 35 put. Yeah. $300 in buying power, $200 in premium. This is another 100% IV stock, 13-point expected move. So even though you're down at 35, almost 10 points lower, it's still within the expected move. But yeah, it had a huge little boost here. I think this was from earnings. This boost on May 22nd. So coming off of that a little bit. But yeah, if you think the floor is where it was trading for before, I like it. I can join you on this one. Well, 300 bucker.
What are you doing?
The July 35 strike for 224 is what I was just filled at.
5. Alrighty. Alrighty.
Basically, almost 100% return on capital based on the current buying power, which is nice.
I'll give it a go. July 35.
Mm-hmm.
¿Por qué no?
¿Por qué no los dos?
223.
Lovely. CRM earnings gone wrong. 280 call in July. Net debit. Sold the 250, 240 put spread in July this morning for a 310 credit. Would you sell a front month call or just hold the 280 call as is?
This was just like an out of the money. Was it an out of the money? CRM.
CRM is, wow, they
260.
sold off. They were up after the close. 280 call in July. So you bought this call.
What's the price change?
50, 240. Okay.
That lost what, $10?
Yeah. So you're adding the 250, 240 put spread in July for a 310 credit. So that brings your, if it expires out of the money, it will reduce your basis. So I guess the question is, do you want to cap your upside or not? So yes, you could technically sell the 290 for another 250 or sell the 300 for another $1.50. But if you get a quick reversal, you're going to wish you didn't have that on because the short call, of course, is going to hinder your value back on the long call. But you did add a risk to the downside. So it's I would say it's a coin flip in terms of decision making. But if you want to lean a little bit more bullish, obviously you can sell the 300 instead of the 290. I think that's what I might do if you're trying to just bring on more premium but still give yourself the upside, because you'd have a 20-point wide call spread. Your net debit would be down to like you bring in $4 then. So net debit would be down to like $1,000. So if you get a reversal in CRM up to 290 or 300, you'd be at a scratch, we call it. So yeah, I think you could sell the 300 or the 290, but if you want to lean really bullish, then I would not cap the upside call. 50 days is still a long time, so it's up to you. NASDAQ futures, 50-day strangle.
NASDAQ futures options. Have not touched these in a minute. July 18th, 50-day.
Yep.
Okay.
23,500, 18,900. P25 in 12 days. Yeah, let's see here. 50-day. 2350. 1890. Yeah, so you're outside of the expected move. So this is certainly an implied volatility trade, and because you're outside of the expected move, these will decay faster. So that's where you're getting that 12-day P25, because if we chop around here, these options will lose value pretty quickly. So yeah, I like it, especially as if you have an account to hold something like this and you're just looking for 25%. Certainly a high probability trade, considering the pop is already 81%.
It's just wild, like the difference in the puts and calls, like value wise, you know?
Yeah. Indeed. Let's see. A lot of Costco commentary.
I love that like people in our chat actually chat with each other.
Yeah.
I just want to say.
That's how it should be.
Yeah.
Create that community. Candidates for calendars, futures, usually currencies, ags, and energy with more products to trade now. Are there any other candidates that fit the term structure to trade calendars?
That is a very good one. Honestly, like off the top of my head, no, I think it's still particularly those products more or less. And within those, like I tend to just do like, if I were like, I do more of like the agricultural and energy, just because with currencies, sometimes you have like those interest rate, like items baked in and so on. And I'm not saying you can't, but not that's coming to the immediate top of my mind, if I'm being honest.
Yeah.
But I do love, and I've said this on the road, like I do love how many more smaller digestible futures are being rolled out, because it's literally like, even from when we started, again, like calling back to the money show back in the day, nobody was trading. Like, I mean, people were trading futures, of course, but I've had so many more people now come up to me and say, I'm dabbling because of like micro futures and so on and so forth. So I'm very optimistic that, you know, as they continue to roll out more products, maybe there will be some new ways to participate in like calendarized types of trades. Or maybe it'd be really fun to go back and do like, I know doing some of those like butterfly style calendarized trades. It could be fun too.
Yeah. Yeah, there's a lot. I mean, especially the currencies are flying around with a lot of implications here. But yeah, usually we stick to your standard.
Yeah, crude, natural gas, if you have the wherewithal for it.
Yeah, because the
corn, beans, wheat.
Yeah, the one thing with like calendarizing or doing a pairs trade is you need to have a strong historical relationship. Otherwise, it's just two isolated trades. If you don't have that relationship or something that's been traded historically,
yeah,
then it's kind of it's more of a gray area. I think is the best way to put it.
I'd agree. And I would also say, like, something for maybe people that aren't doing anything in terms of futures calendars is that, and I know you can, but I'll just say, oftentimes, if we're going to do a futures calendar, it's not necessarily the same as doing a calendar in an equity options position. So you're not buying and selling the same Costco strike that you would be. Like, you're actually instead using those two different durations, and that's the calendar spread.
Yeah.
So you can use the options in the futures, but remember that if you're doing that, like, you have to make sure that one, either like that your futures options are expiring to the same futures contract, like the M5 or the U5.
Yeah.
Or if they're not, that you're fully aware that there's now another layer of dynamics that can push and pull the profitability of that trade.
Yeah. Like live cattle is in backwardation right now. So if you're actually doing a straight up calendar, you're long the M, short the Q, or vice versa.
Mm-hmm.
Where my setup, like Katie had pointed out, both of these contracts settle to the Q.
Yes.
So it is a traditional calendar in the sense of like they both settle to the same underlying.
Yeah.
Where if you're doing one short, one long, and they're in different underlyings, then you're ultimately settled to different prices, and you have different options that are not coupled together.
Mm-hmm.
So yeah, good call out.
Good shout.
Natural gas.
Ugh, that one is not working out for us right now. I have a B-dub.
Mm-hmm.
Do you?
I do. But I removed the risk on this one because natural gas scares me because it's just had my number for so many years. So when we had this little rally, I put on this put broke wing butterfly here. When we had the rally, I bought in the risk. So I started with a 3-4, 3-3, 3-4, 3-3-5, 3-15 broke wing butterfly.
That's me too.
And then on the 27th, a couple of days ago, I bought in the risk. I bought the 3-3 and I sold out at the 3-15.
I had an order working, couldn't get filled.
Shoot. So yeah, I have a 70-cent net credit there on natural gas.
Yeah, I will be looking to do the same if we get, God willing, a little bit of a bounce.
Yeah. But a new trade, June 25th, Iron Condor, 4131 with
0.1 wide.
0.1 wide.
In June? Or?
Yeah, in the 27 day. So yeah, this is $340, risking 660, 27 days, so fast moving, leaning slightly long. Yeah.
Yeah, I like it.
Yeah. Why not?
Why?
Mr. Pillows got into a micro crude strangle yesterday. Phil isn't as bad as I thought. Yeah, those options are pretty decent. I think micro crude is certainly more used than a lot of the other micro products, just because micro crude is kind of in that wheelhouse of a lot of traders, I would say. Like a micro crude contract is a $6,000 notional risk product. So you can get in with options trades in here where you're collecting $100, like, or $200 or $300 if you're doing strangles. So certainly a tradable product, a couple pennies wide. Like it. Getting to the bottom here. Yeah, if you don't want to use a micro crude strangle, you could go with a crude iron condor. So I'm actually long a micro crude contract, and I have a covered call on it. So
you do?
I sold the 65 call. That's coming in nicely. I will likely roll out if I can. I can't. I would be going to a new contract. So I'm probably just going to hold this thing. My break even's at like 62. So I'll probably hold this all the way to the expiration of the 18-day contract and then close out of my micro crude N contract, roll to the Q, and then redeploy the same thing. Kind of like leaning long at this level.
Yeah, I'm thinking maybe I'll look to do put spread, a broken wing butterfly, something in the 49-day in the Q, July 17th. And then next like day or so. Gotta kind of take a look, see what I can make work.
I am not going to Erin Hills this weekend, unfortunately, to support the Women's U.S. Open, but I did see some clips of if you miss the green in a bad spot, you are rolling off the green like 50, 60 yards off the green. So it's going to be a tricky one.
Devastating.
But I have an absolute crush on Charlie Hull.
Charlie Hull?
Unquestionable crush. She's the one that she was always famous, but she became more famous because she's just ripping cigs on the course.
Oh.
And she's quit.
Everyone loves a bad girl.
Yeah, she's since quit.
Oh.
But yeah, definitely have a crush on Charlie Hull. So I will be watching for sure.
Are you going to be placing any fantasy bets?
I don't think so. For the U.S. Open, I will. For the men's U.S. Open, I will. They do have women's U.S. Open stuff on DraftKings, but I haven't looked at it. Maybe I should check that out.
Support your girl.
Yeah.
Come on.
Why not? That's the end of the... Oh. Natty Gas, 60-day strangle, 5327. What do you think? 60 days, 5327.
327.
Well, for me,
I just can't do strangles. Yeah.
Can't do strangle, especially in Natty Gas.
It's a tough one for me, health-wise.
Yeah.
But I mean, yeah, you're like outside of the expected move. Like you're at the 10 delta on one side and what on the other? I mean, the 10 delta on the other side, taking up almost $1,000, $900.
Yep. Yeah, I like it. If you just need a big account to do it.
Yeah.
But gotta be careful in there. This thing can just rip.
Yeah.
As you
Because
can see.
yeah, and like even though the buying power right now only says $1,000, to Mikey's exact point, like that's span margin at work, which can be a beautiful thing because it does give you a higher potential return on capital, but it can grow teeth and get big, and you'll get a call from the trade desk very quickly if you are not able to hold that position.
Yeah. It's just one of those, like, obviously with futures, you get more leverage by way of lowered buying power relative to notional risk. But once you get into the options on futures, now you have way more leverage because of the same thing.
Mm-hmm.
So, and Natty Gas is a huge product. Like, it looks small, but it is a 30K product. If you just sold an at-the-money put, you can sell an at-the-money put for $2,200, $32,000 risk, $3,500 buying power. So you're getting 10 to 1 on an at-the-money option.
Mm-hmm.
So you're getting even more on an out-of-the-money option because your risk of actually taking on intrinsic value is lower. So you get the benefit of less buying power.
Right.
So yeah, just got to be small in there. Asterisk tally. This girl, I think she's like 17. She's just...
That's a person's name?
Yeah. She's playing the Women's U.S. Open.
Sure.
But she is, I believe, 17, and she's just destroying people. So you'd love to see it.
You'll love to see athletic women. I do. All right. I thought I saw one about UNH. Inverted strangle somewhere. Let me see if I can find it. I know we just have like a minute or two. The cold case on the Tylenol killer is decent. Yes, I've definitely heard that on multiple podcasts, but maybe I'll have to check out one of the docuseries.
Oh, yeah. I found it.
Found it?
UNH, 325, 350. When should I roll from June, or is there another way to manage it? Yeah, this one's been tough, but luckily it's recovered. UNH is going through a lot of crazy headlines. Some crazy stuff, but it's kind of fluttering around this level. It of course got destroyed from 600 down to 290 where it is now. The good news is you still have decent implied volatility. So 325, 350 in June puts you at let's see here. It's currently trading for $6,000. I assume your credit collected is a lot less, but you've got plenty of room still. And 325 is right where the expected move is. So you still have $540, which is not that much relative to the current value of the position. So if you're looking to roll it from June to July, looks like the earnings are going to be in that July cycle. So if you're trying to avoid earnings and get some better decay, I might go to the, these markets are not good in the 43-day. If you go to the 50-day, you're going to have the most liquidity there. You are rolling into the earnings cycle though. With that said, you can pick up a lot of premium. So you can pick up $1,000 if you move your strike from 325 to 330 and then roll your 350 out to the same strike. You could also give up some of that premium if you just go to a straddle. So if you get rid of the 25-point inversion and you go to a 350 straddle, that still gives you $6 in credit. So yeah.
That on that?
That's that. The good news is you can pick up a lot of premium. You can manipulate this in a lot of different ways. Like you can totally remove your inversion and still pick up a big credit, but you're in the earnings cycle, so you're gonna have to wait until earnings come out to get the big crush in there in terms of extrinsic value.
Good stuff. All right, we're at the end of the chat. We're at the end of our hour. We're ready to go eat some sandwiches.
Sammy's or salad.
I brought lunch today.
There you go.
So I'm gonna be snacking on Fred's pretzels and eating my home brought lunch. But if you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. I had a little pause there, a little brain gap.
Almost said Trader Nicky Bat. Go give him a follow.
Yes, Nick at Trader Nicky Bat. Give him a follow. Give him some birthday love. He's a big ham. He loves that stuff. Hey, Nick, we know you're watching. In the meantime, in between time, good luck, good trading. Peace.
Peace. Happy birthday, Nick, in 2 days.
Yeah.
May 31st.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
We are back. It is Thursday, May 29th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, you were texting me some really dirty things last night about the stock market.
Really?
I think you were right.
Do tell. What
you were not a believer. You were saying, I don't believe this rally. I'm selling stocks up here at 6K in ES.
I believe I was preaching to the choir as well, actually. You were in the same camp.
I did not find myself a fan of last night's news about the tariffs. Not that I don't want to see the tariffs in place. I think this is a ridiculous set of policies for the stated reasons of it being like a Calvin ball or Michael Scott snip, snap, snip, snap. The point being is that the court ruling did not say that the tariffs are necessarily not allowed. It said that they weren't allowed for the stated rationale. And there are other paths forward for Trump to implement them. So, sure, he's appealing. This whole set of tariffs can just be re-implemented in a different form or fashion. So the market here, as it digests this over the course of the day, with what's been a deluge of news over the past 24 hours, quite frankly, Jamal, from Elon Musk leaving Doge formally to the NVIDIA earnings to one tariff lawsuit last night. Another one was just released 30 minutes ago. Small business toy manufacturer wins its lawsuit against the Trump administration. But again, judges are saying that you just can't do it with this rationale. So do we really celebrate? You didn't seem to be that excited last night. Are you still holding short?
Yeah, I wasn't that excited. And just to really clarify, I sold. I mean, it was the easy decision for me to sell. I mean, even a couple of days ago when we were talking, I was saying that I wanted to sell a ES future basically against the longs that I have in the Dow. I'm long a Dow contract. I'm long a Russell 2000 contract. We are long a call spread in NQ for the end of the quarter. And so it was an easy decision to sell. Really, I was trying to sell the other day. If you remember, I said I wanted to sell against 59.50. Well, as soon as 6,000 came, it became a really easy decision to make that call. So, yeah, I am still holding short. And again, it's somewhat retribution in a way. It kind of feels good because, again, if you remember last week, I was short a contract at around, I think, let's call it 59.85, somewhere around there. And I was holding that in case we did drop. Well, if you remember, we dropped more than 200 handles just about last week. And I closed that short when we were down 40 handles. So I was pretty annoyed at the fact that I missed out on further downside with that short. So to get this opportunity again, it was nice to sell it, and really just boils down to something we've been talking about at length on this show. This is a market of headlines. Headlines are moving this market around left and right, and I think you just have to be adaptable.
Spotlight here comes from Goldman Sachs. They put out this note this morning, Jamal. I was tempted, if only to say that you and I were on the same page about this last night, to include a screenshot of our conversation, however brief it was. Because the market this morning, as you see, analysts from banks and hedge funds put out their own, what does this mean for the state of the trade war? we're landing in a spot where it's like, well, it's actually doesn't matter much at all. The table here, I think, is unimportant, although I want to leave it up here for those that are interested, and you can take a screenshot of this or go back and watch the video on demand if you want to hold this here. The point here is that when we look at what was just done in the court ruling last night and today, doing it under IEEPA, not the right rationale. The courts have effectively pointed the administration into Section 122, which means you have a 15% tariff rate higher than the 10% implemented on Liberation Day, were it not. We have this 90-day pause, 10% tariffs in place. Well, here's authority that says you could have 15% tariffs for 150 days. There really could be no pushback. So the tariffs are probably happening. Peter Navarro was out this morning talking about them, President Trump's trade advisor on tariffs, and he said nothing really changes, which on one hand seems like they're just brushing it off and, okay, not a big deal, we're going to ignore the courts. But on the other hand, I mean, truthfully, nothing really changes here. They just have to submit a new reason for why the tariffs are necessary, and they need to move away from IEEPA. So the market reaction today, it's been nice. There have been bouts, spurts, where we've seen these headlines come out and we've moved to the upside. But nothing really fundamentally has changed here when all is said and done.
Yeah, there's no resolution yet, right? I mean, and that's another theme. There's no resolution to a lot of these things. And I think this speaks to what we've been talking about. This speaks to why markets have been moving around so much. This speaks to why there's still an elevated VIX, if you want to call it elevated. Let's just call it, it's right around this long-term average. I mean, literally right there. And that's why, because there's no resolution to any of it. And again, the market does not like uncertainty. That's what creates volatility. And there's still some uncertainty out there, as far as I'm concerned.
The reason why I point to waiting for this Section 122 announcement, and there's just part of me that thinks we're going to get a Liberation Day 2.0 now. You don't need any fact-finding mission to implement the tariffs. You didn't need to do it under IEEPA or Section 338. If they go through Section 201 or 301, it requires investigations by various agencies or branches within the executive branch, and that takes some time. It's Section 232. Those are the national security tariffs for steel and aluminum. That's easier to come by because Lutnick's in charge of that. And so you figure, well, you get Lutnick on board, then they can just pass. But the point is, there are other avenues here. I don't know that we should be looking to, and certainly, Jamal, I don't think you were either. We were looking to that court ruling last night and saying, okay, this is going to clear the path now for the next 300 points in stocks. Right. Today, we are trading a bit off of those highs right now. We were up 2%. We're only up 0.31 right now. We've seen stocks flirt in negative territory for points of the day, so we do fill the gap. This is not great price action around ostensibly good news with NVIDIA, with Tesla's performance, with Musk coming back, with what we see from the tariff headlines.
Yeah, that's it. And there are, like you said, there are some positive things out there, but I think overall the market is probably a stone's throw away from being negative on the day. Honestly, I wouldn't be surprised if that ends up happening. So that's why I am keeping my short. But for a moment, I mean, when you look at it, you look at this chart here. We talked about this the other day. The market, literally, we said this. The market was primed for something to happen, given the way that this chart was lining up, and it was either going to break one way or the other. And I think we were going to find out really soon based on this week. Well, little did we know that was going to happen so soon, literally within a little more than 24 hours from the time we talked about it. And that's exactly what happened. Now, it didn't have any staying power, but that just lets you know the kind of coiled spring that we kind of have here with regard to markets right now.
It is very much a coiled spring here, and depending upon how you want to look at this, from the S&P 500 using the initial lows on the 4-hour time frame here, you could see that we try to scale that uptrend overnight. That's the tariff news, and can't really get back through that trend line there, Jamal. Maybe this is a double top being carved out up here. Obviously, that's not in play unless you're below 57.50, which comports with what we were saying just 2 days ago. If you're really going to be operating short, you'd like to see the Friday low cleared out because that puts you back below the key threshold where you had your October, November, January swing lows carved out, where our pre-Liberation Day rebound sputtered out. So you get 58.50 or so, 5,900. the top side area was looking for a move through 59.90 up through 6K, and that's also rebuffed today. So the spring continues to coil. There's still a lot of potential energy here, and it's a doji. Maybe it's a shooting star, which does have some bearish connotation to it. But I don't think that you can walk away from today feeling great as a bull. And as a bear, you have a little bit more price action-wise to try to hang your hat on if you want to hold this short in the, I guess, opposed to the end of the week. How times change.
As a bear, you're like, whew, this was a close one because, 96 points up last night, and it held it for a while there. It didn't fade immediately. It held it for a while. So that, I think, for sure scared a lot of the bears when you see that type of move, given the environment, given that we thought, we didn't, of all the outcomes, you didn't expect that sort of to pop up. It's been several months here, right? So you didn't expect that to pop up. So you're probably going to proceed with some caution going forward if you're a bear, I would think.
I would think that, today may have been the day where you see a bit of a washout, right? If you're holding on tight, you probably panicked overnight and closed out, and now you're looking at this chart and saying, well, hold on a second. That was real close to me tapping out. How much longer do I want to stay in right now? I would point out the sector rotation here today because I think that's indicative of, where we're heading. Semiconductors are leading the way up, and that ultimately, outside of that, it's not really the growthiest rotation. Your leaders on the day, names like utilities and gold miners up at the top of the heap. At the bottom, XRT, the retail ETF, which has been mogged by these tariff headlines repeatedly over the past several months. I'm not super impressed with what I'm seeing beneath the surface here today, Jamal.
Neither am I, really. Again, I would say we would probably normally be close to being down if it wasn't for NVIDIA kind of holding up the market a little bit and some of the other names there. For the most part, we would probably be down on the day. And so, that doesn't really give you much confidence, I would say, given the market. There's other things, that we'll get to that are probably showing a little bit of different sign. But yeah, equities are just kind of clinging to life, and I would say a lot of that has to do with NVIDIA right now.
I think that's the whole story here. NVIDIA is up 4.05% today. For those that were trading around the earnings, I believe this was recapped this morning. I think Tony was talking about it, but you were looking at like a 7.7% move, and we're only up 4% here, so still within the bounds of the expected move. It's a nice gap higher, but we've been trading lower over the course of the day. SMH, you're a leader here. Semiconductors, they do bounce up, but we're effectively back to where we were at the open yesterday, Jamal. So there's not a lot of staying power right now in this, and it just feels like everyone knows that there's a shoe to drop for another headline to come out, right? Even CNBC, the number 4 ranked article on their website right now is 4 tools at the Trump administration's disposal after a U.S. court blocks tariffs. So we know this is coming, right? And the judge itself in the ruling was like, well, yeah, if you go this route instead of this one, this would all be okay. So it was a nice little buy the rumor, sell the news, I guess. But I don't think we learned anything new. And I don't think we can use the price action today because it's been so influenced by the headline to help inform where we're necessarily going next. I think the spring coiling mindset persists. We don't have a directional cue yet, bullish or bearish.
No, we don't. And so as a result, you asked if I was still holding my short. Of course, I said, yes, I am. But the real question comes, what do I do with that, right? Because as of right now, I got, mostly these long deltas, and I got this one thing as a short delta as a thing that makes me feel good if the market continues lower. But at some point, where do I look to close it? I don't know. Honestly, and as much as I don't expect it, the answer is probably going to be something of the order of if we get towards the levels that we got last week, last Friday, I guess, is really my answer for now. Again, something that we're not only we're breaching more recent support levels, but even here showing here, like it touched that. What is that yellow line? Is that the 1
month?
That's what I thought. Moving average. And again, this is the 1 year. I guess it is. Yeah. I thought it was a shorter data chart, but it would have to be on the order of that. And so I don't mind holding that position for a while unless things change dramatically, via headlines. Honestly, God, it's just the headlines are just really the one thing that's been running the market for quite some time. And That's been good for those who are swing trading, those who are trading around in a lot of the ranges that we get, which again, they're not necessarily carvable ranges in a way. They sort of, kind of madness in a way, right? I mean, look at this candle today, and then look at last Friday, like the moves that we're having. I mean, so I guess you just got to really be nimble. And like I said, the only way I close my short is if it gets to a point where another couple of 100 handles down, and then it's at that point, it's like, okay, this is an area what I would actually consider to buy because there's fear in the air. That's pretty much the size of it. Until then, keeping things status quo.
One of my favorite analogies in this market that I've seen a few people bandy about is, what if the S&P 500 is following the path of price action akin to what we saw in 1998, which means that right around now, if you're thinking about that analogy, and I'll have this chart put together for overtime, you'll see that this is the time and place where the market would pause if that analogy and price action's holding true. I don't necessarily trade around those type of things because market conditions and structures change over time. I usually hate when people trot out the Dow looks like 1929 kind of charts, because the market in 2025 is so fundamentally different in terms of actors and influences than it was back then. Even just in terms of laws, regulations, the role of the Fed as a liquidity provider, yada, yada. So I don't think we can get over our skis right now. I mean, if I were in your position, you basically top tick this thing. The tie for the night is 6,008. You're in right around 6K. I mean, I think you're playing with house money there at this point in time. And so as long as we don't break today's high, let it run. It's not an option. It's MES.
Basically, yeah, I know. Yeah, 6,001. How about that? I mean, it looks like a top tick for right now. But again, I almost have to do it, right? Like, considering some of the longs that I have. Again, I'm long a Russell 2000 contract. I'm long a Dow contract. Basically, the two that have really kind of underperformed the more recent rally that we've seen. And I got long those two because, again, if we continue to go higher, then those two will eventually probably attempt to catch up. And they're a lot cheaper than the other two micros, by the way. I mean, ES and NQ. And so just decided it was a good time to get short some NQ. I don't necessarily, it's not that I'm hedged per se. It's just something to be able to trade around if we do get the moves again. You know what I mean? Like, I actually have something to do, right? If we drop 200 to 300 handles, instead of just looking at my positions and I'm stuck and I can't do anything, now I can actually do something. I think that's something to think about at times.
So I'm looking at the VIX curve right here. Yesterday, the June 20th expiry was at 1831, and the March 2026 expiry was at 22.96. Vol's a little bit up across the curve today. We're at 1859 in the front month and at 2313 all the way at the end for March 26. It's not exactly a parallel shift. The curve's actually slightly flatter than it was yesterday. Is that a warning sign, right? We've seen this shift in the vol structure in recent weeks where we've gotten more into a steeper contango. Should we be worried that on the day where we have all these good news, Elon back to Tesla, Nvidia beats earnings, they don't need China's business to make money, right? This is not the evolution in the vol term structure that makes me comfortable laying out new longs right here.
Yeah, like you said, I mean, we're certainly not. Honestly, if you're somebody who really wants to buy, I think you got to be at least aware of the fact that not only the VIX, but the VIX futures are sitting right around the long-term average, which going back to 1990 is 19.5. They're all sitting in that range, and to me, that just lets you know that there's things to think about on the horizon. There's things that aren't exactly resolved, and so. Again, this is one of the reasons why I feel the need to hold a short against a lot of longs. I mean, you have to be just a little bit uncomfortable that the VIX is sitting at these levels, and it tells you we're probably going to be moving around. And again, we have been moving around more than 1% and change a day. Again, 16 VIX is 1%, so 19 is, you can extrapolate yourself, but we're going to be moving around. And honestly, that's kind of nice as far as trading goes for us. You can trade in and out of things. Sometimes you might end up being down on a position for a little bit, a la, you talked about a few weeks back the SPX put spread, right, that you had. At one point, that was super in the money. Next thing you know, it's super out of the money. And that's the kind of environment I think we're going to be in for a little while now.
You have to stop worrying and learn to love the bomb, which means if that's the environment we're in, it just goes back to the fundamentals of good risk management and staying small.
Yep.
That way,
and rolling staying at times.
Yes, and that may mean not waiting until 21. That may mean rolling out a little bit sooner than that, right? If the market really turns against you, buy yourself a little bit more time. It will clip off some of the convexity, right? But we want to be able to trade until we have a chance the next day. Russell here, we had this line in the chart a few days ago, Jamal, when you and I met on Tuesday. It's where we hit highs pre-Liberation Day at the end of March. It's where the rally has failed thus far in May itself. Today, again, we fail there, just north of 2100. Today's action, though, unlike in ES or NQ, a little bit more darting, because we could be on path to close below yesterday's low, which if we do, and that low comes in right now at 2068.80, only 7 points away from current price, then you have a bearish engulfing bar. Another one. You have another one here in the Russell that would signify a top. So with the candles in ES and NQ, with the Russell failing to capitalize on this scoop up against the 1 month, it's difficult to say that the path of least resistance is staying higher right now. This is a market that's looking a little exhausted.
It is. I guess it is because the news just keeps continuing to change. The landscape keeps continuing to change. Yeah, you're right. This thing bumped right up against. It went a little bit through my long area. I'm long at 2114, so I was actually positive at one point last night, and that's part of the reason it was like, okay, I'm going to sell here because if I'm wrong, then my long continues to move. Actually, both of the longs that I mentioned, the Dow and the Russell, were both positive when I decided to sell the ES. So, this is. Actually, again, this is one of the best that we've seen the Russell 2000 chart look in a while. Despite everything that's going on, you can see, a clear downtrend and then continuing uptrend. And again, if the overnight had held, you'd be like, okay, now it's time to really get long this thing, right? You would totally want to get long it. So
on a technical basis, very different conversation.
At this point, I don't know if it's the Russell's fault more so than it is just all the different headlines it's having to endure right now.
It's an ugly chart, and vol's not super high. And I think the other day when you and I were looking at this, it was very similar levels. If you wanted to sell a put spread here, you have to trade against Friday's swing low. And the risk to reward is like risking 4 or 5 to make 1 right now. I typically like taking those trades that are like 60 to 70% probability of profit if I'm doing a short put spread here. If you go out to the U5 contract, and you're looking at a swing low near 2K, you go out to 43 days, you could sell right up against it, sell the 2000, buy back the 1975. It's a 72% probability of profit. But then again, there's that close to 4-to-1 risk to reward. Not great. And that's not even how I like to trade this. I'd prefer to go one strike beyond the exact low to give myself a little bit of breathing room. And that's even less. That's closer to 5-to-1. So yeah, they're high probability trades right now. An IVR at 20.6 does not entice me to step in front of what looks like a market that feels tired all of a sudden.
No, it's certainly not high enough. And, again, despite the fact that you see a little, VIX is like we said, sitting around that long-term average. I'm probably guessing Russell VIX, RVX is probably around that same area. Again, that's a weird one to pull up on our platform anymore, but that part doesn't jibe with what we're seeing with the actual and with the actual indexes themselves, right? All of them have an IVR that's fairly low right now, and that could change at any given point in time. I think you just wait. That's the best thing about this environment. I think you get the opportunity to wait on the great juicy opportunities. I think they're going to pop up again. I think at some point we'll be down again, and we'll have the ability to sell. Just like it was about a week and change ago, we had this ability to sell vol, and those you could have probably sold that same put spread for a better level. I think we'll get it again.
If I may point out here in the Russell, if you wanted to be bearish, given where the market peaked out overnight, okay, and against the recent swing highs, it's really 2150. But if we were to go out to 43 days and you were to look right up against 2150, so thinking about the technicals, if you want to be long, you're selling a short put spread against 2000. If you want to be short, you're selling a call spread against 2150. This is a 2-to-1 with a 64% probability of profit. If you wanted to give it a little bit more breathing room on the other end, it's still closer to 3-to-1. I mean, the risk to reward here right now, in light of today's price action, which does not look healthy, treating this as a potential top is actually a better risk to reward than treating this as a potential buying opportunity right now. So, Jamal, I think there's more than one way to skin a cat. The technicals and if I'm going to be bearish anywhere, it's easier to justify doing it in RTY than it is in NQ or ES right now. And I think that's where people have to take their shots if they're going to be a bear in stocks.
And that's actually a trade that I can eventually look to put on if we get a little bit of elevated vol in here. That's short call spread, right, against my short M2K. Like I could do that to some degree, probably picking the appropriate level upside, which I haven't even calculated yet. I mean, it's probably on the order of 2,200, somewhere around there. And maybe in July, like I could get some decent value for that against my long future. Like that's something that I could eventually do, because 2,200 is that's a ways away. I would welcome that move actually against that short call spread.
Russell at 2,200 would be very interesting for the broader scheme of things. Probably good news on many fronts: lower bond yields, right? Lower gold prices, perhaps stronger dollar. But there's probably a headline that's going to drop. We do have an interesting headline that did just come out. Chair Powell and President Trump had a meeting that just wrapped up at the White House.
What?
Powell was invited for a brunch, I suppose, to discuss monetary policy. And the headline is that Fed rate decisions would be based on non-political analysis. So we have that tweet attacking Fed Chair Powell later to look forward to. We can turn our attention to the bond market, which up across the curve, despite the headlines and back and forth. Jamal, perhaps one of the signs that there would be some difficulty for stocks today was that gold really perked up this morning faster than everything else.
Yeah.
But the way that bonds are behaving here warrants, again, deeper conversation, because yesterday, Thomas and I here on Futures Power Hour were talking about the technical structure of what was happening in ZB. And you had this form and function where you get this bullish engulfing bar to start off the week, followed by an inside day red candle. And that would basically set up today to be the deciding factor as to whether or not a bottom was indeed forming. Now, there's a point today where it looked like, no, this is a false bottoming signal. We are still in our downtrend. However, as times move forward, this is now another bullish engulfing bar. We were below yesterday's low. We're moving through yesterday's high. We close above yesterday's high of 112 and 19 ticks. We now have 2 of the 3 last candles being bullish engulfing bars down here at the low. And it resolves the conflict that we see with yesterday's inside day, that this is a market that we should be treating as a market that on a technical basis looking to the upside. I know that the 1 month is sitting here and we have not been able to crack through it in some time though. So perhaps that's the final hurdle. But if there's a 113 print in here, I don't know what else needs to be said about this. You'll have downtrends broken. You'll have strong candlestick, patterns that are emerging, right? The move off of the Liberation Day, 2 April swing highs, if you will, the start of the month, the later part of the month. Those are now breaking. There is a credible technical case now with more evidence in our pocket that the low is in ZB for the foreseeable future.
I sure hope so.
Jamal.
I sure hope so.
not based on what's going on with the Fed or Trump's going to say, which is I think that's the hardest part for me, to cancel out the noise.
Yeah, it is. But I firmly, and I think this is the case. I firmly believe a lot of the stuff that we look at with technicals for me is about greed and fear pockets, and a lot of that is based off of somewhat of the news. So instead of really listening, this is really the real core tenets here of Tom and Tony. Instead of listening to the news, just look at the price action, right? They never say technicals, but the price action involves technicals, by the way. Look.
Don't tell them.
Yeah, I won't tell them. I'm short the 111, 108 actually is what I'm short, and that's what I got short. About 45 minutes before the 20-year bond auction last week, which really kind of sucked, but it's working out now. And again, this is another asset class where you're getting the ability to trade around a lot of the moves that are happening, different for whatever different reason, whether it's good news or bad news. These things are moving around along a lot of headlines. I think you just got to be able to trade them when they come. And so that was a great opportunity. Looks like last week. And now we've bounced some, but you could also be directionally neutral in this, which I am both right now. And I'm loving it. I mean, vol is starting to come in some. We're at the 30 level. We'll see what happens. Again, is it going to be another headline that pushes vol higher? I don't know. Of course, I don't hope not. But I don't know. Right now, bonds have really kind of been one of those interesting tells in the market. And we if you want to look at this from another way, with ZN, we've seen markets sort of somewhat bounce back after touching that 4.5%, 30 years, same deal, touched 5% last week. Since the beginning of this week, they've pulled back from that, and we've seen markets bounce. So, they've kind of gone hand in hand in that way, or I should say opposites. So, I don't know. For now, I'm just keeping these positions. I'm not going to touch them. Again, short the 111, 108 put spread, and then short an iron condor with 107 and 117 be my short strikes and 3 ticks wide. And this is one of the best positions I got going on. I'm not going to do anything.
If I could do some shameless promotion for one of our resources that we have on the website, there's the concepts and strategies section here, Jamal. When I mentioned some of these technical candlestick patterns, I know it can throw people for a loop. It's not necessarily the core tasty way of approaching markets, but we do have the resources for people who want to get educated on candlestick analysis. Bullish engulfing bar, we talk about 2 candlesticks and a potential reversal at the end of a downtrend. You could see the pattern here, move below the prior candle low, moving above and closing through the prior candle high. That's what we see here.
That's under the Learn tab, right?
Yes, it is. Mm-hmm. And, great resource for traders to get their hands on. You don't need to trade around the candlesticks, but if you're just reading the tape, if you will, in a more modern charting sense, then you're looking at the tea leaves here and saying, oh, there are attempts. The bulls are trying to, regain control right now. And so there is an earnest attempt at a bottom trying to be established. I guess the point there, too, is I wouldn't try to short this right now if I think that Treasury yields ultimately are going to resolve themselves to the upside. And for all the hemming and hawing last week, myself included, who were talking about the Trump tax bill and the $6.2 trillion in new debt it could bring about over the next decade, the signals coming from the Senate are diametrically opposite of that. This bill is not going to pass the Senate in its current form and fashion. So maybe it's a non-story in the short term, but you can't ignore what we're seeing here right now. So I have a potential trade lined up here. Maybe much to my chagrin, I got shook out last week, literally a week ago, around that 20-year bond auction, Jamal. So I suppose I gave up nearly 2 points. We talk about wanting to see a print closer to 113 here to vindicate a bottom. I like the 3-to-1 a little bit better than that. Risk to reward, close to 68% probability of profit. It's at 57 days to expiration. Send it. Might as well.
Send it.
And it didn't get filled right away. So that's good. That's great. After today's data, there was a U.S. GDP report revision out today, as well as gross domestic income. Now, I've talked about this with Victor last night, Jamal, but I always go back to where I was in 2022, right? I mean, literally, I have the notes in front of me. When we were going into that cycle where we were concerned about a U.S. recession, Russia, Ukraine, oil prices spike, Fed's hiking rates, inflation's at 9%. When is the recession coming? At the time, St. Louis Federal Reserve Bank President James Bullard noted that you can't really call it a recession just based on 1 quarter of GDP. You need to look at kind of like the NBER definition, the National Bureau of Economic Research, which is to say that it needs to be widespread across industries over multiple quarters. Bullard took it a step further in saying it's not just that or that alone. You can look at GDP, but you really should look at gross domestic income, right? Because GDP is just about the stuff we make here. But GDI is about all the money we make. And at the time in 2022, as the data came out, while you had some sketchy GDP figures, gross domestic income never fell into contraction territory. So it didn't seem appropriate to make a recession call then or trade like a recession was nigh. Now, that's not where we stand today after today's report. The release for the update for the GDP report today shows us that GDI, like GDP, is in contraction mode, Jamal. That is a little bit more clarity on whether or not we're heading into a slowdown-like state. Maybe it's just one quarter and 2Q bounces back, but there was a dramatic deceleration in consumption. We thought it was 1.8%, which would have already been the lowest, annualized rate of consumption in the U.S. in several years. It was revised down to 1.3. That's not good. That's 70% of our economy. And you have Fed cut odds starting to bump back up here across the curve, ever so slight, but still meaningful. We see that Fed cut odds for September, which were slipping to near 70% yesterday, are back to 80%. Odds of a July cut, which had dropped down to 19%, are back to 25%. I don't think we're getting a July cut still here.
I don't think.
But the market seems to be just at the margin taking out the higher for longer fear. And that's another thing that you could look to as, okay, maybe this is going to calm down a bit.
Yeah, it's funny. That's today was like the first time in a few months here that I've looked at the Fed Watch tool, and I really kind of just loosely glance at it. I don't expect a cut anytime soon. But again, when you talk about the possibility of recession, I mean, isn't that essentially where you really want to be long bonds? You want to be long gold, basically, right? I mean, those are the areas that you feel comfortable in. I suppose.
Me comfortable in gold?
Yeah, exactly. I don't. Whether we get that or not, recession. I mean, obviously, there's a personal effect to that. That you really need to think about in some ways. But as far as trading goes, I am not going to trade for it. I'm just going to continue to trade what I see. I'm not going to try to, I guess I'm just going to skate to where the puck is. I expect it to be.
Yeah. A close above the 1 month here would be the first close north of the 1 month since May 1st. So we have to keep this in mind. I'm looking at the action, particularly in the wake of the GDP report and its revisions this morning. Jamal, let's go to 8:30. That really kicked us up into the next gear. I mean, we were trading basically back to where we had been overnight through the Asian hours. We got the court ruling last night here and bonds sold off. And so prior to GDP, we're basically sitting around the same levels near 111 and 25 ticks. And we get that GDP report today that shows, yes, actually, consumption is much weaker than we anticipated. And GDI is in negative territory, which raises those recession fears. Bonds rocket. That's a move from 111 and 25 ticks. We're now a full point higher after the GDP report. And so is gold, which is, I know you were just saying here, that's the recession trade. So I suppose, again, talk about strange influences today. It's not a clear buy America, sell America kind of day like we've seen in so many sessions recently where it's, stocks, bonds, and the dollar moving in one direction and gold the opposite. Today, the dollar is off, but yields are down, so bonds are up. Lower yields helping gold prices. And it's kind of like a normal session, I guess. We don't need to think too hard on it. But it's like what happened with bonds. We get that 8:30 a.m. data, and then this thing just starts to take off and stay up the rest of the day. The move started happening earlier, though, and I think this is the most fascinating part here. When do Chinese markets open up? 9 o'clock Eastern time. We bottom 15 minutes after Chinese markets open up, and then Asia heading into Europe picks this up the rest of the session. So if the tariffs are good for gold, tariffs also would be bad for gold. The market was sniffing out that the change in the tariffs from the court, that didn't really mean anything. They could just reapply them. The trade war isn't over by any stretch of the imagination. We're probably going to be looking at a new round of tariffs announced sometime shortly. What do you make of what's going on here in gold, though? Because this turnaround today was actually, when this turned green earlier, I said, that doesn't make a lot of sense with stocks still up.
It didn't make sense at all. Even going back to last night, when markets were up big, again, you're talking about the initial reaction and without anybody really knowing what this fully means or what the retaliatory, state might be, markets were still up big. Gold was really not down that big. And I was actually, that was one of the things that I meant to mention, but I forgot to mention during our discussion. The gold was not down as nearly, not even half of what I thought it would have been if this was really something that was going to hold. You would expect at least markets being up 100, the gold's probably down 60 to 70, and then sure, they both reverse in an interesting way. Well, that never really happened. I mean, gold was down like maybe 30. So I thought that was fascinating too. Because again, something I talked about the other day, I was looking to buy gold if it went to around 30, closer to 3,200. So I got as low as 3,268, didn't get much lower, and so therefore I didn't make a move. But given everything that we've seen, we talk about buy America, sell America. We talk about gold moving with regard to when tariffs are on, and obviously you would expect when they're off. Maybe once again, gold is just benefiting from that flexible narrative. It's just amazing how we've seen that work. So. I did nothing. I'm sure you're happy considering your position, but I did nothing, and I'm going to continue to do nothing until I see gold pull back more.
Considering my position, considering how I've basically turned this into my personality here on air for the past year.
Yeah, it went from being an oil man to a, dare I say, a man
gold
who
bug.
loves gold.
Yeah. I didn't mention this before. I was remiss to miss this, but it's important. We did have a 7-year note auction today, Jamal, at 1 p.m. Eastern time, and it was awesome. It's great. Best auction that we've had in a while. Bid to cover ratio jumps up to 2.7 from 2.55, above the 6-month auction average of 2.64. It's the highest bid to cover ratio we've seen since December. That's great.
I was looking ahead. I think one of the next big auctions we have is the 10-year auction, if I'm correct, on June 11th. I think that's one of the next big ones.
Yeah, that's the. I can just pull that up here quickly. I actually have this up on my screen right now, so might as well share. The next significant Treasury auction is going to be. Yeah, you have the 3-year notes on June 10th, Wednesday, June 11th, the 10s, and then June 12th, Thursday, you're going to have the 30s. But what's also nice about this, in terms of stopping through, it's the biggest stop through that we have since late 2022, since December 2022. This is really strong demand for U.S. paper right now. And you talk about recession concerns coming in. The auction is on the other side of this GDP report. So gold here today holding on to its gains. It's really riding this 1-month moving average. Again, it's holding it as support for now. If we can get a push higher through 33.52 by the end of the day, and that's only $6 from where we are right now as the market moves forward. The price here on the y-axis on the right-hand side is marked for the technical close of the futures day, but we still go on. So 33.46, not much further from here, you have another signal that this is a market that's coiling, tilting higher, potentially flagging. If we're looking like we're in a flag and we have a bullish engulfing bar up against our 1 month, above our 1 week, do I want to short that there? Or do I want to roll the dice on this being a spring that's about to uncurl to the upside? I know what I'm doing, Jamal. I'm staying long gold here.
I don't blame you. And again, I'm not interested in shorting it either. I would just rather wait for it if it does pull back. One thing you've been able to count on is bounce backs from gold's pullbacks, essentially. And so that's really what I'm trying to play. But again, I mean, the chart it's one of the more technically sound charts that I've seen in a while because, again, it usually touches support and then bounces. So I think you should feel comfortable being long.
Looks good to me here. Silver likewise is edging up again. Where are we going to go? What are we doing here, silver? Well, It does seem like it's still hanging on. The uptrend off the lows in April again here in middle of May, thus far maintained. If we do break out from here, there is an upside target close to 35. Copper prices look awfully similar. They pulled back in. They had a brief spurt at the start of the week. That was delightful. But similar chart, downtrend off of the pre-liberation day highs, broken, but we're not necessarily breaking out in a fantastic manner. It kind of reminds me of the Russell, the meandering, the lackadaisical push to the upside.
Yeah.
On the other hand, there's not enough there to be bearish yet. So I still have the short put spread on in copper. I'm still leaning long the calls in gold and silver. It's a game of patience.
That's the thing. This one takes some patience. That's why I haven't jumped in. That's definitely, it takes some patience. And again, I've said that's probably one of my biggest Achilles heel at times in trading. But If you can have the patience, at some point it might pay off.
It's a good distraction, Jamal. You know, so I say that it's good to have patient trades on that don't require my up to the minute attention, because when I'm pacing nervously around the house watching the Knicks destroy my dreams, I shouldn't be managing risk.
I'm proud of you, man. That was 46 minutes into the show before you said anything about it. I'm really proud of you on that.
Thanks. Yeah. And then I'm not going to mention them again until October. You watch.
I mean, if you're lucky, you'll be able to mention them again on, what is today? Maybe on Saturday. Maybe. But I don't know. Ooh. Tonight, right? Game 5. Is this game 5? No, it's game 5. 6.
At the Garden.
Yeah, 5. At the Garden. It's going to be electric. Oh, gosh. Who's going to show up tonight? Who's going to be there that hasn't been there already?
I'm not going.
I know. I keep looking, expecting to see you on the baseline, man. I mean, you know.
There's a part of me that says if they win tonight, it's first off, it's cheaper to get tickets and plane tickets in a hotel room and game tickets in Indiana than it is to go to a game here in the city.
Well, you know what the best marketing would be? The best marketing would be Chris on the floor seats at Madison Square Garden. Tom, Tony, Scott, can we get this? JJ, can we get this done? We need to get Chris on the baseline at Madison Square Garden and a Tasty Live shirt. Everybody's going to be asking who that guy is, man. I'm telling you, that would be cheap marketing.
Yeah, me and Timothy Chalamet and Spike Lee.
Can you imagine?
Yeah, we're all good friends. We see energy bleeding out here a little bit today. Their inventory data suggested that there was a bit of a drawdown, which I suppose that's good. We're off the lows, but diesel stocks, lowest that we've seen in 20 years. Does it help oil? Not necessarily. We're off 1.55%. I would say it feels like there's a ceiling near $63, $64 right now for some reason.
Yes.
We haven't been able to crack through it for the past month. Either way, I'm still leaning directionally neutral here. I killed my short put spreads, a few days back, and I have on the short iron condor right now. I like that we're kind of wrapped around the 50% mark of the pre-Liberation Day, post-Liberation Day trading range. That doesn't change with much of anything today, although, again, because of the price action above yesterday's high, the low is 60.85 for yesterday. We're currently trading at 60.86. So this could be a bearish engulfing bar, right? It could be a little bit of a sign of a high, further reinforcing that 63.64 is an area to operate around. And it sets up an interesting dynamic whereby if you are really bullish on risk in general and you want to have an indirect proxy trade to hedge it off somewhat, selling call spreads up against 64 may be a way to take a little bit more of a bearish view on the tariffs and growth and yada yada without exposing yourself to the whims of the nature of speculators chasing stocks to the upside in the short term. But it seems like there's a really firm ceiling here that you can work around.
It does. And honestly, it seems like 60.8 or something in there is like the average of oil over the last 8 weeks or so. I mean, it feels like it's just been in that range, somewhere around, wrapped around 61, 20 cents in either direction, it feels like. And so I've felt good I've lost no sleep having an iron condor in here with 55 being my short strike to the downside and 68 being the short strike to the upside and $2 wide. That has worked out well. I'm not changing it. This fall has been steadfast in here. It's kind of just hung in that area. I mean, 48.50s really has not come down much more recently, which is counter to what we've seen over the last couple of years. We'll see a big spike up in vol and then, it kind of comes back in. So it's just been holding in there. There's clearly a lot going on in oil and it's usually kind of unilateral, right? Something in the Middle East, but now it's a lot more. And again, I have no idea how to predict it. I mean, I know the technical versions, but I don't know exactly to determine when a recession is going to happen, when it's coming or when it's gone. But this is definitely one of those indicators, I would say, globally. And clearly that's what it's showing, given that vol is held up in here.
Yeah, I couldn't, it was shocking to see that we just had the biggest draw in crude reserves in 2 months. And that includes, accounting for efforts by the Trump administration to refill the SPR. I think they added somewhere in the neighborhood of just short of 900,000 barrels to the SPR in the most recent reporting period. But rig counts are falling. Production staying up. kind of miraculous. I suppose that's the innovation of American drilling and technology these days. I would point out here, though, in the contract where most people are probably operating, if they're trading oil futures or oil futures options at this point, is CLQ5, because that's the contract in the typical 45 in, 21 out type of window that we do here at tastylive. Jamal, the CLQ5 contract's already given you that bearish engulfing bar. We're not done with the day yet, of course. This could reverse, but yesterday's low in the contract, where, again, I talk about it being the tradable one, 49 days, the July 17th expiry is CLQ5. That's the closest to 45 in, right? So that's where I'm operating too. But that low yesterday is 60.28, and today's close would be 60.13. So you would technically have it here. Again, why would I point this out? Is today a good day to put a long delta on in crude? I don't think so. That's not how I look at this chart. I look at this chart as saying if I'm going to be directional, the path of least resistance, you give me a break below 59.5, it's going to be to the downside. If not, we chop around still. You say we're hugging the 2-month moving average. We're hugging the 1 month, the 1 week. Those are both sitting right at 60, 70 or so. This is a market that's very much choppy right now. So we have to treat it as such. But there's a downside bias. You would think the draws would boost price, and they did not whatsoever.
Yeah, normally I would be interested in buying 60s and, kind of holding from there and seeing where else it goes. But like I said, it's been a very kind of tight range, like even given news that typically would normally send it moving higher by a mile, you would feel. I'm not interested in trying to scalp this at all. I'm sure there's people who are, and kudos to you. But I like this. If this even makes sense, I like to scalp bigger ranges, which again, I just haven't seen in oil. So I've just preferred to do the iron condor for now.
Yeah, we need some news on the geopolitics front, I think, over there to get a more significant breach. And there are some things percolating, right? Maybe I should send the Ayatollah another Twitter message.
Maybe.
Hopefully he responds this time. He didn't respond last time.
Wonder why.
I wouldn't be doing my due diligence if he's going to leave open his DMs and they're going to attack another country. It could impact oil prices, like I should ask for our listeners, right?
You have responsibility to the listeners of Future Power Hour, for sure.
Yeah. Harass the Ayatollah of Iran over Twitter DM. 3.50 here in natural gas, down 1.57%. The coiling continues, Jamal, right? We talked about this being a watch list type of product or trade over the next few days, because we're kind of coiling right now into the vertex of this triangle. Maybe below 340 you're bearish, maybe above 380 you're 5 or so you're feeling bullish. Yesterday's price action does no one a favor. I'm still waiting. 51.3 IVR though, so I think this very much uncorrelated to so many of the other things happening into the market right now, outside of the occasional tariff reaction. But keep it on the watch list. I don't want to do anything here just yet.
Yeah, and I was looking at the futures kind of configuration here. It's kind of flat across the first 5 months or so. July, August, September, October, all around 3.5 to 3.6 or so. Then you finally get a move up in November, but it's kind of flat over the next several months.
I don't recall seeing it like that in a while.
Yeah, I know, right?
Maybe that's just me.
Yeah.
Bit of a normal day for the US dollar. We see that yields are down, so the dollar's off. The euro trading to the upside here. We're claiming 113. And there you have your bullish engulfing bar in the euro, below yesterday's low, above yesterday's high. You've heard me say that too many times this session, but it's that kind of price action day. And so you're getting a bullish engulfing bar that catapults you back above the 1 month, back above the 1 week here. Volatility is a 43.4 IVR. So with our 111 pivot zone, Jamal, I was checking this out for 5 futures this morning, the 111, and then we go up to 117, 118. If we were to do the short iron condor here, it's not fantastic, right? Risking 3+ to make 1. We could tinker with this a little bit here, perhaps, and get a better risk to reward setup. But at 35 days, this is basically a 2-week trade. Will we hold the trading range that we've carved out over the past 6 weeks? There's enough there to work with. I like it a lot. I'm going to send this too. This should be in the queue. It's not a huge trade. FX futures aren't that big. I'd remind everyone, head on over to the platform on the left side, watch list, sign up for the new Tasty FX while we're in the FX section. But Jamal, what's your take on the dollar here today? Do you have any currency positions going anywhere right now?
No.
It's a big reversal.
Yeah, it is. I mean, that's what I'm looking at, really, just how basically this news had initially set it up that the dollar was going to crush the rest of these after 2 days of winning. This was going to be the third day and possibly the beginning of a new trend. And so completely reversed with all this news changing around. But no positions for me as of right now. Again, there's still some decent vol in the euro and in the Canadian dollar, of course, where obviously there's a lot of discussions and a lot of this stuff that happened today pertains to them. But I got nothing going on in any of them. Just watching.
The Canadian economy will see an important jobs report coming up. We're talking about what's expected for next week. What did I have this year? I had this written down. Talk about losing the plot. Where are you? There you are. Canadian jobs expected to lose 45,000 jobs next month after the previous month was plus 31.5K. Oof.
Yeah, NVIDIA's fading, by the way. NVIDIA's fading, market's fading, all the things surrounding NVIDIA are fading. Uh-oh. Trouble.
Everything is just coming back in as people come back from lunch because the rallies aren't holding, and the tariff headlines mean literally nothing because, Jamal, how can I explain this to people? Imagine you submitted a report for school, and your teacher said, you put it in the wrong folder. Please resubmit the report with your name on it and put it in that bin. We'll grade it once it's good, right? Like, they're just saying you filed this stuff in the wrong place with the wrong rationale. They're not saying like you'll never be able to do this. So yeah. It's a nice headline. Good on you for fading the market. This is one of the reasons why I'm such a dork and read through these court releases when they actually come out. I'm not going to rely on. I'm not relying on CNBC to convey what they mean until the next morning.
I mean, again, it was easy to do considering the positions I have. And that's the one thing that I try to do with my trades, right? Like I have to think about it in that way. What I wanted to do was sell NASDAQ as well against even the long that I had. But I knew that was going to be too much. Now, that is one of those where you're like, that's where you could say good on you. Because that would be like, I knew that this was going to happen. I had no idea. It was just one of those like, well, if this is going to jump up here, I actually need to fade this just a little bit.
Calendar for tomorrow, final trading day of the month. German inflation, so if you're trading 6E, keep an eye on that. You have U.S. inflation, which the Fed's not doing anything anytime soon. So do we really care about this particular report? And it's already the inflation reading that we can piece together from the PPI and the CPI that we got earlier this month. So going into this, we know 85% of the inputs, let's say, it's downgraded. I would be hard pressed. I'd be shocked if tomorrow's inflation data provokes a market move. Other than that, personal spending, that's more tariff related and more growth related. Let's see if people are continuing to swipe the credit cards, what have you. And then Canadian growth. Note the deceleration coming in. So one of our largest trading partners, we are their largest trading partner. Is a tariff talk having an impact? I would assume so. Recessions are nonlinear, Jamal. Hopefully it doesn't get out of control, but we have more tweets to pay attention to because after the taco comments yesterday and the court ruling and his meeting with Fed Chair Powell today, I feel them. I can feel them coming. They're going to come. In any event, we're done here on Futures Power Hour. Jamal and I will be back later on. He's back in about 45 minutes. I'm back in about 2 hours. Until then, though, you're going to get Dr. J, Dr. Jim Schultz with From Theory to Practice. There's that ZB trade, Jamal. That's the perfect amount of time for it to sit. We'll catch everyone later. Good luck.
We are back, my friend. You know what that means. Time for a little more Tasty Live with trades for the research team. Who is our first researcher? man Jaws. What's up, brother?
What's up, Tony? How are you guys doing?
Putting the fear of everyone with your trades.
Yeah,
because they go wrong or because they go right? I don't know. We'll find out.
No, I think I've been doing pretty good so far.
Good.
They always say that, don't they?
Yes,
they always do,
Before
because
things
we
go
can't
horribly
remember who
wrong.
does what. But we got a lot of the trades on last week. I think we got almost all the trades on last week. So let's see what we do today.
You guys excited for your Atlanta trip?
Oh, yeah.
Oh, yeah. Uh-huh.
Oh,
Couldn't be
yeah.
more excited.
All right.
get to spend time with Sosnoff. His feet are cold, but hopefully we'll get over that.
Yeah, and you better make your whole little bathroom routine tomorrow morning a little quicker.
Yeah,
I'll do my best. I'll do my best. All right, what do you got for us, Mr. Jaws?
All right, so something I don't really do that much, covered call in ENPH. I usually stick to short puts and stuff, so...
You're going to the stock that's been killed.
Yes, going into the stock that's been killed and hoping that it'll go back up. Maybe after all the news announcements over the past day. We'll see. But yeah, buying the 100 shares and selling the call, 40 at the money. So.
Yeah, so I have a bunch of ENPH positions on, none of them being good, mind you.
Okay.
Because this stock hasn't had an uptick in forever.
Yeah, I know. We can always hope.
I think it's an interesting cover call play. I agree with you on this one.
Oh, wow. Thanks, Tom.
Oh, look at this.
Yeah.
First one out of the chute. We
and
got
nice buying power
for
for a smaller account. Yeah.
I mean, I hated this stock at 120, but at $39, I kind of like the play.
Okay. Yeah, that's why I thought it'd be pretty good. So we'll see how it plays out.
What call are you selling in here?
The 40, the at the money. I'm making it. I haven't gone too much. I'm making it kind of conservative. So.
Okay, you're doing July though, right?
Yeah, July, 50 days.
Yeah, so you're buying stock and you're selling the 40.
Oh my God, it's a covered call. What the hell is wrong with you?
I'm just setting it up. I want to see which one he was doing.
He needs to understand it fully, okay?
Wow,
done.
That was easy. Who's our next researcher? Covered call for crying out loud. Yeah. Back from building a gazebo. My man Gad. Gad, what's up, brother?
What's up?
You guys are sitting in the big kids' chairs today.
Yeah, big boys' chair. Big guys, I mean.
That's right, man. That's right. Be
Tony,
good.
Yeah, Tony, we complete the gazebo. We started on Friday and you completed on Sunday. Fully completed.
Well, that's because you took 16 breaks in between there and went to a bar.
No, we took like technical breaks. That's what we called it. For eating and drinking, and that's all. So
I hope they fed you well.
Yeah, he didn't pay us, so he paid us in food. So we were expensive in food. So
okay.
Yeah.
Shark is a cheap SOB. What do you got for us, Gad?
You can't say that, Tony. He's not cheap. He's a good dad. Yeah. So I have Shota and Kando. Was pretty not easy to find this because we have like right now it's not easy because of the IVR. So I have app have like IVR which is like 32.
Yeah. Here the problem in here is just going to be getting fill at a decent price.
Yeah.
Because these markets are, it's hard. I've traded a lot of this stock and I struggle with it every freaking time.
Do you have a position
it's
in the app?
A tough one.
No, not right now. I was so happy to finally get out.
So the put size one, I struggled to put position on because it was somehow tight. But on call side, it was pretty much easy. According to the expected moves, it's about 70, 75.
Let's see. You're doing the 330, 320.
Yeah, 520
and
530.
You put some upside bias in this.
Little bit.
Yeah, you're being.
Yeah. Okay. What price do you think you can do this? 380?
380, yeah.
Possible. Yeah. You got to be careful. Did you adjust for the stock being up this morning?
Yeah, I adjusted this morning.
Got it. Okay.
We can try
I'll
it and
give it
see.
a shot.
Yeah, we'll give it a shot.
I'll give it a shot.
Okay.
I'll give it a shot. You have to do a little price discovery. Lower your size in here. Reduce your size in this one if anybody's trading this, and reduce your size and do a little price discovery. Put it above the market and move it down. This is a tough one.
Okay. Okay. Good.
Well, don't sell past the close. Who's our next researcher? Ty, you got the best music of the group. I don't care what anybody says. What you got for me, my friend?
All right, so I'm back to the calendar diagonal because the underlying price went up higher last night, and especially the indices. I believe the implied volatility will drop to 15 or so. So I'm going to do a diagonal, slightly neutral-ish diagonal.
Okay, you're buying the 294s in July?
Yeah, just like one or two strikes to the upside, and I sell at the money June 592.
So small downside diagonal.
Very, very small. Yeah, you cannot even tell from looking at delta. So I'm trying to be neutral because my assumption is the underlying probably not going to move too much after all these chaos. 6,000 for ES is a reasonable level to stay for a while, I guess.
Okay, I don't hate this trade. I got it in the system.
Wow. Look at how quick that was. Good work out of you, Kai.
It's a cheap shot.
Yeah.
Fine.
It's a small position.
Low risk, low reward.
That's true.
All right, let's not fight over this. Let's just go to the next researcher. Who do we have next? That's
hey guys.
Right. We've got my friend Data in here. What's going on, brother?
Hey, doing well. So I got a super sexy stock, British Tobacco.
What is that?
It's a company in Britain, which is a tobacco company. So 61% IV rank here, super high. So I got this on the watch list, the fast movers watch list, which we created in the research team. Always showing a lot of stocks that have quite a bit of historical volatility and then also high implied volatility looking forward. Pre-market looks like it's going to open down a little bit. This is a short strangle. It's a little bit on the bearish side, so it's closer to the call side than the put side. 46.42.
Now, I've never traded this stock.
Yeah.
Is there any open interest?
There is quite a bit of open interest on the strikes. If you look, there's quite a few. There's several hundred on each strike.
Yeah, I'm looking at this too with you, Thomas.
I've never traded this, Tony. Have you?
I've never traded it either. I'm looking at July. Markets are 10 cents wide, not horrible. Open interest is okay, not great, but definitely for a $45 stock, maybe it warrants a look here on all-time highs too. So
yeah, I want to just choose something a little different because oftentimes we trade the same underlyings, and I wanted to just kind of mix it up a little bit.
Yeah, I like what you did, and you used that list, which gets no love a lot of the time. So I love that too.
Sure.
What do you say to that?
I'll put a small order in, see if we get filled, and then we'll take it from there.
Cool.
Beautiful. Good job out of you. Good job out of the research team. Let's take a quick 90-second break and come back. Even the S&P is up 54. We'll be back in 90 seconds. It's Tasty Live. Tomas, enough out of you. We've got this man, Victor Jones, and hear me out.
Oh, yeah. Tom, Tony, Tasty Nation. How you doing? Good morning, gentlemen. Good morning.
Hello, Mr. Jones.
First of all, I want, off the bat, Tony, where do I get one of those shirts? Don't.
Oh, you like this? Thank you.
Oh,
Thank you. Yeah.
Beautiful. Beautiful.
Yeah.
Okay.
It's a really new boutique. It's called Goodwill.
In this economy, I'll take it. Beautiful.
It's called Nordstrom, but not Nordstrom Rack. I try to buy the clothes that are in style this year, not the clothes that were in style 3 years ago.
Whatever happened to you wearing the button-ups, Tom? When you guys launched this thing, you looked like you were like a swinger or something like that, the way you were dressed when you first launched this band.
A pineapple holding swinger? What kind of swinger are you talking about?
I wore a shaker, a clubber.
I wore a button-down shirt yesterday. It was a little fancy.
He was trying to keep up with the bat, and he realized,
you guys
why am I trying
exactly
to do this?
The same
I
every
can't
day.
do it. I'll just go with my T-shirt.
I've always worn just T-shirts, but you know
that?
Who copied who?
Me. I'm doing the black T-shirt thing every day.
Oh yeah, yeah. I mean, well, do you know how you used to dress? It was pretty bad.
Did you say you or me?
I'm saying you. I mean, I would go a black T-shirt is a good route for you. I mean, it's a better look.
Who do you think that's brutal? Who do you think the best dressed on-air personality is of all the tasty people? Give me the top two.
Are you talking about guys or girls?
I don't care. I don't think you can do. I think you were probably get in trouble if you try to do the women right now.
Well, I would say if you included women, maybe Liz, because she's always dressed. If you're talking guys,
that's not fair. Liz and Jenny, they
get rid of them. All right, get rid of them. Get rid of them. Get rid of Annetta, because I could just get in trouble there.
Annetta's dressed to the nines every day too. We can't include the women. They all look great.
So it's just the guys.
Wow, Beth is feeling really hurt right now. I'm just saying that. But go ahead.
Okay, if I did the guys, let's see who do we have?
If you did the guys, we'd get raises.
So, Dr. Jim, throw him out. He's horrible. Vecchio.
Jim wears children's clothes. It's easy for him to dress.
This is
Let's
easy.
see.
Like granimals.
Yeah. Oh my God, this is a tough one. Who do you want me to say? Is it like?
You can throw me outside. No, don't worry about it. Yeah,
I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
I probably guess I got to go Ilya.
Okay, Ryan Grace easily.
Oh,
yeah, Ryan Grace, 100%. Yeah, and
but I don't consider Ryan.
He's not favorite in there.
He's not full time on air.
Yeah, Bat and Ryan Grace have it hands down.
Oh, Ryan Grace always is dressed up, but he's very preppy looking. It doesn't do anything for me. Like he's got preppy out. He's got a whole preppy outfit.
Oh, who's the guy who's God on the research team? He's got to be in the top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah,
he throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that. He's got incredible confidence, and good on him.
No. Gad is the sharp dressed man on the research team for sure.
Oh, for sure. Shout out to all the research team. They all look incredible. And Beth, of course, everybody's on the list. Okay. Tom,
man, you guys really.
Man, you must have done something really wrong. You must have committed a really bad crime or something.
When you say that and somebody watches the thing and then they're not mentioned, it's weird and awkward. So I'm trying to make it not awkward. All right. I have a question for you, Thomas. Do tariffs matter to stock prices?
Do tariffs matter to stock prices? I mean, in the short term, sure.
Okay, good. Because now I've locked you into engaging with me in this discussion in good faith and not saying it doesn't matter. So I had to start with that one. The court ruling yesterday, Trump's tariffs, ruled that he did not have the authority to implement the tariffs under the sectional law that he implemented them under. I'm not going to go into detail. But the point is they have 10 days effectively to roll them back. The Trump and their administration has appealed this and will is likely going to appeal it. They have 4 other options, my understanding. I'm not some expert on the topic, but it does seem they have 4 other options. One option they can implement almost immediately, but it's only good for about 150 days. The other 3, you have to go through some bureaucratic hoops before they could implement them. My question to you is, in your opinion, the court ruling, what does it mean for risk in your mind? Is it a good thing, a bad thing? Is it a complete non-factor? What does it mean to you?
When you say risk, you mean stock market risk?
Yeah, just in general. How do you think about risk given the court ruling yesterday?
Given the court ruling yesterday, because risk means a lot of different things, but let's talk about it just in terms of listed financial products. I would say that it probably lessens the risk ever so slightly.
You think so?
Yes.
I see it the exact opposite.
Good. That's why you have a debate. That's why we do the show. Because let me just tell people really quickly. Victor doesn't tell me the topics ahead of time, so I don't know what he's gonna like. Just make sure. I want you to just people to understand that I don't prepare for what you're about to do. So what you're about to ask me. So but no, I would argue strongly that it actually reduces risk, not adds risk.
The reason I see it slightly differently, and I'm curious to hear sort of your justification as to why you see it that way, is I think prior to the court ruling, you had certainty about what was happening. Some people like it, some people didn't like it, but at least you knew what the administration was doing, how they were going about it. You don't know where the trade negotiations are going with the trade partners, but at least you have some certainty. Right now, with the court ruling, I think you have no idea what the administration is going to do next. So you have no idea how the appeal process is going to go. Could it get escalated to the Supreme Court? What are they going to do in the interim? What happens in the next 10 days? Which one of these other 4 statutes might they use? So I actually think the certainty.
It's exactly what you were talking about, Tom. Go ahead. Yeah,
No. Victor's his argument's different than mine. The basis for his argument, which would be totally fair under normal circumstances, is that the current administration had a plan to begin with, and therefore there's some basis for what you're saying. My argument is that it was a hodgepodge of idiotic ideas that were put together with no game plan, and the fact that they essentially blew it up, at least for whether it's a day, a week, a month, or a year, who cares, is actually better. And so that's why my argument says that if you're doing something that makes no rhyme or reason on any level, and then that gets blown up, then things have to be better. Now, do you run the risk of that same crew trying to do something? Possibly, but like I told Tony this morning, I actually think this is actually a win for Trump, because it gives him an out to a very clear and obvious, really horrible economic plan. And so this is going to help him politically, because it's going to give him a scapegoat, and it's going to let him out.
I think you're 100% right. That is, in the world where he uses this as an out, I agree with you 100%. This is a big opportunity here. I don't know that he will use this as an out, and I think likely it creates an incentive for all the trading partners to drag their feet. So let's say you were at the table, you were going to make a deal, or you're working towards making a deal. Why wouldn't you just drag your feet now even more, let this play out in the courts? Because the tariff leverage, if they appeal it or if they try to go under some new statute of the law, there's that U.S. tariff leverage is now called into question, and so you don't really have an incentive to negotiate in good faith, so you drag it out. Which
of course, so I agree with that.
I think so. In some ways, I woke up this morning. I looked at the SPOOs. I looked at the Nasdaq. We're up 2%, and I know Nvidia had a decent earnings announcement yesterday. But I go, I don't understand this. This doesn't make any sense to me. They should puke this, because the uncertainty in the world just increased. It did not decrease.
That's not your read is longer term is probably correct, but what you have to remember is the market is very short-term emotional. And like I also told Tony this morning, this is the equivalent of a CEO leaving a company and the stock going up $8. This is exactly what happened. So the market, like Trump, listen, we can have lots of different opinions on Trump and whatever, but one of my very strong opinions on Trump is that, and you don't have to agree with this, is that he is an imbecile and he's incredibly dumb. But even as dumb as he is, he can see that if the market goes up when his plan gets rejected, that, okay, why am I fighting for this? Let me just go a different direction where everybody loves me and I can do whatever. And so I think he's going to get a lesson from that. And then I think you're right, down the road, there's something else that happens. I didn't like the market's reaction to that news because I didn't like the fact that bonds sold off on it. It didn't make any sense to me. I didn't like the fact that some of the things it was too big a jump. There was a bunch of things I didn't like about it. But the reality is, I think he recognizes that you can't execute a plan when nobody wants any part of it. That's it.
Did you see the whole Taco Trump thing trending on Twitter?
I did, but I didn't really. I don't dig that kind of stuff because that doesn't do any. I don't love mudslinging. Doesn't do anything. It's not fun for me.
You don't love mudslinging.
Sometimes you surprise. You surprise me every
just
day,
use
bro.
imbecile and you then say
there's a big difference.
Like mudslinging.
There's a big difference. When you're an imbecile, you're an imbecile.
You're kind of going back.
I'm not saying when I think somebody's an idiot. When I think somebody's an idiot, I'll call them out for being an idiot.
And then you use imbecile, and then you say you don't.
That's not mudslinging. Mudslinging is not. When you think somebody is an idiot, you call them out on it. Like there's a lot of people in politics that I call out for being idiots. I have no issue with that, but I don't like the game of, like stupid taco thing. Like I don't want to give him any bullets. I mean, is it true? Of course it's true. We've been saying it from day one. I think I started saying.
There's the jam.
I've been saying from day one, Trump doesn't have the ability to stick with a certain plan. He changes his mind on everything. He chickens out of everything. He's always been that way. But that goes back 50 years.
I guess there is a different way to frame it. The other way to frame it is that he starts the negotiation with the wildest claim, and then walking it back.
Which is a la Sosnov.
You can frame it as chickening out, or you can frame it as he started the negotiations way overpricing what he wanted. And then ultimately you negotiate, you pull it back, and you get something much more closer to what you wanted.
It's negotiating 101, and I'm not saying Trump with his
the
book
art of the deal.
Or anything else like that. Art of the deal. Forget about all that. Anytime you want something, you want 5, you ask for 8. I've never done it in my life, but that's the way to do it because you get 6 when you ask for 8, even though you wanted 5, because everybody thinks they negotiated down. I always say, this is my best price. This is my offer. This is what I'll take because I don't want to fight and argue with everybody. This is what I want to do. And it screwed me my entire life. That's why I'm sitting in coach and Saz is up in first class today.
My son's favorite game to play. We started playing this a couple weeks ago. He wants to play it every day. It's called Store. He goes, Dad, can we play Store? And he's got all these dinosaurs that he's laid out in his room. And I come in there with a bag and I say, hey, Mr. Jones, how are you? And he says, hey, welcome back to the store. And he goes, what do you need? And so here's the game. The game is I say I need 3 dinosaurs. And I've taught my son, the first thing you ask is, what are you looking to spend? So he goes, what are you looking to spend? And I'll say, I need 3 dinosaurs for $30. And the game is he's gotta sell me less for more. So if I say 3 for $30, he's got to sell me 2 for $40. And he's got to figure out an explanation to negotiate me for less is more. He loves this game, Tony, and it's exactly what you're talking about.
It's great.
Start him early, man.
Good for you. Now, when he meets a woman and he gets married and everything else like that, all of that art goes out the window. It doesn't matter anymore. You know that, right? I mean, you're only preparing him for like up to about 20-something.
He's 6. He's 6. You got him meeting women already? He's 6.
He's 5. And by the way, I'm in Singapore. So how do you think my negotiation went, Tony? I'm 11,000 miles away from my
He's
home.
going to teach you about it.
Okay, last thing. I've been asking every guest on the show this week, because this is the hill I want to die on. They're getting rid of the penny. What do you think about that, gentlemen? They killed the penny this week.
I don't have a strong opinion. I mean, they've killed the penny, I think, in Canada and other places, and maybe in the UK as well. I mean, what do they do? They just round up or down? Is that the whole thing?
I suppose so. I'm guessing people are going to stop pricing pennies.
It's round up, Saz. It's not round down. Okay.
All right, whatever.
It's round up, okay?
Okay.
$3.89 is now $4. We had to round up. $3.99 is now $4. We had to round up.
I mean, I if it costs more to create a penny than I mean, it's fine. I'm fine with it. I don't.
It doesn't matter. These kids don't use money anyway. They do everything Venmo, cards, debit cards. They don't use cash. It's not enough to get rid of the penny because we don't use it. But I get what they're doing. I understand. I got a penny collection.
Protect your sovereignty. Protect private cash.
You think this is round one, right?
Oh, this is clearly step one. This is how it starts. You take away the penny.
Round one of getting rid of
take away the nickel.
You take away the penny, and what happens next?
Quarter, nobody cares.
Oh, God.
The next thing that happens is either. This is the fight that's being waged right now. It's either you're going to go CBDCs and government's going to get control over purchasing, or you're going to go private stable coins are going to run the world, and all the tech giants are going to get influence over your purchasing. That's the fight that's being fought right now. And what I want is to maintain my access to cash so that I can enter into direct private business transactions with my fellow citizens without anybody knowing what I'm doing with my money or without any ability to impede on those private transactions. And I know it just comes off as this is just a penny. Who cares? It costs more to make them. But I'm telling you, this is how it starts. Protect the cash, protect your sovereignty. And with that, gentlemen, I'll see you another day.
Only Victor Jones could come up with a conspiracy. I don't. Of all the things you have to worry about in this world, Vic, that is not on the top of my list.
I know it isn't, and that's why I'm warning you. I'm the guy who's telling you what's
today.
Coming.
Pennies. Tomorrow it's sovereignty. Tomorrow
that's right. Ask the Canadian truckers who got their bank accounts shut down for protesting. Ask them how it's going to work.
It's a good point.
I'm not too concerned yet about stable coins taking over, and as long as we're a culture of gamblers, I think cash will be around here for a long time.
Yeah, well, R.I.P. Penny. R.I.P.
All right,
and if you got them, send them.
I'm going to let you go. I'm going to let you go. Good work out of you, my friend. Always a pleasure to see you. Keep teaching that boy of yours. We're going to take a quick. And what about the girl? You don't teach her?
Not yet. She doesn't like to play that type of stuff. We play other games.
She don't like to play that kind of stuff because she just wants to pay market price. It's her dad's card. We'll be back in 90 seconds. You listen to Tasty Live. We got more after this with a market measure. Tomas, we are back, my friend. You know what that means. We got some action going on. Dow just turned red by 36. Russell down $1.30. NASDAQ is only up 45, and the E-mini S&Ps are up 14, shaving 90 handles off of their high, Sadnov. What say you? Volatility up 40 cents to 20.05.
I think the volatility is probably the most telling. If I had to pick one thing, I would say the volatility is probably the most telling.
Sure,
I mean,
agreed, as always.
Yeah, I don't know. What do you think? I mean, I'm not really sure. There's,
you know what? I thought, listen, I didn't want to say it. Listen, you go to bed, even the S&Ps are up 70, 80, or 90, 100, and you wake up and, you get on the show and they're up 50. I didn't want to say it was an easy sell. I did want to come up on the show and say, just like the down move that we had when we flirted with 5,800, got down to like 5,850 something. I thought that was an artificial move lower. This looks like it was an artificial move higher. Now, I didn't get a chance to say that because we had already moved 50 handles, but I think that anybody who had any bullets, pairing it up, 6,000, big round number, fall off that. Now you're flirting with, 5,900. I thought we'd have an inside day, so I still think we'll close a little bit higher. But again, like you said, volatility is key. Keep an eye on that. If that keeps staying bid, we could get a little bit more of a sell-off.
Yeah, well, I mean, they gave up enough at this point that I don't think there's a lot. They gave up enough right now that I don't know.
Oh, really? You think 1.5% move is enough to give up?
Yeah, gave up a lot. Just taking a quick look around. I mean, at least for us, UNH is higher. I guess that's a good thing.
Yeah. Tesla was up by around 8. It's up around 3 or so.
Yeah, bonds are higher, which I like. Maybe they hold them here. I don't know. I don't know if they can keep their wings up. Not that much kind of going on. Mm-hmm. That's the weird thing. I mean, not that much to really, I guess, look at. And you said Marvell has earnings tonight?
Yes, sir.
The premium in Marvell is already coming in. That I can tell you. So, kind of a crappy, boy, what the hell is going on in Marvell? There's no premium in there.
Yeah, it's, Marvell's a tough one. I've had a tough one there.
I'm just looking at the option premium in there right now. It's not very rich.
Not at all.
No. Oh my God, there's nothing even in July. And I'm looking around at some of these other stocks, and it's not an incredible amount of juice. That's for dang sure. All right, let's do it.
Thursday 0 day, Sadnov, got any inkling?
Well, we learned.
Want to abstain because you're traveling?
Well, I mean, Thursday 0 day is the day that we told not to sell them.
That's correct. I just want to make sure you're going to heed to that.
No, I stick to that. I live by that. But this is an interesting piece today because this piece is, we're actually going to look and see, we're just going to take a look and we're going to see how many consecutive days, how many consecutive losing days do you think you have if you sell like a 20 Delta Strangle?
Oof, I don't know.
Like, obviously,
you mean before what? Before it blows up?
No. Like the biggest problem with the 0 days is if you get on a cold streak, it could be kind of ugly. But what we found is that it's very difficult to get on cold streaks in the 0 days because if you take profits quickly, there's a high probability you're going to have a profit if you take it quickly. But we decided to take a look and see how bad were the worst streaks if you never had a chance to take a profit.
So you have to hold it to duration. I don't think it's going to take very many, Sosnoff.
Let's take a look. Well, not duration. You either hold it to 25% max profit or you hold it to the duration.
Got it.
We're analyzing losing streaks. What you're going to be surprised is the losing streaks are not bad. They make a very strong case for putting positions on most days and not worrying about multiple, really a lot of bad streaks if you take profits quickly. Here, let's take a look. It's actually really good. So in this case, we're going to stick with define risk. Just they're like synthetic strangles. They're like wide iron condors.
Yep.
And in theory, 2 losers in a row should happen with the square of the loss probability. For example, having 2 80 pop trades fail in a row would be a 4% chance. Okay? So in theory, it's nice and all, but how does it actually go in practice? So this is really interesting to see. Let's go to the next slide. So we considered narrow zero DT iron condors at 9 a.m. every day, used a variety of short deltas, $10 wings. Okay, we closed the winners at 25% of max profit. All of the trades that were allowed to expire. We analyzed the frequency of consecutive losing days, and then we also looked at how many days it took to make the money back if you lost. That's always a little, a little wishy-washy, but we did it. Yep. Let's go to the next slide. Okay, now they start at 50 delta straddles. We don't do these, but we just figure we'll show them and then get down to the 20 and 30 delta strangles.
You're basically looking at an iron fly, right?
Iron fly.
Yep.
So chances of an isolated loser. Now, what an isolated loser means is we didn't have a chance to close it for 25% of max profit. That's all that means.
Right.
You lose about 11% of the time, and the average loss is about $147. The chance of two consecutive losers, 6%, 3, 4%, 4, 1%, and 5 plus losers. I don't know why it's more than that, but 2.4. And then the money is, according a number of days to make it back. It all kind of makes sense. This is not really a trade that we do much. The 50 delta straddles, I don't think we've ever done those in the 0 days. So let's go on to the trades we do kind of a lot more often. Go to the next slide, Beth. So 40 deltas, we don't really do either. These are a little too narrow for us. So I'm just going to pass on this because I want to get to the good stuff. So let's go to the 30 delta. This is the area that we live in, 20 to 30 deltas.
Yes.
And so the frequency of a loser here is about 12%. Consecutive losers, 3.4 and 6. 4 consecutive losers, never. In 2.5 years of research, never. 5 consecutive losers, never. The average total loss, in this case, it's a little bit more because these are much further out of the money. When you lose, you generally lose pretty big. And the number of days it takes to make it back. So okay. I think these numbers are more in line with what we experience. Now, you have less than a 1% chance to lose the $1,500, so it's not horrible. Let's go to the 20 delta. This is our sweet spot. So this is where we live at the 20 delta. And you can see that 3 consecutive, 4 consecutive, and 5 consecutive losers, never in all the data we have. And what's so interesting about this is that even though the average loss is high, and even though the average recovery time takes a long time to get it back, 2 consecutive losers, less than 1% chance, based on all the research we looked at.
I would have thought it was higher than that. I mean, I know consecutive is, but I would have thought it was way higher than that.
Of course. How could you think anything but that?
Yeah.
I mean, I would have said 10% or whatever it is, significantly higher.
Sure.
But that's why I thought this was the most impactful and interesting slide.
Oh, this is actually great.
Yeah. I mean, isolated losers, just under 10%, 1 out of every 10. But 2 consecutive losers, less than 1%. If you're doing the 20 delta. The average losses are high because this means you hold them to the end of the day. You don't have to hold to the end of the day. We have to for the purpose of this study, but you don't have to.
Sure.
Yeah, like Tony and I, we would get out of this trade probably between like 11 and 12.
Well, that supports much of the research we've done in the past too.
Yeah. We would for sure get out of this trade. So I think this is the slide that fits our positions the best. This is the slide that would make the most sense to us just when we're thinking about, how do we trade? And this is the slide that makes a very strong argument for, for doing some stuff in the 0 days.
Yep.
Except on Thursday.
Well, they didn't exclude Thursday in this study, so
no, they did not.
Yeah, so
if we believe in the long-term profitability of short premium positions, a run of losing trades is perhaps the biggest danger to retail traders' ability to reach long-term results, good long-term results. Combining option strategies and mechanics for high probability of per trade profit helps make the runs of losers unlikely. An 80% pop translated into 2 years without seeing more than 2 losers in a row. Riskier, higher credit spreads, however, required less time to make back what was lost when the losers did strike. It can take a month of high pop trades to make back a loser with iron butterflies that you might get back in just 2 days. So finding the balance between pop and premium that works best for your investment requires careful consideration, but now you're armed to make an informed decision. That's very true. It's just providing information. If you go wide, your losers are going to be bigger, but again, we didn't manage them early on this for this case, and the chances of 2 consecutive losers is very small.
Good study by the research team here on 0 days for sure. Even the S&P is up 11, NASDAQ up 25, Russell down 5, Dow down 7, volatility just at 20 after trading 2020. Sosnoff, dare I say the move might be over to the downside? What do you think? Too bold of a call for you to make. I get it. We'll take a quick 90-second break. We'll come back. We got more Scott Sheridan after this. That's right. We'll be back in 90 seconds. Tasty Live.
Yeah, I do.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's going on, everybody? Headlines once again, but this time things are a little bit different. That's right. We got some headlines overnight that seemed like they were going to hold the market up higher, except things reversed just a bit. We'll talk about all the stuff that's involved in all of that, man. It's a whole lot. Finally, some good news for Boeing. Yeah, they're going to be selling planes in China once again. Yeah. How long would this good news last? It's anybody's guess. I guess we'll see. And then finally, Costco has earnings tonight. It's an interesting environment for Costco to have earnings. Retailers in general have been saying a lot of interesting things. So we'll talk about what to expect possibly from Costco. All of that and a few look at a couple of other earnings and just general discussions around the market and some of the moves that we expected to happen that didn't quite happen. But first, welcome to the most dangerous show on the tastylive Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler, and I just cannot stop laughing at some of these athletes and the way they try to impersonate refs. You know what I'm talking about? What made me think about this is the other night I was watching the Pacers and Knicks game. Really good game, by the way. A lot of back and forth, much to Chris Vecchio's chagrin. The Knicks didn't pull it out. I know it's a rough one for them. His last chance is tonight. Be careful what you say to him over the next 24 hours. He's fragile, you know. Anyway, I was watching that game the other night, and what was it? I can't remember, but so the way that players kind of, I think it's funny how it came about, like players doing referee motions. Like when you watch a football game, right, and you know the players score first down, you know what I mean, and they all do all this stuff like that, or like, you know, like that, like first downs, right? I mean, that all comes literally from a basic referee thing where it just says, you know, they look and they say first down. But obviously players have completely taken it to another level in the different ways they do first downs, and like, you know, everybody has their own thing, right? And so the other night I'm watching the game, and Tyrese Halliburton, the guard for the Indiana Pacers, who's been playing out of his mind, by the way. Great game by him the other night. He's a good example. He's a good example of do what you do well. Don't worry about what anybody says. Case in point, he has a terrible shot. I mean, it's ugly. It really is. But it doesn't matter. He makes it, right? And so there's a lot of times people will try to change people's shot or change what they do. If you do something well, keep doing it. Don't let anybody change it. But the other night, during one exchange when basically it was like a shot clock violation and the shot shouldn't count. So when the shot doesn't count, a referee will go like this. They wave it off, right? They wave it off. This dude was like he's like dancing. I'm like, what are you doing, dude? You're that is not how a ref does that. You know, it's so funny how they do that. I mean, or like when you take a charge in basketball, I mean, the charge symbol is like a ref basically goes like this, you know, and it's the other way. But players, they just take it to the next level. It's hilarious to me. Some of these if you don't believe it, just watch it, right? Just watch some of the things that they do when they're trying to impersonate a ref call. Now we look at it as just like it's part of the way that they play, but it's so funny. It's so funny to me. I can't get over it. I just laugh every time. I mean, you should have seen him the other. Again, ref is waving a shot off, and he's over here like doing this. I'm like, what is he doing? What are you doing? Like, it's just hilarious to me. Let's pull up some slides. Let's talk about what we're seeing today in markets. Markets were, as all of you market junkies know, we're up almost definitely a little over 100 handles yesterday. I didn't even see it right away. I was in the midst of my kid's baseball game, actually. I'm one of the coaches on the team. I'm the first base coach, which I love doing because it's like I'm the first interaction with them after they make a hit, right? It's awesome. You know, you get to encourage them. We won our game last night, by the way. We're the 4th seed. Playoffs start on Saturday. Got our first game on Saturday. We'll see how it goes. I didn't know about it until I got home later that night. Our game was at it was 7:30 Central Time. I think the news came out around 6 Central Time. I didn't see it. I just, completely missed it. And when I got home, I was surprised that markets were still up as much as they were on the news, that there was a federal trade ruling of a court out of Manhattan that said that blocked the blanket tariffs that Trump issued in January. And obviously this is big news because this has been something that's been roiling our markets for quite some time. You knew it wasn't going to last, though. You just knew it wasn't going to last. And sure enough, it didn't. Why'd you know it was going to last? Because, well, most of the moves that we've been seeing, there's been a counter move to it within a day or two. Didn't expect it to happen so fast. Didn't expect it to happen within the same day. But I also didn't expect, I guess, for the 100-point handle. I mean, those 100-plus handles held for like a solid 4 or 5 hours. Which is probably a little longer than I expected. Big move after hours. If you were lucky enough, you were able to trade around that. I did. It was an easy call for me. Again, I'm long a Russell 2000 micro. I'm long a Dow micro /MYM. And then I'm also long an NQ call spread, the 23,000, 23,500 call spread, because again, if markets are going to go back to all-time highs, then it's going to eclipse that by the end of probably. I mean, it's a play by the end of the quarter. You know, the end of June, right? End of the second quarter there. I figured it's a shot. We put that on Trade Futures Power Hour actually late last week, and so I have those longs, and so it kind of behooved me to sell something with the market up 2+%, and those particular positions were in the money too. It seemed like a good time. Doesn't make me a genius. It just made me have to do it out of necessity, honestly, and it worked out. But there's rumors that obviously, well, first of all, immediately the Trump administration went ahead and countersued, and they're obviously trying to change the narrative for themselves. This is one of the biggest things that Trump is staking his administration on, right? Is tariffs and how much money the tariffs are going to make for the U.S. and how this is going to be beneficial. And so obviously this has been one of the bigger themes in the market for the whole year. Of course, the markets are going to move on this. I think this creates opportunities for you to trade in and out quite simply. I mean, anytime you see some big moves, especially if you're already leaning in one direction, I think you have to trade it. I mean, I think every 2%, you got to at least think about, okay, how is this affecting my portfolio? Can I trade it? And that's one of the main reasons it was an easy decision for me to sell an ES contract, because again, I'm long a couple of things. So to be able to trade against that, I think I almost had to do. I had no choice in the matter. I had to do it. I mean, how else am I going to be able to trade if we drop 200 plus handles again? At least I have something to do. And so that's what that short ES contract gave me the ability to do. There's no doubt come next week, just think about what we've had this week already. Just 6 days ago, right? 4 trading days at this point. Less than that, actually. Yeah, 4 trading days because we didn't have Monday on. But last Friday, we got the news on the EU. We saw what happened on the markets there. They dropped big. Then they ended up finishing a little bit higher. Then come in Monday. By Sunday night, come Tuesday, we had already erased that drop and we were back up. Then you had this news that happened last night, overnight, and the big move. And then now you've had the reversal of that. Those are some big moves in markets. And so that's the reason why you can expect VIX to hang out in this area, right? 19, 20 around the long-term average. Got a chart on that for you today, by the way. It's not surprising that we're hanging in there in volatility levels because things are moving around quite a bit. Speaking of moving around, Boeing finally has some good news. They're going to resume airplane deliveries to China. Remember, they had calmed those down, and they basically had to stop deliveries to China during the bulk of the fighting, I should say, and but it was fighting, if you want to call it, between China and the U.S. over, a host of different things. But apparently they're going to not only resume deliveries, plane deliveries to China, but they're going to ramp up the MAX deliveries at some point or another. This is very good news for a company that has really struggled over the last 5-6 years, honestly. Going back to 2019, I think, is when some of those crashes first happened. Stock used to be trading 300 and change, almost 400. And it was knocked down below, look at, even in April this year, it was down below 130, and now it's back above 200. This has been quite the volatile stock. If you scoop some shares below 130, 140, I should say, good for you. Awesome. You're a good trader, and you got the cojones. But me, I haven't touched it, haven't done anything. Vol is low right now. This is obviously a good development for Boeing, but I still think there's been sort of some still worries about that MAX plane that they have. And so we'll see how much higher stock goes from here. But nothing to do right now. Earnings are over, no vol. Just kind of an interesting story, right? When you look at what's been going on with that company and now they're finally resuming deliveries to China. Costco has earnings tonight. I typically don't trade Costco earnings, not something that I'm looking to do, but I do find it fascinating. In a time period where a lot of retailers are talking about how tariffs are affecting them. You heard from Walmart, you heard from Target, how tariffs are going to either already affecting them or going to affect their business, where they're going to have to raise prices. Costco is in a position of strength. About a third of their sales comes from the U.S., and the other stuff that doesn't necessarily doesn't really come from China, Mexico, or Canada, which obviously is in the sort of tariff ring of fire. So they're in a good position, and you would imagine things are going to go well on earnings. Things usually do go well on earnings for this name, but did it. It's been one of the stronger names in the market. And if you got a lot of people, this is just kind of a buy and hold. Even at these levels, it's been one of those. Not really one that I tend to trade in, but I will be listening for their earnings tonight to see what they say about prices. I can't imagine they're going to say anything about raising prices. They don't have to. Again, they do a lot of things by bulk. And they're in a position of strength for the most part. If anything, they could eventually maybe raise more their fee, but I think they just raised their fee within the last year. So I don't know if that's going to go anywhere anytime soon. So Costco is in a really strong position compared to a lot of other retailers, and I think that's what they're going to show us tonight. Leftovers. What are the top 10 selling video games of all time? Let's move to the next slide. This is copies sold in millions. Shout out when you hear your favorite game. Tetris, 520 million. Everybody's played Tetris from 8 to 80. Seriously, it's one of those games. I was playing a lot when I was in my teens, for sure. Game Boy, holla if you hear me. I was playing that on Game Boy a whole lot. Minecraft, 300 million. Microsoft bought Minecraft a few years back. I don't remember exactly when. I think it was a little bit before the pandemic. I'm not sure. It's funny because, it's really one of those game of errors, I would say. Eras, like not errors, eras. Meaning, I feel like a lot of people who are super into Minecraft there's some kids that are into it, but it's also like 20-somethings too. If you know about it, I know because I have a 21-year-old who's into Minecraft big time. For others, for kids who are younger now, obviously they have more transitioned into not Minecraft, but Roblox, right? Like that's kind of more their thing. But it's interesting that Minecraft hasn't. I don't know how. I don't think it's been around. Like Tetris has been around a very long time. GTA 5 has been around a very long time. Wii Sports, all those have been around longer. Look, Minecraft is huge when you think about the fact that it hasn't been around as long as some of these other names. Clearly, that's why Microsoft snapped it up. GTA 5, 210 million. One of my favorite games all time, just the GTA franchise, right? Because it just opened up worlds in ways that no other games had ever really done. The amount of things that you can do on a game. You can obviously do things of ill repute and go to places of ill repute, but you can also just drive these cool cars or be a cop, and take on crimes or, be a firefighter and do that, or be a taxi cab driver and pick up people. Like things like that. It's just amazing. It's wild. GTA 5 obviously was the latest edition. I think they're coming out with the GTA 6. The trailer has been out. Who knows when they actually come out? I think they pushed it back, right? Isn't that what happened? I think Take-Two pushed it back. But everybody's eagerly awaiting that. After that, it drops off quite a bit. Like Wii Sports is next. That was really fun. We had the Wii. That was really fun in the household. 83 million. Mario Kart 8 Deluxe. I remember playing Mario Kart. I don't know if I played 8. I don't remember. 76 million. I totally forgot what PUBG is. I'm sure some of you know, right? What's PUBG? What is PUBG? I forgot. Actually playing his. Did I make that up? No, it was actually in the. I'll have to look it up. Let me look it up and see what it is. I'm sure. I don't remember what it is. I think it's. Let's see. What did I call it? No, I don't know what it is. I just saw it on the chart that I made. I don't know. Some of you know what PUBG is? I don't know. It's a game you're probably into. It's not a game I'm into. I don't know. I didn't make it up. I'm telling you. It was the title that opened the door for Fortnite. Well, there you go. Somebody says. From your lips to God's ears. Red Dead Redemption 2. I actually thought about buying that game before. I never bought it, but I heard it was great. My brother loves the game. He says it's awesome. Elder Scrolls 5, Skyrim, 60 million. Never played it. Heard it's good, though. Witcher 3, Wild Hunt, never played it. Super Mario Brothers, everybody's played it, right? I was pretty good at that game. A lot of people say that, but I was pretty good. I think, I know, I can't do it anymore, but I did beat it in the past with just like the 3 men that I did do that one time. It was really hard. It took several starts, but I did it one time. But I also knew how to get the men, like the 100 men, like I knew how to get the unlimited men. And if you don't know about the unlimited men, you can actually go too far and you can die. So if you ever learn that trick, Be careful. Player unknown battlegrounds. Yeah, never heard of it. Wow, never heard of it. Glad you guys have, though. Let's move to the next slide. Bitcoin still has a strong correlation to SPX. It has varied at times. We've seen days where markets are up big and Bitcoin is randomly down, and then vice versa. But for the most part, the correlation has been hanging in there. We've seen that with a lot of these coins, really. Bitcoin, obviously, as long as that's leading the way, the rest of them follow. But still a correlation, still a strong correlation. Been a while since it's been negative. Let's move to the next slide. So when you look back at years of serious volatility, so far, this is proving to be a year of serious volatility. Now, as of yesterday, the VIX average on the year is 21.6, as you can see in the pink bar there. What I've done here is highlight the years where the VIX average on the year is above the VIX historical average. The VIX historical average since 1990 is 19.5, okay? As you can see, we're right around that basically right now. When you look at June VIX is 1980, July VIX is 20.7, and August VIX is 21.1, and VIX index is basically 19. They're all hanging around that historical average because, again, we keep getting these days where we're up 1%, 2%, then we're down 1%. I mean, we're basically oscillating quite a bit around at least 1% daily average. So the years where things really are well over the average are in the red here. As you can see, in 1990, 23.1. Obviously, 97, 98, 99 is the dot-com era, 22. I mean, just think about it. On average, VIX was like 22.4, 25, 24, 23. These are years similar to like this year, right, where things are moving quite a bit. I mean, I didn't trade in 2000s. I was in graduate school, wasn't paying attention to the market at all, really, until 2004. That's when I first started paying attention. But I hear 97, 98, 99, that dot-com bubble, names like Marvell, names like NVIDIA, I mean, they'd be $1,000 and they'd move $200, $150 to $200 a day in either direction. I would say a VIX of 22 to 25 supports that idea, right? VIX was moving around a lot. Markets were moving around a lot because of this reason, particularly the NASDAQ. If we had a NASDAQ VIX recorded from that time, I'm pretty sure you would see that was extremely high because the tech names are ruling the roost and they were moving around a whole lot. You can see this whole era, 97 to 2003, all VIX averages above 20. When I came into the game, in the trading game, it was 2006. You can see where VIX was, 12.8. Yeah, VIX had dropped so low. VIX had dropped so low. And it had been, basically 04, 05, 2 solid years of really low VIX. So by 06, people were really comfortable with VIX being low. In fact, so much so that I think VIX was, let's say, again, the average VIX is 12.8. I think VIX was like a 10 or 11 when I started trading. But when I came in, like within like July of 2006, VIX had spiked up to like 13. Our firm was so short that they considered it a risk management risk to be trading right now, and they kind of shut down trading for the time being because we were just so short vol that they thought it was too risky for the firm risk limits, and they just decided like, okay, let's slow down right now, let's be careful. It was because that was the only way to make money, was literally just to be short some vol, because if you were long vol, there was no chance you were making money when VIX is around 11. I mean, it's not happening, right? And options, the only way you can make money is sell it, really. Nothing's really moving. It wasn't like 2017 where, yeah, it was an average VIX of 11.1, but basically if all you were just long calls, you probably made money because the market just literally went up all the time. It was crazy. 2008 to 2011 kind of speak for itself. Obviously, you know what happened there. And then 2020 to 2022 speaks for itself. And then we were getting some low VIXs, 23, 24. But I think this is going to be one of those years where VIX is going to remain high. And so I think you're going to have to be nimble on a lot of these positions that you're trading right now. I think you just have to be because we got an environment where things are going to be moving. It is. Let's move to the next slide. So what do we got coming up? Core PCE and price indexes tomorrow. I mean, I don't expect the market to move much on that. We got jolts on Monday. We got the job soup, like I like to call it, starting next week. It's beginning of beginning of June, excuse me. So we're going to get the May jobs report stuff. Jolts, of course, is on Monday. ADP is somewhere in there, Tuesday, Wednesday. Followed by, of course, on Friday with the big non-farm payroll. Then the week after that, so it's always jobs, right? One week, then it's inflation the next week. Then after that, kind of falls off. We do have a holiday coming up, so just keep that in mind. Juneteenth is going to be on the 19th. And then the day after, you got an OPEX. It's going to be a weird one because we got a holiday off like towards the end of the week, and then you got Friday. And it's June OPEX. It's going to be a weird one. So, and then, somewhere along the line, I'm not even sure what's on the 20s, but it looks like a fairly low vol complex, really not much happening, kind of flat. Then you got end of the quarter. And then it's July. But let's not move too fast. Next slide, please. So, earnings tonight, you got Marvell, you got Costco, you got Dell, you got Gap, you got Ulta, and you got AEO. So again, a couple of more retail names. That lets you know we're towards the real end of earnings here. Core PCE on Friday, Jolts on Monday. Jolts on Tuesday. And then you got the non-farm payroll report. Did I get all that right? I think I did. Jolts is on Tuesday, right? Yeah, it is. Number of S&P 500 stocks above the 50-day moving average, 322. We really had a slight chance earlier today for that thing to be way higher. But, of course, we faded almost 100 handles off the high now. Let's move to the platform. Rancher. I have Red Dead Redemption, never beat it. What's for those of you who like video games, what's the one game that you never beat that you're still kind of upset about? For me, I'm dating myself here. It's Ninja Gaiden. It's an old game on Nintendo. I never beat it. I swear that thing was cheating. It was such a cheating game. I swear to God, man. Can't tell it. How is FIFA not on the list? Well, hey, the list doesn't lie, man. I mean, it's not one of the top-selling games of all time. How is not FIFA not on the list? It's simple. Europeans don't play as many video games as Americans do. If they did, FIFA would be on the list. I mean, I'm just being real. My son plays FIFA. He loves it. What we got going on here? So, markets here. Again, I've told you I'm long an MYM contract. I'm long an M2K contract. As you can see right here, MYM, I'm long at 42,390, basically right in this area, as you can see. M2K, I'm long at 2114, basically right in this area, as you can see. Both of those were eclipsed on the move last night, which is why I decided I needed to sell this ES contract. Sold it at 6,001. And again, I'm not a genius. It's just I needed to offset some of my long delta because, again, I also have this NQ contract that I'm long. Not contract, but sorry. End of the quarter call spread, way upside. I mean, really far out of the money here. 10 delta I'm long, 5 delta I'm short. I mean, if this thing works, it's going to be awesome, but I don't expect it to. I really don't. What I'm really hoping for more than anything is just to be able to trade in and out of my positions. And if it means to the upside, then cool. I got stuff to do. If it means to the downside, then cool. I mean, if it really went up to the upside and this is trading over 23.5 and I'm making the money that I'm making, I'm basically closing out everything at that point. And I'm starting all over because as sure as the day is long, the markets are going to drop again probably. And, another headline will come and we'll be back where we were. I mean, that's the kind of market we're being in, especially when you're looking at an average VIX on the year of 21.6. Things are moving around. And that's just kind of how I'm looking at markets right now. Costco has earnings tonight, like we said. Expected move in this thing is $30. That's about 3% move, right? That seems about right. I bet this stock kind of moves about 3% a week. The up direction, if I had to guess, I don't know. I think it's a great stock. How can you trade this on earnings? I mean, I don't really want to, I'll be honest with you. I don't feel the need. 32 IVR, that's not particularly high. So it doesn't necessarily make me feel like I want to sell. Some of you probably asking, well, why not do the classic trade, Jamal? Why not go with the Let's see. Near-term highs. What was this breakdown? Breakdown of 1045, so let's call it 1050. You could say, what if it gets back up to this level and it gets to the 1050 level? Why not do the calendar call spread? Well, with $1,000 name, calendar call spread for $3 is not something I really want to pay for. And then being long this upside and a name that doesn't really move big. You know, the calendar call spread really kind of works when you pick a, you know, it's expected to move 5%, you go 10% up, and it really eclipses that level because then you're paying for a really cheap calendar call spread anyway. So I just, I don't really feel the need to play this thing on earnings. I don't really see the advantage here. I just think it's the most interesting thing to me that can come out of Costco earnings is hearing what they say about their retail environment, right? And I mean there specifically because Walmart and Target, they've already stated they're going to probably be in trouble and have to raise prices, and they're dealing with theft, you know, things like that. Target specifically. All not so great things. I think Costco is going to be a little more favorable. We'll see. Dell, this stock was moving around a lot for a while there, right? It was like a AI proxy for a little bit, and then things just simply calmed down. $8.62 move. I really haven't, if I remember correctly, from this past time around with some of these names, some of these tech names, I don't remember too many huge moves. I mean, even NVIDIA, right? Not a huge move on earnings. So that's usually, again, I like to play earnings. I like to play earnings for moves in either direction, and I really haven't seen it as much. And I don't think they're counting on it as much. So I don't know. I'm just not interested in staying away. There's a lot more interesting things to do, honestly, whether it's with bonds, whether it's with gold, whether it's with oil. You can actually get a lot better trades, ball-wise even, or directionally in those. So again, another one I'm not interested in playing. Gap has earnings. Still throws me off that they changed their name, like they changed the ticker to Gap as opposed to GPS. I was so used to doing GPS. You ever had that? There's so many names, and you still get sort of memories of what the ticker used to be. I saw somebody had SHLD the other day. I didn't even know this was a stock again, but when I see SHLD, I think of Sears Holdings. When I first came in the game, that's what this was, SHLD. It's not that anymore. Ulta. Who was it today? Oh, it was ELF. ELF bought a brand that's owned by, is it Justin Bieber? What's her name? Haley Bieber? I don't remember exactly her name. I should. But it's interesting because that has become a new thing. These beauty companies buying products or brands that are owned by influencers. Remember Ulta a couple of years ago bought one of the Kardashian daughters. I think it was if it was Kylie Jenner's brand, they bought her brand. And, they're making $1 billion off of these things. So if you really want to know, there's two things. I've told you the way to make money, okay? It's not through options. I mean, you can make money through options, but if you really want to make money, you got to do two things. You need to start a sugar-free soda brand, all right? And then you need to start a beauty line. I mean, that's really it. And just wait for it to get bought. That's eventually the way to seriously make money. Marvell also has earned. Well, also, did I even look at let's look at the expected move here. This used to be a pretty big mover. I feel like it still can be. $30. That's decent. 7+%. If there was one I would play for a move, it would be this. I just don't even know what direction to play it in. I'd have to look at some comparables. Let's see. What are some other names in the space? Ulta. It's peers. Estee Lauder. Estee Lauder had earnings, right? Did they have earnings already? Maybe not. Ooh, not good. Stock's not looking good. What happened there? Let me guess. That's their earnings move. Maybe you expect a similar thing for them. COTY. Boy, most of these stocks are on their butt. They don't really look good at all. Sally's Beauty Holdings. Yeah. See, for that reason, I like to play things to the upside. I wouldn't play. And maybe I'm wrong. I don't know, but maybe I wouldn't play Ulta to the upside, considering what I'm seeing some of its peers doing. So not going to touch it. ZS for earnings, huh? ZS. Mac Levin asked me about ZS. Zscaler. Yeah, it does. Yeah, I mean, I didn't have it on my list. This is not one that I look at too often, but I'll look at it for you, Smack Levin. $15.45, huh? What are you thinking? Let me know. What do you think? You thinking you want to play it for a move? Stock has been mooning here recently. I mean, it's a pretty big move from basically 200 to 250. Looks like it's fading a little bit. I don't know. This one, I mean, are you really going to jump that much higher? I'm not sure. See, this is, I usually like it when it's like on a springboard and ready to go. This one is, I mean, if it jumps out for another $30, it's going to fade at that point, right? I'm not sure. Oh, you're okay. I see you, Idjit. Christmas tree? Yeah, I know the Christmas tree trade. Used to do quite a few of those back in the day. Haven't done them in a long time, but you are buying the 900, selling the 860, and selling the 820s, huh? What expiration you doing that in? You doing that in the near term? Buying the 900. What expiration you doing that in? Doing that in June? I don't assume you are. Buying the 900, selling 860s, selling 820s, huh? Boy, that's an expensive trade. That's an expensive one. Yeah, I don't know. Oh, you think Zscaler stays flat, huh? Oh, you want to sell this one for earnings? I mean, you know, if you have a handle on the name, sometimes you have a handle on the name and you could care less about vol. I have no handle on the name, so I really don't have anything to add. But Godspeed on your trade there. So I do have a couple of strangles to speak of still holding. They're working out. Hims is one of them. God, I'm just realizing this is going to be 21 days soon. Still a 34 IVR. Do I think this is going to work? This thing has been, kind of jacked. It's always nerve-wracking to keep on a strangle that may or may not have been kind of working. So right now, I'm slightly up on it. 50-70, huh? I don't know how much I like it anymore. The IVR is still elevated, but I don't know. The pricing is not as great as I thought it once was. 40.65. I could change it to this. This is $12 to the downside, 13 to the up. I don't know. Do I keep it on? I gotta think on this one a little bit. For now, I'm just gonna close. I mean, it is basically right at that level of 85 cents and 325. Why is that not working? That's basically mid-market. Okay, replace. Fine. 410. That'll get it done. There we go. I'm gonna close that for now. It's not as juicy as I would like. Let's see what else. Palantir. I just put this on a couple of days ago. This is coming rather nicely. I like the trade. And it's in July, which is also nice. Yeah, I mean, that was basically my last position that I got in the near term. But yeah, the Palantir strangle is working. I'm going to keep this going for a little bit. What else? IonQ. This is one that I've been looking at for the last few hours, trying to decide if I want to close it or not. Still 44 IVR. Quantum stocks made a big move last week, and now they're chilling. This is a pretty good strangle, if I do say so myself. I'm going to hold on to this for a little bit. I like it. One I did move around. One that has really been, sometimes a big move, sometimes a name that you have a strangle on is really causing you a little bit of consternation. And you just got to hold steadfast. And this was one of them, this core weave. I was short the June 90 120 strangle. This name has ties to NVIDIA. And so if you saw early in the day, this thing was trading up to 130. I mean, look at that. Traded up to 130. It's been really kind of moving all week. It closed last week at 102s, opened the week at 109, up on its way to 125, and it's been up here, but it kind of pulled back today as the day progressed and markets pulled back and NVIDIA pulled back some. Thank God. So I actually closed out my June because, again, 21 days to go tomorrow, and I decided to keep the trade on, but I I widened out a little bit, still kept the 90 on, still kept the 140. I am a little bit worried about upside in this name, so I don't mind the 90 being close. I prefer a little more cushion on the upside. But I'm going to hold this one a little bit. I think these options are a little bit jacked, so I'm going to keep that going. But other than that, what happened to BTC? Yeah, BTC did fall a little bit. And again, it's funny. Like I said, there has been this positive correlation in Bitcoin, but this is one of those days where it's a little bit not correlated for whatever different reason. Also working is the bond trade. IVR is still above the 30s. Bonds have really been moving around quite a bit, given the news. 1 minute early in the week, we're worried about how much money and deficit that we're going to be spending with the new bill. And then all of a sudden, vamoose, all of that goes away to some degree. The best thing you can do in bonds, I think, is kind of be directionally neutral, even though we're kind of been moving to the upside. Still have this 111, 108 put spread that I put on just 45 minutes prior to the 20-year bond auction last week, but it's worked out just fine. And then I also got this iron condor, 107, 104, 117, 120, and that's holding pretty steadfast because, boy, if we get down to 107 on the 30-year, that's going to be not so good. And if I don't know the last time we've been up to 117. I mean, it's been since the end of April, so it's been a solid month since we've been upwards of 117, and that was a totally different time period. So that's what I'm holding on to. I'm not really changing anything as far as those positionings there. And, the biggest thing right now I think you can do is just sort of hold on to cash, man, because there's just too many, put the hymns in there. There's just too many headlines flying around at any given time. I think you want to be nimble. I think you want to allow yourself the ability to have capital to trade any weird rumor that comes up. It seems to be the best course of action right now. How else can you trade? You don't want to try and guess anything in this environment. I forgot about American Eagle Outfitters. God, this stock. Retailers have really taken it on the chin over the last several months. I don't know how XRT is above its 200-day moving average when most of the names in it are not. It's still kind of crazy to me, I will say. I tell you, this Ulta, though, this is one that moves. And look at the IVR. I just don't know what I would really want to do in here. And again, maybe beauty supply, I guess, is just a whole different area of the retail business right now. Like, it doesn't seem to be struggling in the same way as other areas of retail. People still need the beauty stuff, I guess. $450. $140 is not bad. Assuming it's gonna, let's see, what was the more recent? Yeah, I mean, it could get back up here, right? It could make a big move. Let's try and get one of those on. We'll see if it works. I don't imagine I will. I'd have to pay up. I don't know if I care about paying up, but I think at this point in the trading day, I'm gonna have to pay up for it, but I'm not gonna do that. What did I say? So next week we got the jobs report. Let's see what expected moves we got going on here for next week Friday. Next week Friday, between now and then, 115.75. For those who are quick with math, you already know the answer. I can be quick at math. I just don't happen to be at this point in time. Let's call it 116 or 59.05. Little under 2% move expected on the week. Let's just call it 2%. I haven't seen a week yet in a while where the jobs report didn't move markets. I expect it to do something. I don't know how much JOLTS or ADP is going to affect it, but again, by Friday we should have something. And then on top of all that, even without the jobs report, you can expect more from the tariff situation. It's not just going to go away just from the last 24 hours of random news. It's still going to be something that we have to sort of keep an eye on, right? I think, good point, Frankie. Intap has earnings after the close. This name used to be a wild name. Really has calmed down. Wow, what was this move? Was that? Oh, that was earnings too. That was earnings last time. Yeah, see, I told you, it still moves. Still moves. yeah, for the rest of the for the next 24 hours, the rest of the week, as far as markets go, I'm not changing anything. I'm keeping on my short ES. I'm staying long the Dow. I'm staying long the Russell, and until things change, until we get one big move one way or the other, I'm doing nothing. And if for whatever reason we were to reach all-time highs once again, I'm probably closing up shop, and I'm just waiting for the next move in either direction to give me an idea of where I want to do. Other than that, I just don't see how else you can assume that markets are staying in one direction when things have moved around so much. That's been the year so far. And again, you look at the VIX on average, 21.6 average VIX so far to this day. It's almost halfway through the year. 21.6 VIX average. That's something. I mean, that's above the long-term average, right? So I just expect to see more of that as the year goes on. Well, folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. Don't go anywhere. After a few commercials we got here and there, we got Last Call. And it's not with Tom and Tony. It's actually with me and Mikey Butler. So see you in a little bit.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Have you ever been banned from any place?
Probably.
Just a delivery room? That was it? No other place?
Oh, the delivery room, yeah. Twice.
That's the only one. Twice. Yeah. Two-time offender.
My wife gets banned all the time from places. She's confrontational, argumentative, and violent. When she got banned from that one Italian restaurant that was around the corner from her house, that's the only time it really pissed me off. They had the best chicken Vesuvio, and I had to go in there and just say, listen, you banned her, not me. I'm still good, right? They're like, yeah, you're okay.
Are you really going to Buc-ee's?
Yeah.
Will you film it? You film yourself going in, you're like, what up, everybody? It's your girl Sassy. I'm here at Buc-ee's. And then you get the food. And then you get the food, and then you get to eat in your car.
You eat in the car, you get something on you. That's your stick.
Yes.
You got to do it.
I never spill.
I love this.
Yes.
I know, right?
Do you know what that's like to go out to a tasty show and you prep your whole speech? You come out there and you see all these people that have driven for miles and miles, and the first thing they say is, "Where's Tony?" And you have to go,
exactly.
He's not here. And the look of just, it goes from excitement to sheer disappointment in an instant.
I've never heard one person say, "Where's Tony?" I've been on the road for 25 years.
You literally, the whole concept you had last year was "Where's Bat?" That was the whole concept of your show.
They did a show about where the bat is without bringing the bat.
I hate to say this, but a buddy of mine owns a mountain there.
Yes.
Owns a mountain?
Something like that.
Okay, cool.
They got hiking trails on it. I'll tell you my activities.
Okay.
I'm gonna fish.
You are not gonna touch a worm.
Who's gonna hook?
You're not gonna touch a worm, sweetie.
I do. I fish.
Okay.
I'm gonna fish.
Okay.
I'm gonna bike ride.
Okay.
Bike ride.
I'm gonna hike. I'm doing something with beehives and honey.
Okay.
Then I have my choice of whether or not I want to practice my archery.
Is this like adult summer camp? This sounds amazing for me, who actually likes the outdoors. For you, you are an indoor cat.
Get the full scoop by checking out the archives at tastylive.com.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Surprise, everyone! It is not Tom and Tony. It is Jamal and Mike. Jamal, it's the last call. We got 30 minutes and some change until Costco earnings. So give us maybe some fireworks to end the week. What are you thinking here?
First of all, glad to be here with you. Yeah. I think you undersold it. It's the duo you didn't know you needed, folks. It really is. What a day, man. I mean, first of all, I got to tell you, last night, my kid had a baseball game. It's the last regular season baseball game. It was at the game's at 7:30. We're usually at the field at 6:45. Honestly, I don't really like. More recently, I haven't looked at the aftermarket as much. Like market's at 3. You know, it's been such weird trading days, right? And pre-market, yes, more so. Aftermarket, not as much. So I didn't see any of it. And I actually didn't look at my phone. I didn't see anything, hear anything until 9 last night. 9:30 almost. I got home. And I saw the headlines, like CNN headlines. And I'm like, oh, wait, market should be up on this. I was like, but it's probably not. And I pull up 100. What? Like, I was like, whoa, well, that being the case, why aren't we up higher, you know? And clearly there was some risk built in there, expecting us to retrace the move, never expecting it to fully retrace it within less than 24 hours. So it's been a wild ride here. And it jibes exactly with something I was just talking about, engineering trade. Average VIX on the year is 21.6 to this point. The last time we had an average VIX of over 20 something was, I think, 2022. I think this is going to be this type of year, dude. Yeah. I mean, it would seem this is going to be this type of year of moves that over greater than 1%. I mean, we're just going to be moving around.
Yeah. I feel like there's just so much uncertainty still. And I don't think that's going to change. Like there's no scenario in my mind where by the end of the year, we're at, a solid inflation print. We've got interest rate cuts on the board. We've got tariffs, like known tariffs across. Like it's going to be chaos the rest of the year and beyond. I think maybe for the next 4 years. It's chaos.
I know.
But yeah, I'll welcome it as a trader. I'd rather see 100-point moves than 10-point moves that just grind in one direction for sure. But we are at this kind of point in time. This whole week, I feel like it's been nothing. Like we tried to make a move yesterday, and this morning I was like, oh, we're still up 50, and we've just trickled back to flat throughout the day.
Yeah, I mean, essentially, and you're right. I mean, even coming into this week, there was news, right, with the EU tariffs, which again, I thought was, I don't know, maybe I need to stop saying this. I thought Friday was an overreaction, but maybe it's not an overreaction. Maybe none of it is. I mean, maybe they're all just reactions. And so that's what happened on Friday to the downside. We retrace it quickly on Sunday night through Monday, obviously being a holiday. And yeah, for a holiday shortened week, there have been moves, I mean, if you will. I mean, it just is, it comes back down to almost a nothing burger when you look at it on the week overall.
Yeah.
You mentioned Costco. I'm not trading anything in there, but you are. What you got going on there?
I'm trying to finance my trip this weekend to Costco. So I'm trying to be a little bullish. I think they're, when you think of Costco, you think of savings, especially like families. If you go to Costco, you're definitely saving relative to a standard grocery store. Mm-hmm. If these inflation worries and tariff worries continue and people are pinching pennies, I think Costco is going to be just fine.
Agree.
What's interesting about Costco is it's $1,000 stock. Expected move for earnings today is 30 points.
Yeah.
That's nuts.
3%.
Right? Nothing.
But it's like that. It's like what IBM used to be, you know, like long time ago. Like it's just steady. It prints money. I mean, I was looking today. I think a third of their sales are in the U.S. And the stuff that's not, it's not really like a lot. It's not like a lot of it is China or Mexico or Canada. So I don't expect them to have the issues that like Walmart had, right? I mean, very different business. I mean, but they're still a retailer, whatever. I don't expect them to have the same type of report when they talk about, oh, we're going to have to raise prices soon because of tariffs. Dare I say they're almost tariff immune, it feels like. And so we just went there recently. And I feel like most of our trip, once upon a time, as you know, I got 3 kids, although they're not as many kids anymore. I mean, 2 of them are in the both of them are about to be in the 20s soon. And then I got 12-year-olds. So we go there, but we don't go there the way we used to, if that makes any sense. So most of our trip now ends up being snacks. Like for real, like whether it's Slim Jims, it's not Slim Jims. I actually wish I knew the name of the brand of beef jerky we get. It's so good. It's by this one lady. I don't remember the name of them, but it's like her specific brand. It's really good. The Yogis, actually, a lot of the stuff we might get, we might piggyback off of stuff that we have here already. Yeah. Yogis are good. Yeah, I mean, it's become mostly snacks for me. What are you doing going to Costco?
I load the cart with chicken breasts and chicken thighs.
Fair. Yeah.
I mean, you can buy it in bulk, throw it in the freezer, and it's like literally 50% off. Like you can get 3 packs of organic chicken thighs for $30, which normally it's like 15 for 1. So
is that like largely dinner for you, chicken thighs?
Yeah.
Most days?
Yeah. That's like the
Does it get boring?
Not really. I mean, I just change up the seasoning. Like sometimes I'll do standard barbecue. Sometimes you do a little Asian. Sometimes you do, Italian. You can even get away with.
I'm ruined from the pandemic, dude. Like I am, man. Like we order a decent amount, except for when we go shopping, then we chill out for like probably 2 weeks maybe, and then we order again. I'm just so spoiled from that. And so my palate is always wanting something different, even though I don't need it.
Yeah.
Like I talked myself down from eating something out the other day. I mean, it's kind of like that. I don't know.
That's fair.
Enough about that. Tell me about this Costco trade you're looking at.
So Costco, $1,000 stock. So I got to be defined risk in there. I went to July and I bought the 1060 call, which is just inside the expected move for July, and sold the 1060 for June. So didn't go to the 1 day because the 1 day with such low implied volatility, you're just not getting a lot of premium to reduce the cost basis against the long option in July. Mm-hmm. But June, you're collecting a decent amount. So whole trade's under $1,000 in risk. We're still going to see a bigger implied volatility crush in June relative to July. So I think if we get a rally here to the expected move, this will be a $300-$400 winner overnight. If that doesn't happen, I can manipulate the short option, maybe convert it to a diagonal spread, maybe roll it out a couple weeks, but hoping for a little move to the upside, even if it's an inside move to the upside, which would be crazy considering the move is already so low. Mm-hmm. It'll still be okay just because of that volatility crush in June. So
I mean, you're basically using the calendar and playing it kind of for a move.
Yeah.
I mean, I like that, especially considering, like I said, this thing reminds me of those type of stocks like IBM back in the day, or this is the current version of that in that they're steady with growth, they're continuing to rise.
Yeah.
I like that idea. I really do. I mean, again,
yeah, like I said, I'm trying to finance this trip this weekend, and this particular setup has between, I'll say, $300 and $500 of profit potential overnight, and that's usually the bill.
That is the solid. That is a solid Costco trip right there for sure.
If you got any trade ideas for tomorrow, I've got a link pinned in the YouTube chat, tastylive.com/fastmarket. Pitch your trade ideas to Tom and Tony. But yeah, I mean, there's lots to, even though the market hasn't moved much this week, there's still a lot on the table. There's still a lot of companies that, have things that could create movement. Microsoft is trading near highs. I mean, their rally's been insane. All the way from 350 to 450 in a couple of weeks. Like, just craziness.
Yeah, it's been one of those stronger names in the Mag 7. Obviously, Tesla's made moves too early this week. It started out on a hot streak, and of course, there's been more news about Elon giving up Doge and going back to the companies. We'll see if that really leads to more gains. Speaking of those names, Apple is one of the few that still actually has some kind of bid to the options, mostly because they're kind of caught in the tariff situation, right? Like,
yeah.
I mean, this was initially good news for them last night, and then now it's not so much, and it's part of the reason why they're one of the few that's red. But for me, I guess I've mostly made my bed in bonds, honestly, to some degree. I got short. I was so annoyed, man, last week, that 20-year bond auction that kind of took the market down. I had been looking at bond vol, and I was like, it's probably a good time to get short a put spread. I literally did like 45 minutes prior to. And before I knew it, I'm just like underwater on this thing. It was annoying. I was like, well, short the 111, 108. But it's bounced this week, and that's kind of worked out for me. So that's been one of the better trades of the week. Other than that, a couple of strangles. I got a strangle in Ion Q. Last week, those names made big moves. Those quantum names, they've slowed down this week. That fall has come in. I'm debating. I guess I'll hold on to it a little bit. Still 45 IVR. Palantir, I literally just sold this a couple of days ago. I'm already up 18% on almost 20%. Sold a strangle in there. That's been working nice. So that's kind of how I've been sort of treading water. And I just think one of the bigger things, man, keeping cash on the sideline in this market.
Yeah.
It's become imperative at this point. Again, with a 21.6 VIX average on the year already, and we don't think it's going to change.
Yeah, there's always gonna be opportunities for sure. I got into an INQ today, short put today. Someone from the YouTube chat mentioned it. I've had a Palantir Iron Condor on since yesterday, but like you said, like sometimes you place these trades and then some kind of tariff news comes out and it just tanks. Like Enphase, perfect example.
Mm-hmm.
The day before it dropped 20%, I sold a 45 strike put and came back to the platform. And was like, how is this possible? How is it down this much? Pull up the news and it's all just the worst thing you could breed, pretty much. But you trade small enough, you can wade through it. I converted it to a strangle, rolled the put out to July, added a call against it, and at my break evens, basically where the stock price is. So as long as it doesn't go down anymore, we'll be okay there. But yeah, it feels, and the overtime crew coming up at 3:00 here with Chris, Ilya, and Thomas. I was talking to them yesterday, and it's just so funny. Like when you look at a chart of the E-minis and you think of everything that's happened this year, I mean, we're basically unchanged on the entire year, like right now. But again, so much has happened, and it feels right now like you would think that we had this huge move in volatility. We're back into contango, but we're still at 20. Could we drift higher? Sure, but it doesn't feel like that's what's going to happen. This is like the first time where I feel like we're going to just chop here for the foreseeable future until something changes.
Yeah, I mean, it does kind of feel like that. I mean, and again, you're right. That's when you look at all the noise and all things that have happened and the big down moves, even the nice up moves that we're having in February prior to all of this. It is hard to just stay directional. I mean, I don't know how anybody can do it. It's impossible. Like I said, right now, I feel good about what I have on, and at the same time, I don't. I mean, like seriously, like I'm long a MYM contract. I'm long a M2K contract, and I got short ES yesterday because of those and because of this NQ call spread I got. So I got long deltas, right? I needed to sell something. I'm glad that opportunity came up this past last night or whatever. But even with that, the only reason why it makes me feel good is because I have something to do if we get another big move in either direction. Now I can have, things to do. And I operate better that way when I have options, right? Like not necessarily options per se, but the ability to do different things at different areas. That's when I trade my best. And right now I just feel like I'm going to get that given how much markets have moved. And it's crazy when you look at bonds too. Like last week, the big story was 10 years going above 4.5%, 30 years going above 5%. And we've already changed that within a week. I mean, the moves that we're getting in some of these asset classes is crazy. Like it's crazy. So I just think you have to continue to be nimble. I don't think there's any other way about it.
Yeah. And I mean, anytime we have realized volatility like this, it's great for both sides. Like honestly, if you were short the E-minis, you had your opportunity to take some big profits, and you also had opportunities to get back in, like multi-year lows and a lot of the Mag 7 stocks. Like I think that is what helped contribute to the upside recovery. But like you still have names, like you said, Apple, a lot of uncertainty there. A little bit of heightened implied volatility there, but I mean, 33% for Apple is decent. But yeah, and you have other products like Nvidia. Their numbers weren't crazy yesterday, but you still saw an inside up move. It's sold off from the high, but I think that's what a lot of people I feel like were playing for. Just a inside move, maybe a little bit up, maybe a little bit down, and if you sold any premium in there for earnings, like you're caking right now because everything is down net.
Basically, yeah. I mean, I thought it was gonna. I was trying to play it for a little bit more of a move, but it really didn't. And you know, when I think back, a lot of the names like around earnings, maybe Meta, but I feel like a lot of them didn't have the huge move on earnings that we're used to seeing. So I don't know if that's kind of the new normal. I mean, maybe it's because things are settling in when you talk about the AI story. I think that's probably part of it. I don't know. We'll see. Our guys, they're gonna be in Atlanta tomorrow.
Yeah.
How do you think that's gonna go? First of all, what is the temperature in Atlanta right now? I would love if they're gonna.
That's a great question.
I mean, it's always hot, as we know. Is it really? Oh, they're gonna get lucky. It's gonna be like 70s. It's gonna be like a high of 74. It's gonna be rainy. You don't really get rain too often in Atlanta. You usually just get heat. So they're lucky. They're really lucky.
Yeah.
Looking forward to seeing them bake.
No, I think it's going to go well. I was talking to David this morning. He hit up Manchu Walk in O'Hare Airport at 9 a.m. I was like, this is God's work right now. But yeah, tomorrow, May 30th, Buckhead Theater. Doors at 8, shows at 9. At work by 11 if you want to go back to work. Or you can just take the rest of the day off and gallivant around. But
yeah, who are we kidding? Who's going back to work after that? Nobody's going back to work after
but yeah, it's going to be good. There's plenty more coming your way throughout the rest of the year. They've got a lot between Tom and Tony. I've got 4 with Nick, Katie, and Ryan.
Yeah, you do.
First one's coming up June 12th in DC.
It's my birthday, by the way.
Really?
Yeah.
Happy future birthday.
Thanks, buddy.
That's yeah, it's going to be great. I mean, DC's a great spot to be. There's a 250-year military parade in DC. That's going to be insane.
Wait, what is it?
It's like the 250 year military parade, basically the creation of it.
Oh, yeah.
It's gonna be in DC.
Wow.
Gonna be nuts.
Like on the Capitol Mall or something like that. Oh, it's gonna be awesome. You guys gotta you and Nikki specifically have to recreate the. You've seen Wedding Crashers.
Mm-hmm.
Seen it multiple times, probably like me. Remember early in the movie when the both of them they had just finished doing all their crashing and they're hanging out, the two of them with a champagne bottle.
Mm-hmm.
You guys got to recreate that scene. you have to. It's almost a must.
We just might.
We're not that young.
No, that's basically how Katie feels. Katie's the one that's along for the ride, and we're creating the mayhem, and she's trying to manage it all.
Oh yeah. But yeah, and Ryan's kind of like the swing piece. Like sometimes he's gonna swing, other times he'll be like, "No, Katie's right, guys. We can't do this." I totally see it.
No, Ryan's pretty volatile too.
Yeah, I know.
he's a crypto guy. You have to be volatile. You're a crypto guy
by nature.
Yeah,
you have to be for sure.
E-mini's really not doing much. Up 19 right now. Nasdaq up 20. Kind of just chopping around.
Did we ever go actual negative on the day?
I thought we were gonna keep sliding, honestly. Because we were up so much and we just drifted lower, and just looking at the intraday range, it's been pretty crazy. Over 100 points, and we are unched.
Yeah, how about that?
It's like, what do you make of this? I don't even know. It just further confirms what is happening right now. I think we'll chop between this 200-point range for a little bit.
Again, big ranges, right? I mean, 124 today. Yesterday was small in comparison, half of that, 62. The day before, 128. The day before that, 115. The day before that, 110. I mean, these are historically pretty big ranges that we're seeing in equity markets here. And again, like I said, the VIX average of 21.6. I mean, we haven't seen. Last year was, I had it up earlier, but last year was, I think, like 14 or so, the year before 15 in 2023. And then it was upwards of 20 something in 2022. Obviously a year where we were mostly moving to the downside because we were implementing rates. So, I mean, this is what you would expect. And again, I mean, you and I love it. Like, we're traders. It gives you the opportunity to get in and get out of stuff, even if you're wrong half the time, right? And so I do like that portion of it. Look at Marcus trying to catch a little bit here. Where is this coming from now? Like, why?
Is this Costco? Is this the power of Costco?
Is that what it is?
Potentially. But yeah, I mean, always just keeping your eye on implied volatility through the end of next week and further. I mean, 100-point range in the E-minis through next week.
I think I'm going to join you in that, Costco. You basically got the 1060 calendar spread on, right?
Yeah.
Damn, it just
long
went up,
July
too.
short trade.
It did jump up. It was just like 9. Now it's like 10 and change.
Yeah.
That sucks.
We are going to need a little move to the upside for sure, but
Yeah, we for sure.
yeah, I mean,
I might get more aggressive than you. I might go to 1100. I like big round numbers.
Sure. But yeah, we'll see what happens. It's unfortunately not right after the close. It's at like 3:15. So we're gonna have to wait a little bit after the close, but
good things come to those who wait.
That's true. Hopefully that applies here. 1060 pin or even higher. 1100 pin would be fine for me too.
It's got time.
What do you make of gold? Just gold it feels like it's had its little run. Obviously, it got up to 35.50-ish, gold futures specifically. Now we've just been chopping around this range. Do you think we see this thing continue higher after this churn, or do you think we're gonna drift lower here?
So I'll say one of the things that I thought was an interesting tell last night was that gold wasn't down more. I thought markets, being up 100 handles, gold would have been down like 60 to 70 handles, somewhere around that 32 range. Honestly, I was expecting, this is where the Chris Vecchio ME comes in. I thought it was going to be somewhere near the 50-day moving average, which is like 32.50 right now. And it got close to there, it got 32.68, but it didn't go lower. And so again, what we've seen is like markets don't like tariffs. Gold are fine with tariffs. Actually, it's the fear kind of gate. I mean, it's something people have been buying out of fear, if you will. And I was surprised that it wasn't down more. So when we came in this morning, it was already up before, markets were still maybe up 40. I thought that was an interesting tell there. I think gold is going to hang in here, man. Like, I don't expect some $300 sell-off in gold to happen, at least not as of right now. I think it's going to, this is really one of the few that has obeyed the law as far as like technical trading. When you look at it, it's mostly riding the 1 week moving average for the most part upwards. When it starts to falter a little bit, it will falter to that 50-day moving average and then find support and then start rising again and then kind of do the same thing, rinse and repeat. We've seen this quite a bit. That's one of the reasons I've actually looked. That's one of the next things I want to do is buy gold, but I'm not going to chase it. I'm just going to see if it falls back to a 50-day moving average again. I was looking at, like I said, like 32.50 or a little bit below. It's one of those I missed last week. I'm not gonna lament on it. Okay, I already gotten over it, but it was one that I wanted to buy when it was below 3,200 last week, and I totally didn't do it. I missed out on that. I missed out on I messed up the bond trade, but again, all things get rectified eventually. It's hanging in there, and I don't necessarily think it's going away anytime soon. I mean, as long as it kind of jives what we're talking about. Markets have moved around a lot. There's a lot of uncertainty. VIX is staying elevated. When you look at the whole VIX complex, all of them are above the long-term average when you look at June, July, and August. So I think that says that there's going to be some gold here for a while now.
Yeah, and it's kind of funny. We've like a few years ago, people were looking at gold, but not nearly trading it as much as we are actively. But I've been liking to place the upside call brokering butterfly. So like anytime it rips higher, I throw on a call brokering butterfly, and my entire intention is to just remove the risk on any sell-off.
Yeah.
And it's been a two-sided vehicle, very similar to like crude oil. That's been a great vehicle too. But you can see these big rips in gold, and then a couple days later, it comes down a little bit, kind of loses its steam. So those have been really nice trades. I've done 3 of them in a row where I was able to remove the risk. Some have resulted in a little bit more profit by selling out of the next rip. But really, if you can just leg into free brokering, if you can start with a brokering butterfly and then leg into a free butterfly, you're golden. You can just keep doing that, and you basically are layering into these free shots. So the upside and downside. I like that strategy for something like the E-minis and NASDAQ too. But yeah, that's probably been my better trades recently, is just selling the rips in gold with a defined risk brokering butterfly. And then if we catch that downside move, you can remove that risk.
And I think this is one of those where it's probably a little easier to play directionally than it is vol-wise. Again, vol-wise, things gets a little complicated with gold every now and again. Looks like we got some friends.
We got some friends. Chris and Ilya, let's talk New York Knicks. I actually have a feeling that they're going to blow out the Pacers tonight. I don't see them just like laying down at home in the Garden. I think I love the
look on Chris's face anytime you just mention the word Knicks. Like his whole face changes. It changes just a little bit, like it gets a little frozen. It gets a little little. There's a lot going on there. Just that word alone.
I was just putting some bleach and rope into my Amazon shopping cart.
Perfect. What do you think?
For the game.
That's what I feel. Like last night, I felt like OKC was going to blow up Minnesota. That happened. And tonight, I'm just going to continue my little hot streak here. I think the Knicks blow out the Pacers with a 40 ball from what's his name?
He's not going to answer that. You said blowout. He's not going to answer that. That is too much emotional.
It's a little scary.
I mean, it is.
It's a little scary.
Ladies and gentlemen, if you want entertainment, go to Twitter while the game is on and see the things that Chris is. It's hilarious. I mean,
you're going to get him all hopped up before overtime, and I'm going to have to deal with this for the next hour.
Come you guys are going to need sugar before bedtime.
Come on, Mike.
How many hours till game time, Chris? How many hours? How many minutes?
4 hours and 4 minutes.
Obviously.
Why you got to do this to me, Mike?
Give or take a few seconds.
I know we're like the one that's playing with the kids, and then you gotta put them to bed later, Ilya.
What do you guys?
What's funny is I am just as excited about what the tariff block didn't do to stocks after that seesaw today as maybe Chris is about the game. Like this is amazing. I love the price action today. It's so good. Bonds are up, gold is up, dollar is down, stocks can't stick it. It's fantastic.
I couldn't agree more.
News: Ilya's still bearish.
Yeah, I mean, what a reason to be bearish. There it is.
Amazing.
Like,
is that a new thing?
You get the news. The markets love it for a hot 4 hours. And then everything turns and erases everything and goes completely the other way. That, like, across markets, that's glorious capitulation.
Even NVIDIA, like we talked about NVIDIA earnings yesterday, and they even gave it up. Everything has reversed.
Yeah. Gold was down, it's closing up. Dollar was up, it's closing down. Bonds were down, they're closing up. The candles in NASDAQ, name a stock index, S&P, Russell, look ugly.
Billy is so happy right now.
This is like my whole portfolio right now.
If stocks are down tomorrow and the Knicks lose, I'm going to be deeply unhappy.
No, I just don't see them not winning this game. I think they blow them out, and
they have to. How could you lose all 3 games at home in the Eastern Conference Finals?
They better not.
Tibbs should be fired if they lose tonight.
Yeah, a lot of questions to be answered if that happens. I don't know. You know what? I will say that, and not to talk about this all the time, but I will say this. The one thing I'm worried about, Karl-Anthony Towns didn't look like he was moving very well the other night at all. It looked like before the knee hit. I think something's up with him, and I think we're going to hear about it after the series. That's what I think.
Yeah, that sucks because he's a great passer, and he's not a good, he doesn't run good ball screens. This is not his forte. And if he's not on the floor, we don't have a big man that can pass. So it's going to be a nightmare.
Yeah. I feel like Mitch Robb has done an admirable job trying to step up, but I mean, Cat and his foul trouble is just so annoying to me. It's like I can't even watch it. Like when he's got 3 fouls in a couple minutes, I'm like, what are you doing? Like this is not what you're supposed to do.
This all stems from the fact of this stupid CBA that prevented the Knicks from re-signing Hartenstein last year. They weren't allowed to give him the most money, so he signs with the Thunder and is a bench piece there.
Yeah. Yeah, nobody's beating the Thunder, so at least you have that. We said it yesterday.
Yeah.
That's the bell, everybody. Costco's at like 3:15, so we'll have to wait.
We call them the Seattle Supersonics out of spite. Can we do that?
What do you say we get out of these guys' hair? Bring Thomas on, see what happens with Costco, see if I can finance my trip to Costco this weekend. That's really the goal here. Between $300 and $500 profit if we get a move to $10.50. That's what I'm looking for.
Hopefully it works.
All right. Thanks for tuning in. This has been Last Call. Stay tuned for Overtime coming up next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The tariffs are struck down, or are they? It's Thursday, May 29th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago. in place of Dylan Radigan today. He'll be back next week. We're here with you for the rest of this trading hour, the rest of the trading day. Markets close at 5 p.m. Eastern Time. If you're joining us on the platform, tastylive.com, thank you for joining us. Come over to YouTube. Tell us what you're trading, what you think of this excitement and then letdown in stocks, although I suppose depending upon where you sit at the table, Ilya, you may feel that this day's price action was a little bit more beneficial. I did tweet out yesterday, dear media, stop baiting the president into putting on new tariffs to basically prove that he's not a chicken. And, well, a few people responded to me that, no, they really are hoping that he's egged on to put on more tariffs, and I assume they're bearish too. But the tariffs today, do they have a lasting impact? Maybe not. Stocks barely higher on the day, up by 0.01% in the NASDAQ, which is a far cry from where we were earlier when we were sitting up closer to 2% across the board. Elon Musk back to Tesla. NVIDIA beats on its earnings report. Not enough to keep this market moving higher. Bond yields are mostly lower across the curve. Gold and silver bounce back. Energy products, they leak lower despite drawdowns in inventories in the weekly reports. And ultimately, in the currency world, the dollar is a bit softer following yield, so maybe a normal day there. Ilya, I got to say, there is a dramatic change in how the markets were perceiving this last night versus today. As the Trump administration said itself this morning, this doesn't really change much of anything. They're just going to put the tariffs on for a different reason now. Is this a sign of exhaustion, this price action?
Well, of course they'd say that, but it's not so simple. They do have other tools. They do have other tariffs that are on via other tools. So without getting too crazy, there's the Trade Act of 1974 that they're using for some of the other tariffs. There's the Trade Expansion Act of 1962 that they're using for some of the other tariffs. All of those things require a long period of investigation and justification. So it would not be easy to do, especially if you had to do it across all trading partners at the same time. It's not impossible, but it could be done. The Trade Act of 1974 allows the president for him to install tariffs of up to 15% for 5 months. So it wouldn't be lasting, but maybe in that time, the president can win on appeal, because obviously they've appealed the decision. They were using the IEEPA, which is the International Emergency Economic Powers Act, to justify this, and this is what got struck down, both by the International Trade Court, as well as actually by a DC District Court judge. So there was actually 2 separate rulings on this that from separate courts that basically said the same thing, that you can't use IEEPA this way, that it's unlawful. So in my mind, what all of this means when you look at the price action is sort of what Austin Goolsbee of the Fed, of the Chicago Fed, said today. He was speaking in an interview, and he said, well, this just adds uncertainty, because you really don't know now. If you'd been growing somewhat acclimated in markets to this idea that all of this is a negotiating tactic to ultimately wind up tariffs to something like a 10% floor, which is what seems to be coming out of the conversations with China, which is what came out of the limited deal with the UK, which is what's been kind of the baseline talking point for the advancing conversation with Japan. All of this seemed to basically now become completely clouded again. And if businesses didn't know, and if consumers didn't know what the tariffs meant and their problem with them as of mid-February and onward into the April panic was uncertainty, and the dampening effect that uncertainty has on economic activity, this is now more uncertainty for longer. So if we thought that the cliffhangers were coming in June and in August, or in July, June and August, depending on whether the 50% thing on the European Union was in fact paused, or if the administration would revert to implementing 50% tariffs on the EU on June 1st, because again, the president is being rage baited. If he was going to flop on that again, which you never know, all of that now gets extended for maybe 5 months. So maybe now we're looking at October. And then there's the tax bill on top of it. So it seems like the markets have looked at this and said, well, now we really don't know anything. Let's back up. The thing that we thought we were acclimating to is not the thing at all. It's a whole other thing. And we don't know which world we're in again. So all of the normalization, ostensibly, that happened after the panic in April now gets a chance to get rerun.
It gets a chance to be rerun. Thomas, we have a rerunning of some things here after hours. Appeals Court has said that the trade court's ruling that the Trump tariffs are illegal, that is stayed temporarily, so the tariffs are back on while this gets sent forward to the Supreme Court.
Here we go. Welcome to uncertainty, everyone. Say hi to the new boss, as bad as the old boss.
What's the story of today, right? If I went to sleep last night and didn't see the tariff news and I woke up just now and tuned into overtime, what's the story of today's market?
I mean, you got the tariffs, you got NVIDIA. If NVIDIA's earnings were bad, of course, I think we'd be down a lot more today. And ultimately, I think NVIDIA's earnings are probably more important than the tariffs. The thing is, the court says, one thing, this administration isn't likely to say, oh, the court said this, we're going to back off, No, it pushes the time frame out. I mean, if it was a case of, one court decision laying it to rest, the uncertainty would go down. However, I'm surprised to see the VIX only up about, 1% today, considering, it does increase uncertainty. And to Ilya's point, it pushes back the time frame until we get a resolution on this. So not only do you have more uncertainty, but you have a longer runway until these trade deals are potentially settled, because it's going to complicate the negotiations. I was a little surprised to see equities hold up as well as they did today. Like I said, I think that is partially due to NVIDIA kind of floating the market a little bit. Jensen, he had some comments. China definitely hurt them, export controls and everything like that. It seems like he's talking more and more with Trump, so I would presume he's going to get more of his ear going forward. But at the same time, NVIDIA is trying to do workarounds to make chips that they can get into China. That's a big market for them. I don't know. This tariff thing, it's going to flip-flop more and more. It's court decisions now. I would assume the Supreme Court would be sympathetic, leaning at least a slight majority to, say Trump does have some limited authority to put on these kind of tariffs, or there's other legalities they could base them on. There's a few legal bases they could do tariffs on. So, of course, the administration, if they get roadblocked with one thing, they're going to try something else. I think it pushes out uncertainty. It's here. At the same time, I'm surprised to see the VIX only expanding ever so slightly today.
Volatility, we can call it up from where it opened. A little bit lower than where we closed yesterday, about 14 cents, but we barely move at all. I think that's the story of today, right? That we have these great headlines. Yesterday, Musk is leaving Doge. He's going back to give his attention to Tesla, right? We're getting the NVIDIA earnings. They're pretty good. Salesforce was pretty good. C3 AI was pretty good. All right. Now we get the court ruling last night. Boom, plus 2% overnight. GDP report comes out. Trump says they're going to appeal it. Now the tariffs are reinstated. So what did we do? What did we do? What did we actually accomplish? I don't think we accomplished or learned anything. I don't know if you can read into today's price action. We covered this on Futures Power Hour, Ilya, and you were mentioning this at the start of the program. But there are many other avenues for the tariffs to go through because the IEEPA tariffs are related to national emergencies, and there are no agencies required to make findings, and there's no limit on a duration of action there, nor is there a limit on a tariff rate. But through the other sections that they'd have to go through now, like Section 201 or Section 301, you would have to have an agency conduct an investigation first, and that takes time. Section 122, on the other hand, does not, and there's a 15% tariff limit for up to 150 days, and they could probably do that now. And we know that because that's what the court ruling said last night. The panel of judges, a Reagan judge, an Obama judge, a Trump judge, ruled unanimously the way that these are being done is, obviously there's no emergency related for the stated reasons, but heck, if you wanted to do it this way, just refile them under Section 122. So I guess the picture here is this is a lot of noise. I don't know if there's any signal, Ilya, whatsoever from today.
I think there is. And I think the shape of the way price action develops, I think that is the signal. We saw basically 2-month highs over the course of the kind of 24-hour international trading day here in the futures, be it the NASDAQ or the S&P. We saw a major sell-off in gold. We saw a major sell-off in the dollar, in particular against yield-sensitive stuff like the yen, the euro. And then everything capitulated. The market is not so silly as to look at this and not know that in the very same court ruling that essentially put the brakes on these IEEPA tariffs, the judges themselves said, look, you could do this if you used this other justification. And by the way, you couldn't just do it by executive order. This is the other thing. You would need investigations. You would need justification because sections 232, section 301, those tariffs stay, and those sections require you to go and investigate and justify. This is what, and that was done during the first Trump administration. I think part of the reason why the markets were not afraid of the tariffs come the election outcome in November was because they looked at the first Trump administration's way of doing tariffs and said, well, the on-ramp here is going to be long. They're going to have to investigate. They're going to have to justify how much can they really sell. I don't think they anticipated that there would be a blanket huge tariff announcement with no justification and nobody consulted and nothing checked all at once. But if you do it this way now, or you try, which would be very difficult, to justify the kind of reciprocal tariffs that the president has announced, you'd have to go trading partner by trading partner on these sections.
That's the other
very
thing,
tough to do.
201 and 301 need to be implemented on a country-by-country basis. You can't just give a blanket order and say all goods related to widgets from anywhere on the planet. You have to be, French widgets, Japanese widgets.
Why? Well, and explain and show evidence. Tell us why a particular industry, for example, if you're looking at section 232, tell us why a particular industry is hampered and why you're placing tariffs on particular goods. You couldn't just say, the Trade Expansion Act of 1964, if memory serves, I think is the year, allows you to put a tariff on all French imports. No. It would have to be a specific industry. You'd have to go and say, you know what, all this Bordeaux is really threatening California wine makers. And you'd have to sell that. So it's not easy. What comes now is uncertainty. And I think the markets reflect that. And I think the price action does.
Before we continue the conversation, Costco earnings are out. EPS comes in at 428 versus 424 expected. Revenues were also higher, 63.205 billion versus 63.1 billion. EPS is up 13% year over year. It's up 6% quarter over quarter. The revenues are up 8% year over year, but down 1% quarter over quarter. Guidance looks good. Dell, similar situation. They're offering further guidance that looks strong. We're seeing share prices there hold up. When I last saw them flash across a different screen, yeah, they're still holding up from 114 to 119 right now. Marvel, Ulta, they also had earnings come out. Just taking a quick sweep of their share prices, also trading higher here. So a nice little batch of earnings outside of Marvel. Nice little batch of earnings here to keep the market somewhat pointed to the upside here as the day goes on. Thomas, I mean, I hear what Ilya's saying about the price action and it being exhaustion, but we're also talking about like a really esoteric topic in thin liquidity where I don't know how many people are actually tariff experts out there. I certainly consider myself a tourist to that region. I've been reading about it for 7 years by force, right? So like I've learned some things over the past 7 years about tariffs and their history, but by no means would I consider myself a trade expert.
Likewise.
So Thomas, what do we do here with the stock market then? Right, this is a market that was meandering the last few days. The EU tariffs get called off on Monday. Where are we now?
Yeah, I'm no trade expert either, by any means. Capitulation, I could see that coming into the market here as we digest this news. Like you said, it's hard to, decipher how all these tariffs work. And, not even these big banks it's going to take them time to go through it and analyze how these knock-on effects from these court decisions are going to go. I mean, the earnings are good. We're seeing, like you just mentioned, Costco, Dell is up 5%. They're saying strong AI demand. So the underlying, thesis that's been driving the market, these AI data centers, which have actually had a notable impact on the economy, that's still a driving narrative, but it's going to come in and how are consumers being impacted by these costs of tariffs? I mean, Best Buy was down 10%. They said they've already raised some good prices on goods. Gap is down. They said they've raised some prices as well. But how meaningful are these price increases going to be? Are consumers going to see this and start freaking out and, pinching more pennies? There are signs that consumers have already eased up on discretionary spending. It's all about how long this lasts. If it's just a couple more months, maybe we get through this, and land on our feet. The markets continue to rally. At the other time, if this starts to feed in through more hard economic data, and we've already seen some things like housing starts and stuff go. That's from rates remaining high. I'd want to see, bonds go up, yields come down, some more clarity on tariffs before we get a next big bull push. Powell met with Trump today. Of course, Trump pressured him to, relax rates faster than expected. Powell pushes back, et cetera, and nothing's going to happen there. Right now it's wait and see, but that brings in the prospect of capitulation in equities. How long are investors going to wait for, the next catalyst to drive us higher? Are earnings going to be enough? I don't know. I think you need to be strategic and pick your spots here. I'm not sure if I want to gain a lot of exposure to broad-based indices or ETFs. I'm probably going to stay with my equity exposure centered around AI-themed stocks, SMH, NVIDIA, chips, things like that.
Ilya, one of the less discussed stories of the day, although perhaps equally important, is that Donald Trump and Chair Powell broke bread today at the White House. Mm-hmm. Powell reportedly told Trump that all monetary policy will be set for non-political, analytical reasons. Trump, as is wont to do, insisted that cuts come down the pipeline. It feels like this news got buried a bit today with everything else going on. But you put it into the context of the GDP report this morning, GDP with its revision, we finally get gross domestic income as well, and that's in negative territory. Yeah. So I can't help but notice after 8:30 a.m. Eastern today, bonds actually took a meaningful, if it's notes, if it's bonds, ZNZB, they actually took a meaningful leg up on that GDP revision. Yeah. What's the now new song for the bond market? Are we looking down the pipeline at slowdown? No tax bill, Doge is a failure. Like, it's just all noise, right? We're going back to the pre-scheduled programming back in January.
As you know, I have been a broken record on this. The question is consumption. What we've seen, especially when you look at these GDP numbers, is tons and tons of tariff front running. That makes sense. It starts as early as January. You start to see it in the PMIs. All of a sudden, Chinese manufacturing PMIs start to perk up. U.S. manufacturing PMIs start to perk up. And all the pain of uncertainty really shows up in services, which is not really the place where you'd expect a direct impact from tariffs. Most of what you see on imports isn't services, it's goods. Most services demand is a domestic thing. Domestic firms feed that. So when you see services come undone, that tells you that consumers are getting worried. And then you see the GDP numbers and they give you the slowest household consumption in almost 2 years, going back to the second quarter of 2023. Forget the trade side. Consumption is 68, 69% of GDP. Everything else is an afterthought. If all of these businesses have gone to front run the tariffs, which we know, we see it, it's in the data, if they've stocked up giant inventories, somebody's got to buy them. And if consumers don't then rush out to buy these things and clear these inventories, number one, businesses are left without a lever for continued growth because now they've front-loaded a ton of inventory. And so their uptake going forward would be significantly diminished. Number two, those businesses would be left with a giant non-performing investment. They would be stuck with all this product that isn't leaving shelves. Never mind the fact that just the consumption itself is the main driver of growth. So all of this adds up to a very ominous look for the economy, no matter what happens with tariffs going this way, tariffs going that way. If consumers have been spooked off to the sidelines, the economy is not going to grow. And if it's not going to grow, we're going to have a recession. And if the U.S. economy is going to be in recession, the world is going to be in recession because Europe is anemic and China is anemic and there is no offset. There is no safety net. The U.S. is the only game in town. So in this kind of environment, you get to the kind of narrative I've been talking about for a while. Recession classic. Bonds go up, dollar weakens, gold strengthens, as you have expectations that the Fed is going to see the recession eventually and act. What we just heard from the FOMC minutes this week, and I think Powell probably did the same song and dance for the president, is, well, look, how are we supposed to know what to do? These tariffs are a risk of higher unemployment because businesses, if they can't clear these now huge inventories, are going to be in trouble. They're not going to go out there and hire because they've just spent their money on all of this. They've also been spending all of their money shielding consumers from these tariffs and eating the cost in margins so they don't have to raise prices on consumers. That's what the PPI data showed us. And the retail sales data showed us that the consumers didn't show up anyway. So we have a situation here where businesses might retrench. That's bad for unemployment. But the tariffs are effectively a tax hike. Just a tax hike on imports. It's a consumption tax. And so that's inflationary. So what's the Fed to do? Is it going to hike rates to fight the inflation or cut them to improve the employment situation? Well, they don't know. And they've been very loud about that.
Mm-hmm.
And so they're saying, look, until we see exactly what's occurring, we're not doing anything. It's not like the Fed doesn't want to cut. They do. They've said they want to cut since before the election.
Kaplan said today that he doesn't think the Fed might cut this year.
There we go.
Yeah, that was terrible. That was terribly worded. Kaplan doesn't think the Fed will cut this year. Like, that's a possibility.
Yeah, sure. They very plainly don't know. And by the way, neither do markets. We looked at the spread in consensus expectations for second quarter GDP that the Atlanta Fed publishes when it compares it with their GDP Now model. The spread of baseline expectations is between a 1% contraction and 3% growth. Nobody has any idea what's going on. So, yeah, the Fed will eventually cut, but it's probably going to let recession happen so that it can say with certainty inflation expectations will not get unmoored. We can really cut. The drop in demand will offset our inflation concerns. So, yeah, maybe they'll cut. They might even cut twice this year, but they're going to have to see some acute pain. And so, is this good? No, not for growth. Not for growth cyclical assets. Not for stocks, not for crude oil. But it is good for those assets that reflect speculation that eventually the pain will bring those rate cuts. So that's a weaker dollar, that's stronger gold, that's higher bonds, until it occurs. And once speculation becomes reality, then maybe you can think about undoing those moves. But if we've just extended the negotiating period on tariffs to whenever the courts let the president do something or other, maybe, and we're talking about 5 months out, we're talking about October, then the Fed has all the reasons in the world to sit firmly on its hands and go, you know what, if the recession happens by October, yeah, maybe we could do something. But if it doesn't, then I don't know.
Thomas, that's a horrible thought I just had. There's a non-zero chance that I go on paternity leave later this year, and I come back and this issue's still not resolved. I come back in 2026 and it's just still not resolved.
That's what it's looking like. But
I'm gonna have a bearish opening if that happens, to wax poetic about all the pain for who knows how long.
Oh my gosh! Well,
to talk these markets down.
Thomas, could I talk you into thinking that maybe bond yields have a chance to turn the corner here? You and I were talking on Futures Power Hour yesterday about the bullish engulfing bar that had formed in ZB, and we found the inside day coming in yesterday. We actually get another bullish engulfing bar here today. This is now 2 of the past 3 candles have been these engulfing bars. So consistent with the technical commentary yesterday, Thomas, when you have a bullish outside engulfing bar followed by an inside day, the third candle then becomes your cue. If you break the inside day's high, you're then looking for continuation to the upside. If you break the inside day's low, the bottom is not valid. Today, we had it on both ends briefly, but in setting a new low relative to yesterday and closing above yesterday's high, that does give us another bullish engulfing bar. So here we have these 2 setups back to back, trying to push through the 1-month moving average. I put on a short put spread here today. Is that a ridiculous thing to do given how the market really doesn't have a rhyme or reason right now, seems to be moving on the headlines? Or with the GDP report revision today, with the cut odds bouncing back today, should we be taking stabs at calling a low?
Yeah, I mean, I have a long call spread in ZN, so I'm long biased on bonds. Yeah, I mean, the chart's nice right here. It's a potential bottom. It's, breaking out. We get over that 1 month moving average. I don't know. I'm kind of positioned for Ilya's take on the market. I'm long non-US dollars. I have light equity exposure. My other plays are in, energy, things like that. So I think we do start drifting higher. We've seen the start of the year, Fed cuts get priced in, then they come out kind of similar to how we were last year. Maybe it depends on how fast this goes to SCOTUS, how fast it gets resolved. I think the faster resolution
tomorrow, apparently.
Tomorrow. Well, there we go. I mean, we have to wait and see. I think a lot of it hinges on what the Supreme Court is going to say the authority is here, because that's going to have cataclysmic implications for what these tariffs do and how they're going to be implemented. I guess we'll have to wait and see. I don't think we're going to have a decision tomorrow, are we? It's just going to go there for arguments, or is that how it works?
I mean, in theory, they could get relief the same day, right? The Supreme Court could just turn around and be like, "This is so open and closed, 9-0, whichever direction," right? We don't need to spend a lot of time on this. I don't know. It just sets up for another weekend where you could have a gap, right? What if the Supreme Court decides to work through the weekend and we get a news report on Sunday of the Supreme Court is going to announce their decision Monday morning? You have a new headline to trade around.
We go up, we sell off into the close, we stay kind of, it seems like we're on the verge of capitulation here for the equity market. That's my gut feeling on it.
Yeah. Let's move away from equities here for a moment, Thomas, though, because I saw that there was some inventory data out for crude today. It seems like diesel stocks are at lows, right? We find ourselves looking at drawdowns accelerating. Oil's not finding a bid. Why is that not happening here? Why aren't traders looking at shallower inventories and lower stocks and seeing, we have to rebuild and refresh these. I should buy some oil. This was a good news is not leading to a good action, in my view, is what I'm saying.
Yeah, I mean, gasoline stocks down, crude oil stocks down, distillate stocks down. At the same time, you've lost like 40-something rigs this year in the Permian and, the shale basin. The drill baby drill thing is not looking like it's going to happen right now. OPEC is saying they're extending production cuts or unrolling these production cuts to allow more supply onto the market. At the same time, you have consumption weakening. But, fuel demand has held up rather well. Gas Buddy reported you get a 2% rise in fuel demand over the last week. Gas inventories are dropping. It's weird. I have an iron condor on right now. It's between 58 and 63.5. I still feel comfortable there. I see more chop in the oil market. I don't think we pick a decisive direction until these tariffs are off. I mean, the OPEC stuff, they're saying they're going to unroll these production cuts. At the same time, Saudi demand within the economy is strengthening, so it makes sense they're going to produce more, but that doesn't necessarily mean it's going to one-for-one translate into more exports. So these production rollbacks, is it actually going to translate into a lot more supply onto the market? Or is some of that at least going to be absorbed domestically by OPEC members? I think that's kind of a big question for the market right now. I'm on the view we just kind of sideways chop around here, right around 60 for a while. I mean, that's how I'm positioned. That's how I'm playing it.
I've got a put vertical here, basically looking for this range top to hold just on pure risk reward grounds. So we got to the range top. We got stuck there again. We can't make hay. If you're wrong by a little because the breakout happens fast. If you're right, you get a drift back into kind of the 55, 54 area for a trade. I've got lots of duration in it to give it time to do those things. So we'll see. I have it through a little baby MCL vertical. So risk defined, less than 1% of equity, even if it expires worthless. So I'm just taking a stab here. I don't have a particularly strong view this way or that, but the risk reward seems like it's better to be short than long. And if you're thinking that a recession is coming and that the Fed is going to allow it to happen, at least at the onset, then being short something so cyclical makes sense. Copper seems to confirm to some extent.
Yeah, I mean, I feel like I'm personally still directionally neutral right now in oil, and given the fact that we haven't gone anywhere since this trade was put on, I'm fine with it. But if I'm thinking I want to approach this directionally right now, I have a very difficult time thinking that the long side is the better of the two. If only because that area between 63 and 64 has clearly been ironclad resistance. We've been riding there's something up here. We've been holding up against the 1 month for now, and so maybe there's something down below 60 that's keeping us elevated. You can kind of see how this trading range, it's slowly been coming together over the past few weeks. It's about $4 wide. So if you're above 64, you're a little bit more bullish. If you're below 60, you're feeling a little bit more confident on the bear end. Today, you couldn't quite get the bearish engulfing bar. We don't close below yesterday's low, so more chop. And it's a 48.6 IVR, which is a little bit better than what you're seeing in equity markets right now, where the IVRs have dipped into the low 20s, if not the high teens at various points. We're not seeing drill baby drill, Thomas, right? Like we're expecting drill baby drill is more production, more rig counts, more people employed in the industry. Chevron was out today saying that they're going to have to cut 800 jobs starting in July. But production's not falling. So, I mean, where does this leave us? Could we be heading into one of those idiosyncratic cycles for oil where, regardless of what's happening with the U.S. economy, oil has its own tune that it sings? And I feel like we saw that in 2023 for a chunk of time.
Yeah, I mean, it seems like the oil market is expecting a little softer U.S. production through the rest of this year, the second half. So lower supply from the U.S. The non-OPEC supply outside of the U.S., there's a lot of variance in forecast between Goldman and, the other forecasters. So, I mean, you look at things that are proxies for the physical market, like the prompt spread, its backwardation is now 74 cents. That's the highest it's been since late April. You look at things like crack spreads, those are still holding up fairly well. They've dropped off over the past week, but still significantly higher than where we were at the beginning of the year. So, I mean, it's a market that's kind of, there's a lot of moving pieces. At the same time, OPEC wants oil around 70, 75, around there. So they obviously want to get prices up. Releasing more supply in the market kind of is counterintuitive for that. But, if the recession does happen, then definitely skewed to the downside. Like I said, I'm range trading here. But if we get down, to those swing lows back in early May and April, then that's where you're going to have to reevaluate. Are we going to punch through a floor? If we do, that probably means, recession. If we stay swinging around here, it's simply the status quo is pretty much held. We narrowly avoid a recession. OPEC's releasing more oil. U.S. is producing a little less. You got a few outliers or secondary factors to consider. Venezuela, Chevron can't export oil. They can keep producing it there. They can't export. The Iran deal's ongoing. U.S. seems really soft, or not really soft, but they seem like they're offering some concessions. Israel certainly doesn't, probably agree with that, but we'll have to see how things shake out over the next couple of weeks. If these gasoline inventories keep falling, crack spreads stay high, the physical market gets supported, I think we stay above 60.
Stay above 60, but difficult climb ahead, and that kind of is the perfect environment for directionless range trading. And we do have the IVRs near the 50 right now, so instead of getting chopped up day trading stocks, you maybe want to take a step back and look at something in the energy sector. Gasoline prices, by the way, gas futures here with a pretty ugly bit of action today, Ilya. I only point this out because if gas prices fall, it can disincentivize refiners. Thomas is just talking about the various spreads. Also, gas is a little bit more directly tied to consumption as we know it as consumers. So falling gas prices, there's a world in which gas prices are sideways and oil prices are going down. That's probably like the best macro signal you get. More supply in the market, but the demand is there to keep the end product price elevated. This one, it's like oil's chopping around, but gas is falling. And that's probably not a strong demand signal beneath the surface. We have 15 minutes left here today. One of the tells this morning on the other side of that GDP report, gold really did hold up better than I thought it would. When I was looking at the charts last night, guys, I said, oh, well, if stocks are up 2%, tomorrow's going to be a terrible day for gold. Maybe tomorrow's the day that I capitulate. And so color me shocked when gold was back comfortably back above $3,300 when I turned on my platform this morning. Ilya, is this just another sign that gold retains a great deal of narrative flexibility and it's kind of just a steady grind to the upside again?
I think you have to look at today how it all kind of played out across assets. And I think what you see is basically the same move seesaw across markets. So the first thing that you see when the news comes out, it hits, and I'm going to say this in GMT terms, just because I like looking at that because there's no daylight savings adjustment, so things are consistent. But at the same time, at about 2200 to 2300 GMT, so right in sort of the early overnight, let's call it about 3 hours from now, on the dateline, you get the news from the courts, and stocks surge, and gold cracks, and the dollar jumps, and yields jump, and all of it happens at the same time. And for about 4 hours, it all holds, and then all of it unclenches. Basically, as soon as Europe comes in, Asia is always a little bit dicey. It's a little bit thinner markets. Soon as Europe comes in, at the opening bell in Europe, is when things turn, which is about 8 a.m. GMT. Once bond markets in Europe open and significant liquidity comes back into the markets, everybody goes, yeah, no. This is the wrong read. The read here is not that the tariffs have been put in a box, okay, great, moving on. It's that now we have a prolonged fight, and the thing we've been trying to acclimate to basically since early April has been thrown into limbo again. None of this makes any sense. We just got the president to show that he's responsive, that he pays attention to market discipline, that a nice phone call with someone like an Ursula von der Leyen fundamentally changes his mood and can take tariffs from 50% to 10% in a weekend. This is good. This is good. We can work with this. But then not. Now you're asking the president in press conferences about the taco trade, and then you take away the whole thing, and you get him pissed. And if you do that, you're inviting all manner of combative shenanigans, and you've got 5 months of this now. What are businesses and consumers going to do? And it happens in gold, it happens in bonds. And I mean, to me, gold is just another reflection of this thing that's happened over the past 24 hours, where the markets go, hey, and then they go, wait, no, not hey. Oh.
Did you guys ever watch Parks and Rec, the TV show?
I didn't.
Yes.
I'm aware of it, obviously.
Yeah.
Okay.
Watch.
Thomas, in season 1, they did a cultural exchange with Venezuela, and Fred Armisen plays like a Venezuelan colonel or something.
Straight to jail.
When I heard those comments yesterday from that reporter at CNBC, I was like, "Are you out of your mind? We have a good thing going on here. Yeah. Okay, you can't keep your mouth shut. You're gonna mess this up for the rest of us. Like, don't tempt him, man. We're gonna get tariffs just to prove that he's not a chicken."
Yeah.
Like,
yeah.
Take away your press credentials.
Really? You see bull and you think red rag? Really?
Yeah, Thomas. I was like, right to jail.
Yeah. What? Like, we just got done acclimating to this, man. What? Now? We need this now?
I was a little surprised that question came up. I was a little surprised, but it makes for a funny moment.
So everybody says that you're weak-kneed and you suck. Your thoughts?
Okay, but that still brings up my favorite interview ever. And when people say like there's a bias in the media against Republicans, this is like the one thing that sticks out to me. And there's plenty of examples, but this is the one that stands out the most. It's like the 2016 election cycle, and Dana Bash has on Heidi Cruz, Ted Cruz's wife, and she says,
I remember this.
Your husband is one of the most reviled people, just like people on the Senate. Senator Lindsey Graham has said that if Ted Cruz was murdered on the Senate floor, no one would be convicted for murder. Yet you're married to the man. Explain.
Thoughts. Your thoughts.
What kind of question is this to ask the wife of a like? What? That's so ridiculous.
Everybody says your husband sucks.
Tell us about that. It's like, yeah, he's
how's that going?
I actually disagree. I'm married to him. He's a good, good husband, good father. Like what? How does that help inform anything? But I digress. Please don't ask Trump questions about the nicknames that we call him. Endearingly, jokingly, like knock that off. We have a market here as we go into the last few minutes of this week on Overtime because there's no Friday show. Stocks here. Have we learned anything? We're kind of stuck where we were 2 weeks ago. Once it became clear that the tariffs were going to be off, we get the China trade detente that Monday. We close at 58.65. We're at 59.22. So we've tacked on an additional percent here in ES, but we haven't made much more progress. Ilya, there's part of me that thinks, well, you rally, you take a pause, you shuffle sideways, bull flag, keep going, move on. How many times have we seen that story in 2023 and 2024, right?
Sure.
Thomas, there's the other part of me that says, well, this is great news today and we couldn't capitalize on it. And maybe it's not really great news because if you read between the lines, even the judges were telling him, just refile the tariffs with a different rhyme or reason. They can't just declare emergencies over anything, right? Like that's the emergency over Hollywood. We have to protect Hollywood. I thought we hated Hollywood. So like, what's going on here? Make a call. Let's call this a flag
the
up
president
here.
Out of context. Only Rosie O'Donnell.
Okay, Ilya, I know that you think this is a top. So Thomas, I'm going to put it on to you. Is this a bull flag or I don't need to ask the question. Is this a bull flag or a bear flag up here, Thomas?
I think we're going to sell off into the weekend, barring any. If SCOTUS comes out and says decisively anything, I think other than that we go down. I think it looks like capitulation up here. I'm not going to really be getting any significant long equity exposure. The only thing I'm long in is SMH right now, and that was a play on NVIDIA earnings. So I'm going to hold on to that one, but I'm not getting deeper in equities.
Not getting deeper in equities. Ilya, you're bullish asterisk because it's Brazilian equities, and
that's right.
The Sosnoff in me just It makes me so upset.
It's worse. It's worse than you think.
God, you're long Brazilian equities in Japanese yen terms.
I'm not.
I'm not.
But I bought a 260-day call that expires at the end of the year. So I'm literally just sitting and waiting, and it's just in inventory.
So you have a leap on Brazilian stocks.
Yeah. They appear to have broken a 2-year down trend. They've got a big election coming up. It looks like the pro-market side of the election is going to look pretty good here. So, hey, yo.
Ilya, not sure if you remember this, but 17 years ago this past Monday is when I first met you, when I first had my first internship.
Yes.
I want to tell you that what you just told me was the most disgusting thing you've said to me in the past 17 years.
Put it on my tab. I have plenty more where that came from.
I'm bullish. It's because I bought a 260-day call on the Brazilian equity ETF. You're in New York.
I'm not universally bearish, is what I'm saying.
I might have to come find you in the city and fight you for that.
I'll be in the vicinity this weekend. So if anybody's in the New York area and would like to see two macro nerds go at it, this is it.
Thomas, take us out here. What's the most interesting thing that you think's happened this week? What's the story that we're not paying attention to? What's the theme that's about to come into the spotlight that no one's talking about? What are we missing and we need to do homework on over the next few days?
Yeah, that's a big question. I don't know if I have anything too elusive that's been, going away from the market. Probably not of much interest to most people, but if you're trading commodities, and I think I said this yesterday on Futures Power Hour, I was looking for corn to get around 420. We're heading right towards there. I was going to sell a put spread today. There's good volatility in there. We've been selling off. There's good weather. The South American crop has been really good. It's been undercutting the exports for the U.S., but I think the pain is probably getting near the point where it's exhausted soon. So tomorrow, I tried to put the trade on a little too late. I forgot the AG markets close at 1:15 or whatever it is. So probably tomorrow morning, especially if we're selling off a little bit more, I'm going to try selling a put spread, right around that May swing low and do it in the U contract. But I mean, yeah, that's probably not groundbreaking that you were looking for, but I think it's a good trade right there.
Well, listen, if we're going to entertain EWZ 280-day leaps or whatever, then yeah, we're going to talk corn. That has the typical 45 and 21 day out cycle. I mean, yeah, the corn 70 IVR. These obviously aren't the most liquid markets. It's not like trading ES futures, but if you notice there, the corn volume 142,000, nearly 3 times the volume that you're seeing in silver futures. So some of these things are liquid. Silver futures 17.5 IVR. Corn, you're getting a little bit more at 69.7. I think one of the, lessons perhaps is that just be agnostic to what the ticker is. There are certain tickers that respond to volatility different than others, like metals versus equities, but look for opportunity where it may be. And if you're not finding the vol that you want in your comfort zone, go to a different area of the market like soft ag, take a smaller position, do something risk defined, poke around, try it out. Maybe you uncover a market that you like trading and it works for you. And quite frankly, that's how it came for me in gold. I wasn't a gold person up front, but that, and you learn a market and its rhythm and you get comfortable trading it.
Yeah, try out natural gas.
Yeah, for sure. Yeah. Definitely, man. And I think that's the most hateful thing that you've said as long as I've known you, Thomas. How do you know that you don't like
right up there with take a little try of heroin. See how that goes.
Yeah.
It's like, I really want to get into trading. Oh yeah, you should start with natural gas.
No, I have a short call spread.
Maybe a little drag on that opium pipe. See how that goes.
Yeah. I kind of moved into somewhat of an iron condor day. I've had a short call spread on. We've moved far away from that, so now I put on a short put spread. So it's wide because I put these on at different times, but between 3.25 and 4.25. So We stay in there, I'm fine. I'll take the call spread off sooner since it only is 27 days. But yeah, natty guess is a fun one.
You and I may have different definitions of fun, but we'll explore that next week because overtime is out of time for this Thursday, May 29th. We'll be back on Monday, same time, same place, every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central, right after first call. So for Ilya Spivak in San Francisco and Thomas Westwater in Chicago, I've been Chris Vecchio in New York. Good luck trading. Take a brief break. Come back. Ilya's here. Macro Money up next on Tasty Live.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures there after that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tariffs on, tariffs off. Does anybody actually know what's going on? And do the markets have anything that they've decided about what they're going to do about all of this? That's what we're going to explore here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is, first and foremost, attempt to anchor ourselves in the price action. And see what it was that markets did, and then try to see if that tells us anything about what they will do next, especially as all of this sets us up for another round of notable economic data. Some of it coming at us tomorrow, some of it coming over the weekend, some of it coming early Monday next week, and giving us all kinds of things to chew on when we try to unpick what in the world all of this is actually going to mean for traders. So let's first and foremost take a look at what the news was and what actually occurred. So this is a handy chart from The Economist. It follows a dual announcement from U.S. federal courts that put the Trump administration's tariff plans in limbo. So to make this as painless and as minimally confusing as possible to those of us that are not legal scholars and deep wonks on trade policy, the Trump administration cited what's called the International Emergency Economic Powers Act, or IEPA, to basically say that the fentanyl crisis, as well as persistent trade deficits, constitute a national emergency, which give the president the authority to regulate imports. And on this basis is how they introduced sweeping reciprocal tariffs and said the floor on tariffs is 10% for everybody, all trading partners, all goods. All of these kind of big, broad strokes moves were based on this idea, this 1977 act. And two separate federal courts said, no, you can't do that. The U.S. Court of International Trade, as well as the D.C. District Court, both of them basically said you can't read the law that way and put a hold on these tariffs. And so what you see in this graphic here is those tariffs that have been struck down by court order. And you can see it's all of these IEEPA tariffs. So this one on Canada, the 10% reciprocal, this one on Mexico, this one on China and Hong Kong. And these are largely the fentanyl ones. This is the reciprocal one that is now on hold. Obviously, we've had the president announce that both the China part of the reciprocal tariffs and everything else are on a 90-day hiatus. The excluding China hiatus expires in early July. The China one expires in early August until these decisions. Now it's unclear. And so you still have quite a bit of the tariff infrastructure in place, but it's on these other bases. And what now follows is, well, of course, the Trump administration has appealed the court's decision and is going to fight it, and that'll probably go to the Supreme Court. But also there is another set of avenues that could get used here. So the 1974 Trade Act, as well as the Trade Expansion Act of 1962, have sections in them like the sections you see here. So, for example, Section 232, Section 301, that come from these acts that would allow the president to justify some tariffs to some extent. However, it would be markedly more difficult to do than the sweeping IEEPA tariffs because, for example, under the 1974 Trade Act, what the president could do is 15% or up to 15% tariffs for 5 months. And maybe that gives him enough time to figure out what's going on in the courts. Maybe it doesn't. We'll see. But you could do that. You could do some of these other things, but all of them require significantly more legwork. All of them require significantly more justification. So, for example, Section 201 of the U.S. Trade Act of 1974 is a safeguard provision. So the president would have to argue that a particular industry is unduly hurt by imports and could have a tariff there. Those would not be sweeping tariffs even against the country. They would be specific sectors, specific goods. Section 232 of the Trade Expansion Act would allow the president to act on the basis of national security. It would be difficult to justify that, for example, for the tariffs the president has performed on Hollywood or rivals to Hollywood. It would be difficult, obviously, for all things that you couldn't easily explain as a national security concern. Section 301 empowers the president to take action against untoward or burdensome or discriminatory or unjustifiable trade practices by trade partners. But again, you'd have to prove that. There would have to be investigations. So all of this could take quite a long time to do. And really the best hope for the administration now would be that they could get the IEEPA decision overturned on appeal. But if all of that is making your eyes glaze over, and if all of that is difficult to parse, well, the markets agree with you. Because the price response that you get to all of this is first exuberance and then dispirited capitulation, really. Because what you find for stocks, Mark, and we'll use the S&P here as a kind of benchmark for the markets as a whole, but what you find is we rally to 2-month highs here on the S&P. We hold there for a good 4 hours, and then all through the U.S. cash equity open and all through European trade, as a matter of fact, we retrace back down and end up with this capitulation where we essentially finish the day unchanged. And this extrapolates across markets. So bonds initially have a significant move down as the news gives you a boost to yields, ostensibly because putting the tariffs off to the side would be better for growth. But you don't get that sticking. The bonds end up finishing the day higher. Gold ends up with a significant decline initially, then rebounds and closes up with meaningful gains. The U.S. dollar, and we're looking at it here against the euro as a kind of benchmark, it attempts a rally in the wake of this, probably helped on by higher yields, as we just saw in the bond market, and then finishes the day with meaningful losses. This sort of seesaw price action tells us that the markets would welcome the tariffs getting shelved, obviously, but they don't see it that way. They likewise don't see it as the tariffs being able to go forward. What they see, it would seem, is uncertainty. And whereas they were starting, perhaps, to get acclimated here to the idea that the president is amenable to market discipline. He's not looking to forcibly extract the U.S. from the global financial system, of which the dollar and the treasury bond are bedrock instruments. It is not the goal of the administration to do tariffs for tariff's sake. Friendly conversations and speedy negotiations get things reduced or paused or otherwise canceled, at least for some amount of time. The markets were just coming around to getting to grips with that idea. And what we have now is, rather than having cliffhangers on tariff policy when the reciprocal tariff pauses expire in early July and mid-August, we might have a 5-month window here where we don't know what's going to happen, because that's how long it would take to use the Trade Act of 1974 to try to create a window of opportunity to then re-justify the tariffs on a different basis. Difficult as it would be, because you'd have to go country by country, and in some cases, goods sector by goods sector, which would take very long and be very difficult. And if you kind of fudged it, then the courts would just block you again. So all of this seems to ultimately end up with the markets having decided that this means more uncertainty. And if we've learned anything about these tariffs, it is that the markets hate uncertainty more than they do the tariffs themselves. We saw that the tariffs did not materialize in November, when a presidential candidate by the name of Donald Trump had spent years talking about tariffs would be a linchpin of his administration, and then he won. Markets had the opportunity to sell off there, knowing the tariffs were coming in some fashion, but they didn't. They waited until here. And this is when worries about tariff implementation began to show up in declining business and consumer confidence and began to drive a growth scare. Well, we're back to uncertainty mode, because once again, we don't know what's going to happen and when. And the markets speak to that idea. This, of course, mirrors what we've just heard in minutes from the last Federal Reserve meeting. They don't know what's going to happen either. You can see here in the comments, clearly uncertainty about the outlook has increased. The risk of higher inflation and higher unemployment has risen. That may amount to difficult trade-offs for policy, because obviously those things would pull policy in different directions. But the bottom line is growth projections have been lowered. And inflation, almost all participants agreed, could prove more persistent than expected. In other words, the Fed, funny enough, believes itself to be well positioned to wait for more clarity. That is, they don't know what they're going to do, and they're not going to say anything specific. In fact, as much came out, it would seem, when Chair Powell met with President Trump for the first time since 2019 today. The markets seem no wiser. If we look at the range of expectations for second quarter GDP, never mind the actual GDP now forecast, that's still evolving here with incoming economic data, and the next update is due tomorrow. But the range of expectations from market economists here is extraordinarily wide, from negative 1% annualized to 3% annualized. So nobody seems to know what's going on, and most importantly, nobody seems to know where the economy is going. We did get a revised set of GDP numbers today that gave us a slightly smaller decline, 0.24% versus 0.3% initially reported. The upshot still basically the same. A surge in imports and a surge in inventories as companies front-run the tariffs, but still the weakest consumption in almost 2 years. The reference point there going back to the second quarter of 2023. And of course, that's the scary part of the story, because consumption is 68.5% of GDP, and everything else is not even remotely on the radar. In fact, when you net out exports and imports, which is how they go into GDP, net exports, exports minus imports, the impact is something on the order of 4.5% of GDP, as compared to obviously a much, much larger share for consumption. And this is where things get interesting. Because if the Fed doesn't know what's going on, if the markets don't know what's going on, and if the tariff conversation has been pushed out for who knows how long, the real question is, how much more uncertainty can the economy bear, and what will be the economic impact of that uncertainty? Because what we've seen clearly is businesses are front-running the tariffs, trying to build up as big of an inventory as they can before some of the higher tariff rates bite, but consumers have been led away from spending. They clearly are uncertain here and have become defensive. And that's much more significant. With that in mind, we look to PMI data coming out over the weekend from China and on Monday from the US, perhaps most critically showing that manufacturing in both economies is in contraction mode. Of course, PMIs, as ever, operate around a center line of 50, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So here, Chinese manufacturing expected to contract at a faster rate. U.S. manufacturing expected to contract at the same rate as in April. New orders seen contracting at a faster rate. A bit of a pop expected in prices. Not surprising, of course. In fact, we saw in the PPI data last week that the prices for companies are surging. They're just eating it and not passing it on to consumers and taking lower margins. China's overall economy, with a tepid rise in services, is expected to basically end up at standstill. We'll see what the ISM version of what the U.S. economy is doing is going to look like once the service sector numbers come out later next week. But in all, these numbers have pointed to standstill for the U.S. economy. And that, of course, is a problem for the whole global economy, because the U.S., the Eurozone, and China make up 58% of global growth, and most of the remaining 42% are vendors to those three and depend on those three to generate demand. So 58% is, as large as it is kind of an understatement. Now, if we then get into a place where the markets are unsure and the Fed is unsure, and the Fed is going to let whatever economic downturn happen before it really knows that it's ready to cut rates. Again, apparently that's what Chair Powell told the president today. It's what these minutes suggest. It's what the latest policy announcement suggested. If that's where this is going, well, then we have ourselves a global recession threat on the menu. As a matter of fact, global growth is already at its weakest in just about 17 months. We're looking here at global PMI numbers, and we can see that they've been showing deceleration since early last year and have very much accelerated in that direction since the beginning of this year. Going down the big inputs here, the Eurozone, based on its latest PMI numbers, back in contraction mode. So no help there. China, we can see, is already looking anemic come April, and the numbers that we are expecting here, obviously, are not going to be much better. Here we have a composite of 50.2. We're expecting nominally better at 50.4, but still essentially the same story of anemic standstill. For the U.S., the S&P Global version of the PMIs gave us a little bit of a pop, but it was again all about tariff front running. We can see that here. Almost all of the contribution that really stands out here is from restocking, whereas employment is still in contraction mode and everything else is kind of still downbeat. Meanwhile, inflation continues to surge. All the input and output prices across both manufacturing and services showing that the tariffs are in fact exacting a cost. It's just companies are eating it and consumers haven't seen it yet, at least in the US. But they expect to see it because we're going to get revised inflation expectation numbers out of the Consumer Confidence Survey due tomorrow from the University of Michigan, and it is expected to show some of the weakest confidence, or confirm early estimates showing some of the weakest confidence since the trough post-COVID, and blisteringly high one-year inflation expectations, higher, in fact, by almost 2% than the COVID peak. Now, we did see a little bit of an improvement in consumer confidence on the Conference Board's version of this data, but how much does that help? It's still quite low, and this was largely around the trade deal, or at least the trade hostilities pause with China. But now the tariff situation has been thrown into limbo again, and who's to say what any of it means once again. So the bottom line seems to be businesses have accumulated vast inventories, which if consumers don't buy, then this is a non-performing investment, and that will diminish further buying downwind, because if these inventories aren't cleared, then there's really no impetus to keep buying at even a regular sort of pace going into the second half of the year. Consumers look defensive, and the markets look exhausted and feel like the sentiment improvement that we saw here is maybe out of steam now because it was largely around the White House becoming somewhat more digestible in its tariff policy and the markets becoming somewhat more acclimated to what's going on, but the stage has once again shifted. And the upshot here may well be that we're just going to position for a long slog on policy and a slide toward recession, waiting for the Fed to act if these PMI numbers are going to show up as expected. And that probably means weakness for cyclical assets like stocks. It probably means speculation on rate cuts later downwind showing up in the long end of the curve. So it probably means higher bonds, and by the same token, higher gold, and by the same token, a weaker dollar. We'll, of course, see if all of this holds with the benefit of 24 hours because the tariff story continues to be in motion. But Macro Money will be back next week, as we are every week after overtime, Monday through Thursday. I'm also on for Futures Power Hour with Chris Vecchio on Mondays and Fridays, on with Victor Jones for the Price of Truth on Tuesdays, writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back next week. Take care.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you believe the efficient market hypothesis holds up completely, or do you think that there's some merit to technical analysis?
I definitely think there's merit to technical analysis. I think technical analysis sort of identifies these greed and fear pockets in the market and where everybody is sort of trading around. So I think that's fascinating, and it gives you sort of areas of the market where people are clinging to, so you can choose to take advantage of that however you want to.
I think the efficient market hypothesis is perfect just the way it is, but I think that there's always going to be some sort of inefficiency, whether it be wide bid-ask spreads, illiquidity, in the rare cases of inside info or nefarious things. There's always going to be that aspect, but I think from the main point of efficient market hypothesis is that you can buy and sell right now at basically the same price, and that is very much true.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
What is going on, everybody, and welcome back to Risk and Reward. Today is Thursday. We got another day of the trading week left. We did put on a new risk last week. We'll go ahead and do a little tour of the market. We'll touch on what's been going on in the market and the positions that we've had on and managed. But before we do that, Gus, how we doing?
Doing good. Happy to have made it back up to Chicago after the antics that transpired on Tuesday.
Nice.
So always happy about that. I do have quite the cowlick on this side of my head, and it's on the back. I didn't realize when I looked in the mirror on the way out the door this morning. So I've just been walking around looking like a dummy all day. I can't get it to calm down. But yeah, and then bad day in the market. But you know what? Vibes are high. Bad day in the market for me. I mean, I'll get into that here in a little bit.
It's the hair. You're going to be superstitious about the hair. Whenever Gus got a cowlick, everybody run.
It's true. It's true. Yeah. Bad hair day and the market goes down. You know, these things, correlation sometimes means causation, guys. Sometimes.
Correlation at 0.9 right now. No, I'm surprised nobody told you. But with UNH not rebounding as much as we'd like it to right now, I guess a bad cowlick day serves. I guess it's only right. But anyways, we'll get into all the market talk and all the above. Is Ant the next face of the league before we even get into that? But I hope everybody's doing well. Hope everybody's having a great trading week. We're going to get into the platform here in a moment. But I don't know. Is Ant the face of what's going on? I know he's only 23, Gus, but your guy is, I don't want to say slacking because he's not slacking, but it's not panning out the way I guess I would have thought. So can we get a little insight on that?
Of course, yeah. Bob, what's up in the chat? Misdemeanor, thank you for the compliment. I appreciate it. I've been told I have a good wave pattern, so I may perhaps that's got some credence to it. I don't know. Maybe my hairdresser is just working on me for more tips, you know. But yeah, I think Ant very good next face of the league case. The only thing to me, as far as being the face of the league and why I think, I don't know, maybe a Giannis or something could step up and fill that role is just because Ant is like, he's still young and raw, like even in his personality, like he cusses a lot and you know, and he does a lot of good things as well. I don't think he's a bad person by any stretch of the imagination, but I've seen him rattle off, you know, 4 swear words in a 20-second period in an interview before, and so I do think that perhaps the NBA would want to protect their image a little bit on that front. You're muted, by the way. I think
family friendly. He's not family friendly enough to make him go global like that. Like he's got to be able to, 6-year-olds got to be able to watch him in the household and see his personality without
exactly. You would like the face of the league to be something that all these little kids can look up to and somebody that they want to emulate. And so, you know, when you're on that type of stage with those types of lights on you, little things like swearing, which is something that I absolutely do 100 times a day, really start to reflect a lot more negatively on you. So I think that there's just a little bit of immaturity there, I guess is the way that I would quantify it best, which is fine. I am older than him, so you know, it's very, very reasonable to still be a little immature. I certainly am myself, but I think that's a role that he would have to grow into a little bit more. And SGA exists also, and looks really, really good, and is very young also. So,
that's a great point. As we jump into the platform here, I mean, you're right. I mean, you got to have all the variables to be able to be marketable and things like that. So, I mean, I do get it. I was just a little surprised by the performance. I was going to say one more thing, but it'll come back to me here in a moment. But regardless, I think it's going to be exciting. It's always cool to just see the beginning or just see young people like do well. That's why I'm such an Ant fan. Oh, what I was going to bring up was as we get into the platform, have you seen the Open the Vault TikToks that's trending now? And it's pulling up clips from like LeBron in 02. And like everybody that was like is like 15, 16 years old right now, 18 years old, you know, are like, yo, I've never seen these clips. Like these clips have existed, and then like it'll be like hashtag we done with the 90s. But anyways, I thought those were hilarious, and I think it is funny. It really does show how kind of dominant of a player he was. But I'll get off my soapbox here, Gus.
Yeah, it is crazy. LeBron's longevity is insane.
It's
that's something we could go off on a whole different tangent about. Bob, Thursday Night Sports Talk, just like the old days. That's a good pull, Bob. I respect it. I appreciate you being a real fan when we were doing the sports shows on Thursday night. That's solid.
Oh yeah. Market's selling off a little bit here. We had an insane rally post market yesterday. I know Nvidia was popping off after hours. Not good on my end. Dr. Jim got me into Nvidia earnings. I mean, I got myself into Nvidia earnings, but we were trading a little bit of Nvidia. Nvidia really popped off to the upside, really dragging the rest of the market up with it. But the market had an extended move to the upside. I know there were some conversations around, you know, some of the tariff actions being blocked or not going through. A lot of those conversations mixed in with some of these big names like Nvidia releasing earnings. We found ourselves with an absolute tear to the upside whenever the market opened up today. We sold off a little bit as we got closer to market open, and we can give a little bit of a visual. But it was just an insane rip to the upside. I was like, is it time? Is it time for all-time highs? But we gave a lot back right before market open, and then we gave more back as the market opened. And we then took out yesterday's lows. And then we closed right around 590-ish on SPY. So volatile day. The volatility index wasn't doing too much, but I mean, it's a start. We're getting a little bit of a pop, really contracted here now. Is VIX options calling your name yet, Gus?
Yes, it was something I was going to get into in a little bit, but I have opened a VIX position, closed pretty much exactly break even. I'm in the green by $2. I bought August 20th, 17 calls. I wanted, it's naked. I wanted something that was in the money. I didn't want any risk of theta, but I wanted a nice solid 60 days of exposure. I was going to do, it was July 2nd or August. What did I say? Yeah, July 2nd or August 20th were my options. And July 2nd didn't feel like quite close enough. I believe we decided that 90-day pause date is July 7th. So I wanted to make sure that was in there. But I think that anybody who's been trading this market would agree that it is more likely than not we have a volatility event in the next 82 days. So I finally put some exposure on for that. That also acts as something of a downside hedge to the rest of my portfolio, which is incredibly long delta. So I wanted to make sure I had something to that end as well. And speaking of downside hedges, I made a bad trade last night. I put on some short. I got short Nvidia, and it was a lotto to an extent, but also my thought process was that if Nvidia goes down, it's going to drag the rest of the market down with it, and my whole portfolio is going to be bleeding. So I really want some downside exposure on the market maker, and that would act as a little bit of a hedge. And if Nvidia goes up, this position, it was 2 DTE. It expires tomorrow. And if Nvidia goes up and runs away from this thing will be worthless, but that should be enough of a market-wide pump to, make it all cancel out. And I would be at zero sum. That was correct logic. Nvidia moved up, the contract went to zero, and I opened this morning down like $20 or something, pretty much exactly break even. But what I did not consider was that the market could just run down for the entire time today, and then I'm left holding this worthless Nvidia position, and I go down in a lot of other things. Yeah. And that's what wound up happening. So I split the middle. I was playing directionality, and we got very little of it, not enough for me. So that was the driving factor for my bad day today, and I would have been better if I just did nothing. If I just did nothing at all.
No,
it would have been better.
I hear you with NVIDIA. It's in the portfolio right now. I have a longer term NVIDIA position on there, but I mean, the moves that NVIDIA is making right now is not helping my case, at least. But this sell-off is looking favorable. So we'll get into some of these positions. But I feel you on the NVIDIA position. That was really one that had most of my attention today. UNH has been a little bit slow. It even went into the red a little bit. I mean, we're green now, but this one has been a little slow.
Yeah, they got another lawsuit now.
Oh, is that what's going on?
Yeah, they have another lawsuit now that they were using their employees' 401ks to make their own earnings look bigger or something like that. Somebody can correct me in the comments if that's wrong. It's definitely something like they were using their employees' 401ks. I'm just not sure exactly what it was for.
I got you. I hear you. Well, I'm hoping, that sounds like some negative news, but hopefully we get an opposite reaction in the market because we're long right now. But we did do a little bit of a double dip. I know we all kind of got long that day where we sold off to the downside and then sold off after the initial pop. And now that we pulled back a little bit, I'm gonna get long again. So, I mean, if we make new lows, I'm cooked. But I mean, if we don't, it should be another really solid position. So we'll be patient with UNH. It is defined risk. So everything is managed the way it should. We'll see what the outcome of that is. SPY, this is a longer dated position. I feel like I talk about this position every week. I think I might have put this one on at like 50 or 60 something days while it's been in here forever. But need a little bit more, a lot more downside on SPY to manage this one. And then we got QQQ. Took this one off today after we gapped up. Once we opened, and we didn't hold that massive move overnight. I was like, all right, let me take off this long position. I'll take what I can get. I forget what I received on that, but we milked it a little bit. So managed that one a day earlier. And then NVIDIA, kind of to the same point that you were talking on. NVIDIA just an absolute face screamer to the upside. I mean, I thought NVIDIA was kind of cooling off in terms of volatility, but I mean, NVIDIA is still that guy in terms of volatility. I found out last night. So I did have a butterfly onto the downside, not working out too hot, but I mean, hopefully something magical could happen and we can have an insane sell-off heading into the close, because NVIDIA is having a really difficult time holding its gains from the earnings announcement. And then we have Disney, slower mover. We put this one on last week for the risk of the week. Just bought an we bought an at the money put option on Disney, sitting at around break even. This one's fluctuating plus or minus $50 right now. So I mean, we really haven't gone anywhere too exciting. And then the micros on NASDAQ, I'm really glad this one was able to hedge that earnings from NVIDIA. This was a swing position. I believe I put on this short after the rally post-market. It was one of those short opportunities where it was like, yeah, I'm okay with getting short around this range, but I did not expect it to reach there in the next hour or even the next week. So we got a massive move overnight, wanted to take a short. This one, I think it was after hours. It was sometime after the NVIDIA release. Let's see, we started entering some of this 9 o'clock, somewhere in here. We won't go through all of that, but took the short this morning when we opened up. We sold off a little bit. I covered the position. It was one of those where I was really going back and forth. I was like, yo, do I want to swing this? Because I did happen to get a short position near the top, and it's like I could set my risk to stay at the top and potentially offer a lot more downside if the market chooses to continue to sell off. Just because if we zoom out on NASDAQ, I know we're getting some downside, but I mean, the market has still put in such an impressive run since the beginning of April. I feel like we bring up the beginning of April so much, but that's a massive move in such a short amount of time. So wouldn't be too surprised if we get some decent downside that I was hoping for, but ended up closing the position and calling it a day. But that's what we got going on over there. Nothing too exciting. Again, mostly it was NVIDIA that was causing some issues today alongside you, Gus. But that's what we got today.
Yeah, similar boat for me. Yeah, just bad day, driven by NVIDIA mostly. But yeah, nothing really to write home about. The NVIDIA position itself is the only thing that would objectively look like it's in any danger in the portfolio right now. And that was one that's expected to be dead in the water. I do have a Google position that's printing for me nicely. ADTE on that will probably exit sometime midweek next week. I don't need to hold that necessarily right up to expiration. But this was something I took way at the bottom, which honestly, I've just been kicking myself for not buying more at the Liberation Day bottom. And I bought a lot. I mean, I tossed probably 50% of my portfolio out, just snacking up shares and verticals and everything I could down there at those lows. But word to Leonardo DiCaprio, the only thing I regret is that I didn't buy more.
Bro, that's exactly what came to mind when he said. I was like, don't say it. Don't say it. Intrusive thoughts. Don't say it. The intrusive thoughts won on that one. So the verticals are looking really nice. I bought the 145, sold the 150 call. So seriously, no danger there. It would take some standard deviations. You sold the what?
I sold the 150 as my top.
So.
Yeah.
You're a big chiller.
Yeah. Oh yeah.
Oh my goodness.
It was and this was out of the money when I bought it. I mean, this was like as bottom could get down there. So yeah, that's actually panning out to be one of the bigger winners of my career. I took 3 of them, so I don't regret not buying more here. I do have 3 of them. But yeah, and then Qualcomm is burning a hole in my pocket. I need this to do something. We had nice little bull flag going. Yeah, you can see it here real well. Kind of, I don't know, 6 to 10 candles ago, there was some nice consolidation happening, and I was liking these levels. I like Qualcomm in general. I feel that they're not getting enough credit for their contributions to the AI space right now. They're really pushing hard for like on-device AI rather than AI that requires cloud computing and a server. So you, instead of, when you ask ChatGPT and it's got to go to their servers, generate an answer, and come back to you, they're working on localized things, which I actually think will scale faster once the time comes and everybody adopts AI. So I like Qualcomm in the long term, but I was playing a mostly TA play here, a little more TA heavy than I usually like to be, and it's not panning out for me so far. July 18th is my first expiration, and then I have a second contract for August 15th. So if either one of those can work out, even if I split them, I think I would break even. But yeah, I need it to go somewhere fast, and it has not been going anywhere very fast.
I hear you. I mean, we might get some volatility here. That was QCOM, right?
Yeah.
It's looking like QCOM's kind of looking like the rest of the market. It's a little bit of a slower mover, though, kind of to your point there. But is there anything else you're eyeing for the rest of the week? Anything else you want to throw on tomorrow that you're eager to get on? Or will it be just business as usual for tomorrow? I
got this thing falling out of my ear. No, there's nothing. Wouldn't say anything I have my eyes on for tomorrow. I am kind of keeping my head on a swivel because there was some comments from Kevin Hassett, who I referenced on Tuesday. He's National Economic Council Director, I believe, today that was saying that Trump could ask basically, Trump could unpause the tariffs as soon as tomorrow was the core of his argument. And that was actually the deciding factor, was why I decided to go ahead and pick up the VIX on the EU, I should specify. He's considering lifting the tariff pause in the EU as early as tomorrow. So that was why I grabbed that VIX. Deciding if there's anything specific I want to put my eyes on to try to trade there. I don't really have any definite angles to this point, but might try to short the EU a little bit if I can.
Yeah, we'll keep an eye on that. I'm curious about those trade talks and how things are still going to pan out. It still kind of feels like we're in that limbo phase. But I know we were building our watch list for risk and reward. Let's go through a little update. And if
let's take a look at SMR real quick. I wish I was holding more than I am. This is one of the ones on our risk and reward watch list here.
Wow.
Yeah.
What was the news over here?
Quite the move. I don't remember exactly. Something like there's big government subsidies going towards nuclear is basically the TLDR. I think that broke 2-3 days ago now. But yeah, it's been quite the move for SMR, and then GE Vernova is the other one that's moving. GEV is the ticker.
Okay.
They got a similar vertical line. They're the ones that are specifically getting the government aid. Or somebody in chat, help me. What's happening? Some big investment, some 9-figure thing going on with nuclear. I don't know.
Big money.
But yeah, that's big interesting. Money. Had to kick myself because I'm actually not currently holding any SMR, and that's something I love nuclear. That's something I'm really high on. I was kicking myself for not catching that move. Yeah.
Yeah, especially with all the long delta you were throwing out there, SMR didn't get any love.
I know. I have some. I do have some in my personal portfolio, so it's okay. But this one, I'm not as loaded.
I'm actually keeping an eye on this one. I'm probably going to end up trading this one. Just looking at the premiums, I'm probably going to go undefined risk. I'll be mindful. I know this thing is popping off right now, so I'm mindful of it. But I'm going to be looking at this for tomorrow for sure. If I get it up, it'll be on the follow trader page. But just seeing something like this, I mean, really solid liquidity. IV rank sitting at 47.5, 20 million shares. Not going to run into any liquidity issues. Premiums aren't too attractive or that attractive for defined risk. It's looking like, because I'm pretty far out, and the premiums are decent for defined risk. So it is a cheaper underlying, maybe an opportunity to do something naked in here, or even just buying out of the money or buying at the money put or something along those lines. I don't know, but that's probably one of the bigger rallies I've seen as of recently.
Yeah.
Outside of NVIDIA's earnings,
quite a move. Didn't get as much attention as I thought it should either. It's crazy what these nuclear things are doing. AI is driving me nuts. Keep trying to get them to do simple things, and they keep screwing up and telling me they fixed it. Yeah, it is AI. I'm certainly very bullish on AI as a whole. I mean, I do think that this is the future. Errol and I have made comparisons to the internet, the advent of the internet, a lot. But the AI right now, it's like it's not ready enough, but is also being pushed on us too hard. Like there are just I've vented about this before on this show, but people are putting AI places where there does not need to be AI yet, and sometimes it will only make your experience harder. So yeah, I can definitely relate on the on the front of trying to get them to do things and they keep screwing it up.
Definitely, especially I know we touched on it again, but especially when it comes down to the customer service, talking to a robot is just the worst. Like, excuse me, I think the quick, frequently asked questions, having AI set up for that is like, okay, that's perfect, that's solid. But man, having AI set up for customer service is still just one of the most frustrating things. I was on the phone with Domino's the other week, and I was talking to this lady, and she sounded so much like a robot. And then I thought it was a computer. And I said, speak with the representative, please. I was like, can I just speak with the representative, please? And she goes, I am representing, starts sounding like, oh, I'm a real person. I was like, you're so professional. I thought you were an AI. I'm so sorry. My bad. You're totally, I was like, yeah, I'll get this, whatever. So,
man, that's funny.
Yeah.
Yeah, I do think that customer service is a very interesting and potentially profitable avenue for AI, though, and somewhere that I would like to see it be integrated more because, yeah, the existing robotic paving on the phone sucks. And so if we can get a ChatGPT caliber, conversational AI on the phone with me, I'm fine with that. That saves money for the companies. And I think that you might reach resolutions quicker. I don't know. It's tough. It's just tough because I want to say, oh, well, if you have a problem with any nuance, it's going to have more trouble with that, but it shouldn't in theory if you train ChatGPT to know the ins and outs of your company or whatever. So yeah, I don't know. I think that's interesting. I actually have yet to speak to a proper AI voice agent on the phone. Everything I've done has always just been real person or old school robo press number menu.
Yeah, no, pretty much. They're slowly going to keep creeping on in there. So we'll see how that industry pans out. Taking a look at your favorite, last but not least, Lyft. Looks like Uber and Lyft are taking a little bit of a hit right now. IB ranks are decent in both, but they were both kind of trading at their higher ends in terms of price. A little bit of a sell-off here in both of them. So maybe something for the whole sector, not too sure. But also not looking too attractive on the premiums on Lyft at least. But I did add GEV, I believe. Yeah, so I added GEV. We got that in there. We got SMR in there. I would use SMR for risk of the week next week, but I think I want to put this position on tomorrow. If I don't feel like putting it on tomorrow for whatever reason, I might save it for next Tuesday. But I want to put it on tomorrow, so SMR is going to really be on my watch list. And then checking out Steel real quick. I know Steel had a massive move to the upside the other day. Still hovering around these levels. That's on the radar still too. That the fact that we're stalling here a little bit. So premiums are decent. Might do something in here as well, but would buy an option because selling something out of the money. Not too juiced up right now.
Yeah, it's interesting.
Not too juiced up.
My eyes just glaze over when we get to commodities, man. I'm not a commodities guy.
And honestly, I'm not the biggest on commodities either, but steel was just one of those that was a cheaper underlying. I keep bringing up those two events where steel dumped on me because of the negotiations didn't go through. But outside of that, I do like the price behavior of X. Like, it doesn't typically have any type of price movements and it's so ironic I'm saying this as we stare at a massive green candle, but it doesn't have that many moves that really catch you off guard like that. That's why I like steel. I was able to do some naked positions in there because it's a cheaper underlying, not as much buying power, all those things. So that's why I was growing a little accustomed to steel at least. But that brings me to gold. Gold was ripping a new one to the highs. We've been consolidating here now, kind of making lower highs on the way down, but it might not be done yet. Gold took out the lows from all of last week and then put in some new highs for the week, at least. And we closed pretty strong. Maybe that's making a case for more downside on the overall market. I don't know, but I know one thing I won't do again is have a short position on the overall market and a short position on gold. Just a massive conflict of interest for me internally, at least. So I'll be looking at it from that perspective. You doing anything in gold or silver? I know gold and silver. I know you give those a little bit of love, at least a slight attention, right?
I do. I certainly at least pay attention. Nothing. Yeah. Not eyeing anything right now. Honestly, I feel like being long VIX is almost similar to being long gold. It sort of acts as a downside hedge against the rest of the market. Although gold obviously acts more as a hedge to the dollar itself, while VIX is more of a market-wide situation. And also VIX, and maybe I've gone on this soapbox before, but I feel like VIX never moves on volatility to the upside ever. And I understand that this is just a stairs up, elevator down type situation. There just tends to be more volatility as we're coming down. But like some of those days we're covering out of the Liberation Day sell-off, we are mooning. And I mean, we had the one day that was like the 7th greatest earning day in the history of the S&P. And VIX just doesn't really react on it. It's like VIX is it's odd. And I don't know, maybe there's some greater mathematical nuance to volatility that I just don't understand. If anybody would care to enlighten me, be my guest. But yeah, VIX, I almost feel like it just operates more as a downside hedge, but not like an inverse ETF. It acts as a downside hedge for fast downside, which is interesting.
Yeah, no, I see the point exactly that you're making. And I mean, I'm hoping we get a pop here soon too. So you have to let us know how those options that you have in VIX play out and kind of how you see it, just the lifeline of that option whenever we do get the pop in VIX, because the pops in VIX have been pretty aggressive. Even though we're not getting them all the time, you can see whenever we do get a decent pop, it's a pretty decent sized pop. They don't last long, but we'll see what we get here soon.
That we will. Yeah, Bob said Florida passed a bill to make gold and silver legal tender. Holy cow, that's funny.
Oh wow! I need to go find my.
Yeah. Oh yeah, you're there. Yeah. Go, yeah. Head to McDonald's with a gold nugget or something. See what happens.
I know. I just saw a video pop up as we wrap up here. I saw a video pop up. This guy going to the gym. I mean, we've seen these pranks before, but he was like trying to pay his gym membership in all pennies. That's what it reminded me right off of the bat. Just like, what are we bagging the 1800? Why we're trading coins still? But no, I know also. We're not printing as much pennies either. And I know there was a conversation around pennies, all that, but it's like, I really don't see too much change around. I know cash is going down, but especially holding change. You don't got any change in your pocket right now, do you?
Oh, no, never. I have a little tray in my car with change for whenever I accumulate it. But yeah, I never use change. Sometimes it transfers into the coffee container in the top of my closet where I have my stash of all my change.
If you don't have coins in your cup holder or somewhere in there, I don't know if I trust you, but if you do, you're all right. Now, anything else to add before we hop on out of here today, guys?
Nope, got nothing else. Don't want to run over our time here and step on Victor's toes. We'll get out of here.
Awesome. Well, that's going to wrap it up for today. We'll be back next week, every Tuesday and Thursday at 4:30 Central Time. We'll be putting on new risks of the week, and we'll be coming back to manage it. Thanks for taking the time to hang out with us today. We'll catch you guys next time. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to University
of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Regulation time may have expired, but the conversation is just getting started. This
is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Yeah, it is Thursday, May 29th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. You ever a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And oh my goodness, a little stop and reverse action for you today. Who likes to play Uno, huh? A little reverse card, a little skip, and then a reverse card thrown down. We live in the Banana Republic, my friends. More on that in just a bit. Before we get there, let's say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, no, this chat box on your screen, my bad. If you want to be part of that little chat box, there's only one place you can do it, and that's on the evil Google YouTube. So head on over to the YouTube channel, find Tasty Live somewhere, subscribe to the channel, and then your thoughts, both appropriate and otherwise, will start streaming in front of these people. No moderation either. Straight chaser or straight shot, no chaser. But if you talk crazy, we'll have to do something about it. So just come on. Have some sort of sense of self-restraint, you animals. Shout out to everybody in the chat. I'll quickly shout you out. It's been a while since I had the opportunity to do this. We've got all these fancy guests on, and I can't say what's up to the people. Victoria, how are you? Catan, Chaz, Emmett, how are you? Thanks for those very kind words. Theta Trader, how are you? Oh my goodness, Cato Prime, Lone. Did I say your name twice? If I did, go buy a lottery ticket. Nicole, how are you? The whole gang. Osborne, what's up? Gregor, I would say what's up to all of you. But I'm not allowed to. I was reprimanded several times for doing so. But I'm going to get him in there whenever, however I can. Shout out to all of you. Thanks for being with us. Hit the like button if you would so choose. But the most important thing is to, get those metacarpals and phalanges moving on the keyboard. Even bash your face into the keyboard if you have to make random ass characters and spoof the Google algorithm into putting us in front of as many people as possible. I bet you guys, some of you guys can say that open by yourselves. I think if you've come here enough times, you've heard that open like 1,000,000 times. But shout out to all of you. What a day, huh? Turns out it's not all about NVIDIA earnings after all. What a beautiful setup for an okie doke, They rally them 2%, something like this overnight. That's how you know. Rally them 2%, something like this overnight. You come in, that's interesting. They're only up 1.5% now. Vol futures kind of ticking up a little bit. It was just the perfect okie doke, You get the all clear from NVIDIA, which is totally not, it's not relevant at all. Had a $9 implied moved $6. Ended up only moving $4. And it just had that feeling, it had that perfect setup for a rug pull. And we ended up getting it. Most of the equity majors moved down to basically unch for most of the day. S&P cash ended up around 0.25%. The NASDAQ, though, which is the one I was throwing spears at, ended up 0.1%. The Dow Jones up nearly 1/3, and the Russell up about 1/3%. Those are the cash closes that I'm reading to you. Obviously, sort of the big news of today, at some point in time, the court. I don't want to mess up the labeling of the court system. Yes, the U.S. Court of International Trade earlier today, or it was yesterday actually, the U.S. Court of International Trade found the utilization of the 1977 IEEPA Act to impose tariffs was unconstitutional. So that was the news yesterday, headed into today. And my immediate thought, and I started listening to some of the people in Trump's economic team talk, they said there are other options. And I was like, okay, well, what are those other options? I went and sort of did some digging, and it seems like there are 4 other statutes that they could utilize to impose tariffs. One, they could do almost immediately. It doesn't take sort of an investigation that the other 3 need. But you can only implement tariffs under that statute for 150 days. And the other 3 you could do is some sort of bureaucratic investigations, potentially get something done there. Or obviously you're going to appeal, and the second thing you have available to you is to potentially escalate this. Who knows? Maybe the Supreme Court would take this on. But immediately my thought was, I think the market response, it looked as if the market was showing some sort of relief about this idea that the court system had sort of had deemed these things unconstitutional and effectively gave them 10 days to remove these tariffs. They had 10 days to remove these tariffs. And to me, I thought, this is not, just think about the distribution here. Yesterday, I knew what was going to happen. Maybe I didn't like it. Other people didn't like it. Maybe I did like it. But the point is, I don't know the status of all these trade negotiations, but at least I know the rules and I know the incentive structure that all of these negotiations are taking place under. And I think some people saw the potential for the courts to overrule this, because there are several challenges in the courts. This isn't the only one. And so this change, in my mind, it created way more uncertainty, because you have to ask yourself, okay, how does the administration respond? And I'm like, it's unknown. It's completely unknown. They could go hard in the paint with a new statute, and it could change the incentive structure and the negotiation process. If they go hard in the paint, they could use it possibly as an out to just get out of tariffs altogether. I saw that as a very low probability, but it is a non-zero chance. So all of those things, I thought, okay, this is way more uncertainty than I had 24 hours ago. And then I added an additional element to this, which is, if you're in trade negotiations right now, if you're having discussions with the United States, and you're doing this under the premise that the United States has created this leverage with tariffs, and now all of a sudden there is uncertainty as to whether or not that leverage actually exists, would you continue those negotiations in good faith, or would you slow walk them to try to let these things play out in the court? Because ultimately, whatever leverage the U.S. might have had at the beginning of the negotiation, they might not have at the end of the negotiation, which changes the whole structure of the potential deal. So then I thought to myself, well, you're probably going to get a lot of trade negotiations that are going to be slow walked at this point. And that's not necessarily net positive for assets, I don't think. So for all these reasons, yesterday I had the exact opposite impression of what this news would end up meaning for equity markets than what they were doing. And sometimes that just happens, Yeah, and by the end of the day, so one of the interesting things is the Trump administration had immediately been ready and filed for appeal. So a few hours ago, if I'm not mistaken, it was a few hours ago, the news drops that effectively, I think there was just a stay on the tariffs, that they do not have to remove them within the 10 days. And the appeals court could end up siding with the lower court. I think they're still working. My current understanding is that that has not been decided, but the tariffs do not need to be removed at this point. And I'm thinking to myself, what a wild world. I mean, this is the global economy we're talking about. And you're in the middle of what are likely probably pretty robust negotiations. And the whole aspect of the leverage in those negotiations is just called out in questions and then reaffirmed in a way, but it's still not, the appellate court could still side with the lower court. To me, again, I don't know how you come out of today and you go, the world is much more certain than it was yesterday. I don't know how you do that. To me, but maybe I'm seeing it a little bit wrong. Let me know how you guys are thinking about the events that took place today and how risk ended up playing out. Let's see. Mark says, I guarantee if this comes down to Trump pressuring Congress to allow taxes, it's a no-go. They're already screwed for the midterms. This was the other thing I thought about. I sort of played this through, Mark. I don't know if I want to do this early in the stream, because I had a conversation with Tom. And one of the things that Tom was thinking, he was leaning, is that Trump would use this as an out and just sort of get out of the whole tariff thing. I think that is an extremely low probability, but I allowed myself to think through what would happen in that scenario. He's got two options. You can either fight or just use it as an out and say, hey, I was blocked, I did my best. And I think if he used it as an out, I'm like, okay, that's like, we'd go to 7,000. We'd go to 7,000 in the S&P. And the administration would pivot into being a cheerleader for the stock market, just the way they were in the first administration and the same way the Biden administration used the stock market as some sort of barometer of the health of the constituency. And I thought to myself, well, then it's only a matter of time before the bottom half of the country figures out. That's what I had last time. I told you I didn't care about stock market at all-time highs. That's why I put you in there. I got a bunch of culture war stuff. There's no new job prospects. In fact, what likely happens is unemployment rises a bit. And by midterms, people, Dems win midterms. They flip. The Congress goes locked. And whatever progress, and I put that in air quotes because some people, his base probably sees things that are happening as progress. Opposition probably see them in a very different light, but I'm talking about this through the base's perspective. They see even less, quote unquote, progress with a locked Congress. And I thought the political pendulum completely swings in 4 years, completely swings the other direction. And I allowed myself to think through, okay, well, now you have probably a pissed off electorate who's tried everything between Obama, Biden, and Trump. They are very clear that they want economic populism. That's what they thought they voted for. And they are, if this, in this line of thinking, that doesn't happen, what would they want? Well, they would look for economic populism on the left. And I don't think they'll get it. I think the Dems, at the exact time that the people would be open to economic populism from the left, I think they're moving towards to the center. I think they'll end up running some governor with low name recognition, with as little amount of baggage as possible. And I just, a lot of this is very related to risk assets, but then I thought, okay, well, what would I buy into that scenario? And a lot of it's like China, probably more war stuff, a lot of tech control type instruments. I think clearly that's not going to be the case. It looks like they're not going to use this as an out. And the results of the appeal are kind of further evidence that that's likely not going to be the case. There's going to be a low probability. But what a wild 24 hours. What an absolutely wild 24 hours. Only thing, Victor, countries won't wait for U.S. tariffs. They are creating their own supply chains. They're creating their own supply chains. You mean, we're not necessarily part of the supply chains, though, Catan. We're the end users. We're the end demand for a lot of that stuff. I agree that wherever there is volatility in a supply chain, people are working through that right now, and they're creating redundancies. But that probably works for a lot of businesses and countries that want the U.S. as the end consumer, right? People are probably diversifying their supply chains out of or away from China to some extent, into Vietnam and other places, Indonesia, stuff like that. I do agree with you. I don't think people are waiting. They're trying to figure out how to remove volatility from supply chains. But I think it's really hard. I think it's really hard to pick a strategy right now. Anyways, vol cash VIX at 1918, futures, front month futures at 2010, vol term structure lackadaisical, man. Lackadaisical. And the thing about this is I'm not necessarily fearful. It's just it's sort of a risk and reward play. Some part of me, I know we're at 20 and 20 is not really cheap, but relative to what could happen, I don't know. Some part of me wonders whether or not I'm going to say the thing I shouldn't say on this channel, like buying some upside premium here, some volatility is an interesting bet. It somehow seems like the institution of America, it's shaken, man. We're moving too fast, These big institutions, I said this at the very outset, that not only do you have big changes, but you have lots of changes being introduced all at once. And anybody that's managed change through an organization, you can do that when you have really small, fast, and flexible teams, or if you have really efficiently designed organizations and a culture that accepts, allows, and even wants change. And I don't think any of those things are true about the institution we're running here. It's not efficient. It doesn't fully accept or want these changes. And it seems like, man, this thing is shaking at its base. And it's very interesting to me that the volatility is not being, it probably is being expressed. That's probably why I'm looking at $3,300 gold. That's probably why I'm looking at a 1% gain in silver today. That's probably why I'm looking at 106,000 Bitcoin. Interesting move in Bitcoin today, I think. That volatility has probably been expressed and then distributed out into assets. But some part of me thinks vol seems cheap, and that's weird to say when vol's at 20. Am I crazy? Probably. The answer to that's yes. What's up, Donna? Great to see you. Taif says both upside and downside volatility is relatively cheap right now, especially if you're picking specific stocks and sectors. I kind of think that's true. I don't know why I did this today, but for some reason, I I did the thing that you probably makes no sense. I went and bought. JD.com was up like 4% today, but it's still cheap relative to itself. Pinduoduo, so like all these Chinese consumption stocks that have been bombed out. For some reason, I wish I had a better thesis. One, I hold both of these already. These things are cheap relative to themselves, so I thought, why not add just a little bit to the position? If we're in a world where this whole tariff thing sort of ratchets up here, which is very possible, this is not going to be a great bet. But I sort of think these things are getting cheap on a relative basis. So I went in there and I bought a little bit of this stuff. Probably going to be a horrible bet, but sometimes you just let price tell you what to do. Chaz says Doge was successful. They dealt swift blows to CFPB, the DOL, the DOE, OSHA, VA, NOAA, airline industry. I can't tell, Chaz, you're being, if there's sarcasm to that, or you're being straightforward, if that's your true opinion. Some part of me feels like they got the Social Security data and got out of Dodge. It's like as soon as they got that Social Security data or went in through much protest, they never touched the Pentagon. Elon says, okay, see you, everybody, I'm out. He takes off. Bots explode on Twitter. It's like he's like, F Twitter, I don't care anymore. F Doge, who cares? We got what I came for. Let's put the Social Security data in our AI. I know that's a crazy conspiracy theory, and I don't think it's true, but some part of me goes, I think that's why Tesla has a higher valuation. Because the market's going, I think you got that data, bro. And I'm going to give you credit for it. That nothing I'm saying is true. This is aluminum foil, tinfoil hat stuff. But it's not 0%. Bonds at a nice little rally today. Another point added for the good guys. We're at right around 113 here today. The curve's not really moving. Still 51 basis points. And the Fed odds, man, they are just slow walking this. They are slow walking this. But the market not pricing out September yet. Still 81% that you get a cut in September. And still a decent probability that you're going to get a second in December. What's to gain by the Social Security data? Oh, man, Steve. So, okay, here. Let me just say this. If there's a woman named Catherine Fitz, and she has theories about sort of this control grid that these tech titans are after, that they seek to create, and one of the necessary components of this would be the Social Security data is sort of this gold mine of who gets paid what and how is that money dispersed, what's it spent on, and if you were going to create sort of this social credit system, that would be one of the things that you would want to gather and feed to an AI. It's a wild thing that I'm not necessarily advocating. But if you're interested in going down that rabbit hole, her name's Catherine Fitz. It's a very low probability of your liver wake up with marmot standing on your chest and staring at you, but still never zero probability. Jazz, don't take the bait. Thank you, my friend. I'm quite proud of myself for picking up on the fact that was a troll. So yeah, we're up to 113. It is a boring, sloppy trade, but we are moving to the upside. So at least we got that for us. ZT, on the other hand, kind of dead, but if anything, staying in this really tight range, moving slightly to the upside. So he still got this, and notes aren't doing a damn thing, man. Notes are one of the most boring trade on the board. They move like a point. So of all the things in terms of volatility, the back end of the curve is given the most, but it's still not moving that much. I'm still long the back end of the curve. Some part of me after today was like, should I be? if the U.S. court system is slapping down skip and reverse cards this quickly, but I'm still staying long, and it's mostly because it's a hedge against the things that I believe could happen. So I'm staying long the back end of the curve. I'm basically I'm neutral on equities. But really, if you look at what I own, I'm long a bunch of materials, long a bunch of energy, long some China. So I'm long everything except big tech, and I'm short NASDAQ over the top. So even though my portfolio delta is basically neutral, I think it's like 80 or something. It's almost exactly flat. The stuff I'm long versus the stuff I'm short, I can definitely see a different, if tech stocks come down and other components move higher, there's definitely room for outperformance, and same thing to the other side. How do you play the rest of the week? Today was a really interesting day. Day one or a fluke? Day one or a fluke? Sahil says, what's up, Sahil? You think Trump lashes out with more tariffs over the weekend? More tariffs. I don't know. He would first they would have to come up with a strategy for how they're going to do this legally. So they probably wouldn't do it under the same statutes, under the same sections of the law. So I think they probably want to come up with a new strategy. And I don't think he wants to use tariffs for tariff's sake. I think he's only going to threaten new or more tariffs if a negotiation isn't going well, if it's not moving quick enough, or if from their point of view they're not being offered enough or a quote unquote fair deal. I'm guessing that's probably what those EU tariffs were the other day. That stuff's not going fast enough, it's getting buried, or people aren't coming to the table, and so you threaten that, and then within 24 hours, 48 hours, you suspend them. But it's the stick in a negotiation. So I don't think they'll do it just to do it. I think if they're not getting movement on negotiations, and that's very possible, given what just happened in the court, maybe some people slow walk it, and then he feels he has to use a stick to move these conversations along. I think that's possible. I think it's impossible to predict, though, Sahil. I think it's a losing game to try to try to guess when or if he's going to do that. I think we just trade the numbers. If the number is cheap, we buy it. If the number is expensive, we sell it. And then at some level, that's what these guys are doing too, If they feel like they're playing with house money, in other words, assets are inflated a little bit, I think they take more liberties. If yields aren't sort of on this 5% borderline of making it really difficult to finance $7 to $9 trillion in new debt, then they take more liberties. If they feel like they don't have that premium, they feel like they're at a discount, they probably take less liberties. They say more dovish statements, to help get them back closer to neutral. Like, I think that's what they're doing. So I think we do the same thing. Quick look at the yield curve, man. Just absolutely wild. As a quick reminder, the red is where we started in last September when they made those first cuts, the 50 basis point jumbo cut. The green line then is the second cut, the 25 basis point November cut. That's what the yield curve look like. We're effectively inverted to start this whole thing. Start to flatten out. Blue is where we were with the last cut in December when they stopped their cutting cycle. And now that yellow line is where we are at now. So we've now got the long end of the curve higher than where we were during that period of cutting. So you had the long end that was lifting throughout those cuts. The short end is now dropping, but the long end is lifting at the same time to the 5% yields in the long end. And at one point, that was just like the danger zone, right? Now the market's getting used to it. People calling for 6% yields at some point in the near future. Can you imagine? When do you think these people trying to sell their homes? It's like everybody's playing this extended pretend game. Literally everybody's just going in the market. If you're selling something, you're like, the buyers are not showing up. There's more inventory being put out there, but nobody wants to change the price because they're all waiting for these cuts. And they think as soon as I get a cut, mortgage rates come down, buyers will show up, I can get my price. It must be what these people are thinking. You know, you got this little run up in the home builders up to like 102, half, something like this. And XHB, ITB, the chart looks the exact same. More leveraged ones would be like KB Homes, Pulte Homes, DHI. All this stuff is on the floor. God, it's so tempting. The problem is only in 1 year charts do these things look good. God, just crack the damn housing market. I wish, just crack it. And even if they cut, right? If they cut too early, the long end is going to lift. That's the wild thing. If they cut too early and the market doesn't think we're in sort of like this neutral period or potentially on the cusp of a growth slowdown, why wouldn't the long end lift again? And you're going to put even more pressure on the housing market, which is the funniest thing, that all these people are sitting around waiting for cuts. And if they end up getting it at the wrong time, they're going to be in a worse position. Borrowing costs are going to get even higher. And they would have waited all that time for nothing. And some part of me kind of wants that outcome, so we can just get this over with. You know, what are they going to cut? Just wait until they know they're too late. Unemployment ticks up. But by then, labor is the last thing to change. You know, labor is the most lagging indicator. So if they're waiting for the unemployment rate to hit 4.4% or 4.5%, whatever their new target is, how are they not way behind by the time that shows up? Or that there's a risk that they're behind. So we're just waiting for unemployment to get to 4.5%. Then we get to 4.5%. Then you get your cut. And the hope is what? That at that point, long end yields will stay stable, if not drop, with the cut, because likely the Fed is slightly behind and they're not ahead. That's the whole magic here, I guess. I don't know. Everything in Massachusetts sells right away and price keeps going up, says Misdemeanor. The places in like Austin, all those hot markets, where it seems there's a bit of an oversupply. I bought DHI Home Builder and Deck 2 days before Trump announced tariffs in February. They have never recovered. Sad but true. Horrible timing. Before tariffs. Announced tariffs in February? What are you... Donna, you knew he was going to do tariffs. Everybody knew he was going to do tariffs. And you mean in April? Yeah, so this is the thing. When you look at a lot of these home builders on a longer time frame, they're still not cheap relative to themselves on a price-only basis. I know I'm not talking valuation here. But I really, I think I would like to buy some of this stuff. Some part of me goes, well, what's the turning point in the cycle that would create an environment for these guys to build again? I don't know what that thing is, but I don't think I need to know necessarily, I just need them to get cheap enough where I'm getting a decent enough discount to buy these things. And it's almost tough to short at this point. We were talking about these home builders. That's really interesting, Misdemeanor. We were talking about these home builders here in September as a short candidate. And now we're like, what, $30, $40 down. It's hard to short the whole at this point. Now we're just looking for an entry, or at least I'm looking for an entry opportunity. NASDAQ getting a bit weaker here, down 1/3%. Interesting, dollar got a little stronger here today. A bit. And gold moved a bit higher. Silver finally did a little bit to the upside, and I've increased my exposure in silver. So I had basically some long calls and long call spreads, and I let some of those, I let one of them get assigned because it was in the money. And so now I'm just wearing some long silver futures alongside of those calls. So a 1% update was helpful, but come on, let's get going above 34. After the events of today, I don't know if I think it's more likely or less likely, honestly. There's a part of me that thinks, yeah, I don't like, there's a part of me that thinks this thing is shaken. And so that would mean you run even more so to metals as sort of a hedge. And I think that's why you saw gold to the upside. But I don't know that these are the conditions where silver then also performs. I get why gold would work here. I'm maybe not as confident about silver, but I'm going to stay on the trade. I'm going to stay with it. We'll see what happens. This thing's going to take me down. I'm almost certain this thing's going to take me down. There is no way you can talk about a trade this much and sort of make it a part of your short-term identity and it works out for you. There is almost no probability that happens, but let's see. Let's see if we can break up above 34. And then the weird little sell-off here in Bitcoin. That's a ugly little break. Weird little sell-off. I sort of understand the risk-off sentiment in the market, stronger dollar, bonds higher, gold higher. I suppose I can understand volatility up slightly. I suppose I can make a case for that. I wouldn't be buying here. I'm not selling that trading position. I still have it. But I don't know. Maybe it is time to let that thing go. Should we ride it? target was what, 125? I still everything they're doing, man, is just they're just shaking the core of this institution. And I don't get how you don't go looking for some sort of protection here. And here's the thing. Let's say the first thing I thought when that ruling came out yesterday, not the first thing, it was the second thing. The second thing I thought was, well, as little as those tariffs could bring in, which I don't know what you guys think, or if you've done any analysis as to what tariffs end up bringing in. But I think I had it like I can't remember the number anymore, but it was like at best case scenario was something like 700 billion, something like that, like best possible case scenario. I think I might be off there, but I think that was somewhere in the ballpark. So then I'm like, okay, so you mean whatever revenue that was going to take in, that's now gone too? So you didn't get any money out of Doge. You're not going to get any money out of tariffs. and we're halfway through passing this big, beautiful bill with tax cuts and tons of spending. Like, the first thing I thought was like, well, isn't that more bullish? Isn't that more bullish for like gold and Bitcoin if that ends up being the case? You know, even more deficit spending, basically. Am I thinking about that right? And by the way, I don't think it'll be 700 billion. But like that, I think I did some quick back of the napkin math where I said, what was 2024 tariff revenue? And then I take that times 5. And then I added some percentage onto that. I think that's the way I got to that number. Or I think I said, what was 2024 revenue? Maybe I increased it by 5% and I multiplied it by 5. Like some stupid easy math just to say, like, we had 2% tariffs, now it's 5. Or excuse me, we had 2, now it's 10. So I 5x'd it. So it could be more, but I think I had 700 billion. Emmett Morrison says around 500 billion. Yeah, so at least I think I'm in the ballpark. Chaz says, I agree with you. Breaking Point was speaking about the Anthropic CEO saying how the AI giants are 3 to 5 years away from decimating 20% of the jobs. I saw that video. I didn't watch it yet. But Mike Green said something on Twitter as well, and I really respect his point of view. But he effectively said something as well, that the engineer jobs are on the verge of collapsing. And I think he did it in response to somebody who was talking about there are engineers that are working on products for a zero engineer world. So he was responding to that tweet and effectively saying that, yes, the male-dominated engineering white-collar jobs for high IQ individuals are under imminent threat. I think that's true. What's interesting, maybe not interesting, what's interesting to me is it's so clear to me that we have these really, really big problems in front of us. And, I remember reading in maybe my 4th, 5th, or 6th grade history classes, about previous bouts of U.S. history and how there were times when the American people, where we had large periods of immigration and kind of like difficulty in social cohesion, and there was sort of this nativist response versus sort of the immigrants several times over history, And you almost think to yourself as you're reading this stuff, well, we are a more evolved species, right? We're a more evolved version of our previous selves. And that's not the right way to think about it. The right way to think about it is we are, humans are creatures of habit. We just do the same thing over and over and over. It just takes a few generations for us to forget the lessons of the previous generation, and then we just do the same exact things. And, we're in this moment right now where I think a lot of the oxygen in the room, it's all dedicated towards very low vibration stuff. It's very, very like stuff I've read in fourth grade history books. It's the immigrants and we need to get these people out, or these people are threatening us. We have to maintain our place of dominance in the world. And it's working, it's working as a method of distraction. And I'm looking around going, we are not talking about what is going on in the labor market. We're not talking about how that sets up. We're not at all talking about $80 trillion of unfunded liabilities in Social Security and Medicare. We're not even having the discussion with any meaningful dialogue or at high enough levels of leadership. We are not talking about the plummeting birth rates, both here in our country and across the world. Like, our life expectancy is on a downward trajectory. And no, it's not just sort of this COVID blip. It's a trend. Our life expectancy is trending lower. We have these really big sort of societal problems. We could talk about education. We could talk about the impact of very addictive technology that has exploded and is being given to children as sort of this companionship mechanism, and it's changing the way their brains are developing. It's changing their ability to focus in later years in life. Like, we have these very large problems, and sometimes I get a bit disappointed, man, that like the things that I see being discussed at our highest levels of leadership, they're not those things. And the things that I see citizens concern themselves with are not these things. And so when none of us are there to have those conversations, the shortage of housing, thank you. That's another one. We're 4 million houses short, and nobody's talking about that. I could go on and on with a laundry list of really big societal level problems. There's no truth and reconciliation about what just happened in March of 2020 and for a year after. Why is that not a thing? Don't you want to know? Don't you want, why do we keep having these big events in our lives and nobody is held accountable for the decisions that they make? It didn't happen with the great financial crisis. It didn't happen with the pandemic. Like, these gigantic events happen in our lives. And it seems like there is just zero accountability across the board. There's no truth and reconciliation. There's no look back. We just keep moving. And then some people are able to convince others. I think I just lost a bunch of people. We're able to convince others that, like, this is the political line. I'm looking forward. I'm not looking backwards. No, man. That doesn't work. You went to Dartmouth and you didn't know that 80-year-old man did not have his mental faculties, where I'm sitting at home with no pants on, eating popcorn on my couch, and I can tell what's going on. And you know what I mean? Like, why is there zero accountability on so many aspects of our society right now? I just don't get it. And I think a lot of it is like, we're not demanding it. We don't demand it. We're so caught up in these things that really, in my personal opinion, like, they do not matter at all. And they're so effective at this division strategy and this distraction mechanism that's so effective, you know, and that's a bit, I think that leads to a world of apathy. And I'm very concerned about that. I think we're already seeing it. I'm very concerned about a world where people just give up trying to have a positive impact or trying to utilize the political system for positive change in their personal circumstances. That's my biggest worry in 4 years. I guess, 3.5 now? My biggest worry is apathy followed by ire. You know, I think neither of those two things are good. And I don't see how in 3.5 years that one of those two is going to be the outcome. You're going to have a completely apathetic constituency, or you're going to have a pissed off constituency. And I don't see how there's any room for some glide path in the middle. And a lot of that has to do, you make big promises, man. You make promises to the working class, gigantic promises. You make promises to the Maha moms. You make promises to the fiscal conservatives. You make these you write these gigantic checks, and then the only people you cash those checks to are the donor class. I'm worried about that world. I'm worried about the reaction to that. I'm not giving up faith that there's an opportunity here, but the incentive structure, I mean, this was always going to be a wild gamble. And I don't know. For those, what would you assign the probability of success? Promises made versus promises kept in the next 3.5 years. Of what would you assign the probabilities? And try to do it in good faith. What would you give it? A 5 delta, 20 delta, 30 delta, 60 delta? Where are you? That this attempt, and this is a big gamble, to change the debt trajectory, to change the employment opportunities, to change real wages, to change prices, to change these gigantic problems, that it has a positive outcome. Trade negotiation, all at once. What do you think the delta is of success? And try to be as objective as possible. If you're for or against what's happening right now, try to be objective. I'm really curious what you guys have to say. Gregor says, nothing new to see here, Victor. Trade the increased vol. Couldn't agree with you more. Oh, you guys are, you know, you're all at my price. That's wild. I think I'm optimistic too. I think mine is probably 30. I would have said 30. And I know I'm being optimistic. Isn't that wild, man? Trade deficit is not an emergency. The debt and service is more of an emergency. I guess, Lincoln, there's a way to see those things as the same, not the same, interrelated. It's a box spread, no delta. That's funny. That's wild. We're all in the same ballpark. And the funny thing is, I'm not asking your affiliations. So that's people that don't like what's happening, and that's people that voted for what's happening. And the funny thing is we all got the same price. That's absolutely insane. Quick look at the sectors for the day. And I want to talk about some data here in just a second. But real estate, ironically, up off the mat 1%. And bonds rallying 1 point in the long end will do that for you. Energy up 0.75%. Utilities, the only sector that was underwater officially was communications, even though discretionary up only up 6 basis points. I saw Josh Brown say something about Nike today, and Yeah, I think his quote was, I didn't read the whole article, but his quote was, I don't know if they can turn this thing around. I don't know if they can ever turn this thing around, I think was his official quote. And almost instantly, and this is no shade to Josh, but almost instantly I was like, let me go look at this thing. You know, because when people make those types of statements, and Josh is really good at just, he knows how to make statements that people are going to listen to, as he's really polished media person. But I thought, how cheap did this thing get? It's not super cheap, $60 relative to itself. Is anyone out there on the Nike train? Almost instantly, I thought to myself, I think I know how to fix this company. Just stop selling mass market products. Change your brand. Sell to the people who are going to be buying flying cars in 10 years. This whole barefoot shoe movement, this is totally, don't trade on this. This is just a crazy thought I had. People are buying basically socks. They are socks with a little bit of padding on the bottom and this barefoot shoe movement, and they're paying $200 or $300 a pair for these things. And Nike's nowhere to be found in that market. It's all Vivo barefoot, Zero shoes, handful of other premiums. And I'm like, that's where you got to go. Charge 3 times as much for your stuff and sell it to a different audience. Get out of the mass market. That's effectively what everybody's got to do. If you're a teacher, it's hard to be a public school teacher. So what do? You go teach rich people's kids, and you get paid a fair living wage. That's the tough thing about where we are right now with the K economy. That's the real sad thing, is that people are going to sort of, got to make a choice. Lots of people have to make a choice. Josh Brown is too emotional for investing, says Tom. I don't think so. I think I've talked to Josh once or twice. He's always been nice to me. We've had a few times where we shared the screen together. I think he knows good TV, and I don't think you can be on TV every day giving sort of this rational analysis of the distribution curve. I don't think that's why people tune in to CNBC or Bloomberg, maybe more so Bloomberg. So I think he knows what the audience wants, and I think he gives it to them. I think his actual long form podcast, I think, is much different than what he does on TV. I think his blogs are much different than the podcast and what he does on TV. And I think his actual investing is much different than the feeling you get from the blogs and the podcast and on TV. So I don't know. There's a game and you got to play it. Like when I've gone, shoes overrated. When I've gone on those programs, I've given them my notes. And so what happens is they ask you for any notes, and I hate doing that. I write just like a handful of words now. So they almost get nothing, because if you give them exactly sort of what you're thinking, the anchors will steal it in their question, because anchors don't have a lot of time and they got a bunch of people coming on. So right before in the break, they read the next guest, all their talking points, and then they have a question that basically uses the most interesting parts of their talking points. So for that reason, I don't want to give it to them, but also it's like, just ask me questions. I'm not going to come on and give a performance. Just ask me whatever and I'll answer it in real time. I don't need to plan my whole thing. You're asking me to come on, so what questions you want to ask, I'll answer them. But anyways, there's been a few times where I would give some notes and they would say, we need something controversial. We need some controversial points of view or some contrarian thoughts, something like this. And, I was probably at the time too experienced to do something like that. But I could totally see somebody else going, because I trade, I'm not going to make something up. I'm gonna be honest about my thoughts, and I'm not just gonna make up an opinion so that it's good TV. Because I gotta wear that, you know. I said that on national television to millions of people. I'm not gonna wear that so you can have better television. But I could totally see that happening all the time, you know. Somebody giving some mundane thing, and then a producer says, "Hey, let's spice this up," and then they go, "Okay." They throw in some ridiculous, you know, gold's going to 4,000. They put you deer to headline on television, national TV. They get you to say it. Now they got their headline. The way the sausage works is wild. And then it goes out, and then some person who's really young, just starting their investing journey, they see some article in some clip from some person that appears to be credible saying this wild, bombastic, or giving a direct number that some asset's going to hit. And they go out and they use their hard-earned money to make a financial decision. I've been at all parts of that, right? I've been on the side, the brokerage firm side, where I've answered the call with somebody's calling up and say, "I saw this on TV and I want to do this." And I've been the one speaking on TV, and everywhere in between that process. And I think more people that are involved in financial media should have to start in some sort of service to the customer. Like they should have to come from the brokerage world or something like this, you know, so that they have a healthy respect for what they're dealing with. Like we're not making good TV here. People are putting their hopes and their dreams, their vacation plans, their wedding money, you know, and depending on how you say something, depending on how convincing you are and how confident you seem about your view in the future, you can impact somebody to make a decision that they wouldn't have otherwise. And you'll never know it. You'll never know that person. You'll never see them. But you have to have a healthy respect for that very real impact. But if you're in it for yourself, a lot of these people, you know, if you don't have a healthy respect for the customer, a lot of these people do, mind you. They're very responsible in what they say. But others maybe feed into the emotional aspect of content creation. And I think I've seen some of the people that get negatively impacted by that, man. And it's not cool. So I wish everyone would, at some point that worked in financial media, they had to work in service of the customer in order to get anywhere close to somebody that's making content for the investing public. You know, but those places have rules where you can't even trade. You know, can you imagine? Can you imagine being an anchor for lifetime on financial news? Meaning you could never push the button one time because of the compliance and conflict of interest. And I do understand you can have a conflict of interest. But imagine having that position for decades and you've never pushed the button, but still having that level of influence. That's wild. It's really wild when you think about it. All right, let's keep cruising here. I don't think there's nothing exciting about Nike, you know. I can hear my baby girl in the background. There's nothing exciting about Nike, I think, in the immediate short term. So I don't think I can play it. I'm not really a consumer discretionary person. That's never been my gig. I don't really know that space at all. But it is relatively cheap. I don't think I can make that play. At Victor, genuine question from Taif. Donoski says Josh Brown is a registered investment advisor. He manages money. Yeah. He pushed the button for real, man. He's a real deal. People give him. I think some people, you know, give him a hard time. I think most people, I think, really appreciate what he has to say, and I'm in the latter camp. I really appreciate his perspective. Genuine question: how is it that any different from the system we have, where insiders get to sell shares options at high prices, while come out on CNBC and talk promising future of a company? I don't think that's very different. I don't think that's different at all. Yeah, I don't think that's different. The thing is, and I don't know how to solve this problem, but if you've been watching this long enough, right? You know nobody knows. And so when you know nobody knows, you're just listening to hear how other people think. And in no way, shape, like, it doesn't matter who it is. If it's Bill Ackman or somebody I've never heard of before, if I hear him talking, I'll sort of know, like, oh, this person had an interesting perspective. That was really interesting. Or that person read a bunch of articles and collated them or used ChatGPT to put that stuff together. You know it. You know it when you hear it. So if I hear like a Paul Tudor Jones or a Bill Ackman or Stanley Druckenmiller, I'm not listening, or even like a Warren Buffett, I'm not listening to them for investment advice. I just want to hear how different players in the game, what they're saying, and then I also want to understand their incentive structure. There's been so many times where Bill Ackman is getting on TV, he's doing this, he's saying the exact opposite of what he's doing in real life, or Chamath. So I think recognizing the incentive structures that people have. You know, I think I said this when I launched the show. I don't care what people say. I care what their incentive structures are. If you tell me their incentive structures, I'll know how to frame what they're telling me. But if I know your words and I don't really get your game, who's paying you, how you get paid, what your position is, like, then I'm wary at all times, 100%. So in some ways, you know, when Chamath was doing the whole SPAC thing, it was an interesting thing that retail investors were interested in, but I wasn't hawking those things. I'm like, this is a pool of cash that's appreciating. Meanwhile, the actual U.S. dollar, I think, was doing it's like, if I invest in the U.S. dollar, it's doing this thing. But if I invest in a pool of money that's managed by this person and it's all U.S. dollars, somehow that has a different return profile because of the potential. It didn't make sense to me. If things don't make sense to me, I avoid it. Yeah, but man, I like to, and I hope, what I love about this place is nobody gets on the air, to my knowledge, and pretends like they know. This place has a way of keeping you honest. I think that starts with Tom. He sets the culture, and nobody pretends. And that's a really cool, it's a special thing. It really is a special thing to work at a place, because everywhere else people are trying to prove how much they know. They're trying to prove how great their credentials are and how rich they are and all this other stuff. And I think that gets new people chasing the wrong thing. It gets them chasing survivorship bias. That gets them chasing, appeals to authority. That gets them chasing all these, like, recency bias, all this, like, cognitive trash that they'll, at some point, either the market will break them of. If they end up being successful, they'll break themselves of all of that stuff, and they'll have to unlearn it and then come around to this way of thinking about the world that nobody knows. And that we as people tell ourselves stories, and the game is not necessarily about understanding the story of today. It's about forecasting the bullshit story that most people are going to tell themselves tomorrow. It's about forecasting tomorrow's narrative fallacy, in a way. And to learn that up front versus go through the pain of thinking, I got to find the person who knows, you know, paying for the option courses and paying for the newsletters and paying for all that stuff. That's a heartbreaking way to then, it's because at some point you're going to get let down. And then you come around. Sorry, I went off on a tangent there. My apologies. Howard Marks will almost never give you tradable information over 10 pages of one of his memos, but you always gain it. That's 100% right. Go watch a Howard Marks interview. It's the perfect example of somebody saying, I don't know, nobody knows. I don't know, nobody knows. But then working through his thought process, but it always comes back to, I don't know. Every one of his interviews, and they're some of my favorite to listen to. I've never enjoyed listening to a person say, I don't know, more than I enjoy listening to Howard Marks say it. Real quick, it is Thursday, so it's going to be our Synthetic Friday here. So you're going to get a couple more squawkers here on Friday. I have not been listening to those guys at all this week. I do not think they can provide any value. They're all saying the same thing. In that last Fed meeting, Jerome Powell effectively said, I don't know, for like an hour. That's all he did. He said, I don't know, we don't know, we'll see, wait and see, I don't know. And so that's all these people are going on. They're just reinforcing a message that I don't know, wait and see, we'll see. We have the tools. They're not saying anything. So, you know, I don't think it's particularly helpful. Consumer sentiment tomorrow. This is a big thing, I think, in Ilya's world. Not for me so much. I see periods in time where consumer sentiment is not great, but it doesn't matter. People keep spending, putting it on credit cards. I see periods of time when consumer I know it's a different version of consumer confidence, not consumer sentiment, but like the whole world was ending in April, and consumer confidence comes out and it blows everybody's expectations away. So I don't put much behind this. Who knows? It could be a catalyst. It may not, but I'm not personally checking for it. I think the personal income and outlays for my money is going to be the most interesting data tomorrow. You see what the people are getting paid, the growth in that payment. Last month, it was 0.5% growth in personal income. This month, it's expected to drop to 0.3%. We'll get another look at the We'll get a look at PCE, which is the Fed's preferred gauge for measuring inflation. I don't really think this is an inflation story anymore. I suppose this can have an impact on bonds, but I don't know why. And I just may have the total wrong. I might be looking at this completely wrong, because I see some smart people who have said they think that we've bottomed in inflation and will continue to move higher from here. I don't see it. I don't see it. But we'll see. So PCE tomorrow, month over month, 0.1%, which would be a slight increase from the flat line from last month, and then year over year, 2.1%. Consensus versus the 2.3% we had prior. And I'll take a quick look at inflation now. So this is the Cleveland Fed's inflation nowcast. So these would be the most up-to-date models. PCE at 0.19%, month over month. Core PCE at 0.2%, which would put PCE year over year 2.23%, and core PCE at 2.6. That would be a little bit hotter than what they have over here. We shall see. Cool number. keeps bonds pumping. I'm going to keep betting cool. Let's see here. Lynn Alden is an interesting read, especially with how she frames cryptocurrency. Yeah, she's got a book called Broken Money. It's a good book. Misdemeanor says, I love the no spin of Tasty. I enjoy it too, man. It's super refreshing. USA Supertech says, initially it was hard to think the Tasty way because I'm an old dog, but I came around and finally see consistency in the right direction. Awesome. Good for you, man. Good for you. All right. We're here specifically for your tangents. Don't apologize. I don't know if that's good or bad. I don't know if that's good or bad. Nuclear stocks got a little cheaper today. Not cheap enough for an incremental dollar, but at least we're not top of the mountain right now. We cannot break through 62. We cannot break through 62 in CCJ. If we double top here, maybe it's time to collar this thing. What do you think? Maybe it's time to collar this and protect some of those profits. We just made a sick run, back it up at all-time highs. SMR doing the same thing. These are still my favorite plays. All these charts are the exact same. All these nuclear charts are at the exact same point. Double top highs. Same thing with uranium. These charts all look exactly the same. All the growth metals are in the toilet. Silver, copper,